A few of them that the management stated yesterday. Firstly, they are saying that they will focus now on sustained customer addition, double-digit revenue growth, and they're expecting their EBITDA to triple over the next. They're expecting their cash EBITDA to triple over the next 3 years. They're looking to raise a debt of close to 35,000 crore rupees, and they'll invest close to 1 lakh crore rupees in the business over the next 3 years. And this 1 lakh crore will be on the capex side and the spectrum liability that they have to repay. Now, of this 1 lakh crore, 35,000 crore is something that the management will raise via debt, and 65,000 crore rupees is something that the management is expecting they'll get from internal accruals. Now, they are also not considering any equity infusion at this point of time, because as per the management, Vodafone Idea does not need a fund infusion. They might look for a fund infusion after 2 years, but they also said that both the promoters are deeply committed and will take a call on equity infusion whenever needed. Now, they have also said that if there's a shortfall, then Birla Group has always remained committed, and they will be supportive even going forward. Now, when it comes to tariff hike, now this is one commentary that could dampen the street sentiment here, because they are saying that industry does need a tariff hike, and for Vodafone Idea, tariff hike is one of the most important component to triple their cash EBITDA over the next 3 years. But they will wait for leaders to take the tariff hike, and the Vodafone Idea will not take a lead when it comes to tariff hike going forward. And lastly, the management also said that the government is unlikely to raise their equity stake beyond 49%, and any merger with BSNL was also ruled out in the analyst call. Now, ace investor Madhu Khela was also present in this analyst meet, and he also asked few questions to the management. Do listen into what their answer was.
If there is a shortfall in EBITDA number, then will it be a call on the promoters for additional equity, or it will be a call on shareholders?
I would also say that Mr. Birla, particularly, especially in this company, he's the largest investor across the group, what he has done for this company. So I think you have to see this question in a context. He has always remained positive, and he has invested when there was a need. And tomorrow, theoretically, if there is a need, I don't think promoters will run away and will not take care of the company. So I think you have to see this question in a slightly different context.
We are a very formidable, strong promoter-backed organization with extremely good, excellent execution capability, which was only not able to perform because of the AGR overhang. I think once that part is behind us, which is behind us, I think it's a three-player market. India is a large market. I don't see that they should be worried from that point of view. But yeah, but we are absolutely in the market to give them a tough competition.
Okay, all right. So that's the management of Vodafone Idea. The question is, what do the gentlemen at the table think about it? So Kush very clearly has said this is not something that he'd trade in, because it's not something that he'd invest in, and this is his standard statement. But having said that, Parag, where you've heard what was said, is it going to be a turnaround in your opinion?
In my view, government is very clear that they want a third player, and of course the promoters' commitment is now also there.
I think that is the most important part.
Yeah. So I think things will turn around. This is my view, and I am going to play it through Indus Tower. Because if Vodafone suppose survives, it does capex, it is beneficial for Indus Tower. Indus Tower, see, if you see the market cap today, even after the rally and huge outperformance, is also 1,12,000 crores, while they generate a cash profit of say around 15,000 crores every year. And it's an annuity cash flow business, completely annuity cash flow. The only worry was that whether Vodafone will survive and whether Vodafone will remain their big customer or not. And if Vodafone is going to survive, I think Indus Tower should continue to do well.
And I think Indus thus far has, let's say, been hesitant, if I can use that term, to give out a strong dividend. I think once a flavor of the dividend or the whiff of the dividend comes in, the trajectory of Indus might actually change quite dramatically. Plus, they are investing
in Africa also now for growth, and this dividend also can come when if the Vodafone cash flows are assured now, then they can be very confident about giving dividends also. And they were giving big dividends till this Vodafone episode started.
What is the price call, Kush? Because you've been sitting there silently with this expression. I'm thinking he wants to say something. But what is it? I think the last target price I saw on one of the notes was 11.
For me, Alex, we've been doing this for so long together, even on Ask
Profit.
Okay,
do a Vodafone plus Indus. It's just one of those stocks that is so widely owned by retail investors for some reason.
And that's the problem. And that's the problem. There is a lot of interest, but because there's such heavy retail interest, you will always find heavy supply pressures from the top. In fact, if I had a blacklist, this would be one of those stocks which I wouldn't really, in the sense, look at the gashes that, come about when they do. You've got 8-9% ka drops on a single day. So if you're holding it, महीने भर का कमाई वो एक दिन में निकल जाता है वाला story है with Vodafone Idea. But just for levels, there's a good support zone at about the 9.5, 9.6 zone. If you have a position, you could continue to hold with that as your stop loss. On the way up, convergence of the 20 and the 50-day moving average comes at 10.85. So that's your target from a near-term perspective. Still wouldn't suggest a fresh trade, but this is only if you have a position. Indus Towers, on the other hand, I like. There has been fair bit of consolidation in the last few days, but the medium-term structure of on this one, very interesting. Just a mild hitch around the 430, 435 zone, but I think once that is taken out, you will see the stock zoom to the recent swing high of 455 and higher levels. Volume accumulation also very healthy. So definitely, if you have to play this via Bharti or via Indus Towers.
Okay, a few others that I wanted to talk about very quickly, and we are just about 3 minutes or to the pre-open session. One is SBI Life. Some positive notes on it today. I mean, Citi says they've shown another strong quarter, sustained improvement in product level margins, further headroom available for margins as well, expanding agency productivity to follow with a lag. Jefferies is also quite positive. They're saying encouraging rebound, normalization ahead, strong premium growth, but guidance for a full year is unchanged. GST drag offset margin benefit from better premium mix. I wonder if either of you looked at SBI Life and what the thought there is.
Decent result. So the stock a very limited downside, and I think 15 to 20% upside. Like many other stocks which have remained stagnant. For example, I was just coming to Dabur. Today there is going to be a result, and there is of course there's a media article yesterday that they are going to appoint a new CEO, Mr. Harjeet Bhalla, who is ex-Hershey's and ex-HUL. So if that comes through, this is a stock which has not done anything from last 5-6 years, and finally you are seeing some positive energy coming into the company. So I would be say a big buyer of Dabur.
Based on today's numbers?
Numbers, not numbers. It is around the new management,
new CEO.
Management change.
Okay.
New CEO
and
coming.
I think the print media said that I think it was reported in ET, and I think there is some substance in that, in my view. Let's see.
So we'll have to wait for that announcement. You know what? I've heard you talk about Larsen and Toubro as well.
Yeah.
And the results were last night, and I said 13% was a consensus estimate for an increase in revenue. It came in at 10.5%.
Correct.
There is an expectation that the Q4 will be better and that execution will take us through that FY26 target. So what was your thinking on the numbers, and would you be a buyer at even this price?
So basically, just to be on record, we booked profits at around 4,100. Which was around 52-week high, and it is 7-8% below that. So I would love to build up my position starting from today.
Okay.
After seeing, because the order inflow growth was good.
17%.
17%, yeah. And the entire narrative around order inflow is building good. The stock fell because of that Kuwait order, getting cancelled. And management said on the call that will also get retendered. So I would say that L&T is at good, that this price provides a good opportunity to accumulate again.
Would you say that the concern on domestic order flow is overdone? The fact that they have 49% of the order book now accounted for by international.
Yes.
Is that a negative or positive in your opinion?
So basically, see, all the international orders actually reduce their margins, overall margins, because they're coming at lower margins, because global competition is very high in this business. So the margins are low, but net working capital improves significantly, so ROE improves significantly. So net working capital, even if you see today, they have guided also for lower net working capital requirement. And so ROE has inched up to 16%, which will inch up to 18%. So
L&T is a buy for you?
It is. I mean, even if it dips, close to the 3,700 mark, that's the 200-day moving average. This stock has a tendency of rebounding quite sharply from those levels. Doesn't spend a lot of time below the 200-day moving average. So close to 3,700 zones. If it does come about, then you should consider, accumulating. Even on higher levels, I mean, you can, but if you buy on declines, the risk-reward ratio is that much more favorable. That's all.
L&T spiking in the pre-open session. Some of those early rates are on. I wonder if Paragwa, you've looked at Pine Labs. A bit of a new listing, but strong quarter. And a note here coming in from Morgan Stanley. Their Pine Labs showing sparks in the pre-open session, only the first minute, so keep that in mind. But they have given a target of 260 and maintained an equal weight. They're saying it's a strong quarter. Key positive is strong growth in adjusted EBITDA. They see upside risk there. Beat led by better than expected growth in the card issuing business. So this is one that is looking interesting this morning as well. Plus you had Maruti and TVS report. I think the auto majors is one to look at, because now after clarification, it's becoming clear that BMW, Mercedes, Audi is not going to be as commonly found on the streets. Everyone's not going to rush out to buy them.
Yes.
They're not going to get that cheap. Would you look at some of the
So
auto
basically
packs?
TVS as usual, right, as usual. Quarter after quarter, superb resilience, fantastic numbers. It is just about valuation. You can argue that whether I will pay this much for a two-wheeler company, but the company is doing phenomenally well. 50% growth in EBITDA, and who would have imagined 5 years ago that in a two-wheeler company, matured business, you will deliver 50% EBITDA growth. So amazing company by all means. Like Mahindra and Mahindra, both these companies are absolutely phenomenal. Maruti has, I think, disappointed on margins, even though the volumes were very good.
So, but the margin point, Parag bhai, what Puneet was talking about yesterday was the fact that that one-off hit on...
even if you adjust for that.
Even you adjust for that.
Even if you adjust for that, I think margins will remain
This is
in
one
the
of it
pressure.
on labor.
So, was included in the cost.
That's for
not as
every
an
company.
not as an exceptional item.
So
So,
even
therefore,
if you adjust for that, there was a 70 bips
Decline in
disappointment versus the estimates.
Interesting.
Shrikant Chauhan with us. Shrikant Chauhan with us, even as rupees breached the $92 mark. Well, that flash on your screen, falling past 92 after opening at 91.99. Very good morning, Shrikant Chauhan. Are you feeling the budget excitement? What is the Nifty going to do today? What are your targets for some of the key indices?
Good morning, Tamanna. Good morning, everyone. So yeah, the excitement is definitely there in those sectors where there is like specific expectations that government may increase capex or may give special importance to the sector like defense, railway. There we are seeing some buying interest. PSU banks did well in yesterday's trading session, and since last 1 month also we are seeing good amount of buying interest in all the PSU banks. Maybe we can say it's a value play is happening in the PSU bank, but otherwise if we consider the overall performance of the market, then it is not that great. The market is trading below the mark of 25,500, which is not, I can say, supportive for the overall bullish momentum of the market. And below 24,900, we may see a serious breakdown close to maybe 24,500. So we are at crucial levels currently. Before the budget, if we see the market is sustaining or crossing the level of 25,500, then definitely we will have furthermore scope to move up to 26,000. But if it remains below 25,500, then the market will remain in the range and with a downward bias. So we need to be a little bit careful, and we need to be more and more stock specific in this market.
Okay. By the way, a few stocks that are reacting positively, at least early minutes, right? So Gland Pharma is doing reasonably well. GE Vernova TND, GVTND, is up as much as 6% early on. Hind Copper is 4% higher. Garden Reach reacting to numbers. We highlighted some of these stocks to you in the before the start of trade, and Garden Reach doing okay. Sirma SGS is also up and about. There are a few stocks that are doing not too well on the other side of the spectrum. And you have 5-star that is also reacting to numbers, that is down about 4% or thereabouts. Hind Zinc now swinging from positive 8% to negative 4%. So let's see how, or 2%, let's see how that settles. But specific calls this morning, Shrikant?
Yes. So Alex, would like to go with few defense companies, but in that specifically Bharat Electronics. There we have a bullish view. The stock has broken its important resistance level at 413, and then after we saw a quick rally towards 450, 455. But while looking at its entire pattern on long-term charts, one thing is very clear, that the stock is heading for at least 470, 475 in the near term. In the medium term, we may even see the levels of 500 And in case if there is any lower opening in today's date, then we should look for adding these stocks with a stop loss at 435. As I mentioned, we like PSU banks in that Canara Bank is doing well. It closed around 158. The stock is forming rising top, rising bottom series and forming some flag formation at higher levels. So based on technical formation, the next level to watch out for would be 165. And here we can keep a stop loss around 154. So yes, PSU banks and defense should be on the watch list.
Well, lot of movers. Garden Reach is up, Hind Copper is up, Larsen is up 2%, and MCX continues. I think the way silver and gold are going, MCX probably towing that line right now. Let's see. Remember, MCX was also up in trade yesterday, so some stocks are doing really well for themselves. I wonder if Car Trade would be in that list because Nomura has hiked the rating and target price on that stock, and Sharad Johnson with the rationale of Nomura in the big brokerage call of the day today. Sharad, good morning.
Good morning, Neeraj. Car Trade is focused. Nomura has given an upgrade from neutral to buy rating. The target price hike, it's not so much. It's around 3,226 from 3,021 rupees. It's a healthy growth on track. That's what the broking house has stated. Largely the numbers were in line, but the place where the margins are growing, that's where the bullishness is coming in, and the operating leverage, that's also auguring well for the company. Now Nomura is expecting a 21% revenue CAGR growth from FY26 to FY28, led by, of course, a rising competition in the PV passenger vehicle industry. Overall, there will be some gains coming in the operational front when it comes to the digital ad spends and a strong execution of Car Trade. Multiple initiatives such as the OLX can also help step up the growth momentum as well. So bullish commentary coming in Nomura for Car Trade.
Okay, thanks a lot for that. 1.72% higher. Kush, fundamentally Nomura is constructive. I wonder if there is a trade here on Car Trade.
Afraid not. There has been quite a bit of selling pressure, hasn't really participated even when the markets were going up. This rebound largely from oversold territories, 200-day moving average around the 22.75 mark being respected. So on a lot of fronts, doesn't really hold ground. Plus, I do believe that, once the stock starts moving higher, around the 2550 zone, there will be supply pressure because that's the medium-term resistance band for the stock. So if you have a position, maybe you could continue to hold with a trailing stop loss, but I wouldn't suggest buying afresh right now.
I think some of the other ones that are moving, I just want to look at Gland Pharma and what's happening with Gland Pharma more than anything else. Maharashtra Seamless is the other one, but it's Gland Pharma, which, on the face of it, the numbers didn't look that great. But the stock seems to be doing well. I think it is the guidance that has worked, Parag bhai.
No, I think guidance is not that great. I think the numbers were slightly better than estimates, but stock has been completely under pressure. Now, it is a completely oversold stock, so it is just recovering. And I think there was one upgrade which I saw. I don't remember, I read so many broking reports that there was one upgrade in that, and that was mainly due to the fact that one of their old orders which was not getting executed has started getting executed.
So why don't we have a look at it on the charts, because as Parag bhai has pointed out, it's gotten beaten down quite a bit. Is this that moment of recovery which you would start building on?
So, Alex, base formation was definitely on the cards. It was happening since the start of this year. Positive divergences, fairly healthy volumes, nothing extraordinarily high, but fairly healthy volumes on the upside. Today's move now puts it, squarely higher, very close to those resistances of 1850 odd. After this kind of a gap up, I wouldn't really suggest, buying afresh. It's a good idea to hold it with a trailing stop loss, and that could come around the 1775 mark. But don't buy afresh right now. See whether this gap up sustains, whether the stock is able to close at these levels or not.
Okay. I do want to ask about GVTND because the stock was up about 6% in trade yesterday. It seems like it's another 5% at the start today, reacting to numbers. Parag bhai, just off the top of your head, and I'm sure you remember the numbers, strong revenue, margin expansion as well. It is along the lines of what it saw in the last couple of quarters, so around that 25 to 27% mark, and the order inflow is good.
Yeah, everything is good for this company, I must say. The numbers, this quarter EPS is, for example, 11 rupees. And so it makes it a 50 PE stock in my view. But numbers were good. And I would say that transmission and distribution, transmission mainly, is the key thing in power ecosystem right now where the capex should be done. Because there's a lot of renewable energy coming in, everything needs to transmit, right? And so this company is in a right space also.
Would this be the top pick in the transmission distribution space?
Based on numbers, yes.
So metals are doing well today. The pre-open session has shut completely flat. On the Nifty at least, metals are doing okay, nothing great, no great shakes in IT and banking. Just from a budget perspective, I want to look at some of those defense plays. What's happening with the Garden Reach? Garden Reach, good numbers. Cochin Shipyard also reported, but the numbers looked okay. BEL has a lot of excitement as far as its stock is, as far as the brokerage notes are concerned. So those are some of the ones we should look at. What is the budget play, Parag Bhai? We're now 2 days away. This is time now to give some budget picks. Are defense companies making the list?
Yeah, see, defense will see increase in the capex, and definitely after Operation Sindoor, you can expect that, and plus the geopolitical tensions going around the world, you can expect.
But the estimates that you might see up to a 20% bump up in defense and go up to 3% of GDP, I thought was
3% of GDP is
2.5 to 3% of GDP.
Yeah.
Something with Jeffries is saying, I think was a bit.
3% of the GDP is an overall capex number. So capex last year was 11.21 lakh crores.
Yeah.
That is expected that is expected to go to 11.8 to 12.3 lakh crores, according to the various analysts. So let's see what happens there. But I would say that there is a lot of I would say the fiscal room is limited. That is for sure. So we'll have to actually see. So I will not buy when the stock moves up so significantly. For example, BEL yesterday was up 10%.
Which is the point? Is there more room for growth if there is a big bang announcement on defense?
I think it is already getting started. So the market has already preempted it. So once the news comes out, I think there will be sell on news.
Your favorite defense stock, if any?
Was BEL.
But yesterday it was up 10%. That was the problem.
Exactly.
I heard Shrikant say that it's broken some key resistance levels now.
It has, but a little too much, a little too fast.
Okay.
The key resistance levels, according to my setup, was 425, 430, that zone, and that's been broken with a bang. Could the momentum continue? Yes. Does it become a buy at these levels for a favorable risk-reward ratio? Afraid not. Maybe an HAL over a BEL, but I would rather hold a BEL with a trailing stop loss.
Okay. This is what I love usually. I mean, yes, there will be obviously a dichotomy between a fundamental and a technical analyst, but because we've got two experts and the two of them have their own different calls, so you can follow whichever one you want. But Shrikant, I'm not going to come to you BEL because you gave your thesis on BEL. What I'm going to come to you is on Astral. Now, PVC prices have started inching up. I know Parag Thakkar has given a fundamental call there some time back. My question to you is this recovery that we saw the last 2 days smacking off a trade here, or you would avoid it?
I think it is better to avoid because it has been consolidating since last almost 6-7 months. It is not crossing the level of 1575. It is not breaking the level of 1350. Overall activity is completely range bound. So it is better to stay away because I don't think that it is going to do anything in the near term. But yes, if there is any specific activity, then we should look for accordingly. But otherwise, at current levels, it is better to stay away.
Better to stay away. All right, on Astral. From the large caps, I wonder. So there's Larsen and Toubro, and I wonder, Shrikant, what the view is for you on the charts. At now in the pre-open rate settling at 3860. Would you buy into this?
Yeah, absolutely. Yesterday also, in fact, it was very close to its key support levels. It was below the levels of 3750 for a considerable time. And after hitting the level of 4100, 4150, when the stock has corrected from its high, again, it started taking support close to those levels. So clearly indicates that the stock is above its crucial levels, above its fulcrum level. And again, the stock can rebound minimum up to 4,100, 4,050. So at this level, certainly it's a buy. Risk reward ratio is quite favorable.
Shrikant, just the name, not the rationale. Your top pick for the day today. We have 10 seconds.
So for the day, I would like to go with Reliance Industries.
Okay, Shrikant, I'm going to come back to you. But Reliance is Shrikant Chauhan's top idea. We'll take in Kush Bora's top call, maybe post-market open. But here's how the markets are starting off today. Remember, the pre-open was deceptively lower. We're starting off flat. Now let's wait and watch if this actually succumbs to some bit of selling or no, because the Nifty 50 is now a 0.25% lower. So about those 50-60 points lower. So not quite deceptive, if you will, really. But let's wait and watch if this recovers as well also or no. The market breadth is constructive on a flat day for the mid-cap index. The advanced decline ratio is higher. Small caps marginally in the green. Okay. In some sense, you would argue a flattish start, maybe a bit of a negative bias. The currency has also come off a little bit, but it's not all that bad as yet. Now though, 1/3%, now around 90 odd points. Let's see if this gets recouped. Let's get the heat map up on the screen. See what's putting pressure on the indices. A lot of red, very little green, by the way. Let's start with the red. Maruti yet again. I wonder if that South African news is really plaguing Maruti. Third day on a trot now. You've had some bit of a rough start for Maruti Suzuki. Dr. Reddy is down. SBI Life is looking soft. Asian Paints is looking soft. And is Indigo and M&M. So, if there is one index which has decisively come under a bit of a shade, it is autos. It was the prime index moving higher. It is now the index which is not quite making those moves on the high. So even if you have bets on the auto index, be careful there. On the gaining side, Larsen & Toubro 3% higher. Really strong show. People have liked the numbers, 3.2% higher. Hindalco yet again 1.3%. A bit of a gain for ONGC. I would reckon Oil India could be doing the same as well because of higher oil prices. And then the steel pack, JSW Steel, Tata Steel, and from the metal index, Coal India up about 0.33%. So I think that's the long and short. L&T on the gaining side, but autos clearly in the wrong lane right now.
Autos flailing, L&T is not enough really to pull the markets together, because if you look at Nifty contributors, you have much more red than green coming in. On the dragging side, and not standing out, but take a look at it, the private banks are not doing too well, and of course banks and autos completely sitting this one out. Meanwhile, metals are doing relatively okay, and I suspect when we pull up the sectoral heat map, that's what you will see as well. Let's pull up the small cap and the mid cap while we're at it. Okay, Nifty metals there completely dominating relatively, 1% up. Energy stocks are doing fine. Auto there in the slow lane. IT stocks also flailing. Nothing great happening there either. Fed was a non-starter one way or the other, because anyway, this is maybe Powell's lame duck phase. I want to pull up the small cap and the mid cap individually as well. Small cap actually not doing too badly, nor is the mid cap in relative terms flat. And the small cap 50 about 0.25% up, so relatively doing okay. VIX is also okay, quite benign after that huge spike up, about 2% up right now at the 13-14 mark. All right, specific stocks. Let's take a look at what's happening there. Results. Gland. Let's look at Gland Pharma. Its subsidiary actually has broken even, and that's what has got the street excited. That's about 8% up. One of the top gainers. Garden Reach 4% up. Vodafone Idea 1% up. And the fact that promoters are backing it, as per the management, maybe is giving it some impetus. SBI Life, Birla Soft, L&T. Let's look at some of those and what's happening with their results. SBI Life actually looked pretty decent. Birla Soft was good. L&T, of course, is the star attraction there. Pine Labs, RVNL. Let's look at them. GE Vernova, another one which is buzzing today in trade. So all of those looking good. Some mid-cap companies have reported well, and that is one relief for the market. Hinzinc, MCX, you have commodity prices popping. Are they also benefiting these stocks? Nothing much. Hinzinc is now cooling off. MCX about 2.5% up, but could be more than one reason for that happening. Nomura has hiked the target price on car trade. Let's see what's happening with car trade. It was our big brokerage call of the morning. That's about 2% up. So you're seeing some movers there, but overall a very cautious market. Hindustan Copper, of course, seeing that rally sustaining as well, 7.5% up at this point. Alex, I think more weak stories than positive ones though today.
Yeah, indeed. But there are the ones that are doing well are doing particularly well. You pointed out Hind Copper at the end. It is one of the top gainers. Apart from Gland Pharma from the broader markets, it's leading the metal pack ahead as well. And most metal stocks gaining in trade today. What else is working? Valor Estate is up and about as much as 6%. And from the real estate pack, of course, something that you should keep an eye on. You've got Birla Soft that is up and about, reacting to earnings again, 4% higher or thereabouts. V-Guard is doing reasonably well. Hitachi Energy is up and about, 3.8%. GVTND building on those gains and holding on, 5.5% at this point. Among the losers, actually the big losses are capped. Maruti Suzuki, one of the big losers, down about 3%. What else is losing ground? Something like a Sagility India, Craftsman Auto, 5-star, reacting to numbers, down about 2%. Dr. Agarwal's Healthcare, down about 2% or so. M&M Finance also reacting to numbers, down about 2% or thereabouts. Motilal Oswal, perhaps a little bit of profit-taking kicking start here. Asian Paints once again losing ground, and the big disappointment really on the earnings. So two large cap companies seemingly in the very recent past reacting very sharply on the downside to numbers. Parag bhai, if it stands out, right? So Maruti Suzuki, which you've kind of already pointed out, and Asian Paints has gotten clobbered after those numbers.
Correct.
For people who have held these as portfolio stocks, Maruti Suzuki, of course, at some point will bounce back. This is the market leader. But Asian Paints, market leader, several things working in its favor. Why does it not do better?
So first of all, let me say that by God's grace, luckily I have sold both Asian Paints and Maruti at higher levels. Sometimes we get lucky, and these are great companies, right? So it was a difficult decision to sell.
You get more lucky than unlucky. Something I would.
Let's hope what you are saying is right. So I would say that see, Maruti, of course, as I said, no, even after adjusting for labor code thing, the margins were a little bit compressed, and even after there was a big operating leverage, right? The volume growth was there. So the expectation of margin was not so bad.
Could it be because of mix?
Small cars selling more, plus commodity headwinds have come. Sure. See, steel prices have gone up and they have just started to go up. Sure. So even in future, some of the auto OEMs might see the margin pressure. That is my worry even for M&M, even though that I hold, although reduced rate, but that I hold. But that is a worry in my mind that auto OEMs will have a margin pressure if they don't increase prices. Right, and they don't want to upset the volume, volume uplift, which has started happening after GST. So they don't want to upset the customers, so they will not take a price hike, which I think Maruti has said. And steel prices are going up. So that is a
Q4 is also expected to be
so something which I will start worrying about auto OEMs in that particular thing.
And what about Asian Paints?
So Asian Paints, again, see, crude oil has gone up because of this Iran tension. Plus, there is intense competition. As Asian Paints itself has highlighted, Birla Opus is again bouncing back. So we'll have to see. But at a price, I would like to buy Asian Paints.
Okay.
I'll just go to Shrikant very quickly.
On Reliance Industries, he had said, actually.
Yeah, you talked about Reliance Industries, Shrikant, and you top call after opening.
After opening, what I'm saying is there is good amount of buying interest in all steel stocks. Jindal Steel and Power, Tata Steel, JSW Steel, all are doing well. And the best part is that most of these stocks, I'm to say the stock from this particular basket have broken their important resistance level after a very long time. So at current levels, JSW Steel looks good, which is currently around 1228, 1229. There I am seeing the next levels of at least 1255, 1260. Here we can keep a stop loss around 1210 for buying JSW Steel.
Gainer on the Nifty 500 is now Hindustan Copper. As much as people are circumspect about the rally, this whole conversation around impending copper shortage, remember, it's fraught with risk. One decision from the US, and that will change very, very quickly. Kushbora, we have 30 seconds. Hindustan Copper or your top call for the morning?
Hindustan Copper, book profit. Jindal Steel was a call that we discussed yesterday. An update today for 1140. That also you could continue to hold with a trailing stop loss. Bump it up to 1125 now. And now you can still consider Kirloskar Pneumatic. Not a big bang opening, but a positive one at that. So you can consider as a fresh trade.
Kirloskar. Okay, keep an eye out for that. Okay, gentlemen, all three of you, thank you so much for taking the time out and being with us. Really appreciate your time. A rewarding wedding and festive season put a spring in Metro Brands Q3. Delivered a strong quarter with beat on all line items. What's the outlook ahead? I think before we get in the management and Nissan Joseph Johnson in a moment from now, we get in Mahima to give us a lowdown on the Q3 performance. Mahima.
Right, so Neeraj, like you rightly mentioned, it's been an all-round beat after quite some time for Metro Brands this quarter, and growth was largely led by a strong wedding demand, festive season, as well as benefit of GST, reduction reaping in now this quarter completely. Margins have also improved. They've largely maintained their guidance, and they've also launched something called Metro Active. Overall revenue growth stood at 15% and net profit growth at 35 odd %. Sales per square feet still was flat this quarter, but share from premium category rose to 55%. Overall, in terms of store growth and rationalization, they remain focused on profitable stores. They've guided for normal closure of 2 to 3% of retail stores which are not working for them. The management has also said that Foot Locker openings are being delayed due to BIS related issues. So all of these combined together, guidance has been maintained. So overall a good quarter, but whether this double-digit growth is sustainable or not is the right question to ask management.
Well, a lot of right questions to ask Mr. Nissan Joseph. Mahima, thanks for that. Let's get him in. He's the CEO of Metro Brands. And the board has reappointed him in that same position for the next 5 years. So there is stability at the helm of affairs at Metro Brands. So good for the company, and congratulations to you as well, Mr. Joseph. But thanks so much for joining in. This is Neeraj here. Good morning.
Good morning, Neeraj. Thank you. And it's been a wonderful 5 years so far. And I'm very grateful and honored to work with the team at Metro Brands. And I look forward to the next 5.
As I'm sure your investors do, because I think the delivery, I mean, a quarter here and there notwithstanding, there is a bit of a steady performance that has come in, right, in the recent past as well, or maybe through the whole duration of the last 5 years. But let's talk about the quarter 3. Very good. Decent revenue performance. Would you have hoped for more given that the GST cuts came in, or do you believe it's an ongoing process? And what is the outlook for quarter 4 as well?
All right. So I think, just to recap and summarize, we've had 3 quarters of double-digit growth, and each of those quarters have been consecutively better than the previous quarter before that. I think for the year, we're now at 12% growth, last quarter being at 15%. That's exciting for us. The other part that's really exciting for us, Neeraj, is that we are maintaining our profits, right? So we're not buying sales at the cost of profitability. And we've also maintained profits despite an increased investment in new stores. Specifically the Foot Locker and Metro Active chain, despite our increased investments in marketing. So it's not like we're going into a whole lot of cost cutting and trying to hunker down to make the profitability. There are a lot of good signals happening in us. The other thing I was excited about the quarter is that we saw all our banners grow. So it wasn't just driven by growth in 1 or 2 banners. We have multiple banners of Metro, Mochi, and Walkway, and Crocs, and FitFlop, and all of the banners posted growth over the last year. So that was exciting to see too. And, as noted by the person before me, I do want to point out that our sales per square foot, the way we calculate it, if I opened a store on December 31st, for example, last quarter, that square footage is counted as being open for the entire year, but the sales aren't. So very often you're not going to see square footage growth, especially when we get to opening new stores. Once we stop opening stores, which will be hopefully a long way away in the future, then you'll start seeing a more true picture of a true comparable per square foot sales growth.
Mr. Joseph, okay, so that was very interesting. We're also trying to understand what the implications of the consumption pushes from the government were. And there was an expectation that sub 2,500 category might get a leg up, forgive the pun. But would you say that panned out? Or would you say that it's primarily festive driven or wedding driven sales that have bolstered your numbers in the third quarter?
Yeah, I think, depending on the banner, right? I think it had a good impact on us in our Walkway banner, where, 90% of the goods saw a GST reduction. Metro and Mochi, it's about 40% of the goods are under that price point. Did we see a bump on that? Yes, but you also got to understand this is not the price of an automobile, right? So the delta of 3 or 4% or 7% is not significant enough to spur a lot of growth. I think it's the other initiatives that the government has been doing over a period of time, with the tax laws and a lot of other benefits that they've been providing. That I think is having a better effect, right? So, we also had a headwind that I don't want to make a big deal out of, but Pujo fell a lot into Q2. So despite that, we were able to grow in Q3. So there's a lot of good indications that it's multiple banners that are firing, it's multiple price points that are firing for us. So we're not riding on one single, GST benefit or one single premiumization story. Thankfully, we have a great stable of banners that we can cater to multiple consumers and for their multiple needs for their footwear wardrobe.
Okay, Mr. Joseph, I want to add into the congratulations on the extension, and excited about what's happening. Just want to get your sense from an outlook right now on same store sales growth. And are you expecting this GST momentum to continue?
Yeah, so, from where we sit, we're not seeing any indications that there's going to be the lumpiness that we had post-COVID. There were some very lumpy times. We also had some significant offsets and, we had elections and we had monsoons and all of those things, Some of those things are still going to factor in that might create a little bit of, a little bit of lumpiness, but there are no significant lumpy factors that we see in our future rollout. One of the reasons we've continued to guide somewhere north of 15% is we have a lot of initiatives in place right now, a lot of investments in place right now. So we want to ensure that none of them drag into our profitability. And, we're going to grow as fast as we can in terms of new stores. We're going to make sure that our stores remain profitable. But looking forward, January had 0 wedding dates this year, whereas last year it had I believe it had 13 wedding dates last year. Despite that, December and January are holding up well. So we feel pretty confident that, this should be an indication that we should be headed in the right direction.
Just a couple of things very quickly. Your Foot Locker store openings had been delayed. Is that now on track? Any outlook you can add there?
Yeah, I wouldn't say the word is delayed, Tamanna. The word I would use is, we're being a little bit more cautious on it, right? So it's not like we're not opening Foot Locker stores. We've opened 4 Foot Locker stores in the last quarter. So this was much after the BIS impact hit us, and we were fully aware of it. What we'd like to see so we can get aggressive growth going in our Foot Locker stores is confirmation from all the different brands that they've been able to tackle the BIS challenges that they faced in multiple ways. There's multiple ways to tackle that challenge. All of them require time. All of them require some planning, some investments and effort. Once we have that assurance from brands that they can deliver, I think you'll see us get back to aggressive growth. Right now, we're just being a little cautious. We haven't put it on pause.
One last question, and it would be, since it's the season ahead of the budget, I must ask you, what are you hoping for from the budget? The last budget gave tax relief. We've seen a boost for consumption the year round. Are you expecting more? What would you like to see?
Yeah, I think it was great what the government did for the footwear industry to bring it more in line with apparel when it comes to the GST rate. I think we just want parity. We want parity to be able to compete, whether that includes BIS, that includes GST laws or tax laws. We just want it to be something that we can compete with against not only our individual companies at home, but also international companies trying to do business in India. We also want to be able to, grow the businesses. So there's multiple segments of the economy benefiting as opposed to just maybe one segment of the economy. So I think there's multiple ways to do it, but we're very thankful for at least bringing us in line on the GST with apparel for the first time in a long time.
Mr. Joseph, as always, a pleasure speaking with you. Thanks so much for taking the time. Wish you all the best in the next stint as well.
Thank you.
All right, let's talk about Datamatics Global. And this company, of course, posted its Q3 numbers. It's been a strong quarter for them with healthy revenue growth and improvement in operating margins as well. There's, of course, that impact on account of the labor code. But let's talk about some of those numbers. Revenue increase of close to 20%. 20% at 510 crore rupees, EBIT standing at 75 crore rupees or very close to that mark. Margin is improved quite considerably versus the comparable period. It's about 400 basis points or thereabouts, and the net profit on account of that impact of the labor code has declined, come in at 36.4 crore rupees, that exceptional item of 40 crore rupees coming through in the quarter gone by. We're joined by the management and specifically the Vice Chairman and Chief Executive Officer, Rahul Kanodia. Rahul, thanks so much for taking the time and for speaking to NDTV Profit. Absolute pleasure speaking with you. Help us understand that revenue figure, because I think a lot of people looking at that very closely. 20% looks robust. What has led to that?
I think it's a combination of a couple of things. First, there's been genuinely organic growth and healthy organic growth. Second is the acquisition that we made of a subsidiary called TNQ. And third has been some benefit of the exchange rate. So it's a combination of these things, but net, the organic growth has contributed very meaningfully for the revenue growth.
Okay. Specifically on the revenue front, though, I'm just wondering, and this is something that I think a lot of your investors, a lot of people watching this will wonder about, which is what is the share of AI in revenues and the medium-term outlook for that leg of the business?
So we've done about 65 odd projects in AI. It's hard to define a share of AI specifically because AI is getting integrated into pretty much every project. And therefore, it does not stand out as an AI project in itself. But yes, pure AI projects, we've done about 65. And then there's AI scattered around and sprinkled into every project that we can.
So, Mr. Kanodia, good morning, Tamanna here. Just taking that AI story forward, because this has been the question. How do you tabulate or how do you actually calculate what an AI project is? Is it the sprinkle on top? Because it's going to be in the base of pretty much everything that you do. Should you look at it from such a wide aperture or a narrower lens? How are you looking at AI revenues, and at some point would you want to report them as standalone?
So some of the projects are core AI, where it's fundamentally an AI-driven project. That's how we define AI. Then there's a sprinkling of projects all over, and in the existing projects, you do have some components of AI coming in. That technically is AI, but it's hard to therefore define what is the AI revenue or not. So what we are talking about is core AI, which is a project essentially designed on the base of AI.
On your core numbers, just want to clarify, the PAT drop is because of the labor code charges?
Yes, that's correct.
Okay. And why do you think this is going to have a broader impact? And I know every company has done this. Is this a one-time thing? Do you see any broader impact of labor code charges over time?
No, it is a one-time thing. On a recurring basis, it'll get merged into the quarterly employee cost because this is a gratuity component. So this was a one-time because it had historical recalculation. And now that that's done, going forward incrementally, it'll be very minimal.
Mr. Kanodia, good morning, Neeraj here. And just trying to get a picture, since we are at the start of 2026, of the slightly longer time frame, when one looks at what you've done in the last 3 or 4 years, right, as a company, not only has there been steady top-line growth, but your operational metrics have improved year after year. I believe the trailing 12-month number on the operational metrics would be the highest in the longest time. Is this the new normal, or do you improve upon this? And is there a sense of what that number could be, let's say, 12 to 24 months down the line?
So there will be further improvement as we continue our cost control, as we continue our growth initiatives. There will be some uncertainty generally because of the economic situation globally. The US still is uncertain. Europe is looking better. But nevertheless, and also the advent of AI could be disruptive. But net, we are seeing a huge opportunity for us to leverage these technologies to provide transformational services to our customers. So net, I'm looking at a very healthy next 2-3 years. And therefore also on the profit.
Okay. And forgive me for not knowing this, but if you had given a guidance for FY26, are you on track to meet that or improve upon that?
So right now we are on track, and I think next year looks a little better than this year.
I mean, a little is how little, is it?
So no, yeah. So we I think are looking at a high single-digit organic growth. Plus, if there's anything inorganic, then we look at that.
On the annual, anything inorganic? I mean, you might not be able to predict, but are there conversations going on? Is my question.
There are conversations going on, not matured yet, where we are in a serious state. But yes, there are conversations going on.
Okay, I do want to ask about ROE, ROCE.
Yes.
And this is, of course, when you look at the last 4 years, there has been a little bit of a decline. And I'm wondering whether a bottom has been found and what the trajectory will likely be going forward.
So the ROC has also got to do with the current funds. But as we consume the funds, we are at about 14-15%. As we consume the funds in the acquisitions or certain capital expenses that we have planned, then obviously you'll have a different ROC coming up. So ROC should improve as we consume the funds for growth.
Mr. Kanodia, I want to understand about the banking segment. And for you in particular, this is domestic focused. It accounts for close to 20% of your revenue.
Yes.
What are the trajectories here? It is your fastest growing segment for most IT companies, but I think that's from the perspective of looking outside of India. So what are your expectations?
So the banking and insurance, that BFSI segment is very ripe with digital transformation and AI-based transformation, particularly. So we've got some very interesting projects going. We are doing that in India right now, and the agenda is to take those solutions to the international market. So our focus will be taking these new AI solutions into the international market once they've stabilized in India. And here we've got some live, interesting projects already started. So that's the strategy. Those companies are very open to the idea because they are very heavy with information processing, and that's where AI fits. So they are very open to the idea of using these technologies for changing and transforming their business operations.
Mr. Kanodia, I think EdTech, if I'm not mistaken, is one of your big drivers. Are you seeing a lot of AI integration there? What is the outlook for EdTech? And, can you give us a segmental guidance split as well? I think BFSI and largely domestic has also done well.
So, BFSI domestic has done well. EdTech is a little slow on adopting these technologies, essentially because we are targeting the education publishing segment, and they are a little sensitive to IP and intellectual property violations. So there's some fear that AI could violate IP rights of the authors, and that's why they're a little hesitant. But that's a very rife and potent segment to adopt AI because there's a lot of content. So I think it's a matter of time where the customers come around saying, okay, you're not violating author's IP, and they'll be okay with adopting this technology.
Okay, thank you so much, Rahul Kanodia, for speaking with us. That's the Vice Chairman and CEO of Datamatics first on NDTV Profit. Meanwhile, markets are looking like they are worse for the wear. The Nifty close to the low point of the day, about 0.5% down at this point. Nifty IT is where the pain point is. Just pull up the Nifty IT, about 1.5% down, and then its internals as well. That's where the shock and awe really is, and you're seeing that drag coming in on the Nifty IT. Let's pull up those constituents if we can on the Nifty IT, and persistent systems there. Worst hit about 3% down, Emphasis, TCS, all of them. I don't know if this is a mix of nothing really moving on, interest rates, if it's geopolitical fears, if it's immigration crackdown in the US or what it is. But you overall have quite a dull move on Nifty IT. Metal stocks, meanwhile, are the only ones which are giving some relief.
Yeah, you bet. I mean, today is that kind of a morning wherein we're seeing a bit of a, it's a slightly tough one. But the point will be, I mean, and look at what, Hindustan Copper is on steroids right now. But we are, 120 points lower. I wonder if this changes during the course of the day, the way yesterday's market changed. And you got to keep that in mind, that banks are actually doing reasonably okay. The heaviest weightage on the index is down just 0.22%. On the market is down just 0.22%. So bear that in mind. Volatility, 13.7, marginally higher, but nothing too dramatic. But Hindustan Copper, oh my God, that stock, another 10% higher. It's one fraught with risk, but for now, it is rewarding the people who are taking that risk and piling on to that stock. And a clutch of others like Gland, Oil India, GVT&D, etc. doing well. But moving on to the next conversation, and it's budget time. You can't not do with a conversation around capex, railways, rail systems, and more. And there are other reasons, of course, to talk to Titagarh Rail Systems always. They've signed a deal with ABB for a driverless metro project as well. Before we get in, Umesh Chaudhary of Titagarh Rail Systems to discuss what's next in store for the company and the budget expectations. Let's first get in Varsha to set this conversation up for us. Varsha.
Well, let me start with the deal agreement with ABB that Titagarh has signed. They've signed agreement with ABB India for driverless metro projects, which builds in strategic alliance announced in November 2023. And ABB will support design, manufacture, and do commissioning, and also transfer of technology for TCMS for 25 AC metros. Now, talking about the strategic importance of this deal for Titagarh, this completes their TCMS portfolio and this enables backward integration across the metro value chain and positions Titagarh as a comprehensive rolling stock manufacturer. On to the second reason why Titagarh is in focus is, of course, the key budget expectations. The expectations are centered on higher capex, faster execution and deeper private sector participation, and the incremental budget allocation is after 3 years of muted growth. The spending mix is likely to shift towards capacity augmentation, and the project announcements which are key to watch is additional dedicated freight corridor with long gestation timelines and high-speed rail corridor expectations, and of course continued rollout and scaling up of Vande Bharat trains. So these are two reasons why Titagarh is in focus as of today.
I'm going to start with focus number one. Thank you for that, Varsha. Umesh Chaudhary, Vice Chairman and MD of Titagarh Rail Systems, is speaking with us. And of course, we will be having that budget conversation as well, Umesh. But first, let me begin with this agreement with ABB India for a driverless metro project. It sounds very exciting. What is it about? What's the size of the project? What are the details you can share?
Yeah, good morning. It is a very interesting project for us, because you see what we did since the time we entered into this segment of metro coaches. We've tried to ensure that we capture the entire value chain. And when we started making the first aluminium metro for Pune, we were primarily doing the assembly. Then we went into the stainless steel with Bangalore. The one that we are doing with Gujarat, there we took over the TCMS for a 750 volt DC metro coach, but we did not have the transfer of technology or transfer of manufacturing for the traction motor and the propulsion system or the traction converters. This one, in turn, we have been able to take another big step forward to get some of these key components partially to be transferred to our manufacturing facilities in Calcutta, and also get the complete transfer of technology and know-how for the 25 kVA AC TCMS, which is like the brain and the nervous system of the train as such. So basically, block by block, what we are trying to ensure is that we have a complete hold over the value chain of both the type of metro systems that operate in India, which is the 750 volt DC and the 25 kVA AC.
Well, what does this do for the company in terms of your position, Mr. Chaudhary, once you have this transfer of technology, and what is the capex or the outlay that you have to make?
So we already have invested in the facilities. So we already have our traction motor and traction converter production facility, what we already also gave out in our press release. And what we will be doing is we will be adding on, we are doing the traction motor for locomotives and for EMUs. We'll be adding on to the product portfolio by doing the traction motors eventually for the metro coaches, which is a higher end of the technology or higher end of the spectrum. So it effectively what it does, it completes our product portfolio. And as I said, it kind of gets us a strong hold on the entire value chain of the metro business.
Mr. Chaudhary, good morning. Alex here. And we're just a couple of days away. Now we're counting the hours from the presentation of the budget. And of course, some of us are old enough to have seen a rail budget presented separately. If that's piled into the same one, and there's no complaining about that.
Fairly recently, Alex. You're definitely old enough.
We watched quite a few of the rail budgets. But having said that, there's a lot of expectations, Mr. Chaudhary, heading into this next budget. And stocks have reacted, not just in the railways pack, but also in the defense pack. And these are two areas that the government is expected to focus on. What are your own expectations, and what are you building in towards?
See, as far as our expectations out of the budget is nothing different from what we have been expecting and what we have actually been seeing in the last few years, capex has been a focus of the government. Infrastructure has been a focus of the government. And we believe that this is likely to continue because the vision of the Honorable Prime Minister is extremely clear about, on one hand, making India into a developed country, Viksit Bharat of 2047, and on the other hand, to continue to support the Make in India and the Atmanirbhar Bharat policy. So basically, if you dovetail the two of them together, what it does is that on one side there is the market opportunity, and the other side, Indian companies like ourselves have a great foothold in them because they have to be produced in India by hopefully Indian companies. So as far as the budget is concerned, the expectations are very bullish. We are very, very hopeful. And I would say, I would even stretch to saying that we are confident that the focus on infrastructure will continue. Having said that, we must understand on the railway side of the budget, the budget can actually be divided into two parts, the capacity creation budget and the capacity utilization budget, while both are capex. So when the track is constructed, that takes away bulk of the money. And that is not something that happens year after year. But the procurement of the rolling stock, things that we do, is something that will continue for the life cycle of the track, which may be 100 years or maybe more than 100 years. So what is important is not only the quantum of the budget, but the inter-se allocation of the budget. And while the inter-se allocation of the budget in our segment might be smaller compared to the overall budget, it is definitely something which is going to be a longer one or a long-lasting one.
Just a follow-up to that, and talking about the life cycle of some of these projects, therefore, on the rolling stock, right? So, Mr. Chaudhary, heading into the next couple of financial years, or even the next 2 or 3 financial years, would you say that there's a sizable chunk that you might get from replacement orders, and how do you look at that as an opportunity?
See, the Indian Railways on a thumb rule basis, on a back of the envelope basis, has about 3.5-4 lakh wagons. And I'm talking about our freight business right now. And the average wagon size age is about 25 to 30 years. So then, therefore, every year there will have to be replacements. And the replacements have been actually much more back-ended in the sense that we've not had many replacements in the last few years because the wagons were added in the last earlier part of this life cycle, apart from the last 2-3 years that the railways have really pumped up the wagon induction. So we do believe that there will be replacement demand that will be there in the wagons, but also we believe that there will be the growth demand because you see India is well on its way to become third largest economy in the world. Or a $5 trillion economy. And in order to be competitive, in order to do that, we have to be competitive. And in order to be competitive, we have to move the logistic cost as a percentage of the GDP lower. So, all of this put together effectively says that the target that the railways have set for themselves of carrying 3 billion tons of traffic by 2030 is a must-have for the country. And in order to do that, they require a lot of more wagons. So, there may be a few months of delay or here and there as far as the procurement is concerned, but the underlying solidness of this demand or of this market remains intact.
Umesh, hi, good morning, Neeraj here. And I'm wishing you good morning with an empty glass, by the way. But just a point, since we have warm borders right now, and if the incremental part of the capex allocation goes towards defense, could it mean that it could be a budget that could not have large allocations for other capex requirements, including railways? Is that a distinct possibility?
I don't see, Dheeraj, that as a possibility, distinct possibility. I believe that the overall capex is going to be sizable. I, in fact, I hope that the capex allocation to the railways will be even higher than what we've seen in the last years, which in itself, the base is so much higher. If you really compare it over the last 10 years or 15 years, we've seen a dramatic shift in the way the capex allocation for the railways has been. So I believe that there exists all underlying reasons for the capex allocation to be larger. But I would also like to add a few things which we are hoping, which we hope that we will see in the budget. We hope that there will be more dedicated freight corridors. We hope there will be more high-speed corridors, because these are very long-term projects, but they will really build the foundation for the India of the future. So so to answer it in one word, I don't think that there should be any cut on the capex.
Right. Umesh, thanks so much for taking the time. Pleasure speaking with you as always. And I hope that your expectations actually come to pass when the finance minister presents a budget. Fingers crossed. All right. Well, in the run-up to Budget 2026, we've got new ground reports from across the country, and this is one of them. Gems and jewellery, alongside tourism, form the backbone of Jaipur's economy and remain the city's biggest source of foreign exchange. But with the US hiking tariffs, the industry is beginning to feel the tremors. As part of NDTV Profit's budget for Bharat 360-degree coverage, my colleague Harsha Kumari had this ground check on how the Jaipur gems and jewellery industry is affected and what it wants from Budget 2026. Take a look.
Cornerstone of Jaipur's economy. We are here at the famous Johari Bazaar outside Devri Ji Ka Mandir. And this street is famous for its trade in gems and jewelry. In fact, gems and jewelry is the second largest revenue earner for the state, along with tourism. In fact, perhaps the largest till the Trump tariff set in. Now the market is volatile. What do people here engaged in the gems and jewelry trade really want? आप क्या कर रहे हैं? ये क्या लेके आए हैं?
हम माल देख रहे हैं सेमी
क्या है ये?
एमराल्ड।
अच्छा।
एमराल्ड स्टोन।
तो यहाँ पर क्या होता है?
यहाँ पर माल की सेलिंग परचेजिंग होती है। मजदूर तबके के लोग आते हैं यहाँ पर काम करने, और हम लोग यहाँ पर से माल खरीदते बेचते हैं, और हम ब्रोकर हैं। हम माल बेचते हैं आगे व्यापारी को। पहले तो माल बेचते थे, खरीदते थे व्यापारी, तो
लेकिन अभी हम देख रहे हैं कि जब से अमेरिका में अस्थिरता आई है, ट्रम्प टैरिफ्स आ गए हैं, तो जयपुर का जो एक्सपोर्ट है वो बिल्कुल उससे इफेक्ट हो गया है। तो क्या असर पड़ा है?
बहुत असर पड़ा। 50% टैरिफ लगा दिया ट्रम्प ने। उससे बहुत ज़्यादा मनमानी कर रखी टैरिफ से ट्रम्प ने। उसने हमारा पूरा मार्केट डाउन कर दिया। हम व्यापारी के पास माल लेकर के जाते हैं तो वो कहते हैं 5000 का माल हम बेचते हैं उनको, तो वो कहते हैं 2500 रुपीज़ तो टैक्स में जा रहा है हमारा। हम कैसे माल खरीदें आपसे?
तो एक्सपोर्ट कम हुआ है, आप देख रहे हैं?
हो गया अभी, कम हो गया, बहुत कम हो गया।
तो आपके व्यवसाय पर कितना असर पड़ा है?
बहुत असर पड़ गया हमारे व्यवसाय से, बहुत ज़्यादा असर पड़ गया। अब हम इससे बहुत लॉस में आ रहे हैं अभी।
देखिए, अब थोड़े दिन में बजट आने वाला है, तो आम आदमी क्या चाहता है? व्हाट डज द कॉमन मैन वांट? क्योंकि आप लोग का जो व्यवसाय है पूरी तरह से एक्सपोर्ट पे निर्भर था, बहुत बड़ा हिस्सा। दैट अबाउट 30% ऑफ जयपुर्स एक्सपोर्ट इज टू द यूएस। एक्चुअली यूएस वाज अ वेरी बिग मार्केट। सो अब आप ये जैसे ये कह रहे हैं कि आपसे कोई माल ही नहीं खरीद रहा है, तो आप क्या चाहते हैं फाइनेंस मिनिस्टर से?
इसके लिए गवर्नमेंट को सोचना चाहिए हमारे बारे में कि मतलब कुछ लोगों की जो दिनचर्या जुड़ी हुई है इस चीज़ से, और काम करने का जो प्रोसेस है वो स्लो डाउन हो गया है, तो गवर्नमेंट का इस तरफ फोकस नहीं है।
I am in the Jain Jewelers showroom. It's the Khandaka family which have been in the trade for generations. And the fifth generation is right here in front of me, Kamal Khandaka ji. Kamal ji, the market is very volatile. You know, I can understand that Indians are still buying, but otherwise if you look at Jaipur's jewelry trade, and Jaipur's jewelry trade is the cornerstone of the economy, it is volatile. Outside also you find there are not as many people selling. Exports have come down. So what is the outlook and what do you want from the finance minister?
देखिए मैम, मैं आपको एक निवेदन करूं, गोल्ड की रेटें बहुत स्पीड से बढ़ रही है, अराउंड 50 to 60% साल भर के अंदर बढ़ गया है। चांदी भी बहुत बढ़ रही है और जयपुर जो है स्टोन्स के लिए माना जाता है और इधर हर तरीके के 5000 6000 तरीके के स्टोन, सेमी प्रीशियस, प्रीशियस, सब तरह की कटिंग होती है। जैसे सूरत जो है डायमंड के लिए जाना जाता है, वैसे जो जयपुर है वो कलर स्टोन कैपिटल ऑफ द वर्ल्ड है। तो यहाँ सब तरीके के स्टोन्स बनते हैं और फिर वो अलग अलग जगह जाते हैं, पूरे विश्व में जाते हैं। और हमारे यहाँ जैसे आप जानते हैं सीतापुरा है, वहाँ भी बड़ी बड़ी फैक्ट्रियाँ हैं जो एक्सपोर्ट का काम करती हैं साहब, और वो स्टोन्स को यूज़ करती हैं, उसकी ज्वेलरी बना करके एक्सपोर्ट करती हैं। जनरली अमेरिका हो गया और बहुत सारे वर्ल्ड के अलग अलग देशों में करती हैं और उसके हिसाब से बिजनेस चलता है। अभी स्टोन का मार्केट थोड़ा सा डाउन इसलिए चल रहा है, एक तो सिल्वर बहुत तेज हो गई है। आप देखिए जो सिल्वर साल भर पहले 70-80 हज़ार रुपये हो रही थी, वो आज के टाइम पे 3 लाख रुपए बन गई है। तो एकदम से 3 गुना तेजी आना एक बहुत बड़ी ड्रास्टिक चेंज है। उसकी वजह से जो इंडस्ट्रियाँ हैं वो थोड़ा सा प्रोडक्शन उन्होंने वीक कर दिया, और जो स्टोन्स वाले हैं वो भी अपना प्रोडक्शन वीक कर दिया, उन्होंने कम कर दिया अपना प्रोडक्शन करना, क्योंकि उसकी खपत कम हो रही है। और दूसरा जो ट्रम्प ने टैरिफ और ये सब चीज़ें लग रही है, उसकी वजह से भी देखिए मार्केट को बड़ा डीमोरलाइज्ड हो रहा है मार्केट। तो जो एक देखिए कारीगर तो पूरे उतना ही है, फैक्ट्री वालों के खर्चे उतना ही है, पर क्योंकि सेलिंग नहीं हो रही तो उसके हिसाब से उनको प्रोडक्शन कम करना पड़ता है और छटनी भी करनी पड़ेगी आगे जाकर, अगर वो सही टाइम पे सुधार नहीं हुआ। तो हम तो गवर्नमेंट से सबसे पहले निवेदन ये करते हैं कि देखिए जो भी मतभेद हैं, जो भी ड्रास्टिक चेंजेस हो रहे हैं, जो अमेरिका के साथ डिस्प्यूट है, वो सॉल्व करनी चाहिए साहब जल्दी से जल्दी, और कुल मिलाकर के सॉल्व करके इस टैरिफ को सही से कर देना चाहिए, जिससे हमारे एक्सपोर्टर्स जो हैं और जो हमारे कारीगर भाई हैं उनको एक ये रहे, प्रोत्साहन रहे कि रेटों की तो मार पड़ी रही है, ऊपर से टैरिफ की मार तो दुगनी मार हो जाएगी साहब। तो मैं तो गवर्नमेंट को निवेदन करता हूँ कि इसको किसी तरह भी सॉल्व करें प्रॉब्लम्स को, और अमेरिका अपना बहुत बड़ा बाजार है उसको सॉल्व करें। और मैं तो कहता हूँ सभी देशों से अपने जो भी परेशानियाँ हैं या जो भी है उनको बिल्कुल पोलाइटली और सिस्टमेटिकली तरीके से सॉल्व करके अपन उसको आगे बढ़े।
With these people here, they seem to appeal to the finance minister that something should be done to boost exports, something should be done so that the Indian industry is cushioned against tariffs, and something also should be done to poor people whose livelihood depends on the gemstone industry, the cornerstone of Jaipur's economy.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान,
कुछ अच्छी खबर मिलेगी क्या? How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा। कब से बोल रहा हूँ, कोई सुनता ही नहीं।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh. This is my story.
1st February 2026, what will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
Back with India Market Open, and Thyrocare Technologies reported a very strong quarter. Before we get the management, let's get in Varsha to talk about the quarter gone by. Varsha.
Well, the revenue growth that you're seeing is led by 20% growth in the pathology business, and they processed 49.6 million tests, which is up 22%. Onto the pathology, which grew 20% year on year, and franchisee revenue grew 12%, and pathology volumes grew strongly with test count up 22% year on year. Onto the radiology, which over there revenue declined 7% year on year, but year-to-date, radiology grew marginally at 1%, which includes plus a Pulse high-tech business as well. So overall, yes, a good set of numbers and a strong margin uptick also.
Rahul Guha joins in to talk about the quarter gone by and the quarter ahead. The stock 4.5% lower in trade. Rahul, good morning. Thanks for joining in. Neeraj here. How would you put the quarter into perspective? It seemed strong relative to your peer sets and definitely fairly decent on the margin front.
Hi, good morning, Neeraj. And yes, the performance has been good. Growth continues on a steady clip. Of course, we didn't have Polo and Vimta last year in the base. So, to that extent, the growth rate has moderated a bit from, 22% to 20%, but continuing to grow very strongly our pathology business. What's working for us is our franchisee expansion that continues at a very good clip, and our partnerships business is doing very, very well. It grew at almost 39% year on year this quarter. So I think on the revenue front, we've been doing quite well. I think it's a set of expectations only. While I've been saying that we will hit mid-teens growth, I think given the last few quarters, people are now expecting 20% from Thyrocare on a regular basis, and hence the disappointment in the market. But I'm very happy with how the growth is coming through. The underlying metrics are working well, which is franchisee addition and partnership addition. And I expect, to continue this performance towards the end of the year.
Why do you call it a disappointment, Mr. Guha? Tamanna here. Just curious.
No, I think we've been growing at 20 plus for a while, and people now have come to start to expect more. And I think that's why I would say some folks are disappointed. But I would say I'm very happy with where we are. We continue to sustain 20% growth rate, which is well above the industry. And I can't control expectations, but what I will say is I'm very, very happy with how the strategy is panning out and how the growth rate is coming through.
Do you think radiology is what has dragged that kind of a growth? Though, of course, franchise growth has been very strong. But why that slide in radiology?
Actually, in radiology, we are optimizing for profitability. So centers that are unviable, we've been shutting down. So to that extent, you will see it in the radiology business. While revenue has come down, PAT has almost doubled. So, that's the focus in the radiology business.
And what are your key margin drivers in your view? I mean, you talked about top line growth and the expectations there, but if I look at your margins as well as your bottom line, the numbers look robust. What do you think have been the key drivers?
Look, growth solves everything. When you're growing at 20% plus, your costs don't grow at that level. And so a large part of the margin improvement is mostly coming from operating leverage. And that's what's flowing through into the bottom line.
Okay, Rahul, it might be too soon to ask about FY27 maybe, but I wonder if you believe that what you were envisaging for quarter 4 is something that is replicable per se for FY27 or FY26 as well, broadly?
Look, at the start of the year, I had guided to mid-teens growth. Of course, over the 9 months, we've beaten that hands down, and I expect Q4 to not be very different from Q3. Maybe a slight moderation there, but you must understand this company has been growing at 20% plus for the last couple of years. So we are sitting now on a very high base, and we've been outperforming the industry for a while. So I would be moderate in my expectations for next year and still maintaining, the mid-teens guidance for FY27 as well. And that's primarily because the base is so high. 3 years consistently, our non-COVID business has grown at 20% plus, while the industry grows at 10%. And competitive intensity continues to be there. So therefore, I'm being cautious about FY27. And saying, maybe we'll land the mid-teens area.
Just trying to understand about the African subsidiary. Are you close to break even now? When do you expect that to happen? And is there a further plan of expanding internationally?
The African subsidiary will break even in about 12 months. It's still loss-making. It's only been a year in Africa. So, we can't expect to turn up profitable in a new country within 1 year. I think 24 months is what we gave it, and we are on track to achieve 24 months break even. It's a small business. I think we are still understanding Africa. So it would be foolhardy right now to press the accelerator and enter more markets until we are sure, the playbook is in place. I think we are now reasonably clear what it takes to win in Africa. I just want to see it flow through to the numbers, and then we will expand as appropriate.
Okay, Rahul, we wish you all the best for not just Q4, but that growth lasting well into FY27 and beyond. Keep up the good work. Thanks so much for joining in today.
Thank you, Neeraj.
That's Thyrocare with fairly decent numbers, by the way. Just that the Q3 numbers may have been slightly off relative to Q1 and Q2. And maybe that's why they're disappointed, because frankly, when I looked at the numbers, I couldn't find too many faults. But the market clearly doesn't like it. So keep that in mind. Okay, back next 20 minutes of the show as well. We'll probably hear PM Modi speak as well. But we've got a very big market voice, or a very big voice per se, global voice. Geopolitical uncertainties looming around us in 2026. Robert O'Leary, popularly known as Bob, of course, Co-Chief Executive Officer and Portfolio Manager at Oaktree Capital Management, believes that sectoral churn is on the cards, and don't get married to one particular idea and ideology. Listen into a small slice of the conversation that I had with Bob. I would love to understand from you, Bob, as you look at the world from your vantage point, if people in 2024 thought that it was a year of peak volatility, 2025 really came in as a bolt of surprise. And if people thought that 2025, starting from deep sea to Russia, Ukraine, to multiple other geopolitical and political events, might be peak of volatility, boy, 2026 has started off on a strong footing too on that note. How do you see the world from your vantage point?
Yeah, we very much agree that volatility has increased over the last several years. I'd go back to a memo that our founder, Howard Marks, wrote back in December of 22, which he entitled Sea Change. And I reference this quite a bit because I think it's very accurate in how it describes the macroeconomic environment. And what that memo says, in essence, is that a lot of the forces that drove sort of unprecedented level of prosperity and financial market sort of health over the last 40 years was starting to come to an end. And really the three forces that drove that were increasing population, globalization, and geopolitical calm. And as we sit today, all three of those forces have been disrupted. Certainly geopolitical calm, we don't have that. You're starting to see deglobalization instead of globalization. And then finally, you're starting to see population be a headwind instead of a tailwind. And the implications for the economy are really quite profound. Those three forces drove unprecedented declines in interest rates and very calm interest rates over that 40-year period of time. And I think what we can expect from here on out is much more volatility. And in fact, since that memo was written, that's exactly what you've seen. You've seen higher and more volatile interest rates, even with central bank rates declining in the last 18 months. Long-term rates have stayed high, and we anticipate that to be the case. So yes, we think the backdrop has become much more volatile, and we expect that to persist.
How does a large institution decide between asset classes and make investment decisions in such volatile times, especially since tariffs are actually adding further fuel to fire, because it's no longer tariffs from the United States to a select band of countries. It now seems to be the world seems to be tariffed by the United States, right? So there are tariff tensions, trade tensions, and of course, as we said, heightened volatility. How do you guys think about investing or make investing decisions in such a scenario?
It's something that we think about on a daily basis. And you're right, tariffs are going up all over the world. That's the surest sign of the deglobalization I referred to just a moment ago. And that will make for higher and more volatile interest rates, which should transfer value from equity holders to creditors in the coming years. We at Oaktree specialize in fixed income, primarily sub-investment grade fixed income. And I think that plays very much to our strengths. So part of the question, or the answer to the question that you asked, is in what we do on a daily basis, which is that we very much focus on the credit side of the equation. Within that, where we do our best work, or where I believe we do our best work, is in dislocations, environments where syndicated markets start to break down, and it requires alternative capital of the form that we have to step in and provide that capital to borrowers. We're starting to see that with increased frequency. There has been, at a surface level, a level of calm and relatively benign market conditions. But if you look below that, it's starting to show some deterioration in terms of credit conditions, and we think that persists and perhaps increases over the course of 2026.
Wow, Bob, sorry, just trying to understand this. Would you believe, or are you trying to say that what will triumph in 2026 and 2027 maybe is fixed capital which is available on tap, fixed income which is available on tap, or could it be opportunistic fixed return capital like private credit, for example, which will be able to make the most of such times?
So I think it depends a little on the path of the economy and of the financial markets. If we see a recession, which I think is entirely possible, there's really only one thing propping up most of the global economy at this point, and it's spending on generative AI. If that were to deteriorate or somehow start to decline, I think you would see a recession. If there's a recession, we'll have a very significant opportunity in opportunistic credit. If it stays largely where it is, the economy that is, and the financial markets as a resulting matter don't see a major dislocation, I still think the place to really focus is credit. It will be in different forms of credit, more performing credit. To your point, it could be direct lending, where we're going out to approach borrowers on a bilateral basis instead of through the syndicated markets. But again, it depends a bit on the path of the economy from here.
But you do believe that equities, which had a great run, and led by U.S. equities in 2023 and 24, and even if 2025 U.S. equities were not top of the pile, but they certainly did perform. So 3 years of a return, high return generating equity return in the U.S. and some other areas, you reckon equities might not be the asset class of choice in 2026?
It is the collision of two profound, almost tectonic shifts in the global economy. On one side, again, generative AI. And if you look at the outperformance of the equity markets, it's those names that are associated most with generative AI that have seen their currency, their stock go up pretty meaningfully.
That's true.
And on the other side, this volatility that I mentioned a minute ago in interest rates, there's a battle between those two. Again, in the last 2 years, the economy has largely been dictated by the strength of generative AI and the spending associated with that. I think 2026 we could see a reversal there, where you start to see the volatility in the market start to overcome that as people get worried about the return on that massive amount of spending that's gone into generative AI. And if that happens, I think equities could suffer as a result.
Wow. And Bob, do you reckon that this would, equities at major economies suffering in your terms as a result would mean that equities across the world have a bit of a lame or a lean 2026, or could some markets like India, for example, which have underperformed almost all of 2025, both relatively and absolutely, and have growth up ahead. India could well be one of the fastest growing economies with 6.5%, 7%, 7.5%, depending on which way you believe it will. But let's say, or when the numbers show up. But would economies like that have markets which are outperforming?
It's entirely possible, and I don't know the factors that drive a lot of different major economies. You mentioned India, and the growth and the strength in the economy here is astounding, and it is not as tied to generative AI as some of the other major economies. So it's entirely possible that you do see a decoupling of some form between what goes on in India or other markets and what you've seen in some of the developed markets. But I do feel like there's been one major force that's driven most of the major economies, and if that rolls over, I think you're going to see a lot of pain in the developed economy financial markets.
Very interesting. What do you think about the next 5-year cycle then? I mean, let's assume that what you're saying turns out to be true, in that we might, if we do see some bit of AI spend come off and there being a low growth or a recessionary phase, could this be a long-lasting one, considering that geopolitical stress is also quite high? Or could central banking decisions rev up growth? Because we know that post-2020, effectively central banks decided, right, what money supply and growth could be like. And even though 2026 might see conflicting decisions between major central banks, could they still hold the trump card? Pun is not intended here, by the way.
Yeah, interesting. Good pun. So we stepping back for just a minute. Well, I did indicate, and I still believe, that there may be some short-term disappointment in generative AI and the tremendous, just staggering amounts of capital that have gone into it. In the long term, it is a transformative technology on the order of which we haven't seen in my lifetime. The biggest comparison is back to the .com, the development of the internet and everything associated with that. There was, of course, a very punctuated crash in the markets associated with the internet, the development of the internet, but the economy recovered very quickly, and ultimately it was a tremendous boon to productivity, and that provided us a lot of stimulus over the ensuing 2 decades. I think you'll see much the same progression here. If there is a disappointment, I think it'll last for a period of time, not probably more than a year or two, and at which point you'll start to see the use cases for generative AI start to really get traction and increase productivity at a level, again, that I'm not sure we've seen in my lifetime. So I am long-term optimistic, but I think there could be a wobble or, as we call it, a dislocation at some point in time when it's sort of determined that the returns on the early spending might not be as nearby as people think.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा। कब से बोल रहा हूं, कोई सुनता ही नहीं।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माई स्टोरी।
First February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
I have always had this inclination towards art, and if we don't collaborate and bring those artists forward, give them a platform, who else will?
Honoring the masters who define our cultural landscape, M3M presents NDTV Master Stroke Art Awards. Coming soon on the NDTV Network. This budget, India's
Hello and welcome to Ask Profit right here on NDTV Profit. My name is Puneet Zaveri. With me is Mahima Vachajani, and over the next hour or so, we'll try and solve all your stock-related queries with some key corporate voices that you don't want to miss. But try and get all your stock-related queries answered. So do start sending them on the numbers that are flashing on the top of your screen. You can send us a WhatsApp. The number is right there up there. Also call us, speak to us directly for your stock-related queries on the landline number that's visible on the top of your screen as well. But before we do that and a lot more, let's quickly look at how the markets are doing, because it's been another interesting session in that case for the Nifty 50. We've seen that it's down almost 150 points. Now the indication at the implied open was a downtick of almost 90 points. That while that did play out at the start, we've given up a lot more positions. So when you look at the heat map for the Nifty 50, it will give you that perspective as well in terms of stocks. Yesterday, Oil India, ONGC were some of the key ones that were the biggest gainers for the Nifty 50. Let's look at the heat map now and get you that perspective. So in terms of stocks that are doing well, we have seen that Tata Steel, Hindalco, NTPC as well as L&T are doing well. L&T on the back of its quarterly earnings has responded well in terms of performance, but largely you can see the red on your screen across the board. Indigo, Asian Paints continuing that downward momentum yet again, with Mahima shaking her head next to me. And that performance in quarter 3, while it did look okay, there was the miss in terms of earnings for the company. The sectoral heat map will also give you that perspective for the Nifty across, of course, the Nifty 50, you're seeing that pressure, but barring the metals, which has been out and about, oil and gas and energy, you're seeing a consistent pressure across the board. The Nifty Auto will be in focus yet again. Maruti, while it did come out with decent earnings, the increase of small cars going forward might have some impact on margins, and that's what the street's not liking. Apart from that, the Nifty IT is also down 1.5%. But Mahima, overall in the broader markets, is it a better picture compared to the benchmarks?
Unfortunately not. Just one day of hurrah and we're back in the red today. For the broader markets as well, the mid cap 150 is down by about 0.5% and so is small cap 250 as well. Largely in tandem with what the mid cap 150 is doing. Both of them down by about 0.5% in line with the benchmarks also as well. In terms of where the BSE 500 is concerned, let's try to pull the total market, the BSE 500 chart, and see as to what are the counters that are kind of buzzing in trade. And Hindustan Copper is still leading that pack. I mean, I'm just tired of saying this name every day when I do the market check, and real FOMO of missing this rally, whosoever has not gotten into this. So Hindustan Copper still topping that chart with 16%. You have Gland Pharma, MRPL, Embassy Developers all seeing gains in that range of 4 to 16%. But on the flip side, you have counters like CSB Bank, 5-Star, Vaibhav Global down by about 6 to 5% each. Craftsman Auto, Motilal Oswal, Sheela Foam all down in that range of 4 to 6%. So that's with regards to where the broader markets are concerned. But with that, as Puneet promised, some corporate conversation that you should not miss, and V-Guard is on our list. Mr. Ramachandran V, Chief Operating Officer of V-Guard, joins us now to understand as to how overall Q3 has panned out for them. Mr. Ramachandran, my first question to you is with regards to how volume versus value growth has panned out in the electrical business for you this quarter.
I think it's difficult to predict, right? Particularly, significant part of our electrical business is wire, right? And wire is heavily reliant on copper. So copper price movement globally will determine, the input cost and also the forward pricing to consumer and trade. So it's a bit difficult to predict, right? So if a copper stays where it is, or if it's going to be more expensive, then I think more or less, this kind of growth will be visible. But otherwise, if there is a, downward correction in copper, then there can be some downstocking by the trade, right, till they liquidate higher price inventory. So it's a bit difficult to predict right now, given the geopolitical environment. It's hard.
कल राष्ट्रपति जी का उद्बोधन
140 करोड़ देशवासियों के आत्मविश्वास की अभिव्यक्ति था। एक 140 करोड़ देशवासियों के पुरुषार्थ का लेखा जोखा था और 140 करोड़ देशवासी और उसमें भी ज्यादातर युवा उनके एस्पिरेशंस को रेखांकित करने का बहुत ही सटीक उद्बोधन सभी सांसदों के लिए कई मार्गदर्शक बातें भी कल आदरणीय राष्ट्रपति जी ने सदन में सबके सामने रखी है। सत्र के प्रारंभ में ही और 2026 के प्रारंभ में ही आदरणीय राष्ट्रपति जी ने सांसदों से जो अपेक्षाएं व्यक्त की हैं, उन्होंने बहुत ही सरल शब्दों में राष्ट्र के मुखिया के रूप में जो भावनाएं व्यक्त की हैं, मुझे पूरा विश्वास है कि सभी माननीय सांसदों ने उसको गंभीरता से लिया ही होगा और ये सत्र अपने आप में बहुत ही महत्वपूर्ण सत्र होता है। ये बजट सत्र है। 21वीं सदी का एक चौथाई हिस्सा बीत चुका है। ये दूसरे चौथाई का प्रारंभ हो रहा है और 2047 विकसित भारत के लक्ष्य को प्राप्त करने के लिए ये महत्वपूर्ण 25 वर्ष का दौर आरंभ हो रहा है और ये दूसरे क्वार्टर का, इस शताब्दी की दूसरे क्वार्टर का ये पहला बजट आ रहा है और वित्त मंत्री निर्मला जी देश की पहली वित्त मंत्री ऐसी है, महिला वित्त मंत्री ऐसी है जो लगातार 9वीं बार देश के संसद में बजट प्रस्तुत करने जा रही है। ये अपने आप में एक गौरव पल के रूप में भारत के संसदीय इतिहास में रजिस्टर हो रहा है। साथियों, ये 20 वर्ष का प्रारंभ बहुत ही पॉजिटिव नोट के साथ शुरू हुआ है। आत्मविश्वास भरा हिंदुस्तान आज विश्व के लिए आशा की किरण भी बना है, आकर्षण का केंद्र भी बना है। इस क्वार्टर के प्रारंभ में ही भारत और यूरोपियन यूनियन का फ्री ट्रेड एग्रीमेंट आने वाली दिशाएं कितनी उज्जवल है, भारत के युवाओं का भविष्य कितना उज्जवल है, उसकी एक झलक है। ये फ्री ट्रेड फॉर एम्बिशियस भारत है। ये फ्री ट्रेड फॉर एस्पिरेशनल यूथ है। ये फ्री ट्रेड फॉर आत्मनिर्भर भारत है। और मुझे पक्का विश्वास है, खास करके जो भारत के मैन्युफैक्चरर्स हैं, वे इस अवसर को अपनी क्षमताएं बढ़ाने के लिए करेंगे। और मैं सभी प्रकार के उत्पादकों से यही कहूंगा कि जब भारत यूरोपियन यूनियन के बीच मदर ऑफ ऑल डील्स जिसको कहते हैं वैसा समझौता हुआ है, तब मेरे देश के उद्योगकार, मेरे देश के मैन्युफैक्चरर्स अब तो बहुत बड़ा बाजार खुल गया, अब बहुत सस्ते में हमारा माल पहुंच जाएगा, इतने भाव से वो बैठे न रहे। ये एक अवसर है और इस अवसर का सबसे पहला मंत्र ये होता है कि हम क्वालिटी पर बल दें। हम अब जब बाजार खुल गया है तो उत्तम से उत्तम क्वालिटी लेकर के बाजार में जाए, और अगर उत्तम से उत्तम क्वालिटी लेकर के जाते हैं तो हम यूरोपियन यूनियन के 27 देशों के खरीदारों के पैसे ही कमाते ही तो नहीं, क्वालिटी के कारण से हम उनका दिल जीत लेते हैं और वो लंबे अरसे तक प्रभाव रहता है, उसका दशकों तक उसका प्रभाव रहता है। कंपनियों का ब्रांड देश के ब्रांड के साथ नए गौरव को प्रस्थापित कर देता है, और इसलिए 27 देशों के साथ हुआ ये समझौता हमारे देश के मछुआरे, हमारे देश के किसान, हमारे देश के युवान, सर्विस सेक्टर में जो लोग विश्व में अलग अलग जगह पे जाने के उत्सुक हैं, उनके लिए बहुत बड़े अवसर लेकर के आ रहा है। और मुझे पक्का विश्वास है एक प्रकार से कॉन्फिडेंट, कॉम्पिटिटिव और प्रोडक्टिव भारत की दिशा में ये बहुत बड़ा कदम है। साथियों, देश का ध्यान बजट की तरफ होना बहुत स्वाभाविक है, लेकिन इस सरकार की ये पहचान रही है रिफॉर्म, परफॉर्म एंड ट्रांसफॉर्म, और अब तो हम रिफॉर्म एक्सप्रेस पर चल पड़े हैं, बहुत तेजी से चल पड़े हैं। और मैं संसद के भी सभी साथियों का आभार व्यक्त करता हूं कि इस रिफॉर्म एक्सप्रेस को गति देने में वे भी अपनी सकारात्मक शक्ति को लगा रहे हैं, और उसके कारण रिफॉर्म एक्सप्रेस को भी लगातार गति मिल रही है। देश लॉन्ग टर्म पेंडिंग प्रॉब्लम्स अब उससे निकल करके लॉन्ग टर्म सॉल्यूशंस के मार्ग पर मजबूती के साथ कदम रख रहा है, और जब लॉन्ग टर्म सॉल्यूशंस होते हैं तब प्रेडिक्टेबिलिटी होती है जो विश्व में एक भरोसा पैदा करती है। हमारे हर निर्णय में राष्ट्र की प्रगति ये हमारा लक्ष्य है, लेकिन हमारे सारे निर्णय ह्यूमन सेंट्रिक है। हमारी भूमिका, हमारी योजनाएं ह्यूमन सेंट्रिक है। हम टेक्नोलॉजी के साथ स्पर्धा भी करेंगे, हम टेक्नोलॉजी को आत्मसात भी करेंगे, हम टेक्नोलॉजी के सामर्थ्य को स्वीकार भी करेंगे, लेकिन उसके साथ साथ हम मानव केंद्रीय व्यवस्था को जरा भी कम नहीं आंकेंगे। हम संवेदनशीलता की महत्ता को समझते हुए टेक्नोलॉजी की जुगलबंदी के साथ आगे बढ़ने के व्यू के साथ आगे सोचेंगे। जो हमारे टीकाकार रहते हैं साथी, हमारे प्रति पसंद नापसंद का रवैया रहता है और लोकतंत्र में बहुत स्वाभाविक है। लेकिन एक बात हर कोई कहता है कि सरकार ने लास्ट माइल डिलीवरी पर बल दिया है। योजना फाइलों तक नहीं, लाइव तक पहुंचाने का प्रयास रहता है और यही हमारी जो परंपरा है उसको हम आने वाले दिनों में रिफॉर्म एक्सप्रेस में नेक्स्ट जनरेशन रिफॉर्म के साथ आगे बढ़ाने हैं। भारत की डेमोक्रेसी और भारत की डेमोग्राफी आज दुनिया के लिए एक बहुत बड़ी उम्मीद है। तब इस लोकतंत्र के मंदिर में हम विश्व समुदाय को भी कोई संदेश दें, हमारे सामर्थ्य का, हमारे लोकतंत्र के प्रति समर्पण का, लोकतंत्र की प्रक्रिया के द्वारा हुए निर्णयों का सम्मान करने का ये अवसर है और विश्व इसको जरूर स्वागत भी करता है, स्वीकार भी करता है। आज जिस प्रकार से देश आगे बढ़ रहा है, आज समय व्यवधान का नहीं है, आज समय समाधान का है। आज प्राथमिकता व्यवधान नहीं है, आज प्राथमिकता समाधान है। आज भूमिका व्यवधान के माध्यम से रोते बैठने की नहीं है, आज हिम्मत के साथ समाधानकारी निर्णयों का कालखंड है। मैं सभी माननीय सांसदों से आग्रह करूंगा कि वे आएं, राष्ट्र के लिए आवश्यक समाधानों के दौर को हम गति दें, निर्णयों को हम शक्ति दें और लास्ट माइल डिलीवरी में हम सफलतापूर्वक आगे बढ़ें। साथियों, आप सबका बहुत बहुत धन्यवाद, बहुत बहुत शुभकामनाएं।
Well, that was Prime Minister Narendra Modi speaking in New Delhi just ahead of the budget session, highlighted the key importance of the India-EU trade deal, what it could mean for farmers amongst other key beneficiaries as well. But let's get back to earnings season, of course, and we still have the management of V-Guards with us, Mr. Ramachandran. We spoke about the business aspect of things of the electricals. Within the electricals category, though, what has been the growth like in terms of both volume as well as on value as well?
Yeah, so I think what should happen is in middle of February, the summer season start, with South. Yeah. So I think, last year summer was, challenging. Yeah, and, so there was a lot of carry forward inventory for most consumer durable players as also for us, particularly in categories like stabilizer, air cooler, even fan and pump, right? Which all respond to weather. So I think if we have a normal summer going forward, then I think that these categories should take traction, right? Which have been a significant drag thus far this year. And depending on the extent and how if copper prices remain stable or growing, then I think we should see comparable performance going forward.
Well, on terms of your electronic business margins as well, that has corrected by 290 basis points on a YY basis. Any insight you can offer on that?
The electronics business comprises of stabilizer and inverter, battery, and also rooftop solar. Yeah. So I think the product mix, right? The stabilizer has degrown in Q3, right? Typically in Q3, we replenish trade inventory as they come out of the season, and we also start to sell in, particularly for trade in South, right? But given that summer was not very good last year, there has been inventory that the trade has been running down, and which has led to a lower growth compared to last year for stabilizer. So I think if the season changes and weather picks up, we should be able to see a reverse trend. Outside of stabilizer, the other categories have grown in double digit, mid-teens to more in something like rooftop. So rooftop solar. So I think fundamentally, not much of an issue. It's just the extrapolation of what we have seen in summer, right? Continuing in some of these categories. And we should see a trajectory change only around middle of February when the summer onset starts.
Well, thanks so much, Mr. Ramachandran, for speaking to us today at NDTV Profit. But let me welcome in and wish you the best. Let me welcome in Kush Bora, of course, in the studio. Shaina Mukaddam, the independent market experts on the fundamental side. Shaina, very good morning and thanks so much for joining in. A quick question on V-Guard. Results were largely decent, but the growth seems to not have picked up in this quarter. What would any view that you have on the stock?
Well, I think the higher raw material prices is going to be an issue for the shorter to medium term. And we are seeing the impact actually on the numbers. So I would say it is better to avoid buying it as of now. Maybe a couple of months down the line, it can be reviewed because demand is good. But I would say that it's going to face some issues in the next couple of months. So avoid buying as of now.
So that's the view coming in with regards to where V-Guard stands. But there's one more question that's coming in from Lalita, who's writing us from Bengaluru, asking about InfoEdge. She's got 10 shares at the levels of 1354. She wants to know as to what should she do next, hold or sell. We also have Kush Bora with us in the studio today, as always, because it's Thursday. Kush, your view on InfoEdge?
First of all, very good morning, guys. This is what an earnings season Ask Profit show looks like, right? Yeah, but this is also important. I completely understand. Not a great outlook for InfoEdge, by the way. The stock's been under pressure for a while. If you see the very recent, last 3 to 4 months, the stock's been in a range 1400 on the upside, about 1300 on the downside, and that range on the downside has been broken. So some pressure could continue for this stock. If the loss is not too deep, I think it's a good idea to exit this stock. If you want a glimmer of hope, then I would suggest holding it with a tight stop loss at 1235. But if you ask me, the structure does not look good. The volume on the selling side are also pretty heavy. So the first option would be to exit.
Got that view, Kush. But there is also an important event that NDTV Profit is covering, and that's happening in Hyderabad, which is hosting Asia's largest aircraft showcase as Wings India 2026 takes over the particular airport. Now, my colleague Danish is now joining in from the location to tell us what the event promises for the aviation space. Danish, over to you.
Well, Wings 2026 is off to a flying start, and right now we are present at the Begumpet Airport in Hyderabad. And as you can see behind me, I'm literally surrounded by all kind of aircraft, all kind of helicopters, and this is a very important event because this is Asia's largest commercial aviation event, and it has been happening in India from the last 10 to 15 years. If we talk about the theme this year, we are seeing the way government wants the industry to focus on regional aircraft. So that is a big theme this year. And in fact, not only HAL, which is displaying its indigenous aircraft, which is called the SJ100, but also Airbus is also displaying the A220, which is a smaller jet in comparison to the other commercial jets that we usually see. So these are the major themes this year. In fact, yesterday, Boeing gave a very important market outlook, and Boeing believes that South Asia will need at least over 3,000 new aircraft in the coming 20 years, and most of them will be going to India. So Boeing sees a huge potential in India, and they believe that the way this particular country in Southeast Asia requires a lot of aircraft, similarly there is a increased need of enhanced manpower, which includes pilots, which also includes the flight maintenance engineers and crew. So these are certain things that were discussed yesterday. But if we talk about what is the biggest headliner, well, at this event, Air India's line fit Boeing 7879 Dreamliner is the biggest headline of this event, because because that is a line-fit aircraft that has been delivered to Air India. So this is what is happening at Wings. Intense discussions are happening that how India can proceed ahead and it can become a global aviation, commercial aviation powerhouse. And very lastly, I would also like to mention that yesterday PM Modi was doing a virtual address in which he clearly talked about that how the aviation landscape in India has improved over the past decade and how aviation used to be just an elite club, but now India's domestic aviation market is the third largest in the world, and in the coming few months and years the government will be focusing more and more on regional aviation.
Alright Danish, thank you so much for bringing us those details right from Begumpet, from the live location itself. Thank you so much for that. Moving on to our next question. Madhava is writing in and he's bought Grow at the levels of 180 rupees and wants to know, sorry, 180 is the quantity and 385 is the price at which he's bought. He wants to know if he can sell or hold. Can we pull up the chart of Grow? He's bought at 180. It's the reverse. Right. Bought at 180 and 385 is the quantity, and he wants to know whether he can hold or sell from a long-term perspective. Shaina, I'll come to you on this one. Your view on Grow.
See, if you're a long-term investor, you can hold because there are a couple of initiatives that Grow has taken. In pure valuation and current, it is a bit expensive after the rally, but there are a couple of initiatives like, entering into stock exchange. There are a couple of initiatives into the other segments of the financial sector, which actually could drive growth in the future. So if you're a long-term investor, you can continue to hold. But if you just had bought the IPO to flip it, then you can always flip it and enter into some other stock, like maybe a direct play into the stock market, like a BSE, NSE, something like that. Otherwise, you continue to hold Grow.
Got the view, Shaina, but time for a very, very short break. On the other side, a very, very interesting conversation with the management of Maruti and a lot more stock-related queries. Stay tuned to Ask Profit.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा. कब से बोल रहा हूँ, कोई सुनता ही नहीं.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है. बचपन से पता था मेरे सपनों में दम है. आगे नहीं, सबसे आगे जाना है. स्टार नहीं, सुपरस्टार बन के दिखाना है. नाम मिला, फेम मिला, प्यार मिला. I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर. लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट. 7वें आसमान से सीधा गिरा मैं जमीन पर. फिर क्या, खुद पे काम दोबारा शुरू. फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया. है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म. शुक्रिया आपकी प्रेयर्स का और आपके प्यार का. कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम. क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी. सो कम एंड विटनेस Yo Honey Singh. This is my story.
1st February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
M3M presents NDTV Masterstroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression.
Let me welcome in Rahul Bharti. He is a Senior Executive Officer and Corporate Affairs at Maruti Suzuki Limited. Sir, thanks so much for joining in today. Lastly, my first question has to be on the entry-level demand, right? Because December was a very, very strong month. Unlike any that we've seen in the last 20 to 25 years, your entry-level car portfolio grew by 100%. Any views that you can offer of what you're currently seeing on the ground in terms of near-term demand? Has that continued? Are you still continuing to see a lot of helmets in your showroom?
Yes, Puneet, absolutely. The interesting part is that there is demand for small cars and big cars alike, and we are not able to service it immediately. We are working hard and struggling to meet demand, and the small car customer has sprung back. Just imagine, I'm talking about the industry now. In the first half of the financial year, small cars, the whole industry was at a negative of about 0.4%. And in Q3, it sprung to 20.5%. And most of it was because of small cars. I mean, the small car growth was higher than the average overall car growth in the country, which is a very positive sign. And this seems to continue well into January, and we believe into Q4 also. We have announced 2 new plants coming up, one in Kharkhoda in April 26, and the other in Gujarat in a few months, but both in the current calendar year.
Mr. Bharti, and I'll just come back to the capacity additions as well, because that's one of the key points I have to talk to you, basis of what we've seen in the past few years. In terms of, what the street seems to be slightly more concerned about is margins, and that's always the case with auto companies, unfortunately. Now, you are saying at one point that entry-level car segment, the momentum should continue, and the street has already penciled in there could be a margin hit because of that, and the continuation of SUV as a portfolio for the industry. How do you counter both of those arguments?
So if you see, sequentially, there was a margin drop of 30 basis points from our EBIT margin, came down from 8.4% in Q2 to 8.1% in Q3. While it's a 30 basis points, but there was a one-time impact of the new labor codes. We had to have a provision for the valuation of absences, etc., which is a provision for retirees. If we remove that 125 basis points one-time impact, the margin has actually gone up by almost about 100 basis points, about 1 percentage point. And operating leverage and favorable product mix and have a lot to do with it. Of course, we have not the one-time price reduction that we have announced over and above the GST passing on to the market, that we have slightly continued into January also. We are just waiting for the right time. When is the right time to discontinue that? But margin is a result of so many factors: commodity, forex, the operating leverage, and of course mix and sales promotions. So my general view is, if the volumes are positive, if the market is buoyant, largely it is helpful for margins.
And Mr. Bharti, on one other issue that's been lingering and while we're still awaiting confirmation is media reports claiming that South Africa could actually increase the import duty from 25% to 50% on all imports coming from China and India. Now, your exports mainly, of course, are to 100 countries, but how much is South Africa as a proportion to that? And while I'm guessing you will be awaiting more further clarification, if you can give us some ballpark estimates of what does it mean for you in terms of exports, specifically that particular region?
So yes, we are concerned about South Africa, and of course we will represent also. So we have South Africa is a major export destination, and last year, for example, we exported about 95,000 cars to South Africa. Having said that, exports is always a dynamic story. There is some or the other country who is suddenly going out of the top 5 and a new country which is entering the top 5. For example, Japan was nowhere just about 2 years ago. It was nowhere on our exports, but now it's within our top 5. Similarly, Europe has come up because of the e-Vitara. So these changes keep happening all the time, and exports is always a mixed bag. So, and it is, as you rightly said, the diversification to 100 countries does help. Having said that, we will discuss with South Africa also and see what best can be done.
Well, that was the management of Maruti Suzuki, but we also have one question actually from Jay Krishnan, and that's for you, Kush. He wants to enter this particular stock. We've seen correction over the last week or so on this one. What would you recommend?
In fact, it's been correcting for the last 4 weeks. This is the 4th week of downturn on this stock, and there was a support at the 15,500, 15,300 zone, which it was respecting, and that's been broken today. Now, couple of points of saving grace. One, the stock is at the 200-day moving average. 2, it is extremely oversold on RSI. Hence, there could be a pop. But does it shake out the weaker hands? Does it give you that uptick from here on in terms of a reversal? It doesn't look like right now, because the volumes on the downside are still pretty heavy. In fact, I would suggest wait. There is a gap another 12,800 to about 13,500. I know it's significantly lower from here as well, but 13,000 and thereabouts is the zone where I would start accumulating Maruti. So I would wait up a bit right now.
All right, okay, so that's the technical view coming in for Maruti Suzuki. Yesterday we did see a catch up on the counter, but today it's down by about 2.4% as we speak. But moving on to the next question, Shankar from Bengaluru is writing in, asking about Madhusumi Wiring. He's got 1,200 odd shares at the levels of 50 rupees, wants to know if he can hold or sell. Shaina, I'll come to you on this one. The stock is currently trading at that 41.9 rupees. Would you recommend a hold on this one?
Well, yeah, it's corrected a lot from its highs, and it is impacted to some extent on the higher raw material costs. But I would say that at current levels, you could hold. It is showing some bit of weakness, but you could hold with a stop loss close to about maybe 38. I believe that volumes will go up given the fact that OEMs volumes are going up. We heard the Maruti numbers, and the volumes over there were pretty strong. So you can see this is an indication of how volumes are going up in for the auto cars, the PV volume, CV volume. So I would say that hold at current levels.
But the view, Shaina. The next question that's coming in is on Reliance, and Kush, this is for you. Sumanta Chaudhary from Kolkata is asking this question. She's bought it at 1,400 rupees per share. Roughly 100 shares is what she's holding, and she's asking if we can give the key support as well as the resistance levels for this counter.
Sure. So I think 1,400 is a good entry point for Reliance. The stock's taken a knock like a lot of other stocks have. In fact, in the last month or so, we've seen a lot of heavyweights take a knock, Reliance obviously being one of them. I think the support zone, the immediate support zone for this one is at 1355, maybe rounded off to 1350. So keep your stop losses there. I think resistance come in at fairly higher levels. First of about 1450, which is the 200-day moving average. But I think once that is taken out, it's about 1515. So you've got some room on the upside. In fact, it's not a bad idea to accumulate Reliance for anyone who doesn't hold it right now. But since there's already a position, you should continue to hold 1350, 1355. That's your stop loss zone.
All All right, okay, so that's the view coming in on Reliance. We've got our next caller. Sanjay is calling us from New Delhi. Sanjay, hi. A very good morning to you. I believe you have a question on ICICI Bank.
Yes, Mahima.
Go ahead, ask your question.
Now, I have bought it, say, about at the new year. They are at 1365 levels. It has gone up to 1400 and then again it has fizzled down to 1365.
Correct.
I don't know what to do and still could not been able to make anything. So what should I do? As the budget is coming nearby, shall I hold it or shall I exit? What should I do? I have a short-term view.
Got it. Okay, got your question, Sanjay. I'll take this up with Kush then. Kush, largely in the last 1 week, we've seen pressure on the counter on the back of its earnings, of course, but till budget, of course, it's a very short-term trade that you're looking at. But do you think he should continue to hold ICICI Bank?
You know what, I think Sanjay is amongst the lucky few who, despite the kind of volatility the stock has seen, he's still, in the green, even if a mild one at that, right? 1365, his buying price, stock again has rebounded and come very close to that. So in that sense, I would say he's lucky because he's not at least losing money on this trade. Now, should he continue to hold? Yes. From a budget perspective, not really sure. But from the fact that, the stock's actually fallen quite a bit, there are positive divergences on the RSI. Volume accumulation over the last couple of days on the way up have been very healthy. So I would say that this makes for a good risk reward ratio. Had he not had a position and asked me a query about, should he enter right now, my answer would have been a yes. So I would suggest continue to hold 1335, 1330, that recent swing low, that becomes your stop loss. And on the way up, you're looking at targets of 410 and even about 440. So you should continue to hold, maybe, a view longer than a couple of days.
Got the view, Kush. But the next question is coming on cement maker JK Lakshmi Cement, and our viewer Archit is holding shares at 971.55 shares. So he's taking a loss of almost 30,000 rupees, asking what he should do with the China. From levels of July, stocks down 21% and very close to where he might have bought it at. Any view on JK Lakshmi Cement? What would you recommend?
Yeah, I would suggest that he continues to hold it. The stock has seen a correction, but I think cement prices will start moving up, and this is a small cap cement stock which has been able to show resistance. I mean, quite good resilience over the last couple of years. Valuations are not too expensive, I would believe, in compared to the rest of the small cap cement stocks. So I would say it's a hold from here.
Hold is the view coming in on JK Lakshmi Cement. We've got our next caller. Prakrita is calling us from Bengaluru. Prakrita, hi. A very good morning. I believe you have a question on Paytm.
Yes, ma'am.
Go ahead, ask your question.
I've got 50 shares, bought it around 1348.5. I wanted to know if I can hold it or sell it for the time period of 1 year.
Okay, and when you bought this counter, was it the technicals that you saw or did you see the fundamentals of the company? Hi Prakrita, can you hear me? Okay, we seem to have lost her, but Kush, I'll take this up with you. Your view with regards to where Paytm stands, because she's bought at the elevated levels. Do you think it can bounce back to those levels or should she book her losses?
First up, I love the name. I'm a little curious. I don't know what it means and I'll probably Google it, but beautiful name. Haven't heard it before. As far as the levels go, I think you're right. I think what she was perhaps anticipating was that the 1350 resistance band will be broken and then the stock would rebound from there. It spent a lot of time there, about 3.5 months, and then finally the breakdown came along with the markets, by the way. Let's note that it came with the markets. So on its own, the medium term structure for the stock is very much intact. I would suggest a hold. Yes, it's a deepish cut on the stock right now that you're seeing, but I would suggest continue to hold. Even deeper stop loss at about 1075. The support zone is actually 1085. I'm rounding it off to 1075. Hold with another 100 points of stop loss there. If that is broken, then this consolidation range will be broken. But if not, then yes, you could see the stock rebound. 1350 immediately, perhaps might not, but from a year's perspective, I think she could see those levels and much higher.
Got the view, Coach. The next question that's coming in is on, Sai Life Sciences. It's a stock that put up the 1 year chart because always in focus on the back of its results. Our viewer actually Murli has bought roughly about shares at 853, holding 200 shares. 1 year it's done well for its investors, up 25%. But China, should he continue to hold for the next 1 year is what Murli is asking.
I don't track the stock, so I'll give it a pass.
Kush, anything on the charts that suggests the momentum could continue?
Hold. I would suggest a hold on this one. Again, you have to see the primary trend and then decide what the market has done, and you see the stock in correlation to that. The medium term structure for this one throughout 2025 has been very positive. There was a rising channel formation, then it went into consolidation. Very similar to what we mentioned about Paytm, which is the breakdown has come largely along with the markets. So yes, you should continue to hold. Right now, it's very close to his buying price. So I don't think it must be too much of a concern. For Sai Life Sciences, I would suggest a stop loss at the 815 mark, 815, 810. That zone, keep your stop losses around that level. The stock could see a rebound from these levels.
All right, okay, so that's the view coming in on Sai Life Sciences. We've got our next caller. Suresh is calling us from Pune. Suresh, hi, a very good morning to you. What's your query?
Good morning. I am a newbie at stock market, and thanks that NDTV Profit has been my primary learning mechanism for the last 5-6 months. My query is on Suzlon. I have purchased around 1,000 shares at 52.5. Should I be holding it or should I accumulate at this level, and wanted to know the long-term view, please.
Okay, Suresh, first of all, thank you so much for your kind words. I hope that we continue to value add to your portfolio going forward as well. Shaina, I'll take this up with you. Your view with regards to where Suzlon stands from a long-term perspective. Can he maybe add more at the current levels?
See, he's making a bit of loss already. So I would suggest that he holds on to his current position. Numbers are going to be very good because whenever they're reported, because as you saw last quarter, the profits, turnover, everything is growing by 60% plus. But valuations are still on the higher side. So I would wait for the stock to bottom out and then look to average. I don't think it's a bad stock to hold for the very long term. But if he wants to average, I would say it's better to average closer to about 44, 43, 44, not at current levels.
Got the view, Shaina, and hopefully, Suresh continues to tune in every day. We hope and listen to him as well on call as well. But the next question is on Bharti Airtel. Our viewer is holding 70 shares at 2,060, and Kush, he's currently sitting on a loss. He's asking if we should continue to hold or reallocate somewhere. What would you recommend?
No, Bharti, you should continue to hold. This is one stock which even from a margin of safety perspective is something that you should have in your portfolio. Again, bought at slightly elevated levels. Again, not very close to the high that the stock had made, but slightly elevated levels from where the stock is at currently. 200-day moving average support kicking in, already oversold. So rebound could well come about from these levels. I would very clearly suggest a hold on Bharti Airtel. 1850, that's your stop loss. Continue to hold for higher levels on Bharti.
Got the view, and definitely the fundamentals also have been very strong over the last 2 to 3 quarters. You saw some comments coming in from the Vodafone analyst meet yesterday. While the stock's not reacting too much, I think it's the most bullish the management has been with ace investors like Madhu Kela also in attendance. But the next question coming in from Bengaluru, Venkat has a stock query for us. Venkat, good morning. Welcome to Ask Profit. What's your query?
Good morning to the panel and you. So my query on Clean Science, I'm holding around 44 shares at 1243. So it's been already 2 years, but looks like the chemical pack, everything is down. So shall I hold or average or sell?
Well, Venkat, you are right. The chemical pack has been down for the last couple of years. Is this the only name that you hold in that space, or is there something else also you hold apart from Clean Science?
RT Industries also.
RT Industries also, got
RT
it.
Industries, again, it is also equal share.
Equal share,
around 70K, yeah.
Got it. Shaina, in terms of Clean Science, and probably Q3 becomes very important in terms of commentary because we've seen correction almost on a weekly basis for this one. Your view for Venkat, and because he also holds RT Industries, should he continue to hold both these names? Any view?
Well, see, both of them have corrected a lot from their highs. At the same time, I think numbers will be reasonably okay for the Q3 on a comparative basis as well as on a YY basis. They should do reasonably well. And I think in terms of valuations also, while I wouldn't say it is cheap, at current levels, it is fairly valued. It's about 20 times EV by EBITDA if you look 1 year forward. So, and same thing goes with RT also. So both the stocks having corrected at current levels, phenol based also like for RT, the price levels are stabilizing. So if we don't have any dumping from China, I think things should look better, especially with exports to Europe starting to pick off again for agrochemicals. So you can wait, hold on, and look for better levels, but do not average at current levels. You hold because stock is still in a corrective phase. So you may see a bit of consolidation correction going forward for the small, like maybe couple of months, but you can hold.
All right. Okay. So that's if you coming in on clean science. But the next question that we have is on PSU banks. And Kush, I think you'll have to be rapid with opening all these charts because he's given 4 stocks. Central Bank is the first one, BOB, BOI as well as PNB. Now all of these he has purchased from a budget angle. And he says that it's a short-term trade that he's made and wants to know if he can continue to hold any of these or any other in that pack that you like.
Wesley, on a side note, I think the viewers love you a little more because Alex used to stick to that one question per viewer policy and you guys don't. No, but I think this is a good idea to stay invested with the PSU pack. They've had a good run. They've had a bit of correction as well. And then they've rebounded, suggesting that there is inherent strength in a lot of these names. Having glanced at a few names, some of them that I usually track. So Bank of Baroda is something that you can continue to hold. PNB is something that you can continue to hold. The other two I don't really have a very active track on, so I would skip them for now. But yes, I would suggest continue to hold Bank of Baroda. Stop loss on this one would be 298, and PNB I would suggest a stop loss at the 120 mark.
Got that view, Kush. But another caller coming from Hyderabad. Now, Sai has a stock query for us. Sai, welcome to Ask Profit. What's your query?
Yeah, my query is on RVNL. I have 500 shares of RVNL. I bought at 400.
Okay.
I want to hold it for 3 to 4 years.
3 to 4 years. Okay, got it. And do you have any other similar name in the portfolio in the railway space as well, Sai?
Yeah, I have IRFC. I bought at a price of 125.
Got it. Okay, so you have a couple of exposure names and their exposure in the space. But Shaina on RVNL, he's bought at 400, currently sitting at a loss. Is there a view on this counter? Maybe in any way that he can get back to that 400 level mark?
I think so, because we saw very good numbers coming in. They have got a good, I would say, order book position, revenue guidance also of about 22,000 crores. So second half is, of course, starting to look better and is going to be much better, I think, for fourth quarter, because the first half was pretty disappointing. So I think at current levels, after the fall that we've seen, in the last 6 months, stock is stabilizing, looking to move up. So he can hold. He can hold at current levels, look for a bounce. I don't know if he'll get his 400 rupees in the shorter term, but over a period of time he should, because order book position is also good, as well as the government is likely to allocate more in the coming budget. So at least for the medium term hold.
Hold is the view coming in on RVNL, and Gaurav Kesara from Pune also had a similar question. So Gaurav, I hope that answers your question as well. The next question is from Madhusudana Raju, who's writing us from Chennai, asking about LIC. He's holding 250 shares, not given the buying price, but wants to know if he can hold or sell at the current levels. Kush, your view?
Well, the structure is not so encouraging. Let me tell you that. Even in the rally, the stock hasn't really participated. There is a breakdown. Assuming that this is a very near-term kind of a query or a near-term kind of a view, I would suggest you could continue to hold with a stop loss at 800, but any bounce towards about 850 to 875 zone should be taken as an exit. I wouldn't really take a positional trade on something like an LIC. Momentum missing, primary trend not so encouraging. So yeah, exit at bounce.
We have another caller now coming in from Dubai, and Ritesh is dialing in for us. Ritesh, good morning. Welcome to Ask Profit. What's your query?
Yeah, I am holding Inox Wind share a number of 2047 quantity at the average price of 146.27, and right now I am loss of 80,000 above on loss. So my query is, shall I average at this point or hold for a long time at the same price?
And Ritesh, how big is this one position in your portfolio? Because you are sitting on a loss, as you mentioned, but how big is it in your portfolio, Inox Wind?
It's less than 6%.
Okay, got it. Shaina, on Inox Wind, he is currently sitting on a loss, but it's roughly 6% of his portfolio. What would you recommend?
Well, I also have been personally holding it for some time in my portfolio. But, we've had a very big bonus issue that had come. So to that extent, our average cost has come down. But I would say that, at current levels, it doesn't make any sense to sell it. But even to average it, I would say that you wait to average it maybe somewhere close to, if you average it, I would say somewhere close to about 90 levels. That would make sense if at all it goes to those type of levels. But otherwise, you hold it for the medium term. The demand is pretty good in RE segment, and I would believe even the government should give some sobs going forward. So at least let's watch what happens in the budget.
All right, so that's the view coming in on Inox Wind. But viewers, time for a rapid fire round. Shaina and Kush, you both know the drill. Try to keep your answers as short as possible. The first one is from Piyusha, asking about Balu Forge. She's got 150 shares at the levels of 470. Can she hold or exit at the current levels from a long-term perspective? Shaina, your view?
I don't track the stock. Bharat Forge, yeah.
No, sorry, Balu Forge, Shaina.
Balu, I have not.
Anything on the charts, Kush? Because he's currently seeing a loss of 20%. Any view to come back?
Hold with a stop loss at 350, exit at rebound.
The next one's ONGC, Kush. A 6-month target is what Abdul Rashad is asking from Kerala.
Yeah, not very constructive. I would suggest, keep booking profits at higher intervals, but the stock could face resistance around the 295-300 zone.
Okay, NSDL is the next one. Vamsi from Hyderabad wants to know if she can continue to hold. She's bought at the levels of 1142. Your view, Shaina?
Yeah, you can hold it for the long term.
Yet again, Kush, happiest minds, and we do get this a lot. Our viewers are holding it at 922. Should he continue to do that?
Exit.
Okay, Polycab. A short-term view on Polycab is what Sudeep from Kolkata wants. He's bought at the levels of 7,400. Kush, your view?
Hold, keep stop loss at the 6,700 mark.
The next one's, ITC and back in focus on the back of earnings today. Any view, Shaina? What would you recommend? Is it he's currently holding it? Should he continue to do so?
Yeah, it's a hold.
Okay, Enviro Infra is the next one. 70 shares bought at the levels of 212. Can he continue to hold or wait for Q3 earnings? Shaina, any view on this one?
He can hold it for now and watch for the Q3 earnings. Yeah.
Dixon Tech is the other one. Our viewers holding at 11,764. Shaina, any view? Again, one more counter with earnings today.
I would say it's a switch. It's too expensive in terms of pure valuation.
Got it.
Okay. JSW Infra is the next one. Aniket wants to know if you can continue to hold this counter. Your view on this charts?
You can hold. 250 is a very strict stop loss though.
The last question that's coming is on Indigo and holding shares at 4815. Shaina, should he continue to do so?
I would say it's risky. I would say switch to some other sector because crude oil prices are moving up.
Got that view. And but it's a wrap on this edition of Rapid Fire as well as Ask Profit. So Kush as well as Shaina, thanks so much for joining in. But viewers, flash on the bottom of your screen, very important in terms of the global perspective as well. For EBB, the global numbers do have quite a meaningful impact, and the order inflow estimate of 20 to 26% for Q4 has a bearing directly on the stock. So, and this has been very interesting. In Q2, I think there was that impact, and hence you saw the stock reacting on the downside today because the numbers seem good in terms of the Q4 estimate for order inflow specifically, and it gets ABB India back in focus. So we will continue to monitor that, but stock's almost up 5% and spiking as we speak. So we continue to monitor that. But wrap on this edition of Ask Profit. KYC comes up next.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान मेहरबान कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा. कब से बोल रहा हूँ, कोई सुनता ही नहीं.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है. बचपन से पता था मेरे सपनों में दम है. आगे नहीं, सबसे आगे जाना है. स्टार नहीं, सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट। 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू। फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम। क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh. This is my story.
1st February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke Art Awards.
Welcome to KYC, that is Know Your Company. I am Mahima Vachrajani, and the company that we're going to track today is a very interesting one, that is Vaibhav Global. Now, why have we chosen this company? Before I move on to tell you what the company exactly does, to understand as to how the India-EU trade deal will actually benefit the company going forward. In terms of the other aspect, growth is largely led by value for this particular counter. When will actual volume growth pick up for the company? Something that we're going to ask the management and understand whether that is even on the cards. Demand and growth levers going forward, what will augur the growth, because management has given a guidance of medium-term growth in terms of going forward. We'll have to wait and watch out for as to what will be the levers that will be auguring that growth. Now, return ratios for them have slid in the past 3-4 years. So just want to understand in terms of improvement, whether it is on the cards for ROC or ROE not. And medium-term growth targets, what are they looking like going forward in terms of both top line as well as bottom line? So these are the reasons as to why we're talking to the management. Most importantly, of course, India-EU trade deal and how it impacts the company. On the show, of course, we'll also be speaking to Nitin Panwal, who is the Group CFO of Vaibhav Global, who will be joining us shortly. But before that, let's take a look at what the company actually does. Just to understand what about the company looks like. The company is basically an omni-channel retailer which is into fashion, jewelry, as well as this also include accessories, by the way, and lifestyle products in developed markets. Now, if you take a look at the company has been vertically integrated into a digital retailer of fashion, jewelry, as well as lifestyle products. In terms of the overall model, end-to-end B2C business model is what they do, and this is via TV as well as digital channels generally. In terms of the presence through proprietary TV channels and digital channels is what I talked about. In terms of the overall customer base, they have over 7 lakh unique customers transacting. That is the number as per the latest investor presentation as well. And vertically, of course, integrated supply chain is what they have. In terms of Sourcing also, they have a strong global sourcing with a base of 30 plus countries where they source from. In terms of where the manufacturing stands, in-house manufacturing in India, so it's a global jewelry hub. Also, has manufacturing units across India and China for them. Also has a factory at Jaipur, which is around that 1,69,000 plus feet. Jaipur capacity is at that 5 million pieces annually, is what something that the company capacity sits at. But the question really here is that whether that capacity that they're sitting on is fully utilized or not, or what are the utilization levels currently. In terms of brand, these are just some of the names, the brands that the company operates in terms of Home Smart, Evertrue, Caris, as well as something like a Ralph Lauren. So, all of these brands, apart from, multiple brands that they do, these are some of the ones that you would have come across. In terms of customer visibility also, TV Homes access nearly 127 million households. This is the latest number as per their investor presentation. In terms of where the growing customer base is coming from, the growing digital presence is contributing over 42% of the revenue. In terms of rating parameters, of course, what we'll be looking at today for assessing the company, we generally do 8 parameters. Your income statement will be the first one, following balance sheet, cash flows, return ratios, as well as shareholding, street cred. We'll also look at the valuation and analyst, although not a lot of analysts track this. And we don't have a closest peer of this one, but we'll also see the outlook guidance that the company has given. Now, with regards to the first metric, that is your income statement, let's try to pull that up and see as to how the company has performed, in the last 3-4 odd years. If you take a look at the overall numbers, revenue growth CAGR for 3 years has been at that around 7% mark. EBITDA growth at that 2% mark. But in terms of where the profits stand, profits have slid, right? This, of course, as compared to FY24, FY25 has seen a growth. But as compared to where FY22 stood, from there, profits have slightly come down. So the question really here is that since there has been a growth from FY24 to FY25, will that growth be sustained, and will the company be able to come back to where it was earlier in FY22 in terms of where profitability stands? In terms of where 9 months FY26 revenue stands, overall in terms of split, right now 58% comes from TV and 42% comes from digital for them. In terms of the geographical split for revenue, 59% comes from US, 30% comes from UK, and 11% comes from Europe. Next, in terms of the overall numbers as to how Q3 has panned out, overall a good growth this quarter. 9% revenue growth is what we saw at that 1,066 crore. In terms of where EBITDA stands, EBITDA growth stood at that 23.7% mark. Of course, marking revenue largely was led by a value growth and not volume growth. So we'll have to ask that question to the management. Margins also improved for the company. We'll also want to understand as to what has led to that margin improvement at that 12.7%. And net profit saw significant growth of 40.7%. But overall, if you take a look at how the segments have done, TV business revenue was up 7.7%, and of this, when we take a look at the volumes and value, volumes was down 1.5%, but value overall saw a growth in terms of where TV business stands at that 3.7% mark. That's the average selling price that saw a growth of around 3.7%. Similarly, in the digital business as well, revenue was up 11.2%, from which if you take a look at the volume numbers, volume did see a degrowth. Volume saw a downtick of around 10.3%, but at the same time, the average selling price for this particular segment went up by 17.5%. So I think, overall, if we take a look at both of these segments, value growth has been quite significant in terms of average selling price, but volume growth has not been there. With regards to where balance sheet stands, overall, of course, to conclude for income statement, it's a thumbs down from our end because revenue CAGR and profitability is still under pressure. But with regards to where balance sheet stands, it's a strong balance sheet in terms of your equity, your borrowings, your cash as well. So a thumbs up to the balance sheet in terms of where your reserves are concerned. They've been constantly growing, and the management has fairly accumulated good reserves. In terms of where debt stands, as of March FY25, they were at zero debt, so nothing of a concern there. In terms of cash in bank, the cash in bank position has slightly come down, but is still at a very good position because they don't have any debt on their balance sheet. So overall, a thumbs up when it comes to balance sheet. Moving on to the cash flow statement. If you take a look at the cash flow statement here, the operating revenues have inched up slightly from FY23 levels to the FY25 levels, but FY24 was a very good year for them when it came to operational cash flow. So we'll have to wait and watch out for as to how FY26 ends. Whether that will end at that around 277 crore mark or not is a question. EBITDA, now, if you take a look at how cash conversion has been as compared to EBITDA, the ratio has been very strong. 56%, 94%, of course, this because the overall operation numbers cash from operation number was very high. But even at that 52% mark, the ratio of operating cash flow to EBITDA is very strong, and overall net cash position has also been reasonably well. But taking a conservative approach, we've given it a neutral rating right now where cash flows are concerned. Moving on to the return ratios, when I was talking about what I want to know about the company and why we've chosen this company, return ratio is one aspect which has been declining for them. And to understand as to what will be the growth levers as to how return ratios will improve going forward is something that we'll know from the management as well. From a 61%, it has come down to that 19% mark as to where ROC is concerned. And ROE has also come down from 32% in FY21 to that 12% mark in FY25. However, slightly improved from that 9% in FY23 to 12% in FY25. So a thumbs down when it comes to return ratios for this particular counter. With regards to where shareholding pattern is concerned, there's skin in the game for the promoters, still holding 57% of the stake. FIs, however, has slightly declined their stake as compared to where it stood in March 23 from a 22% to that 18% mark. DIs, have kind of reduced their stake from 6% to 2%, but do not have a large holding. But, you have public shareholding, which has gone up from 15% to almost 23%. And you have names like Vijay Kedia as well as Ashish Kacholia, who have remained invested in this counter, that is Vaibhav Global. Overall, shareholders have remained in that range of 1.3 to 1.35 lakh. In terms of where the street cred is concerned, not been a very good return giving stock if you take a look at the performance, because 1 month down 1%, year to date down 4%, 1 year down 19%. In the past 5 years, it's down almost 55%. So, as somebody who's been a patient investor with this particular counter, has to still wait and watch out for a turnaround to see, good returns coming in for the counter. In terms of where valuations stand and in terms of where the overall ratings, analyst ratings are concerned, well, there's no direct peer to this one for Vaibhav Global. But if you take a look at how, the analyst, the Arihant Capital, who tracks this counter, has given a buy recommendation with a return potential of 36%. Mind you, it's not done anything in the past 5 years in terms of negative returns of 55%, but Arihant Capital expects a return coming in for 36%. In terms of where valuations stand, well, right now, the current valuation stands at 24 times. The 5-year average PE of this one is 26 times. And going forward, the PE ratio is expected to go down at that 14.8 times in FY28. And if that happens, the stock is going to be available at a cheaper price. So I think valuations is the one place where I've taken a conservative approach and given neutral rating. Lastly, in terms of where outlook stands, overall, remains positive. The company has said that FY26 revenue will be in that 7 to 9% range. In terms of, midterm growth, mid-teens revenue growth with steady improvement in margins is what they are expecting. And lastly, in terms of, your EBITDA break-even for Germany, they're still aimed for FY26. Although first half, the Germany business did see a loss. So we'll have to wait and watch out for whether that happens by the end of FY26 or not. So lastly, this is the overall view as to how, things have panned out for, Vaibhav Global. But let's take a look at the total rating as well in terms of how all 8 parameters have stacked up. Income statement is a thumbs down for us. Balance sheet, strong and very well held balance sheet, thumbs up. Cash flow, a neutral rating and just taken a conservative approach here. Return ratios, definitely a thumbs down because they've been declining since the past 3 or 4 odd years. But for shareholding, it's definitely a thumbs up. You have skin in the game from promoters. You have investors like Vijay Kedia as well as Ashish Kacholia who have remained invested in the counter. Valuations, a neutral approach here and analyst rating combined to this because not a lot of analysts track this counter, and valuations right now as compared to 5-year average still not very cheap, but going forward will get cheaper. Outlook lastly is a thumbs up because overall management is positive with regards to where guidance stands. So the final rating for this company turns out to be 4 out of 8. So that's with regards to where Vaibhav Global. Now let's talk in detail about Vaibhav Global, with the company's group CFO, Nitin Panwar, joining us now. Nitin, thank you so much for taking out the time. My first question with you is with regards to how Q3 has panned out. It's been a good quarter for you. Just want to understand that this growth, from my understanding, is largely a value-led growth and not a volume-led growth. Just want to understand as to when do you expect volumes to come back on the table?
Hi, thanks for having me. So past quarter, pretty pleased. We first time crossed 1,000 crore revenue in a quarter. 1,066 crore, 9.1% growth year over year. With a decent margin improvement, around 170 basis points year over year. So pretty pleased with the performance. Volume is because the company plays with the wider product bouquet, that the around 30,000 different SKUs, and we follow the strategy, the consumer demand for which product is in correct trend in the market. So product price point moves from $5 to $1,000. So right now, as you have seen, the lab grown demand is pretty high. So lab grown tend to be higher price point. So consumer acceptance is over there. So we are offering continuously lab grown products to them. That is resulting the higher realization from the customer. But they say at the same time, lower revenue growth, lower volume growth, but the realization is pretty high. So overall spend per customer is higher than our previous trend. And we expect that the offering to the customer will continuously play where customer is looking for product, like a year back, that customer looking more gold items where they see a safe haven or investment items. Right now more on lab grown, and maybe the other categories will thrive in coming time, but it will be a pure drive of a consumer need or what consumer is looking for right now. And we anticipate that the overall revenue growth will continue to perform well. Around, we have guided this year 7 to 9, and next year around 9 to 11% we are guiding. We have a strong belief that it will continue to outperform our expectations.
Nitin, just want to understand, since you mentioned lab-grown diamonds, just in terms of where lab-grown diamond prices are concerned, they've been falling. Does this mean that here also you will be focusing on volumes to make that mark in terms of where the top line stands? And how is this shift in terms of gold to lab-grown diamonds, and how does this affect your margins?
Yeah. So lab grown normally is a higher margin category comparatively plain metal and other jewelry. And that's the same we have seen this quarter gross margin improved say to 63%. And we see that the price is going down, but the product offering, we are continuously injecting new products from studs to bracelet to different sets, but continuously injecting new products to mitigate the customer requirements. Though the pricing falling, but the offering related to carat size and above item is continuously increasing. So demand is there. We have seen past quarter around 30% growth from lab-grown product, and share is increased to around 12.7% of overall business. So that's where we see right now the customer's demand is there, and it will continuously to improve our margins.
Nitin, day before yesterday, India and EU signed a trade deal, which is called the mother of all deals. How does this trade deal have a positive impact to you, if any, of course, I would want to understand. And does this mean, if it does have a positive impact, does this mean that it will bring, more customers to you, or does it mean that cost for manufacturing and then sending these goods to the EU becomes cheaper for you?
So trade deal is always a welcome for all across the world in any country who does a trade deal. It gives more entry, removes all the entry barriers in the market. Right now, if I specifically talk about the jewelry, we operate our Germany business is directly impacted with this trade deal. 4% duties right now, which will be removed. I think the transition will happen in next, I think, across a year, but this will definitely help us to more easiness of trade and the duty reduction. Cannot guide on the margin improvement, how it will be, how much will pass on, how much will stay in our profit and loss account, but it will be definitely improve our company's overall per se in terms of customer demand or competitiveness of our product in Europe.
Okay, understood. Nitin, you said that you crossed that 1,000 crore in the last quarter. Just want to understand going forward, because you're aiming around that 11% mark in the next year in terms of where the top line growth stands. What do you think will be the growth levers? Where do you think the demand will come from for you? Sure.
Yeah, so we have multiple growth levers. One of the important growth levers, we continuously investing on digital fronts, from mobile apps to OTT to smart TVs or our own websites, and the paid media marketing that we are doing. Digital in past 5 years has grown roughly around 17% CAGR year over year. And we anticipate that the initiatives towards the acquisition of customers through digital and having the omni-channel experience from our live streaming to the digital platform or to the paid media to OTT will be there to improve overall customer lifetime value. So that is the one important lever that we are investing, and it will continue to thrive. Apart from that, the different categories that we are launching, the long run expanding our lifestyle categories. Lifestyle share is now 35% of our business. Earlier, which was like 6 years back, it was less than 20%. So that different product categories from beauty to handbag to accessories, that is continuously expanding. That is also another lever to improve. Another thing is that also our Germany business is growing faster than the other territory. It will continue to thrive. And this financial year, past quarter, we made a full profitability in the Germany business, and expecting that this year will be the slight profitable operation from Germany business. And from next year onwards, it will add in our bottom line. So the digital, Germany, and the OTT expansion will be the key drivers for our growth in future.
Interesting. Nitin, the other aspect, you mentioned that lifestyle products is now almost 35% of your overall revenue, right? How does this mix change from a long-term perspective, let's say 2 years down the line? And then do you think your margins will be able to improve from here on? Do you think the margins in the lifestyle business are better than your jewelry business?
Margins is very close to lifestyle business, to business in lifestyle categories. And we are our midterm aim to increase the lifestyle business to 50% of total, as the customer acquisition and the repeat purchase and is high on the lifestyle categories. So that will be the midterm target is half of the business size through lifestyle products.
Okay, Nitin, you talked about the growth levers in terms of where the top line is concerned, but just want to understand in terms of your return ratios, right? Your ROA and ROC has been falling, but has improved as compared to where it was in FY23 and FY24. So that's a good sign in terms of where the positive momentum has kind of kicked in. Just want to understand in terms of the levers that will probably improve these return ratios going forward. And what is the range in which you will be looking at for your ROE and ROC to end by the end of FY26, by the end of FY27 as well?
Sure. Yeah. Though we cannot guide the exact number, but our companies aim to increase the ROC to 25 to 30 range, and this just quarter ended on TTM basis. ROC is improved to over 20%, 21% just we closed, and we aim to improve to a 25 to 30% ROC in the business. ROE is also improved to 15% in the current quarter, as our profitability margin is improved. 40% year over year growth in PAT we have seen in past quarter. So that is driving to improve our ROE and ROC both. Though the capital efficiencies we are continuously building in our business, our net cash in the business is around $24 million after all the loans and advances. So good amount of net cash we have built up in business, and it will, because of the beautiful business model we have, the pretty much all of the profit generates in the cash, and also we distribute to the shareholders through dividend, will result into positive cash in the business and better returns ratio.
Okay. With regards to your manufacturing facilities, what are the capacity utilization that you're sitting at right now?
Yeah, pretty much. I think 60 to around 70% utilization that we have, but we get the B2B orders from other European or different vendors we have. So not worry about the capacity utilization, and there's not a capital intensive also this jewelry manufacturing that is not required huge amount of capital. So easy to expand also once you have more orders from different territories. But the good thing is that this quarter onwards, we have started our casting manufacturing facility in America to fight against those high tariff situation. So the casting process is happening in America, and the later process is happening in India, which is helping us to benefit around these high tariff scenario. Though the overall cost is increased around 480 basis points, but still we managed to improve our gross margin by 30 basis points in America.
Interesting. 30 basis points of improvement from the America business. But that this was going to be my next question to you, Nitin, that overall, because of this entire US tariff overhang, how has that impacted your business in terms of where demand stands and top line growth as well? And what do you expect going forward now that you have a casting manufacturing facility there? Do you think things to improve from here on? What's the view?
Yeah, definitely. It was the last 1 year is most uncertain time where the multiple amount of tariffs and from 10% to 25 and then 50% increased. So pretty hard to always to fight against the pricing and the what margin that we should charge the customer. But the agility we have and operation around all the Asia locations is navigating and helping us to better management of this tariff scenario. And when the high tariff was implemented in India, then we started sourcing from China, Thailand, or the other country that we have a manufacturing and sourcing facility over there. But over the period of time, we have also started our manufacturing facility around in September time in US. And after that is helping us to almost zero tariff on the goods movement from India to US. It's just the value addition part that we are paying tariff, and around 480 basis point, as I mentioned, it was increasing our costing, but pretty helping us in terms of competitiveness, in terms of our pricing of the product, and also the offering is pretty fast through this process right now. So that is, I think, helping us to set up a factory over there. And the consumer demand is pretty, the consumer sentiments right now in US is pretty tough, not easy, but due to our agility and the better pricing and manufacturing is giving us the more demand from the customer side of our jewelry products, as well as on our digital platforms. So we see that optimistic side on the mid-teens number, mid-single digit number from US perspective.
Got it. Nitin, thank you so much for being so candid with your answers and of course taking out the time and speaking with us at NDTV Profit, and all the best for the future. But viewers, we're completely out of time on this edition of KYC. Stay tuned to NDTV Profit for more news and updates up on the other side.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
एनडीटीवी प्रॉफिट ऑन करो जरा, कब से बोल रहा हूँ कोई सुनता ही नहीं।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
First February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents
Hindustan Copper surges in trade as copper prices hit fresh highs. The rally reflects strong accumulation, rising investor interest and favorable sectoral tailwinds, boosting sentiment around the metal space. Rupee hit an all-time low against dollar as continued weakness in foreign capital flows and corporate rush to hedge against further depreciation of Indian currency. Now rupee drops to 91.99, eclipsing its previous all-time low of 91.96 hit last week. Ahead of the budget session, Prime Minister Narendra Modi sets the tone for reform-led growth. He highlights Nirmala Sitharaman's 9th consecutive budget and calls the India-EU FTA the mother of all deals. PM stresses quality manufacturing, next-gen reforms and human-centric technology, positioning India as a confident, competitive global powerhouse for decades ahead. Maharashtra Deputy Chief Minister Ajit Pawar's son Jay and Parth performed the last rites of their father after the NCP leader's tragic death in a jet crash near Pune. A large gathering of supporters and senior political leaders, including Home Minister Amit Shah and Chief Minister Devendra Fadnavis, paid their final respects to Ajit Pawar. Hello and welcome. You've tuned into Markets at 12. I'm Nisha Podar. Let's take a stock of the market on midday in the run-up to Budget 2026. So take a look at currently Nifty 50. Yes, comfortably above 25,000 levels, but it has been quite tentative for this entire week because of the big event that is really coming up and the various global factors impacting it. But remember, the rupee's depreciation is one important big development which also put pressures pressure on the market, and FII outflow has been also putting enough pressure on the overall market momentum. However, there are still green spots in the market. Let's take a look of that also. So Nifty Metal is the one which is really shining in trade. Global commodities are also really rising up. Gold and silver, we know, copper hit an all-time high. Energy sector, oil and gas are some of the ones along with PSU banks. But the ones which are really taking a hit today is the defense sector, auto as well as FMCG. When we take a look at the contribution coming into Nifty 50, L&T, Axis Bank, NTPC, SBI are the ones really contributing to Nifty 50. But on the other hand, the downside is M&M, TCS, HDFC Bank. All right, to the run-up to the budget, and it's a big day today, starting the budget season, because the Economic Survey 2026 is going to be tabled in the Parliament today and is expected to strike an optimistic but cautious tone about the economy. So growth remains resilient, but inflation risks and tariff uncertainty remain the key concern for the economy of India. Shrimi, my colleague, shares what it holds in store when it comes to economic survey. Tell us, Shrimi.
माननीय अध्यक्ष महोदय, आपकी अनुमति से मैं अपने सहयोगी की ओर से आज की कार्यसूची में क्रम संख्या 3 पर उनके नाम के समक्ष उल्लिखित कागजात सदन के पटल पर रखता हूं।
आइटम नंबर 4, महासचिव।
Sir, I lay on the table the following 4 bills passed by the Houses of Parliament during the 6th session of the 18th Lok Sabha and assented to by the President since a report was last made to the House on the 2nd December 2025. 1. The Manipur Goods and Services Tax, Second Amendment Bill 2025. 2. The Central Excise Amendment Bill 2025. 3. The Health Security...
All right, Economic Survey 2026 ahead of the Union Budget on 1st of February is getting tabled in the Parliament. Big development. Shrimi tells us what it holds. Tell us, Shrimi.
Yeah, Nisha, so now the Eco Survey 2026 has been tabled, and in fact, we need to wait for more details, and especially 2 details, the growth outlook for the current fiscal year, if there is any changes in the economic survey, and the second one, of course, the outlook for FY27. But couple of factors I want to highlight here is, of course, that the nominal GDP is expected to be moderated in the economic survey, and real GDP will see the strong momentum is what, hints and indication we are getting from the Finance Ministry. And as far as, growth momentum is concerned, if you see FY26, both quarter 1 and quarter 2 have reported strong numbers, and that is why the government, the Finance Ministry has revised the growth outlook for FY26 to 7.4% from earlier projection of 6.3 to 6.8%, and that is coming on the account of strong Q1 and Q2 number. Now, as far as FY27, growth number goes, the estimation has been that the real GDP adjusted inflation will remain between 6.5 to 7.5 in that range, and as far as nominal GDP is concerned, will remain between 9.5 and 10.5%. But we need to wait for the document to see that what exactly economic survey is going to, peg growth outlook for the FY27. But this is crucial document, Nisha, because this is going to set the tone of union budget, coming later this week. And in fact, the economic survey usually gives lot of suggestion, like we have been reporting, and do remember in the last eco survey they suggested and lot of emphasis around deregulation, decriminalization, and that is going to reflect in this budget is what sense we are getting, and we've been reporting about it. Lot of reform express, and we have heard today Prime Minister as well that reform express is coming. So all those announcements made, you will see that build up coming up, that changes and the face lifting and lot of decision which was taken, and the announcement which was taken in the previous budget, You will see that mentioning coming in the union budget as well. But we need to wait for the exact figures as far as growth outlook is concerned, Nisha, because we yet to see the documents. It's just get presented, and we will, soon update you as soon as we see, the documents of Eco Survey.
All right, Shrimi, it gives a very good indication on the line that economic survey is going to take. And yes, as my colleague Shrimi was pointing out, it's an important document which gives an overview of the economy after doing a lot of survey and a detailed survey. So ahead of the Union Budget 2026, Finance Minister Nirmala Sitharaman tables the annual economic survey 2025-26 in the Parliament. The annual economic document from the Department of Economic Affairs under the Ministry of Finance is an important roadmap for economic reforms and usually sets the tone for the union budget. Now, the Budget Economic Survey will give the GDP growth outlook and shed light on the health of the Indian economy along with its growth prospects in the upcoming financial year. Let me straight take it to some of the experts joining in to throw more light on what's really expected. So let me welcome on the show Dr. Rumki Majumdar, who's the economist with Deloitte India. And also let me welcome on the show Dharmakirti Joshi, who's the chief economist at CRISIL Limited. Thank you so much, both of you, for joining in. So let me first take it to you, Dr. Rumki. From the face of it, the indications that we have really got, and the exact numbers will be revealed in a bit. The nominal growth is expected to moderate, but the real growth is expected to be resilient. GDP growth of India is on a growth path, and a lot is expected of the potential of the Indian economy. What is your sense on this?
Thank you so much for having me over here. And I absolutely agree with what you said. We are on a very resilient growth path, given that last year when we started, we were expecting a lot of headwinds to our domestic demand. And yet the government made consistent efforts to push the reforms, as well as also brought in a lot of monetary policy changes and GST changes to ensure that demand remains resilient. We grew at 8%, and I think the entire year will look somewhere between 7.5 to 7.8% this year as well. So real growth remains strong. And I think the way India is pivoting its geographic expansion, the way it is kind of recalibrating its trade is exceptionally well. We just signed the mother of all trades, that's the trade deal that we had. And we are also kind of now talking to Canada. It kind of tells that we are now diversifying our markets to make sure that our resilience to trade uncertainty also improves. Once that is taken care of, then I think there will be a lot of push in the investments, private investments specifically, which has not picked up yet. So yes, right now demand remains resilient. Now is the moment for the private investment to come in. And I think somewhere the budget will try to address that part as well.
That's right. In fact, India has to be very resilient in the global chaos that we are seeing. And in fact, to your point on FTA agreements, tough times call for bold measures, and India is really recalibrating its global portfolio at this particular time. So, Dharmakirti, what do you have to say about not just growth, but internally, our inflation going down has been a concern, which is expected to rise in FY27 as we are getting the indication and will be seen in the economic survey document, hopefully, which is required. But is it going to be only on account of the lower base effect, or is there going to be a meaningful correction for a sustained at least a bare minimum inflation so that we don't slip into deflationary conditions?
Well, we are nowhere near deflationary conditions. I think what you got in 25-26 is a much better than expected growth inflation mix. Growth turned out to be higher. Usually when growth goes up, inflation also goes up. But because of a variety of factors, inflation came down, and one of them is food inflation, which was in the deflation zone. The other parts are, I think, are at reasonable levels, I would say. And so going ahead, food inflation will correct because I think food inflation is the most volatile component of inflation. And I think it will move up, and that will also push the overall inflation up. Part of the reason why inflation is also going to move up, or particularly I think at this juncture we are seeing some pressure from, is I think some of the metals like copper, aluminum, and precious metals like gold, silver, etc. These are also part of the inflation basket. These are the ones which are moving, which are rising, where inflation is rising at a faster rate. But overall, I think even if inflation moves up next year, I think it's going to go towards, I think, the medium-term goal of RBI, which is at 4%. So I think that would be, so this is an unusual year for inflation. These levels can't be sustained, and we'll move to more sustainable levels of close to 4% or maybe slightly higher than 4%. Food inflation is usually very difficult to predict. So I think that's on the inflation front. And on the growth front, I think I see the growth story flipping in the coming fiscal year. The real growth will slow a bit, but the nominal growth will go up, which was, I think, in 25-26, we've seen real growth being much higher. But the nominal growth being slower. So that's going to flip in the coming year.
So we are getting those numbers also trickling in. And Mr. Joshi, FY27 GDP growth seen at 6.8 to 7.2%. Your first reactions on that?
Well, I think it's broadly in line. I think we are at 6.7%. So it's slightly higher than what we expected. And we have to look at what will cause growth. I mean, right now we have oil prices which are favorable, so oil prices do support growth. About agriculture, we don't know. I think so. Agriculture would be in some ways the trump card, because the share of agriculture is around 17% in GDP. So what happens to monsoons? What happens to agriculture? That we have to wait for more information on that as the season progresses. I think apart from that, there is a momentum in industrial sector. There's also momentum in the service sector, which will broadly sustain. So the growth will be somewhat lower than last year, but I think it looks like we have moved from 6.5 to 7%, which the economic survey used to predict, to a little higher band than that. I think because the last two surveys had
That's right.
About growth being in that zone. And now the band seem to have moved up.
Right. Downside risks to global growth is also something that we have to see. But Dr. Rumki, definitely the GDP uptick, and while most of the analysts and economists have been suggesting or estimating over 7% growth, the economic survey also puts a stamp of approval, so to say, on these particular numbers. Are they above the expectations on the street and gives out a very positive picture?
Not at all. I believe that we are in a very, Goldilocks moments. If you look at all our economic fundamentals, they are doing fantastic. Our current account balance is really good. Inflation is at all-time low. GDP is pretty much one of the highest. And even fiscal deficit, if you see, that number has also been coming down steadily since COVID years. So clearly, we are seeing a lot of improvement in economic fundamentals, and this will play out in improving the economic potential and growth potential going forward. The only catch point is how the private investment picks up. And that is where I think all these measures that the government has taken, the reforms, and I think we are expecting a lot of reforms coming up in the budget as well as through the year, which will bring in investments. And I think that will turn things around very well for improving the growth potential. So I think the numbers, in fact, I will be even pegging a higher number than what's been given out currently.
All right. So you totally say that it is underestimating the growth potential. But as Dharmkirti was also mentioning, that there are several factors which are really evolving, and especially the monsoon, that is something to be watched out for. But Dharmkirti, one last word on the various aspects. So the consumption is boosted by the last year's tax rate, personal tax rate cut, and then the GST cuts and the reforms there. How is the consumption and the demand scenario? And do you think, as per the economic survey, this is one of the biggest factors for the growth in the economy?
It is. I mean, the consumption is close to 60% of GDP, so that's the largest component, and it grew at around 7% in 25-26, or it's estimated to grow at that. So a large part of the economy moving fast drives the overall growth in the economy. And you are right that the support came from the favorable tax policy. I think that boosted consumption growth. I think for consumption growth to be sustained at higher levels over long periods of time, I think that depends on the employment prospects, the income prospects for the economy. For now, I think we believe that some of the measures that have been taken in 25-26 will spill over in 26-27 as well. And I think after that, a pay commission thing is impacted. So these are temporary boosters to growth. Long-term boosters come from income sustainability. And we seem to be, as we move up the per capita income chain, I think our consumption will get more and more dense.
That's right. This is coming out as one of the trump cards for the government. And of course, the government has done enough to really boost the consumption. But the global trade war, rupee depreciation, and therefore our oil import bill and the upcoming monsoons are some of the aspects to be watched out for. Thank you so much, Dharmkirti Joshi, as well as Dr. Rumki, for joining in with all the details and insights on what really economic survey really presents. It kickstarts the budget season and gives an overview on the economy and the areas that the government may focus on in the budget. Private sector pickup is one of the most important aspects that also needs to be watched out for very, very closely. All right, so that is the economic survey for you, and a good amount of growth potential, as well as it also puts a stamp of approval on the economic growth that has been seen, and there is a strong momentum that has been viewed by the economic survey of 2026 on the economy, consumption, for which personal tax cut in the last budget, as well as GST reforms, they have boosted consumption. It is expected to grow by around 7%. So therefore, this is one of the aspects to really watch out for. All right, looking at the economic survey and really shifting gears right now, let me take it straight to Nirupa Shankar, who's the MD of Brigade Hotel Ventures, joining in now. Nirupa, so good to have you on NDTV Profit. First, a quick highlight on the kind of performance that you have shown in the last quarter, and in this particular quarter, what is the outlook coming in?
Yes, hi Nisha, thank you so much for having me. We've had a pretty good quarter. Our ARR has increased by about 17%, RevPAR has increased by 17%, EBITDA has increased by 17%. So these are good numbers to show, because we've been saying that we will do in the mid to high teens. Revenue also, the top line has grown by about 16% from the same time last quarter. And our profitability has also grown by about 126%. So overall, I would say that, our hotel portfolio has been doing well. Our occupancy, I would say, for the entire portfolio is at around 76% And yes, so far growth is coming in from the ADR and also from F&B.
Right. In terms of your expansion, Nirupa, what all is lined up, and how is it really going to impact your performance from which quarters, if you can give a view on the guidance for the future performance?
So basically, I would say the second half of the year is usually better than the first half of the year, which we've typically seen in the hospitality space. And I would say for the coming year, we are expecting like I said, mid to high teens. Typically, growth from F&B is about 16 to 20% is what we are looking to expect. And like I said, it's usually a balance between RevPAR and ARR that we need to see. So the RevPAR will move based on how we work with occupancy and ARR. And as long as that's a healthy growth rate, I think we're fine. It will vary from business to business, city to city, and season to season.
All right. What I was trying to also indicate, Nirupa, and let's clearly watch out for the upcoming pipeline is focused on expanding into the luxury and leisure sides. How much of an uptake on the margin does this particular segment give you? And in terms of how they are going to really impact the performance by when? A little sense on that.
Oh, definitely. In the luxury segment, the margins are much better because the flow through from the higher ARR goes directly into the bottom line. So typically what we see is, around 80% flow through from your ARR into your bottom line. So the higher the ARR, obviously, the better the profitability, better the margins. In our portfolio, currently we have 9 hotels. We're building another 9. And in the current portfolio, I would say only 1 is a 5-star deluxe hotel. But when we complete the next set of hotels, which is the next 9, I would say that is going to change. Our portfolio is going to change. We're going to have 6 5-star deluxe category hotels, and our focus will be on the higher end category. So more 5-star hotels, 5-star deluxe hotels. In some cases, 1 or 2 cases where the micro market demands an upscale hotel or a 4-star hotel, then we will do that because I feel like we need to build what is right for a particular micro market. Right. What we can expect is to see our ADRs with the new portfolio coming in, at least doubling from where they are currently. And of course, margins also we expect to significantly improve because of the reasons I mentioned.
All right. That pivot towards larger play in the leisure and luxury market, which are higher margin areas, that would be watched out for very, very closely. But thank you so much, Nirupa, for joining us right here on NDTV Profit. All right. So the economic survey is the big news of the day as we run up to the budget. And if you have Shrimi with us joining in to take us through the key highlights that have been stated in the economic survey. Shrimi, over to you.
Yeah, so a couple of points very important. As we have seen, the real growth GDP, which is adjusted inflation, has been kept at 6.8 to 7.2%. Now, this has been increased from the last survey. If you see the FY26 projection, it was between the range of 6.3 to 6.8%, and now it has been improved. The upper range, especially, it's suggesting it's pegging at 7.2%. So that's an important, key takeaway from the survey. And in fact, the survey is talking about the US tariff, because a lot of chatter around and everybody is eyeing on when the tariff with India, between India and US gets concluded. And in fact, the survey is hoping that it will be concluded this year. And this is important factor because survey do, talk about that as far as economic growth outlook is concerned, it's looking steady. But we need to also watch out for the global external headwinds, and tariff being one of the risk and the down risk factor for the economic growth, and that is very clearly stated in the economic survey. Why saying so? Because of course you will see some of the measures coming up and expected to come up in the budget to sort of soften the blow of the US tariff. But the sources in the government has been indicating that both sides are talking, and in fact the talks are progressing well. So some sort of positivity is there as far as India-US deal is concerned. Now, one important point I wanted to highlight here is that the new base year is going to kick in from mid-February. That is important because that is going to change all your macro indicators number, right from your GDP number, even for your Q1 and Q2 number, as well as the growth outlook, which economic survey is pegging, and the budget also give its own projection, and usually the economic survey is more on the conservative line because it factors in a lot of issues around and the global factors around. But as far as budget is concerned, is going to peg growth on a much higher level than economic survey.
So biggest highlight for me, Shrimi, is that the last few months, the growth momentum has been strong, but many factors it's dependent on for the future growth. Thank you so much for getting us all those details. Completely out of time on this edition of Markets at 12, but do keep it with NDTV Profit. Thanks so much.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा. कब से बोल रहा हूँ, कोई सुनता ही नहीं.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo-Yo Honey Singh. This is my story.
Hello and welcome to NDTV Profit. This is Heera Dadia bringing you our all-new offering, Trending Stocks, and with me is Mahima Vachajani, standing at the NDTV Profit Market Pit with all the action in the markets today. Mahima, what are you picking up right now? We're just a couple of days away from the budget, so there is that budget euphoria that's playing out as well with all its ups and downs.
Yeah, absolutely. Budget euphoria playing its part. I think one day of hurrah is what we saw yesterday, and today, yet again, in the red is what we're seeing on the Nifty 50 as well as the broader markets as well. The broader markets right now are kind of underperforming the benchmarks. The broader markets, the mid cap 150 is down by about 0.5%, the Nifty 50 down by about 0.2%, the small 250 also down by about 0.6%. The bank Nifty, however, is holding its gain. It's in the green territory. Let's try to pull that up, because that is the only one with a positive momentum right now, as we can see, up 0.3%. But moving on to the triggers that are on the radar, that could be the reason as to why the markets are moving like this. First of all, of course, this is not a trigger, but this is the latest news coming in. FY26 GDP growth seen at that 7.4% mark, and FY27 anywhere between the 6.8 to 7.2%. In terms of where the overall market sentiment is, like I mentioned, the benchmarks right now are doing better than the broader markets. There is underperformance where the broader markets are concerned, not like how it did yesterday. In terms of where the expiry, of course, is concerned, there is Sensex expiry that also is at play. Rupee did hit its record low yet again today at that 92 rupees, and that's one of the factors as to why there's a negative sentiment in the counter. Sensex expiry at its play, of course, we'll be watching out for as to how last hours of trade end. Defense pack seeing profit booking ahead of budget is what we're seeing right now in terms of a sector stance. Metal rally still continues. You saw, MCX copper hit record high. Spot silver at that $120 is what we are seeing. So metal rally overall continues to gain. So this is the overall view of how markets are looking like and what are the triggers looking like.
Thank you, Mahima, for that. Let's quickly take the viewers through the watch list on the stocks that we will be focusing on in today's session. L&T, it's beat FY26 order guidance, and that's the reason why you're seeing some strong moves. That's what the management is indicating. Tata Steel, expectation of a cut on coking coal duty in the budget is what is keeping Tata Steel afloat. Ashapura Minechem is also trading at day's highest levels. You have ITC, Colgate and Dabur that will be reporting numbers today. Ahead of numbers, the stocks are buzzing. Gland Pharma, Cenexi, which has one of the subsidiaries actually hit break-even in the third quarter. So that is what is keeping the stock afloat in spite of the guidance cut in terms of FY27 as well. You have Tata Motors, which is buzzing ahead of Q3 numbers, and Maruti, you have brokerages which have gone ahead and cut the target price. That's the reason why you're seeing some bit of pressure. Indigo has reported a weak set of numbers, so that's the impact that's coming across on the Indigo, along with the Asian Paints, which has been weak. The pressure has continued for the second or the third consecutive session here as well. Heritage Foods, volumes are up. CSB Bank, weak quarter with strong volumes. Balu Forge has actually hit a 52-week low. So these are the stocks that we are discussing on trending stocks today. In fact, let me head across to Mahima, who will be taking the rapid fire with Osho Krishnan of Angel One as well. Over to you, Mahima.
Right, Osho, thank you so much for taking out the time. A quick rapid fire round of stocks that are buzzing in trade today. Ashapura Minechem is the first one. The stock has hit an intraday high of almost 8.5%. Your view?
Very good morning, Mahima. See, overall, there has been a drastic plunge in the counter, but again, from the 200-day EMA, the counter have started gaining traction. So I expect that the lows of nearly 630 should be providing very strong cushioning, and that should be kept as a stop loss. On the higher end, a pullback is expected, 770 for the targets.
Right, Maruti is the next one. Brokerages have, kind of cut the target prices on this one, and this is on early, car entry stages that volumes will go up for and might put pressure on margins. Your view?
14,200 to 14,000 is the anticipated price that I'm expecting in Maruti. Although there has been a decent correction in the counter, so another 400 points of downside is still pending. So one should stay sidelines or try to accumulate at lower levels.
Okay, Asian Paints is the next one. I think the pressure on this stock has continued since its Q3 earnings. Your view on how you expect this stock to bounce back?
There has been very strong correction, more than 11% kind of a correction in the week. So I'm expecting that with the kind of placement on the technical front around the zone of 2350, the counter can see some kind of cushioning, and that will be the level where one can look for buying opportunity in this company.
Okay, Heritage Foods is the next one. Volumes are almost 3.3 times its 20-day average. Any view on this one?
Very weak on the technical fronts, although it is at a historical support levels of 350. If there will be a further correction below 350, then we might see a further plunge. So better to stay sidelines from Heritage.
Okay, CSB Bank is the next one. We've seen the stock tank and how on the back of its weak Q3 numbers and volumes also looking strong. What's the view like?
Overall, there is a kind of a strong cushioning or a strong support near the zone of 400 to 390. So if it subsides around the same levels, then one can look for buying opportunity from medium to long-term perspective.
Okay, Balu Forge is the last one, did hit its 52-week low. Do you think here it's found its support? Is there a bounce back on the cards?
Technically, it will be a very initial signal of reversal, so one should wait for a follow-up buying traction. If it happens, then look for opportunity above 410 levels. From there onwards, we can see a pullback above 465 to 470 kind of zone on immediate basis.
All right, so that's the view coming in on Balu Forge. With that, back to you, Hira. I think overall the market sentiment still not looking very positive.
Absolutely. Thank you for that, Mahima and Osho. But moving on, it's been a steady quarter for Sagility, with the company growing on all counts. In a conversation with NDTV Profit, Abhishek Khayan, Deputy CFO at Sagility, shares insights on the company's outlook and expansion plans. The stock seeing cuts of nearly 3%. Let's listen then to what conversation Puneet had with the management.
What would you suggest has really worked for you in this quarter? Because a 35% growth on a YY basis, organic growth is almost at 20%. It's been a stellar quarter for you at a time where the Indian IT companies are struggling for growth. you seem to have found a niche within healthcare, and that seems to be working out very well for you. If you can tell us a couple of key highlights for what worked for you in Q3.
Firstly, Puneet, thank you for having me on your show. Yes, we had a stellar quarter, and I mean the 35% growth also includes inorganic growth. Our organic growth, like you said, is 19%. As you understand, we have seasonality in our business, and especially Q3 and Q4 are months wherein we benefit from open enrollment related work. So this quarter we had an outstanding open enrollment season for across our clients. BroadPath, which we acquired last year, this year in January, also did very well in this season, in this quarter, and essentially, like we discussed in our quarterly call yesterday, almost 5.5% of our annual top line this year is coming in from seasonal business. And then there are other tailwinds to the business. I mean, we've been growing across all service lines that we today have. We've done well on claims, clinical, payment integrity, engagement services. So yes, we've been doing great and hope this continues.
The one other thing, Mr. Kayan, has been that you've yet again raised your guidance in this year in terms of growth. Now, by almost 150 basis points for FY26 has been increased to 22.5% now. Is there anticipation that Q4 has also started with that kind of rigor where you left Q3, and is the anticipation that margins will also see an uplift because of this?
I mean, see, Q3, like I said, we had an outstanding Q3 on the back of an outstanding OE season. Right now we are in January, and we feel Q4 this year would also be good, especially in comparison to Q4 of last year. And the overall guidance we've given for the year at 22.5 factors in the growth that we are seeing in Q4. This quarter, especially our margins were, we scaled up significantly over last quarter, and despite that, we were able to hold on to our margins. A bulk of the revenues that we get in this quarter, especially seasonal revenues, are more delivered out of India. And as you know, margins outside of India is lower compared to what we get in India. So we did have the scale impact, we did have the benefit from Forex kicking in, but because of more revenues coming in from US this season, our margins were at par with what we made in Q2. We also expect Q4 margins to be in a similar range, and we've guided for full year margins to be at 25% or more.
The other one thing, Mr. Kayan, and we have been speaking about, the company in the past has been about attrition. Now, at around 20 to 23%, it's quite higher compared to the other traditional IT players, but so is your model is very differentiated as well. How do you expect this number to go on, given that we've seen a lot of advent of a reduction in headcount essentially in the industry and very specialized hiring among AI and amongst other factors? So where do you see this number for you, maybe in the near term, in the medium term as well, in FY27, any kind of qualitative output that you can provide us?
Sure. I mean, one point that I'd like to explain is that our model is very different from typical IT services companies. I mean, unlike them, we handle core operations for our clients. And I mean, if you compare us with other companies who are also in the operations space, our attrition number is pretty much at industry standard. And again, this is the attrition number that we report is a weighted average of multiple geographies that we operate in. Our India attrition numbers are really low. And unlike what's happening in IT companies, we are not cutting down headcount. While we are also investing big in AI, we have now deployed almost 30 use cases across 10 large clients. And we are generating a lot of productivity improvements through AI, and we are passing on these benefits to our clients. But we don't really see our attrition percentage to be significantly changing from where it is today. And yes, we'll continue to add headcount as we grow, while we'll also use AI to and bring in more and more tech into the operations that we run. But headcount will also go up as revenues go up, because we need people to run AI, right?
Okay, so that's the management of Sagility talking to us in terms of what's the outlook looking like going ahead. But moving on, let me get in Girish Sodani, co-founder at Ensure Capital, to talk to us about his views as well. Girish, welcome to the show and always a pleasure to speak to you on NDTV Profit. This is Hiral on this side. You heard the management of Sagility as well with the kind of numbers that they've posted in the third quarter, the expectation that they have going ahead as well. What would you advise investors to do and what's your view on the counter?
So, as per the propositions of the results, we are just expecting that looking out for the next 2 to 3 quarters itself. So, just hold the position as of now and looking out. At least because the Gritty India's growth numbers should be there in the next 2-3 quarters itself. The order book should be there. So just hold your positions.
All right, so that's the view coming in regards to where Sagility India stands. But moving on to Gland Pharma, the stock has been zooming in trade and despite of the pressure that markets have seen, and this is on account of how both India as well as international business has done very well. There's some new launches also that we are looking at, and Varsha, who tracks this very closely, is with us to break that down for us. Varsha?
Well, yes, strong Q3 FY26 numbers that the Gland Pharma has given. You know, the US, which is the major contributor for the company, grew 19% year on year. Company did launch 9 new products in the US, and company is confident of maintaining the sustained growth that they've seen. You know, talking about the Europe business has grown 42% year on year on the back of, product launches as well. India business grew 32% year on year, and company is expected to, maintain this growth trajectory. On to the overall Cenexi business, the Cenexi business grew strong, which was increased by new capacities, of course, the volume growth and product innovations that the company has seen. But one negative thing, overall in the con call, is management has reduced its guidance to 12 to 13% from earlier mid-teens growth that the management was expecting. So overall a good Q3 quarter, but yes, the guidance was cut, but the stock is up. I think the investors were expecting the guidance cut overall.
All right, okay. Thank you so much, Varsha, for getting us those details. I think, Girish, the market is not considering the guidance cut that Varsha just talked about at all right now. The stock zooming in trade. Your quick view?
So I'm looking out with a little bit of positive terms in the Gland Pharma. There's a reason behind this, that not for the US proposition itself, because the new product lines, we are just already saw that the companies are already launched 9 molecular product lines for the US as well as the different countries. So the regulations are a little bit familiar for the Europe and the Canadian governments. So I'm alignment of the propositions, not in the term means of result orientations, but overall scenario of the farmers, I'm looking out for the positive terms.
Okay, so that's with regards to Gland Pharma. But moving on, an interesting story when it comes to ABB India as well. And this is on the back of the guidance that has come in, or outlook that has come in from the ABB Global Conference call, where they've said that the India order inflow in the fourth quarter has grown 49%. ABB is yet to disclose numbers as well. So you're talking about a strong India order inflow. Analyst estimates for Q4 was actually in that range of 20 to 26%. We're talking about the management saying 49%, nearly double of what the analysts were expecting in terms of growth. If you talk about Q4 calendar year 25, the orders will be in that range of 3,800 to 4,200 odd crores versus an estimate of 3,300 odd crores. In fact, they've said that they are eyeing orders worth this number. Nuvama has estimated order inflows to grow 24% to 3,350 odd crores, and they're estimating order inflows to grow 26% on a year-on-year basis to 3,390 odd crores as well. JM Financial had estimated order inflows to grow 20% in that range of 3,300 to the kind of a number. So clearly, this is on the back of the numbers that have come in from the global company, which is exceeding analyst estimates. You're seeing this kind of a surge coming in there. Girish, what do you make of an ABB? Because strong moves, as soon as this number hit the screen, we've seen the stock zoom has been maintaining to those levels.
So that's completely true, that the order numbers are looking out very fabulously, and we are also just expecting the order number should be around 20x of the propositions. And the reason behind is because of the Indian and the Australia's and the weakness in the Chinese markets. We are just expecting this number should be going to be extended by next 2 to 3 quarters itself. So for the target propositions, yes, the the scenario was little bit very positive terms. So the 57,550 and the 5,900 would be the target for the very shorter period of time. And just looking out for the longer period, because I'm more into the fundamental terms, we are looking out 6,500 rupees for the target of at least 1.5 year time.
Right, okay. The next counter that we're putting spotlight on is Maruti Suzuki. Now, of course, the numbers came out in market hours yesterday, but I think brokerages have come out today, largely maintained their stance, but have cut target prices. And we have Puneet joining by to help us understand as to why that has happened. Puneet?
Well, it was a googly yesterday while it came as well, while stock tanked 5%, recovered yet again, but largely the anticipation that the entry-level demand will continue, and that could have some impact on margins. I think that's the key story, and hence brokerages like Citi amongst others have cut target prices. So Citi has cut target price now to almost 18,200 from 19,000. They still maintain quite an uppish target price compared to others. They said that long-term demand is imponderable at this moment, but they feel that the operating leverage benefit from higher demand of entry-level cars will be a key positive point and could be something to watch, and hence the upgraded target price of 18,200 still at this point of time. The other one's Jefferies. They've had a stark target price cut to 16,000 rupees per share from 17,500 earlier, and they've said while they are positive on India's PV demand and Maruti being a beneficiary, they've highlighted they're skeptical of the meaningful improvement in market share given SUVification of the economy. And finally, Morgan Stanley cut target price to 17,800 versus 18,400 almost, and highlighted a key point that they are cutting their estimates on basis of the EBIT going forward on a similar trajectory as well. So brokerages have cut target prices, but demand seems to be strong is what the common consensus is.
All right, Puneet. Thank you so much for bringing us those details. Girish, I'll come to you on Maruti. I think commodity headwinds is one of those factors that probably is common across those brokerages. Your quick view?
So yes, the target should be there, but I think this is too early to comment any of the propositions, because we are just waiting the reflections for EU summit, and because of the high deductions in the tariff power into the luxurious cars, I think this is also a big impact where the Maruti as well as the Tata Motors feel soon slightly. So in that longer period of time, I am not looking out surprising that the stock will be around 18,850 or 18,900 levels. But looking out for the target propositions, I think there is a very smaller period of time, but a longer period of investors should be hold off there.
Okay, all right. So that's the view coming in on Maruti. But, sticking with the auto space, we still have Puneet with us to tell us about what are you expecting from Tata Motors earnings today.
Well, this is of course a CV business expecting to do well in this particular quarter, led by strong demand. So an 18% growth in revenue, 21% growth in terms of its EBITDA, with margins yet again at a very high level of 12.7% is what's expected for the CV business of Tata Motors. Since the demerger, stock has actually rallied 40% and is a big beneficiary of the higher return ratios both on equity as well as on capital, which the benefit has gotten post the demerger. What's interesting is volumes as a whole is up 21% this particular quarter. It's not expected to be such a strong quarter, but turned out to be both for Tata Motors CV as well as its peers. In terms of its SCV cargo as well as pickups, they were up 15%, but largely the biggest was the ILCV trucks, which is the higher margin business for the company as well. Finally, what I'll be watching out for is in terms of course, the demand commentary, because quarter 4 is the strongest in the year, and what the company does essentially in terms of the Iveco acquisition. So those will be the two things to watch, but expecting a strong set of numbers for the Tata Motors CV business.
All right. Puneet, thank you so much for bringing us those details. Girish, your quick view on Tata Motors. Strong quarter is something that we are expecting.
So there's a reason behind it of the monsoons as well as the highest demand for the core sectors as well as the auto logistics. So the numbers were strongly come out with the commercial vehicles as well as the long-term large vehicles, and the sequential growth should be there in the quarter 2, quarter 4 as well as the quarter 1 of the 27th. So looking out the high perspectives of the Tata Motor series, we are looking out some around 700, 750 for the longer period of time. That would be 1.5 year time frame.
Okay, so that's with regards to Tata Motors. In fact, let's pull up a KPIT Technologies on the screens. They've just reported numbers. You're talking of a revenue number of nearly little over 1,600 odd crores, which is a growth of around 2% coming in there. Profits have dipped on a sequential basis by 21%. EBIT has seen a dip of almost 4.5%. That number is coming at 234 odd crores, and the EBIT margins, we're talking about a number which is close to 14.5% versus a 15.5%. I think that was one of the major reasons why you did see this knee-jerk reaction that did come in on the stock. If you look at the intraday charts as well right now, you'll see the kind of number coming in there. Now, they've said that the significant drop when it comes to the profit number is on the back of the one-time impact of nearly 60 odd crores on the back of the new labor code provisions that they have made. So that's what has hit them on that front. In terms of deal wins, they've closed deals worth almost $189 million during the quarter, and they're expecting a significant growth recovery in the fourth quarter of FY26 is what the management has indicated, and they maintain their full year FY26 EBITDA guidance at 21%. So that's the commentary which is very strong, and that's the reason why you've seen that uptick that's come in from the day's lows as well on KPIT Technologies. They've said that they will be continuing to focus on AI-driven solutions and strategic investments in the automotive software sector, including prior investments in Endream and Helm AI. So that's what we have been picking up so far. In fact, the stock actually initially fell after the results were announced, and this actually reflected the investor concerns over the decline that they've reported in terms of the profit number, as well as the narrowing that we've seen in terms of operating margins as well. The revenue growth has been in line with what the street was estimating. The flat profit and margin pressure has highlighted challenges in the competitive automotive industry that we are seeing already, but the deal pipeline is looking pretty strong, and the optimistic management commentary has what has led to the recovery in the stock as we see. In fact, let me, Girish, take a quick question with you on KPIT Tech as well. That sudden dip on the back of the profit and margin number, but the commentary is seeming strong, and I think that's what is keeping the investors on that buying spree now.
So yes, I think the results are not very much different because the reason behind it of the US as well as the US tariffs, how the uncertainties of the macro levels are there. So that completely whole tech platforms, I think completely whole tech sectors are reflecting the same things. So this is the reason behind it, that every companies are just putting out their own propositions. But in the term means how there's a new laws, labor laws, the companies are little bit effective of the particularly margin of this particular quarters. But we are talking about whether extended for the next 2 to 3 quarters, we are looking out more perspective in the term means of new narrations in the AI as well as the new developments, how the companies are going to be improvised in their margin though. And this is the best way that how the companies are just reflecting these particular things in front of the investor, and the scene that the stocks are little bit improvised from the day lows. So in the positive terms, yes, we are just expecting the good numbers should be there, because now the companies are just reflecting their particularly market size, not for the US, just expanding the market size into the narrow countries also.
Okay, all right. So that's the view coming on KPIT Tech. But the other pack that will remain in focus today is the FMCG pack. A lot of FMCG names coming out with their earnings: ITC, Dabur, Colgate, Swiggy, Voltas. And just to give viewers a quick view of what you can expect from all of these, I'll start with ITC first. Revenue, EBITDA, both could see a growth of around 7%, but net profit could see a degrowth of around 7%. Margins may slightly improve. Mid-single digit volume growth can be expected in the cigarette business. Agri, FMCG as well as paper business is expected to see a single digit growth. In terms of key things to watch, I think any commentary coming in from the management on recent government levy of additional excise. They don't do con calls, but anything in the presentation, press release will be watching out for. In terms of Dabur, overall revenue may rise around 5.6%, EBITDA also around that same number. Margins may be at the same levels as they were in Q3 FY25, and net profit might rise slightly ahead of the revenue numbers. GST benefits might reap in. Margin outlook is something that we'll be watching out for. And lastly, Swiggy, losses might widen, but revenue will see a sharp increase. So Girish, I'll come to you on this one. Any of these earnings that you'll be watching out for, and overall your view in with regards to where the consumption pack stands?
So I'm looking out for the ITCs. I think just the net profits are going to be improvised by the 5.5% to 7.8% year-on-year basis. That little bit more improvisation on overall product pack. That's stable volume in the terms of margins as well as the pricing propositions and just cigarette propositions. How we are just expecting that these particular numbers should be there at the growth of around 15 to 18% are there. So in the terms of higher cigarette sales numbers, also just looking out for the regional level, that would be somewhere around 6 to 8%. So this is a completely pack on just looking out for the ITCs and just expecting that this number should be there with the target price of around 420 for the year time frame.
All right. Okay. So that's view coming in on ITC. But with that, Girish, thank you so much for taking out the time and helping us give your insights on all the stocks that we discussed. Viewers, completely out of time on this edition of Trending Stocks, but do stay tuned. More news and updates up next.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान मेहरबान कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा, कब से बोल रहा हूं, कोई सुनता ही नहीं.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है. बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है. नाम मिला, फेम मिला, प्यार मिला. I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर. लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट. 7वें आसमान से सीधा गिरा मैं जमीन पर. फिर क्या, खुद पे काम दोबारा शुरू. फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया. है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म. शुक्रिया आपकी प्रेयर्स का और आपके प्यार का. कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम. क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी. So come and witness Yo-Yo Honey sing. This is my story.
1st February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing the
Nifty at day's highs. The Nifty is trading around the 25,300 mark. It's the Nifty Bank that's slightly under pressure, but has been doing well in this past few weeks, falling over 150 points. But Maruti Suzuki, BL, SBI Life, Dr. Reddy's, Indigo and Asian Paints, those are the biggest losers for the Nifty. But recovery seen in quite a bit of them. We get you the full perspective. Hindustan Copper surges in trade as copper prices hit a fresh new high. The rally reflects the strong accumulation essentially, as well as what we've seen in terms of copper demand, rising investor interest, as well as a favorable sectoral tailwind amongst others around the metal space. Finance Minister Nirmala Sitharaman has tabled the economic survey for the financial year of 2025 and 2026 in the Parliament, setting the tone ahead of a 9th consecutive union budget. Now, the survey lays out the state of the economy, key challenges, as well as the growth, priorities, providing our roadmap for the budget that will follow on Sunday. Rupee hits an all-time low against the US dollar as continued weakness in the foreign capital flows, as well as a corporate rush to hedge against further depreciation has an impact on the Indian currency. It drops to 91.99 to the dollar, eclipsing its previous all-time high of 91.96 that it had hit in the last week. Ahead of the budget session, Prime Minister Narendra Modi sets the tone for reform-led growth. He highlights that Nirmala Sitharaman's 9th consecutive budget and calls the India-EU FTA the mother of all deals. PM stresses quality manufacturing, next-gen reforms, as well as a human-centric technology approach, positioning India as a confident, competitive global powerhouse for the decades ahead. Maharashtra Deputy Chief Minister Ajit Pawar's son Jay and Parth performed the last rites of their father after the NCP leader's tragic death in a jet crash near Pune. A large gathering of supporters and senior political leaders, including Home Minister Amit Shah and Chief Minister Devendra Fadnavis, paid their final respects. Hello and welcome. You're watching Lunchtime Trades, the show that gets you a roundup of everything that is happening around the world of commodities, news, as well as updates on the top buzzer of this hour, all while you grab your lunch. Let's take a first very quick look essentially of, because the markets has been the key dominating factor and continuing to do so in terms of the Nifty 50. We have been highlighting the recovery that has been there as well. But let me at this point of time welcome in Anjay Kedia. He's the director at Kedia Advisory to get a first quick check of the commodities. Ajay, very good afternoon and thanks so much for joining in today. Largely, the talk of the town has been what's happening with copper. Yet again, an all-time high hit. Where do you see any kind of near-term trajectory for copper that investors can watch out for?
So previously we used to call a golden afternoon, but I think now the terms should be changed. It should be a golden copper because copper has rallied very good in line of expectation. In last 6 months, it's a consecutive 6 months where we have seen a continued positive movement. The reasons are, first of all, supply concern. We have seen Indonesia and Chile, one of the biggest supplier, continued unrest is going on. Because of that, prices are getting support. Secondly, the demand side. As we know, this era is a digital era, and in digital era, we are having a AI, semiconductor, and everywhere copper is being used very widely. Third is the substitute metal, because any commodity is having a risk of substitution. Like silver has rallied almost 300% in last 1 year period. Now, investors and other investment demand is now shifting from silver to copper. Dollar weakness has been going on. Industrial growth is been projected to be very good. All these factors have made copper today testing $40,000 mark on LME, and on M6 also we have seen prices moved above 1400. We still expect this rally would continue to be there in 2026. Another 20-25% move from current level is also expected because of current fundamentals. So one should go ahead with copper. I think the fundamentals are totally matching whatever the rally up till now we have seen.
Ajay, then largely, a lot of investors have been playing the theme either directly on gold and silver via direct purchases or the ETFs, or via key stocks, and we've seen those rally as well. Hindustan Copper being one of them. For retail investors, Is there anything that you can suggest where they can get exposure to this metal?
Yeah, definitely. See, actually, whenever we suggest to our client of our way of research is from macro to micro. So generally, we see a commodity super cycle. We start with energy, bullion, then industrial metal. So this rally has been started. But given that in India, we have a very limited options available as an investment in copper. First of all, either you buy a physical or you can buy on derivative exchange like the MCX, where you can buy and put it in the warehouse. And third would be ETF, but in India we don't have any ETF right now. Globally, there are one or two players or mining stocks are being there. But best way is to invest in Nifty metal index or stock like Hindustan Copper. Even we are more bullish on, let's say, aluminium and other. So I think the metal stock like Hindustan Zinc, Hindustan Copper, Vedanta, all these stocks should keep a pace for 2026, as metal is going to be a consumption cycle has been actually started. So I think we can invest in stock directly. And today we have seen already 20% gain in Hindustan Copper, and such moves can be seen in other metals also.
Ajay, we of course we've spoken about copper, but one key metal and that continues to hit an all-time high is gold as well. And we always get so many queries about what they should do if they miss the rally. It's again hit a new high today. Any view that you can offer on what's your medium-term target for gold?
I think target or numbers are not a big thing from here, because today morning I was just scanning the data. I have found that in 1980 January, gold prices got a gain of 30% in a single month. And today in January 2026, we have seen 28% gain in gold. So this is just a form of mania has been started in gold, because when we are in circular bull run, there will be a return of, let's say, 20-30%. But if we are already been gained by almost 70-80% in last 1 year period, adding this 30%, gold prices has almost doubled. So I think from here, maybe we can see level like $5850, $5900 in international, whereas on domestic side prices like 2 lakh, 2,10,000 is possible. But investing at this point will be more riskier, because other asset class look cheaper as compared to bullion right currently. But however, the fundamentals like de-dollarization, dollar weakness, central banks buying, ETF buying still continue to support gold and silver at current level also. But I would suggest better wait and watch, because the moment what we have observed in last 15-20 days is very furious. So at that time, when this type of volatility is there, better to stay away or invest in SIP format, so that whenever there is a correction, you will get a more units. So gold and silver ETFs are available. That will be a better way to get invested again in gold and silver.
Well, Ajay, we leave it at that. Thanks so much for joining and giving us perspective on copper as well as gold, which is always a key talking point. Wish you the best and look forward to our next conversation. Well, before we do that, we spoke about the recovery that we've seen in the markets at this hour. Quickly pull up the Nifty 50 chart, and that will give you that perspective. From 25,159 at the day's low, you've seen a stellar recovery over the last couple of hours play out. Look at the heat map as well. Firstly, give you that perspective also on what are some of the key stocks, because there were hardly any, I think 13 to 14 stocks at the start of Ask Profit in the morning edition. And in terms of green, that has continued to build on. Now almost 24 stocks in the green right now. L&T continuing their momentum, led by its earnings, all-time high order book as well of 7.3 lakh crores, boding well for the stock. NTPC, Axis Bank and Hindalco are leading the gains, while we continue to see pressure on stocks like Asian Paints post earnings, M&M as well, since the news of South Africa increasing its essentially its import duty on cars has had that impact, and so has Maruti. Down 2.7%. Spoke about brokerages have cut their target prices on Maruti with the logic that there could be some pressure on margins. But look at the contributors also for the Nifty 50 also. Both on the gaining and the losing side will also give you some more perspective of how big that move is on L&T. 39 points contribution to the gains in the Nifty, while M&M is dragging it on the downside, and so is Maruti, TCS, BL. We're still seeing a very strong jump in terms of the other banking names that are supporting the index as well. The mid cap and the small cap is the other key aspect, because we have seen consistently the mid cap and the small cap being down and out. And while they're still in the red, both of these indexes, we've seen a recovery, but it's selling off as well. And on the bottom of the screen, Canara Bank numbers, the asset quality has been one of the biggest talking points for all the banking numbers at this point of time. For at the net NPA falling to 0.45% is almost the best in class in terms of asset quality for Canara Bank compared to its history as well. And we saw a similar trajectory play out for both HDFC as well as ICICI Bank, where the asset quality was at its most pristine level that it has been over the last few quarters. But it is a numbers game at the end for the banking partners. So we're not seeing too much of a reaction right now for Canara Bank, down 3.2%. The operating profit has increased 16%. Provisions have largely remained flat. That's a key positive also. Just up 0.7% will be something that the market will take cognizance on, waiting probably a little bit for more clarification, but stocks that definitely done well. Let's look at the 1 year chart and give you that perspective as well, because net profit up 26% is a key positive. We'll get you more numbers on this, but largely for Canara Bank, maybe it's just the NII growth that has slightly disappointed the street, but 66% in the last 1 year and some respite now. But the con call becomes very key as well. Let's also look at Raymond as well. One more counter that we're focusing on, because on the back of Q3 earnings as well. Stocks down 3.2%, but my colleague Varsha actually had a chance to speak to Gautam Maini. He's the CEO of the engineering business of Raymond. Listen into what he had to say.
We are joined by Mr. Gautam Maini, who's the CEO of engineering business at Raymond. Well, Mr. Maine, welcome at NDTV Profit. Always pleasure to have you. Just starting with the assessment when it comes to Q3 FY26, what were the key strengths or what stood out when it comes to Q3 and what were the misses?
So basically, we've been building on the previous momentum. Our performance obviously continues to be anchored by both the aerospace and defense and the precision technology and automotive divisions. This reflects actually the deepening integration of Indian suppliers into the global high-tech value chain. We're seeing a sustained trend of domestic vendors transitioning into production of sophisticated subsystems, complex precision components, which has maintained, a robust order pipeline for OEMs, Tier 1 and Tier 2 export partners. If I look at briefly on the aerospace business, we've grown just on the segmental level, because that gives you more clarity on the two segments of the engineering division within Raymond Limited. We've grown at 48.9% year-on-year growth in this quarter with an EBITDA of 39.4%. So actually the operating performances of the companies have been quite robust. And the EBITDA margin is also at, 18.6%. On the 9 monthly basis as well, we've grown at 33.6% and EBITDA at 34.2%. So I would say that basically these were anchored by two strategic factors. One is the increased production requirements from leading aerospace OEMs and Tier 1s, and also a massive product portfolio expansion, besides making new products literally on a daily basis. So these have helped us to really grow. When you come to the precision technology on auto component side, at the segmental level, we've also grown about 14.9% at the quarter and 50.6% on the EBITDA side. So clearly, all of the synergies between the three merged entities are starting to play out. A lot of effort over the last 18 months, and these are starting to play out. They will continue to have the operating level leverage sustained in both top and bottom line. 9 months as well, you see a 12.2% year-on-year growth and a 37.8% year-on-year growth on EBITDA as well. So that's where we are seeing a very, very robust growth, and we will continue to grow that way.
Right. Mr. Maini, talking about the consolidated growth, so revenue grew almost 20%. Now, the demerger has been done, everything has been sought out. Now, going ahead, talking about FY26 and of course for FY27, that matters the most. What is the revenue growth that the company has targeted? So any ballpark range, if you could, give us.
Well, rather than being very specific, what I would say is that the momentum at both the operating companies within Raymond Limited has been very, very strong and robust, and this trend will continue. So Q4 would be sustained growth. In most of the companies, we are exporting over 60%. And in December, they generally have a truncated growth because they close down for Christmas. And therefore, Q4 is always strong. So we believe that the momentum will be also strong for us in Q4. And the sustained growth will continue to show up in Q4 as well.
Got that point. So Q4 being the strongest quarter will show a good set of numbers. Sir, when it comes to the current order book, what's the current order book considering your aerospace and precision tech and auto components as well?
So we go to aerospace, generally the contracts are 5 to 10 year contracts, so which are very long-term contracts. Generally, you could average out maybe a 2.5 year period of contracts. So if we are, closing the year at, say about, a certain number, then 2.5 times that number is generally your order book. And that continuously grows. So as you're growing, the order book keeps growing. So that is a very robust requirement because, in the aerospace industry, there are backlogs of 8 to 10 years. So market has never been an issue. It's always been the more you can deliver, the more you're able to perform, the more business comes to you. So there's a very strong and robust demand. In terms of the automotive side, we've seen a huge demand from the hybrid vehicles in Europe, where we have made a huge progress. And this has significantly grown our business higher than peers because of the adoption of hybrid in the European markets. We've also had growth in our overseas operations of tools and hardware, where we brought the synergies of all the three companies together. And that has started to show results both top and bottom line.
Right.
So, yes.
Yeah. Sir, if you could, quantify us the order book and the execution time period, if you could just give us the ballpark number, if any.
Well, I would say that in general, like I said, it's between 250 and 280% of the year this year. So there's a significant order book that we have in our pipeline, and this keeps growing, every week. So you keep getting new schedules. Like I said, the more you perform, the more your schedules come up and the orders keep going up. Also, if you perform very well and there's another supplier that doesn't, then those orders come to you as well. So the key in this business is execution. And that's what we've shown, that our production and execution is on target, which will help us to continuously get more inflows. If you look at also the inflows from the RFQs, the China plus one factor, the focus on the aerospace ecosystem here in India, are all helping us to actually get more business out here.
Right. And sir, the precision technology and auto components grew 15% year on year. What's the growth expected going forward? Any outlook in this segment?
Well, I would say that the similar momentum would continue. We did have a one-time increase due to the sale of land. So I would say, to be fair, anywhere between 12 and 15% is the growth possibilities for this segment, even though the markets have not been as great overseas, but we have managed to enter into areas, like I said, with hybrid and new areas. We also brought the synergies together because of our export background, and that's helping us perform better.
Right. So 12 to 15% growth is expected when it comes to precision technology and auto components. What about aerospace? You grew strongly there, 49% growth year on year. Can this, growth sustain? And what's the target there?
Well, I would say, obviously, the wish is always to keep that sustained. But I would like to say that, a 25 to 30% growth is a very good growth. And I think that would be the minimum growth that we are targeting in this sector. And if we can do more, that will be good for all of us. But that's the target that we are sort of aiming at.
Well, that was the management of Raymond, but we spoke about what L&T has actually done for the street today. It's been one of the key stocks that is driving the momentum on the upside and maintaining that as well. So clearly the area of strength for the markets today. Spoke about the results. The profit was at 3,215 crores, was a slight miss. It was a 4% decline, but led by a one-time provision of the labor code impact. This includes, of course, that 1,191 crore impact that we spoke about in terms of labor codes. Now, the company's CFO, R. Shankar, actually highlighted that the company has been able to sustain margin optimization on the back of better cost management and focused on staying competitive as well. Let's listen to that quick bite from yesterday's call and listen to what he had to say.
domestic business has seen few softness over the last few quarters, and Q3 was a turnaround. So I would like to understand, how do you see this trend going forward? Firstly that, and secondly on the margin expansion part, I would like to understand how much of expansion from the 70 basis point is coming in from the pricing and how much from the cost optimization.
Much of this margin improvement has come from execution efficiency and optimization, because these are projects that we have won in the previous year. So there was no advantage or opportunity available for us to revise any pricing in the course of the current year. It is just that the business teams got into it with a focus to work with greater productivity and hence reduce the cost and improve the margins. So I would like to believe that the margin improvement that we are reporting is a sustainable margin improvement.
Well, that was the management of L&T, but pull up a couple of stocks. Swiggy is the first one coming out with its earnings today. It's going to be a big one because for Zomato and Eternal, of course, was in focus as well. While numbers were good, Eternal also had the management change. So puts in focus for Swiggy, and the reason why Swiggy is also mentioned because it has had a torrid time essentially in the last 3 to 4 months. Stocks corrected as well quite meaningfully. If you can pull that chart up, while the revenue is expected to grow by 48% in this particular quarter for the company, and there you go, last 3 months is down 22%. 5,921 crores is what we will see the revenue. The EBITDA is expected to be very close to the similar level of 713 crores versus 726 crores in the same time last year. But the net loss, will be at 999 crores versus a 799 crore loss that the company did in the same time last year. So you will see possibly the investments, higher investments that are happening essentially in the dark stores having an impact on the company. You have to expect losses to widen further, both on a quarter-on-quarter basis as well as on the year-on-year basis, what we've highlighted. And specifically for Instamart, which is the quick commerce vertical, it will be one of the key drivers for the average order value to grow. We will continue to monitor in terms of store utilization, what happens with the counter. Cash burn continues to be one of the major parts that has hampered Swiggy at this point of time. So we will continue to monitor that. The other stock is Tata Motors Commercial Vehicles. Now, that also will come out with its results today. While the PV business will come out with its results post-budget, this one is expected to be a strong set of numbers for the company at this point of time. Revenue is expected to grow yet again in this quarter in the high teens, and we've consistently highlighted that post the demerger, Tata Motors Limited, which is a CV business, is up actually 40% from that price, while the PV hasn't kept pace with it. Revenue expected to rise by 18%, EBITDA to rise by 21%, with those margins coming in at 12.7% will be a big jump from the last year's level, and continue to monitor. In terms of profits as well, expect to rise by 23%. A lot of it has actually come from the total sales. It's up 21% in this quarter itself. It's a quarter that generally doesn't see such a big impetus apart from light commercial vehicles amongst others, but has done well in terms of this quarter, and MHCV has come back as well. So if you can look at the categories which are doing that, the pickup and the cargo business is expected to do well in terms of sales, and that should reflect in that operating leverage coming in for the giant. What I will be watching out for is the Iveco acquisition and any more details on the same. They was expected to complete this on 1st of April 2026. What happens with those transactions will be something to watch, but overall, a good quarter for the company. We await those couple of earnings, but as we are out of time on this edition of Lunchtime Trades, stay tuned to NDTV Profit. Small Cap Buzzers comes up next.
I think the main issue on the table at this point of time is the efficiency of government spending, including the capex. And I'm re-emphasizing that when we talk of FI coming in, FDI coming in, let's understand that how do the investment come in? Because environmentally, we have a problem in this country, right? At the end of the day, we all know about the AQI, the pollution, the problem, the water problem now. Now, how do you convince the foreigners to come and invest and come and live in this country if this is what we present? I think we are looking forward to see, is there a big agenda of making government capex, which is huge sums of money being spent more efficient, more accountable, and in line with making the living standard of this country going up. Rest is always fine. Economics and all will work if you're healthy. Otherwise, there is no point of having money in the bank if you can't breathe clean air.
I believe government has already done a lot of reforms and rationalization outside the budget. The key thing to watch out will be the degree of fiscal consolidation that is undertaken in the budget, and that will be really an important marker for the bond market that has not reacted positively to RBI rate cuts as of now.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा. कब से बोल रहा हूँ, कोई सुनता ही नहीं.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है. बचपन से पता था मेरे सपनों में दम है. आगे नहीं, सबसे आगे जाना है. स्टार नहीं, सुपरस्टार बन के दिखाना है. नाम मिला, फेम मिला, प्यार मिला. I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो यो हनी सिंगर. लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट. 7वें आसमान से सीधा गिरा मैं जमीन पर. फिर क्या, खुद पे काम दोबारा शुरू. फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया. है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म. शुक्रिया आपकी प्रेयर्स का और आपके प्यार का. कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम. क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी. सो कम एंड विटनेस Yo-Yo Honey Singh. This is my story.
1st February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
I have always had this inclination towards art, and if we don't collaborate and bring those artists forward, give them a platform, who else will?
Honoring the masters who define our cultural landscape, M3M presents NDTV Master Stroke Art Awards. Coming soon on the NDTV Network. This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the
Good afternoon, you're watching Small Cap Buzzers on NDTV Profit with me Somit Sarkar and my co-anchor Mahima. In the next half an hour, we'll take you through the most important small cap stocks that have been buzzing in trade today. But Mahima, if you look at the markets, the Nifty has been moving around between gains and losses. It's largely flat currently. 25,345 is the level that we are looking for the benchmark. Nifty Bank, on the other hand, has been outperforming. Not much for gain, it's just up 0.4%, but at least outperforming the Nifty Nifty, that is the benchmark. On the losing side, we have auto and FMCG, the top sector losers, and the gaining side, it's yet again metal and energy that have been gaining up anywhere between 1.5 to 2.4% in trade. But the pain continues when it comes to small and mid cap. Any stocks that are seeing that you're catching up today?
Right, so before I move on to small caps that we're going to talk about, I think just one day of hurrah is what we saw for the broad end of spectrum, and today we're back in the red, both the mid cap 150 and the small cap 250 under pressure. In terms of where the small caps are concerned, you have your Jindal Drilling, which is still seeing a downtick of around 9%. Heritage Foods, hitting that 52-week low, down 9%. Infobeams Tech also seeing pressure for second day in a row, down 7%. Sterlite Tech still down 7% as we speak. Mangal Electrical also continues to see pressure, down 6%. But on the flip side, you have something like Vanberry, which is doing fairly well, up 13%. Aeroflex, which is also doing very well, up 12%. Precision Cam up 11%, as well as something like HCL Info, Balu Forge, all seeing gains of about that 10%. So that's with regards to where some of these names at the broader end of spectrum are concerned. But one counter that we're going to put spotlight on is Ratnavir Precision Engineering. Now this is in focus with the board and shareholders clearing a QIP to fund working capital needs and support its next phase of growth. And Varsha joins us to give us more detail with regards to this fundraise. Varsha?
Well, yes, one of the highlights for this company is also that board is expected to give Q3 FY26 results on 31st of Jan. Now, this company is a manufacturer of stainless steel washer and related products and serves domestic as well as global markets. Onto the QIP plans, the approval are in place for 200 odd crore QIP. The floor price is being set at 152 rupees per share, and the main highlight of this company is of course the product shift towards the value added segment. Now value added segment in H1 contributed almost 8% to the overall revenue. They are expecting 200 crores of revenue from value added segment on 1500 crores of revenue for FY27. Now PAT margin is also expected to improve from 6% to 8 to 8.5% over time. Talking about outlook for FY27 and FY28, FY27 revenue is expected at around 1500 crore, and out of this 1500 crore, 200 crore will be coming from a value added product which will inch up margin for this company. For FY28, they are expecting almost 1800 crores of revenue. Onto the profitability targets, EBITDA margin is expected between 13 to 13.5% by FY27, and PAT margin expected at 8.5% in medium term versus 6% currently. So overall, the key trigger for this stock over a longer period of time is nothing but a shift to the value added segment, which will help to inch up the margins and of course the revenue for the company.
Right, Varsha, thank you so much for giving us those details. We're also joined by Astha Jain, Senior Research Analyst at Hem Securities, joining us now. Astha, very good afternoon to you. Your view on this particular counter, because overall if you look at what Varsha talked about, there's QIP on the cards, there's margin improvement going ahead that the company expects, and strong top line guidance is also something that is on the radar. Your view?
Hi, good afternoon to everyone. View is positive, and the reason being, in fact, whatever management is expected, in fact, they have proven that in their recent, quarter two of FY26 performance as well. Because there also we have seen a good jump in the net profit as well as revenue and operating profit. So, what I believe that this stock is well poised to move to the levels of around 170 to 180.
Right.
Basically, I would like to assign 170 target to this counter.
Right. Well, shifting focus to SBI Life, they have reported a steady set of third quarter numbers. My colleague Sharath caught up with the management. Let's listen into that.
Very strong numbers, industry leading. That's what brokers and analysts talk to me about. But what led to this growth in these numbers, the AP numbers especially? And also if you could just give a flavor of what's happening in this current quarter.
So if you look at the numbers and if you look at the guidance that we had given at the start of financial year, the numbers are very much in line with the guidance. So the company planned some strategies, had an annual plan. We worked on that and we are happy that we have been able to deliver as per our guidance. As you said about the current quarter, I again assure you that our annual guidance, we are going to meet all the numbers that we had projected at the start of the year.
But there's always, the broking community and even the numbers suggest that you're likely to overshoot the guidance in a lot of parameters. Is there any chance of an upgrade coming in for the end of FY26 or you'd like to hold it?
So, see, we have very structured policies in place. We make a strategic plan, we make an annual plan, we make a 3-year plan. Now the numbers for the next year are under works. We are planning that how next year we are going to perform, on what areas to improve, on what areas to rectify what we have been doing over the years. So at the fag end of the financial year, I don't want to change any of the numbers that we had projected for the financial year. After the financial year, we will come up with our guidance for the next financial year.
And Amitji, the VNB margins, that's what we talk about, the value of new business margins. They were a kind of, depressed. Will that depression continue because of, the announcement which had come in earlier on the GST cuts? In the next couple of quarters, we can see much more, kind of impact, or will this impact, kind of bottom out?
No, I do not agree that the numbers, VNB margin numbers were depressed. We had given a guidance of 26 to 28%, and at 27.2% that they are bang on with our range guidance. There may be quarter to quarter variation and there are various factors which affect that. There is seasonality and there was a big effect of GST on the VNB margin. Also the labor code has affected. We had made certain provisions for the labor code implementation also. So if you look on quarter to quarter basis, there may be a certain dip, but it is broadly within our range. We have been able to withstand the GST effect, the labor code effect, everything through our operational efficiencies.
Well, that's pretty much nicely summed up. But the product launch pipeline, going ahead, which are the high margin products you'll be looking at? What are the growth numbers, which have already come in this quarter? If you could just break that up.
So as a company, we had guided that we are working on our product mix. If you look at the growth numbers line of business wise, our main product ULIP has shown around 7% growth, whereas our overall growth is above 16%. So our remaining lines of businesses, that is non-participating, guaranteed products, protection products, participating products, all of them have shown very good growth during the quarter and during the first 9 months of the financial year. This has come on the back of product tweakings, new product launches in various lines of businesses, and we are very happy that whatever products we have launched in last 6 to 9 months or last 1 year, 1.5 years, all of them have got good market response.
All right, but just to put that in perspective in the margins front, going ahead, you're looking at, much more value-added products. So that product shift which you're talking about, changing the product mix, what kind of, product mix changes we can expect, let's say, in the next 12 to 18 months?
So these non-ULIP lines of business, as you are aware, are higher margin products for the industry and for the company also. And our aim to improve the total contribution of these lines of businesses in our total product mix is bearing fruit, and that is they are resulting into the improved VONB margin that you are seeing in the company's numbers.
Right. So of course, you are looking at some positive momentum for your entire operational setup. But the commission income, that's also something which has done well in this quarter as well. What are your views on that going ahead? That rate of growth to continue?
You are talking about commission income or the commission that we pay to our
The commission
customer?
Income.
Commission income to the company. No, I think we do not have much of the commission income. We pay commission to our distributors. On the investment side, definitely our yields that we earn through interest, through dividend, they have shown good growth, and they are a result of the market movement also.
Right. So that's a kind of good correlation coming in. But coming back to your distribution, there is agency, there is banking channels. How have the growths come in this quarter, and going ahead, where the force is going to be, both sides or either of one of them, there will be more pressure going ahead?
If you look at the distribution mix of the company, for SBI Life, Banca has always been a very important channel, almost 65% of business coming through the Banca channel. That channel has shown good growth numbers during the quarter and during the first 9 months. But at the same time, if you look at the agency channel, we are number one agency channel operator in the entire private industry. Almost 30% of the agency channel business of private industry is coming through us. And the contribution of agency channel in our business is also 30%. We are making all efforts to further strengthen this channel. We are opening more number of branches. We are employing more agent. In fact, during first 9 months, we have added almost 94,000 agents on gross basis. We are training our agents well to improve their productivity, which has now reached almost 3 lakh rupees for the agents, active agents. So these are the steps which will further increase agency contribution to the total distribution mix of the company.
Astha, what is your view when it comes to SBI Life? The numbers are pretty much steady, but the stock is down nearly 4% in trade today.
Because I think market was looking more of upgrade from the guidance perspective from the management side, and that is why we have seen that the stock is not enjoying this kind of a result. Otherwise, result seems to be okay. Yes, there are certain things like VNB margin. In fact, it was due to some one-time losses. I think the VNB margin has seen some sort of a moderation, and in fact, due to the labor code also, we have seen there was a rise in the revenue. All in all, I believe that it is a buy on dips kind of a stock as of now. Let the stock settle at around 1900 to 1880 odd levels, and then one should make fresh entry into this counter.
Buy on the dip strategy for SBI Life is the view coming in from Astha. But time to look at the F&O space and the setup and the cues that are shaping up in trade today. And we have Sharad joining by. Sharad, I think expiry, of course, at its play, but not a very positive sentiment that we're looking at.
Well, yes, there is some kind of range-bound movement, but in the last 10-15 odd minutes, there has been a good up move in the Sensex coming forward. And of course, the expiry is at play. But L&T, look at that. The stock is the top gainer, up 4%. Apart from that, the metal space also doing well. Tata Steel up almost 3 odd %. The banking names also holding the fort. Now, what's not working, of course, BL, we are seeing some kind of profit booking. M&M selling has intensified for the second straight day. Asian Paints also, we are seeing a big downtick as well. These are the important contracts also to look at where the action is there. But net, it is still showing a kind of a range-bound movement when I talk about these contracts. BankX, let's see what's the story all about. And largely IDFC First Bank, HDFC Bank are in the green. Some kind of profit booking happening in the Yes Bank counter as well. Looking at the stock specific news, long build-up is coming into ABB. Of course, the global parent company's number came, and the domestic India's number commentary has been strong as per the analyst estimates. Actually beat that numbers. Nalco, that's up almost 5%. Metal space, a strong technical up move continues. Short covering for L&T and NMDC as well. And for long unwinding, We have TVS Motor and Asian Paints making it to the list. And for the key important short build-up, two counters, Solar Industries, that's down 5%, and RVNL, that's also down 2%, a little bit of lower volumes on that. We will be looking at the pre-budget trade as well from the F&O segment. But that's all, folks, for the BSE setup.
Well, thank you, Sharad, for that extensive F&O market check. Moving on to other small cap stock, GPT Infra. Now, the counter remains in focus on the back of recent order win and a steady set of Q3 numbers. Let's get in Atul Tantia, Joint Managing Director and CFO of GPT Infra. So, firstly, to start off with this 1200 crore order win that you have announced recently, what's your share in it? What is the kind of margins that we can expect from this order? And where does this take your overall order book to?
Sure, thank you. So this 1200 crore is L1. It's not an order win right now. It should be converted to an order win in the next couple of days. Our share is about 40%, which is 480 crores. This contract is to be executed over 48 months. And it is within our hurdle rate of 13%, slightly north of that. And we expect the contract to be executed smoothly over 48 months. That is the life cycle of the contract. This takes our overall order book, so our net unexecuted order book as per the results announced yesterday was 4,400 odd crores. So with this, it will be closer to 5,000 crores for the overall order book of the company. 4,900 crores to be precise.
Right. Also, if you could give us some idea, some sense of what is the kind of orders that you have bid for and what is the kind of success ratio that you have seen and we can see going forward.
So we have bid for some large contracts and medium-sized contracts as well. Close to more than 2,000 crores of contracts that are we have bid for right now. We expect one or two contracts from them to fructify. Last year, means this financial year in the 9 months, we got about 1,770 crores of new orders inflows. And this L1 of 480 crores was announced yesterday in addition to that as well. So our full year target for order inflow was 2,000 crores, which we have bumped up to 2,500 crores for this year, which will be the highest order inflow in the history of the company.
Mr. Tantia, hi, Mahima also joining in. Just want to understand, you've already crossed that guidance of 2,000 crore. You're already sitting on new order inflow of 2,500 crore. What's the new guidance that you'll give? What is the kind of inflow that you're expecting in Q4?
So in Q4, apart from this 480 crores that we hope to announce in the next couple of days, which is L1 for us, we expect another 300 to 400 crores of new orders. And we are quite hopeful that this will take us to 2,500 crores for the full year, which is almost 25% higher than our guidance of 2,000 crores, which we had done earlier.
Right. I believe your current order book is around 5,000 crore, which is nearly 3.5 to 4 times your FY25 revenue. Could you just give us the execution timeline for this and what is the kind of revenue bump up we could see in FY27 and FY28 given the fact that you have such a large order book?
So the execution timeline for this is 3 years. We expect the orders to get executed over by FY29. This entire 5,000 crores, and that gives investors enough visibility and the management also enough visibility in terms of order execution. We expect to maintain the growth momentum that we guided earlier as well, between 20 to 25% for the next couple of years.
And in terms of margins outlook, what is the kind of long-term margins that you're looking at? Because you've done around 13% this quarter and your range is also 13 to 14%. But considering this entire order book that is coming in plus your execution timelines, do you see any improvement in margins from that 13 to 14% mark?
So we do expect improvement in margins from the 13 to 14% mark because we have also announced an acquisition of a railway signaling company yesterday, Alcon Builders and Engineers, which has a much higher margin profile and where the barrier to entry is much higher. They are one of the few companies in the country which do APC work for railway signaling. With this acquisition and also the operations in Ghana and Africa also picking up, we expect the margin profile to be closer to 14% compared to the 13% that we had guided earlier.
Okay, all right, okay. Mr. Nandia, thank you so much for helping us with those answers and of course taking out the time and speaking with us at NDTV Profit.
Thank you.
All right, Astha, I'll quickly come to you on GPT Infra. Your quick view?
So order inflow is definitely very strong, but there was a subdued number in the bottom line as well as operating profit, and that was due to the reason of the extended monsoon, etc. What I believe that this stock might see some more pressure from here. So it is again a buy on dip strategy which can be applied to this counter at the level of 98. So buy on dip at the level of 98 is what we are recommending right now. Just hold if anyone has this counter in their portfolio.
The next stock that we are talking about is Star Health, and to discuss more on the Q3 numbers, we are joined by Nilesh Kamri, the CFO of Star Health Insurance. Firstly, to start off with, sir, post the GST rate cut, how has been the pickup in business? How has been the pickup in premium sales?
So we believe this GST rate cut has been a big one when it comes to retail health. What it has done is it has sent a message that it's an absolutely important product. GST being zero is only on essential commodities, and retail health being one of the product which is on zero GST is a very big thing. It is leading to a change in customer behavior. People are understanding the importance of health insurance, how it can impact the lifetime savings. This change in customer behavior, we believe, is helping the kind of growth that we are seeing in, and it looks to be more sustainable. And we have seen a 23% growth in volume when it comes to retail health, which is a 60% growth in terms of value. This kind of growth we have not seen for a long time. It was during COVID times that we had seen this kind of a growth. So it's a welcome step, and we believe it's sustainable as well.
Right. The loss ratio, now that has improved meaningfully this quarter. How much of this is structural, sir?
So one has to see the loss ratio in two parts. We have seen a retail health loss ratio which has improved by 1%, and this has consistently happened for the second quarter. Q2 also we had seen a 1% improvement. Q3 also we have seen a 1% improvement. The various steps we had taken, in terms of the price increases that we have taken, the underwriting guidelines in terms of, what kind of customers we want to underwrite, what regions we want to underwrite. We have stopped writing businesses in areas where the fraud, waste and abuse is higher, the healthcare inflation is higher. Certain claims efficiency measures that we have taken, the wellness initiatives in terms of the home healthcare product. The new claim system that we have introduced is all helping us to ensure that, the reduction which is happening in the loss ratio is sustainable and consistent. And we see a good impact of it in the market as well. The other part of the reduction is also happening because on the group business where we have reduced our portfolio, we are not writing large accounts where the loss ratios are higher. So both on the retail side and the group side, we have seen a decrease for Q3, which is a 300% improvement in the loss ratio compared to last year, quarter 3.
Right. Analysts say that the strong claim ratio is largely because of the reserve release and strong investment performance. What's your thought on the same? Do you agree with that?
Absolutely not. Claims outstanding, which is the claim reserve, is a function of seasonality. And so last quarter, the loss ratio was higher. While there was an improvement, it was higher because, during monsoon season, we see the impact of fever and infections. We have 85% of the business which is cashless. So the customer gets discharged from the hospital. We settle the bills to the hospital based on the credit period that is available. So as on 30th September, if you see, there will be some outstanding which gets paid off in October and November. In October, November, December period, the inflow itself is lower, which will ensure that, the claim outstanding as on 31st December is lower. So it's more a seasonality and nothing related to reserve release. In fact, we have been strengthening the IBNR reserves for our company. We have created additional reserves in the current quarter. In terms of investment income, as we mentioned, 18.5% of the portfolio is in equity, REITs, InvITs. 81.5% is in our debt portfolio. We had seen a good uptake in the equity markets in the current quarter, which has resulted into a good growth in the investment income. But the way we look at it is the trailing 3-year income. The debt and equity mix will give us 8 to 8.25% average return over a trailing 3-year period, which will ensure that, we are up there to achieve a mid-teen ROE over a period of time. There will be some volatility, but we believe it will be much higher compared to the fixed income portfolio.
So, despite this strong investment performance, the reported income was weak. Is it because you did not book the M2M profits? Is it because of that IFRS accounting? Yeah.
Absolutely, yes. The MTM gains are part of the IFRS income, whereas in Indian GAAP, unless you sell the portfolio, it's not part of the income, and that's where we believe that IFRS is the correct way of reporting when it comes to financial results for insurance companies.
Right. Thank you, sir. Thank you for joining us and giving us the way forward for Star Health. Astha, quickly your view on Star Health. The numbers were pretty strong. Loss ratio came in much better compared to what the street was anticipating.
Yes, and what we have seen, that is why there is a jump in their bottom line as well due to the good premium growth, healthier loss ratio. And this is one of, the largest standalone health insurer. What we believe that their GWP, that is the gross written premium, has also shown a very strong rise. So we really like the results, and hence we are recommending a hold as well as buy on this counter for the price target of 490.
So thank you so much for giving us all those insights with regards to all the small cap buzzers that we discussed on the show today. But with that, we're completely out of time on this edition of Small Cap Buzzers. But if you have any query related to stocks that you hold, Ask Profit up next. Do stay tuned.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा. कब से बोल रहा हूँ, कोई सुनता ही नहीं.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
1st February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
I have always had this inclination towards art, and if we don't collaborate and bring those artists forward, give them a platform, who else will?
Honoring the masters who define our
Hello and welcome. You're watching Ask Profit, the afternoon edition. My name is Puneet Zaveri and with me is Mahima Vachhrajani. And over the next half an hour or so, we'll try and solve all your stock-related queries. So do start sending them on the WhatsApp number that's flashing on the top of your screen. You can also call us on the number that's flashing up there as well. Before we do that and a lot more, a very quick look at how the markets are doing, because another day where it has been a sharp recovery from the day's lows of about 25,159 was the low. We've carried forward that momentum quite considerably now, almost very close to gains of almost 100 points on the Nifty 50. It will continue to be very, very important of where we end, because from that 25,500 level, we've not been able to recapture that in quite some time now. So important if we can maintain those levels. Quickly look at the heat map for the Nifty 50 as well. Amongst others, we've been speaking about the gains in terms of for stocks like L&T that has continued to do so. Tata Steel is the other one where you're seeing those gains as well. But barring that, Asian Paints as well as the other stocks like SBI Life and BEL, all three casualties essentially of the results. For BEL, it's surprising because while it was an 8.5% move yesterday, today we're seeing a sell-off. Brokerages do continue to maintain their positive view. But largely, NTPC, Tata Motors, passenger vehicle are some of the other stocks that are gaining in trade today. If you also look at the sectoral picture, it also tells you that in the morning, largely a very, very specific sectors that were doing well today. Metals, of course, have continued to do so, and so is the Nifty Energy. Barring that, there weren't too many gainers, but that has slightly changed. A lot of them now in the green. Meaningful ones are, of course, the Realty one, which has been consistently selling, and also the PSU Bank as well. But largely, Mahima, a lot of individual stocks on the back of results doing well. A lot of them on the back of news flow like Balu Forge amongst others are doing well as well.
Yeah, absolutely. And I think for the broader end of spectrum, it's more towards news and earnings reaction is what we are seeing. But, as Puneet mentioned, we've seen a turnaround, and probably for the benchmarks, at least expiry playing its part. But even broader markets for that matter, the mid-cap 150 from a red has at least turned to, giving flattest, returns right now is what we're seeing, just around 0.04% higher. The small cap 250 has also come off from its day's low point, but still trading around 0.2, 0.3% lower. With regards to some specific names on that BSE 500, if you can try to pull that up and then also see the advanced decline ratio quickly. On the losing side, you have something like a 5-star, which is not doing very well, down 11%. Sterlite Tech down 8%. Heritage Food continues to be under pressure, down around 8%. Vaibhav Global, Red Tape, Craftsman Auto, KPR Mills are some of the names which are in the red. But on the flip side, you have counters like Hindustan Copper and How locked in upper circuit now. When we started Ask Profit today, it was at that 16% mark and locked in upper circuit as we speak. I don't know where and when is this rally going to stop?
It doesn't.
But it just doesn't, right? Every day, analysts come and say that, some partial booking is now required, but I think the rally is there to stay. But something like an ABB also in that chart because of the guidance given by the global parent. Gland Pharma, MRPL, Nalco, Symphony are some of the other names that are doing very well in trade today. But with that, let's also welcome in our guest for the day, Sameer Dalal of Natwarlal Sons and Stockbrokers. And we'll also shortly be joined by Chandan Taparia, Head Technical and Derivatives Research at Motilal Oswal, who will be joining us now. I'll take up the first question on the show today. This is from, this is from Sudha, who's writing us from Hyderabad, asking about Narayana Hrudayalaya and Aster DM. And in fact, even Yatharth Hospital. And from these three, which one would be a better fundamental pick is what she's asking. Sameer, I'll come to you on this one. A very good afternoon to you. What's the view?
Good afternoon. So, after all these three hospitals, the best one at the moment for me would be Aster DM. But for me, if I want to invest in this space, it would not be either of these three. It would be Apollo Hospital, where I'm getting also the demerged entities eventually of the labs business plus the Apollo pharmacy business. I think both those businesses are also going to grow. So if you look at the combined valuation, I think there's a lot more value in Apollo compared to everybody else. So that is my top pick. But if he has to pick, Aster DM is the one.
So that's the view coming in with regards to where the hospital segment is concerned. But we've got our first caller for this afternoon edition. Venkat is calling us from Hyderabad. Venkat, hi. A very good afternoon to you. I believe you have a question on Piramal Pharma.
Yeah, hi Mahima. Good afternoon. Thanks for taking this call. Yeah, I'm holding Piramal Pharma 200 shares at 218. I think yesterday we got the results. I just wanted to know whether we can hold, sell or add some more stocks.
Okay, got your question. Any other pharma stock that you hold, Venkat, in your portfolio?
Yeah, I have an Natco Pharma.
Okay, got it. All right, I'll take this up with Sameer then. Sameer, overall, if you take a look at the Q3 numbers, they do not look, very appealing. Overall, the net losses have also widened for the company. What's the view like?
So unfortunately, we don't have Piramal Pharma under coverage, and I've not studied that company, so not right for me to comment on it.
All right, okay. So we'll, Venkat, try to bring a view on Piramal Pharma's, soon with our technical analyst as well. But moving on to the next question, which is from Afreen, who's also writing us from Hyderabad, asking about the counter that we just talked about, Hindustan Copper. But she's asking from a long-term perspective. Sameer, with the kind of copper rally that we've seen and the rally that we've seen in Hindustan Copper, there might be a time when we could see some profit booking there, but where fundamentals are concerned, do you think this is a good counter to continue to hold from a long-term perspective?
No, I would actually be selling this counter. Look, I agree to the fact that commodities are in a very strong rally. Copper prices have also been moving up, inching upwards. And the expectation is that with the amount of investments going into data centers world over, the demand for copper is going to be in short supply going forward. But having said that, if prices keep moving up, it kind of, the investments don't become viable. Alternatives come into the picture as an option. So it's not that copper prices are going to go up indefinitely. It's not that Hindustan Copper's production is suddenly going to jump by 2x or 3x just because prices have moved up. It takes a while before they can do more mining, smelting, and all of those activities. It's captured. This stock has moved up so much that the valuations just don't justify. I would be taking money off the table right away.
All right, okay, so that's the view coming in on Hindustan Copper. But Chandan, a very good afternoon to you and thank you so much for joining us. Your quick view on Piramal Pharma, just before this question, our caller Venkat wanted a view on this one.
Yeah, good afternoon. Talking about Piramal Pharma, the stock is continuously making lower top, lower bottom on monthly and the weekly scale. Major trend of the counter is down, quoting at multiple months low level. However, today it witnessed decent recovery from lower levels with the volume, but again, follow-up is missing at higher levels. It declined from higher zones. So as of now, my suggestion is not for the bullish stance. Try to reduce the position on any bounce back move. As of now, 148 is major support. If that is broken, then I believe fresh leg of downside cannot be ruled out. While on the upside, 165 could be harder. So suggestion is better to buy on, but better to exit on any bounce back rally because the major trend of the counter is negative.
But another very interesting query that we're getting from Sriram Raghuraman from Chennai. He's holding 75 shares of Max Financial Services. And, the query is very interesting because he got these shares actually from the IPO of Max Limited. So, see, these are the balance shares. And his cost of acquisition is 2 rupees. He's mentioned it's 2 rupees, and I hope that's true because the current stock trades at 1595. So he's sitting at a considerable gain on this particular counter. If he can get the gains as well of what it is from this transaction, he's mentioned he's asking for a fundamental view of the proposed merger if it could materialize essentially with Axis Max Insurance in the near future. Samir, very, very interesting query, and hence putting you on the spot also for a view firstly on Max Financial, but also on if any view you have if the merger actually goes through. What could it mean for for Shriram, because he's holding at rupees 2 per share for a counter that's trading almost close to 1600.
So when it comes to the entire insurance space, we think the opportunity for growth is still very strong. India is still a very massively under-penetrated insurance country in terms of either value or in terms of product. People in India, like I keep saying, still keep, when you're selling insurance or buying insurance, people's first question comes is, what do I get back at the end of the period of the insurance? So it's not necessarily that people are buying insurance from a insurance point of view, more from an investment point of view. And we think the opportunity here is quite large. Max, because of the Axis parentage, will obviously get good distribution reach given the distribution reach of Axis. So we'll obviously be able to capture some amount of market share. We need to see how much they capture, but if I look at valuations at the price point, at the current price point, the valuations seem fair to a little bit high. I would wait for corrections to buy. Now, given the fact that this gentleman has bought it at 2, you have no reason to sell. I believe over the next 5 years, the stock will do well. So stay put in it and enjoy the ride for the next 5-7 years.
Samir, but another caller coming from Bengaluru, and this is Srinivas, who's dialing for a stock query. Srinivas, good afternoon. Welcome to Ask Profit. What's your query?
Yeah, good afternoon. I have a Shakti Pump shares, around 1900 shares at 787. I bought this during that momentum a couple of months back, around 1.5 months back. I was in a view of 3 to 4 months time frame, but as I see, it's completely coming down right now.
Right.
So my question is, post-market, there should be some momentum in this stock, or it's better to exit and get catch up any metal rallies here?
Got it, Srinivas. Let me actually get in Chandan for a view here. Chandan, he's bought Shakti Pumps at 787 for a short term, but then the stock has tanked. Any view that firstly you can offer on Shakti Pumps, if there's any chance of recovery to that 787 mark for Srinivas, and any other trade that you would recommend?
Yeah, so this counter really had a fantastic run up in 2024, but in 2025, it witnessed a corrective move from 1387 to 13870 to 550 kind of level. Now it has been consolidating in a range. However, it has gone into the deep oversold territory because in last couple of months, it already negated the price pattern. So I believe some sort of resilience could be there at lower levels. However, the structure is weak, but already we have seen a corrective move, and most of the indicators are now giving some oversold kind of scenario with bullish divergence. So I think he can hold the position with the view that 550 is major support, and with that support, this counter can head towards 800 kind of level.
Okay, all right. So that's the view coming in on Shakti Pumps. The next question that we have is on Canara Bank. Ketana from Bengaluru is holding 10,000 shares bought at the levels of 152.
Position with the view that 140 is major support, and with that support, again, buying interest could emerge at lower levels to take it towards 165 to 172 kind of levels.
Right, we've got our next caller. Mohan is calling us from Bengaluru. Mohan, hi, a very good afternoon to you. What's your query on?
Yeah, very good afternoon. I bought Bajaj Holding Investments, 3 shares at 11,300. I just want to know long-term perspective. Can I add these shares for furthermore, or what is that? I take it.
Okay, Mohan, can you give us an idea as to why you bought this counter? What was the thinking behind buying it?
So this counter looks to be ROC and EBITDA margin was very good. So I had purchased these shares around 2 years back. I had made maximized profit. So I just wanted to know whether I can take it up this far.
Okay, got it. Samir, any view on this particular counter?
So this is a holding company. It's got no
Yeah.
operations of its own. It's just a parent of all the listed entities. So look, we all know that the Bajaj stocks over a period of time are going to do well. I don't have active coverage, but I can definitely tell you the easiest way to do it is add up the value of all its listed holdings in the Bajaj Group stocks, give it a 25 to 30% discount. And if the value is below that, you can continue to hold on. Also, if you have a long-term view, you can, because like I said, Bajaj stocks will eventually go up. So if it is at a discount, you can hold and then ride the rally of the holding, because this 25 to 30% discount for a holdco is never going to go away. Don't expect it to ever trade at fair value.
Got the view, Samir. But the next question that's coming in is on Suven Life Sciences, and Nabila has this question for us, asking, and the recent results also for the company came out. She's currently sitting at a loss because she's bought it at 218, stock trades at 131. Samir, are you tracking this particular counter?
Sorry, Suven Life is not under active coverage.
Chandan, just on the charts, any kind of recovery in sight for Nabila, because she's bought it at elevated levels, 218. Would you recommend firstly averaging down at this point of time, and if not, any kind of view that you can offer that it could go upside from here?
So as of now, the structure of the counter is negative. It has been making lower top, lower bottom from last 28 weeks. It had seen a corrective move from 300 to now almost 130 marks. It would be very tough to hit beyond 200, which is the buying price. So my suggestion is trying to use any bounce to exit your positions. I don't suggest to average as of now. However, major support for the counter is near 115, but that is also 15% lower from the current levels. So better to just hold the position if you don't want to exit in such kind of huge losses. Try to see if any recovery happens towards 150 to 160 marks.
Got the view, Chandan. Next caller coming in from Bengaluru, and this is from this is Sanjay who's dialing in. Sanjay, good afternoon. Welcome to Ask Profit. What's your query?
Hi sir, in KPIT Tech 300 quantity, average price 1,200, in last in 42,000. Sir, in seller or sir, please today in KPIT Tech result profit in down, sir.
Got it, Sanjay. The results also actually came out this today, just a couple of hours ago, and largely, Samir, any view that you have on KPIT Tech, because the demand doesn't seem to be changed, at least rapidly, is what the result shows. But anything on that? You started smoking, so I guess you have a view. But anything that you can offer, Sanjay, right now?
No, I'm smiling because I haven't had the chance to go through the results. But so many results flowing through.
Yeah. It's all these 2 weeks that I've got all results pre and post budget. I agree. But any view that you have on KPIT?
Yeah. So look, valuations are a little bit on the expensive side, but then this is a product-based company. Even though it's a software, it's a kind of product-based because they are selling certain softwares which are catering to the automobile sector, and we believe that kind of space is only going to see growth over a period of time. Yes, because of certain global uncertainties and because of certain slowdown in sales globally of automobiles, business has been hurt. But we believe that over the long term, this is all going to rebound. Only, like I said, valuations are a little bit on the higher side. I mean, they had gone up far higher even before. So now what you're seeing is a little bit of rationalization. Stock closer to 900 would be trading, I think, at decent price point if you look at it from a 2 to 3 year perspective. So if this person's already invested, I'd say we hold on to it because the long term is still good, but wait for a further correction, maybe closer to 950 or levels to average out the stock. Don't be in a rush to do it right away. Like you said, the results didn't come in very good. Even I heard about that, but I haven't had a chance to go through to see where the pain points are. But net, we've always said 900 to 950 is a better buying option. So that's what I would wait for.
All right, so that's the view coming on KPIT Tech. But time for our rapid fire round. Samir as well as Tapan, you both know the drill. Try to keep your answers as short as possible. The first one is on 5-star business, and this is from Narendra. This is asked, a query from Narendra, who's writing us from Hyderabad. Wants to know if he can continue to hold from a medium-term view. Chandan, your view?
Try to exit.
JSW Infra for a 5-year perspective. Samir, our viewer Aniket has bought it at 262.
Yeah, these are great businesses. Profitability will increase. I say hold on to it, or if not bought it, buy it. You can.
Okay, Page Industries is the next one. An outlook on this particular stock. Anand wants to know, Chandan, your view?
Yeah, so immediate structure is negative, but multiple supports are visible near 31,800. So can accumulate near to those levels.
At 297, is Manappuram Finance overvalued, Samir?
I won't say overvalued, but continue to hold. We remain constructive long term. Short term, the stock will be sideways.
Okay, Apollo Microsystems is the next one. 2,000 shares bought at the levels of 129. Ramkumar wants to know if you can hold, sell or buy more. Chandan, your view?
Yeah, he can hold or in fact average with the view that it can head towards 300 plus.
NSDL bought at 1,060, Chandan. I know it's a short term since a very limited history, but any view?
So I think yes, looking at the entire the business or the capital market theme, one can continue to hold with the view that it can head towards 1,050, 1,100 kind of levels. I'm considering the view of the positive setup of the capital market as a whole theme.
M&M is the next one. Suresh from Kerala wants to know, from a long-term perspective, can he add more at the current levels? Samir, your view?
Yeah, I think he can go and add more. Their expansion plans, the auto is very good. Their other holdings which they have, M&M Finance is finally turning around.
Right.
So I think this is a hold. In fact, you can buy it as well.
Okay.
The next one's MMTC. Chandan, I don't know if you track this counter, but Ramesh has bought at 55 rupees per share.
Yeah, so I take it closely. He can wait and hold. The counter is really holding well. We are just looking for 71 to surpass decisively, and in that scenario it can head towards 85, 88 kind of level. So 25 to 30% kind of momentum could be there on the upside. He can aid average, or those who are looking to buy new can also look at the counter.
Right. Well, it's the end of the rapid fire on this edition of Ask Profit. Samir as well as Chandan, thank you so much for helping us solve all these stock related queries. But that's all the time we have, folks, on this edition of Ask Profit. Stay tuned. India Market Close comes up next.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा. कब से बोल रहा हूं, कोई सुनता ही नहीं.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh, this is my story.
First February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
M3M presents NDTV Masterstroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
I have always had this inclination towards art, and if we don't collaborate and bring those artists forward, give them a platform, who else will?
Honoring the masters who define our cultural landscape, M3M presents NDTV Masterstroke Art Awards. Coming soon on the NDTV network. This budget, India speaks from every direction. From metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat only on NDTV Profit. What Bharat wants.
Hi, thanks so much for joining in. You're watching India Market Close on NDTV Profit. My name is Alex Matthew and with me is Hiral Dadia and Sharad Dubey. Apologies, I completely lost my words at that moment, and here's the reason why. Because you have the equity markets that are all chop and churn, and I'm trying to figure out the words to use to describe this. I think chop and churn is appropriate in this moment because 1/3% higher, but it's been wobbles through the session. Once again, you're making a little bit of a late dash in the last part of the trading session. Let's take a look at the benchmark heat map, because you'll see even Stevens in terms of the green and the red at this moment on the screen. And there you go. Practically half of the screen is in the red, half of the screen in the green. You're led by Larsen and Toubro up there, 4% higher. It is reacting to those strong numbers. More than anything else, the outlook heading into the fourth quarter is going to be looking significantly better than was previously anticipated. The order inflow in the quarter gone by was actually pretty robust as well. We'll talk about some of those aspects in just a bit. The entire metal pack has been buzzing in trade, and a few names beyond the steel names are actually doing particularly well. We'll talk about those non-ferrous plays as well in more detail, but Tata Steel up and about, Tata Motors PV, CIL also that has a metal play associated with it is about 3% or thereabouts. Axis Bank is up and about, NTPC gaining quite considerably. But what's not doing well, Asian Paints once again at the bottom of the list, losing quite a bit of ground, 3.6%. SBI Life, we got you an interview from there. In fact, Sharad spoke with the management. We'll ask him about the key takeaways from that interaction, down about 3.3%. Interglobe Aviation, BEL, some of the stocks. But let's take a look at the contributors and see what's moving the needle really, because it's not too much in the way of big losers, but you have Larsen and Toubro that's doing reasonably well. Heavyweight, Axis Bank. So there you go. That's the picture right now. Sectoral picture just very quickly, just so that you can drive home the point, and then we'll talk about individual stocks that are reacting to numbers or otherwise, because there are quite a few stocks that are moving on account of earnings and other factors. But there you go, right on the top of the screen, metal index all the way. And energy is not too far behind. Private banks looking okay, oil and gas. What's not doing well is India Defence. Some money being taken off the table after yesterday's romping rally. But what individual stocks should you look at? Hiral, over to you.
Thank you so much for that, Alex. You know, I mean, as you mentioned, it's an interesting day of trade wherein that last hour is where you're seeing some good traction that's coming in there. In fact, let me take you through individual counters. Hind Copper, a stellar day of trade, a 20% up move that's coming in on this counter. You know, commentary that's coming in from Beijing when it comes to copper is what is keeping Hind Copper with gains of 20% locked in upper circuit. Rain Industries is another one. In fact, if you pull up a 1 month chart of Rain Industries as well, that will tell you the story because the volumes have been absolutely high for a Rain Industries in the last couple of trading sessions. It's evident in terms of the stock price as well. The stock has seen some smart returns coming in the last 1 month. Balu Forge is another one which is seeing some strong moves. ABB 9.5% up move is what you're seeing. 5-star, that stock is down 11 to 12%. Heritage Foods, post numbers, volumes pretty strong. That stock is trading under pressure. Sterlite Tech as well, post numbers, has been trading under pressure over the last 2 trading sessions. Ixigo has joined the bandwagon of a downtick, 6.5%, 7% downtick coming in on Ixigo. And you have a Craftsman, which is down little over 6%. So, these are those individual stocks that we are watching out for. But overall, let me actually go to Sharad to understand what are the factors that are contributing at this, because you have expiry which is at play when it comes to the Sensex. The sentiment somewhere is positive, but that sell-on rise is something which is not really going away from the markets.
Well, that's a correct answer you have given. But the question is, one more trading session is left for the budget, and we are going with a technically positive outlook going ahead for Nifty Bank. Very interesting data I'll share with you. But before that, I'll just want to give you the key, important points for the markets. The Sensex expiry is at play. There are chances of volatility, and that's why you're seeing even after a strong recovery in the markets, there is some kind of a moderation happening. In the last 60 minutes, we might see more volatility coming in. There is a bullish sentiment for the 3rd straight day. So technically, the positions are strong if you're holding Nifty or Nifty Bank. Also, apart from these, the Nifty key resistance level on the higher side, 100 DMA, stands at 26,210. That's an important level to watch out for traders. For Nifty Bank, the gains are being led by 2 big names, Axis Bank and HDFC Bank. Good contribution coming in terms of index points as well. Rupee near record lows, that's an overhang in the market, but it has been for a long time, for the last 1 month or so. The benchmark indices are actually outperforming the broader indices, and that's where a little bit of concern comes. We saw a very good up move in the small cap indices last trading session. The European markets have opened positive, so that's something which you'll be watching out for as well. But this is the data which I'd like to point out. This is very important. The closing number was 25,049 on January 23rd. 27, 28, we see the closing levels are going on the higher side. That means the overall position setup of the markets, the Nifty, is looking good as well.
Very interesting. In fact, you've had the presentation of the economic survey and you have the chief economic advisor speaking. Let's listen to what he had to say.
(2026), we have 11 more months to go. So may the year be blessed with happiness and good health for all of you. This economic survey's cover actually symbolizes the key message that we have on the importance of manufacturing and exports for India's future growth in a very fragmented world and a fractious global environment. The survey takes you through 5 parts, the presentation as well, our current economic performance, and what are our priorities for the next 25 years, and how are we going to pursue them in the global context, which is somewhat unpredictable and even dangerous. And therefore, what kind of preparation as a country, as a society, we need to make to be able to achieve our priorities in a difficult global environment. We conclude. First, India is an indeed oasis of macro stability in otherwise a turbulent world. Numbers speak for themselves. Our GDP for this financial year is estimated, this is all IMF forecast, may differ slightly from what MOSPI has told us. IMF predicts 7.3% for the year ending March 2026. We have 7.4% from MOSPI. And the fund forecasts 6.4% for the next 2 years, 26-27 and 27-28. You will hear our numbers later. But the important thing is whether it is for the current financial year or the future, our India's growth numbers stand out in comparison to any other part of the world. And that is why we call India a oasis of economic performance in the global scenario. And if you look at the last few years in comparison to pre-COVID average, real GDP growth pre-COVID was 6.4%, and in FY25 was 6.5%. And this year, as I said, MOSPI is predicting 7.4%. Private final consumption expenditure growth is 7% for this year, on top of 7.2 last year. And in real terms, gross fixed capital formation is going to be a lot better than FY25 and definitely much better than the banking and corporate balance sheet crisis-ridden 2012-2020 period when it grew only 6.3% on average per annum. More importantly, we are achieving these high growth rates, consumption and investment spending amidst very moderate inflation environment. This year, it is projected to be about 1.7% on average so far for the first 9 months of the year, largely due to a deflationary trend in food price index. However, it's important to note that core inflation is also well behaved. If you take out gold and silver, core inflation is 2.9, well below the 4% threshold with which the headline inflation is pursued by the central bank. So we basically have benign inflation trends, which we expect to see continue in the next financial year as well. In fact, beneath all the slides, you will see the chapters in which they are covered in great detail, and we will just give you a broad brushstroke of what those chapters are saying on those relevant topics. Moving on from GDP and inflation to public finances, in 21-22, the government said we would bring down the COVID year fiscal deficit to less than half, and we are about to deliver on that this year, with an estimated 4.4% of GDP as the union government fiscal deficit. More importantly, the primary deficit, which is revenue deficit minus interest payments, has come down from 5.7 and expected to be 0.8% this year. We achieved it through improvement in tax buoyancy, tax collections, while increasing and improving the quality of expenditure. Effective capex rate went up from 2.7 pre-COVID to 3.9% post-COVID as a percentage of GDP. And that is the reason why last year we got 3 credit rating upgrades, beginning with Morningstar DBRS in May, Standard & Poor in August, R&I investment ratings from Japan in September. And so we now have BBB from S&P, BBB plus from the other two, and also India's CARE Edge also rates Indian sovereign rating at BBB plus. External sector, the forex reserves have more than doubled, compared to 11 years ago, from 341 billion to 701 billion. While much of it is due to lately the increase in gold valuations, definitely there is an increased accretion of foreign exchange currencies as well. Therefore, the import cover has picked up to nearly a year from 8.9 months in FY15. The current account balance is very well behaved, from 1.3% of GDP to now to about 0.8% in the first half of the current financial year. And external debt, which was 23.8%, is now down to 19.2%. So the external sector doesn't flash any warning signals as far as the macro picture is concerned. And if you look at the financial sector, we basically had the second decade of the millennium was marked by balance sheet troubles and repair. That is now showing up. The repair process is now well done, and the gross non-performing asset ratio is 2.2%. The net non-performing asset ratio is down from 6% in 2017-18 down to just 0.5%. But more importantly, the flow of resources to the non-government or the commercial sector, including households and businesses, and not just the credit market, but including the equity market, non-banking finance, etc. The annual growth.
Okay, so those were some of the highlights from that 700 plus page document. There's quite a bit from that. In fact, we had those 5 key takeaways from that document for you. 7.4% growth in FY27. FY26 rather, that moves to 7% in FY27. But more importantly, with regard to the expectation that a deal with the US will take place sooner rather than later, the fisc is on track, that is a fiscal consolidation and deficit on track, and also the expectation that a trade deal will take place soon. not seeing too much of an impact on account of global factors with regard to India's macro stability. So some important takeaways. We've got Sameer Dalal of Natwarlal & Sons Stockbrokers, as well as Rajesh Palvia, Senior Vice President, Technical and Derivatives Research at Axis Securities, joining us this afternoon. Gentlemen, thank you so much for your patience and for joining us this afternoon. Rajesh, I want to come to you. We are at the high point of the day for the Nifty 50 and the third day in a row where you're seeing the second half relatively better than the first half and quite a bit of choppiness at play. Is this positive in your opinion heading into budget day?
Good afternoon. So for this current series, yes, it's a positive note opening for the Fab series and looking at the buying interest in the broader market ahead of this big event budget. I think the way Nifty is now comfortably holding about 25,400, 25,350. I think, yes, there is a possibility that, Nifty may continue furthermore upside towards 25,550. That's the next level where we are projecting target for near-term perspective. So 25,550 would be the next target. If at all Nifty crosses those levels, then I think another leg of short covering can take Nifty further higher. But till the time Nifty not crosses those levels, one should closely watch that level, either book partial profit around 25,550. That's the spot level where we are projecting target for Nifty. Keep a stop loss of 25,380 at this juncture to buy Nifty at current level also. Bank Nifty is looking more promising the way Bank Nifty is now scaled up to the level of 60,000. Here we could see more traction, possibly 60,300, 400 level we could see for Bank Nifty also. So one can remain long for Bank Nifty with trailing stop loss of 59,700 and possible target 60,300, 400 we could see for Bank Nifty.
What about individual stocks, Rajesh, that you're liking quickly this afternoon?
So I think Coal India is looking promising the way stock managed to give breakout of long consolidation on monthly, weekly chart. I think a whole PSU basket is showing good traction. So Coal India, one can look to buy a possible upside towards 475, 480 we could see in the near term. On the downside, 450 needs to keep as a stop loss to buy Coal India. Another stock again from the PSU basket, that is ONGC. Oil and gas sector is in limelight, and I think this stock has already given breakout on the monthly, weekly chart. So I think ONGC may also continue further more upside. 285 to 288 we are projecting target. On the downside, one can keep a stop loss towards 273.
Okay, so that's with regards to ONGC. That's an interesting take. That stock has been on a tear, Oil India and ONGC, over the last couple of trading days as well, on the way crude has been panning out. Samir, in fact, let me come to you as well. The metal basket is something which is absolutely strong in today's session as well. I mean, you see a Hind copper. I mean, no one knows what's working and how soon that rally is going to end, or is it going to continue with Hind Zinc, Hind copper, all of these metal names. Your view?
Yeah, so I was just on your previous show, the Ask Profit show, and that was one of the questions that came up on Hindustan Zinc. So, I'm not denying the fact that commodity prices have rallied and copper prices too are holding firm, which allows Hind copper to make good profits. But you also got to realize that it's not like just because the prices have gone up this much that Hindustan Copper is going to double its production over the next 6 months or 1 year. It's going to take a while before they can scale that operation up. And whenever the production starts increasing, prices will eventually start coming down globally. So for me, this price is now fully priced. Yes, never stand in the way of something that's going in one direction because you get caught on the wrong side, in the sense, don't short it or don't try to do anything funny with it. But if you have shares in it, I would strongly advise to book some profits. Keep doing it over the next couple of days. I'm sure the stock will top out and start seeing a downtick. And when the downturn starts, probably you'll see it down also in a very large way. And then you'll wonder why you did sell. So keep taking a little money off the table every single day.
And when you talk about metals as well, I was just reading a report which said that China has foregone 3 red lines to lift the property market, and that was Beijing News that was putting it out. And they've said that China now no longer requires real estate developers to file reports on its 3 red lines for the sector, and the indicators were designed to actually go ahead and limit the debt and ensure that the developers had enough cash to cover their short-term borrowings. In fact, this was a move which probably, shows how dramatically Beijing is actually changing its position on the real estate sector. And this has been a sector which has seen booming growth, and it has been a growth driver for the widespread worry, and now it's become a long-term burden for the economy as well. And this is something which has actually come in as a support to copper prices, and the reason why you've seen copper prices rally, and probably that's being reflected on Hind Copper as well. But moving on, Piramal Pharma has reported consolidated loss in the third quarter. Nandini Piramal, chairperson at Piramal Pharma, did speak to NDTV Profit's Varsha Chandanani, and let's understand what they had to say as well.
FY26 has been a muted year. What gives you confidence that FY27 will be a meaningfully better and not just a seasonal Q4 bounce?
Thanks so much, Varsha, for having me. It's a pleasure to be here. One of the things I do want to talk about is in our complex hospital generics business, we announced an acquisition of a product, Kenalog, from Bristol Myers Squibb. The deal value is about $35 million with the $65 million performance and operational milestones upside for them. But we expect that to be about $30 to $40 million into annualized sales. It gives us, broadens our portfolio in the complex hospital generics business. It is a molecule which is complex, it's hard to manufacture, and it adds to that strategy of finding more difficult molecules which have, in generics, which are sold in the hospital but have limited competition. So that's one thing that we as a company think that will add to our strategy and show that broaden our base. In the CDMO business, it has been a muted year. We've talked a little bit about the muted biopharma funding. However, what we are seeing is early signs of recovery there. The biopharma funding from an industry perspective, if you look at the news, has seen an uptick since October for whether it's venture funding, whether it's IPOs or it's M&A. And as a result of that, we've actually seen an uptick in RFPs over the last 3 or 4 months. Now, this is an early trend because it will take time for these RFPs to convert to orders and then to actual delivery.
Right. And Nandini, I got that point about the, biotech funding. But when do you expect the consolidated EBITDA margins to, move back towards mid-teens that once you used to enjoy?
I think next year we think will be meaningfully better than this year, but I don't want to actually comment on guidance at the moment. I think we'll do that at the end of the year.
Right. And also, is inventory destocking by the large on-patent customer now fully behind you?
Well, in Q4 last year, there was a large order by this customer, which won't happen in this quarter. But so therefore, this quarter will see a sequential growth from Q3, but however, it won't show year-on-year growth. And then it will be out of the base this year.
Understood. And also, Nandini, I just wanted to have an outlook on consumer healthcare, your PCH business as well, which grew, on a stronger note, that is 20% year-on-year. What's the outlook there? What kind of growth are you expecting there?
I think this is a business that is continuing to do well. Our power brands actually grew at 30%. This would be brands like Little's, Lactocalamine, iPill, as well as CIR and Tetmosol. So they've done very well this year. It's a business where we're continuing to manage advertising spends, but we're seeing that with the shift to digital, with the shift to quick commerce and e-commerce, we're seeing a lot of growth from both new and old consumers. I think this is a business that will continue to grow in the mid-teens at the very least. And we are expecting to see that we'll see an improvement in EBITDA margins as you continue to get scale.
Right. And lastly, Nandini, how should one think about revenue and margin contribution from, Canalog over the next 2 to 3 years?
So we expect about annualized, it is a generic, we expect annualized sales about 30 to 40 million dollars a year. And it is in line with targeted EBITDA margins.
Yes, that's the management of Piramal Pharma. Stock, largely we see some kind of a correction coming in from the day's high level as well. But moving on to our segment Heard on the Street, my colleague Somit Sarkar joins in with all the chatter happening. Somit, just before the budget, any kind of a buzz coming across the segment?
Well, a few stocks that have been buzzing on the back of budget, but largely what dealing rooms are indicating are all non-budget stocks. Firstly, first stock on the list is Glenmark Pharma, where dealers are indicating that there are buy flows on institutional desks. Both foreign and domestic institutions have been accumulating. This counter in trade and delivery volumes are expected to be on the higher side. Second stock on the list is GAIL. Now, despite the surge that we have seen in market, GAIL continues to be down around 1% and there are sell flows on the mutual fund desk specifically is what dealers have highlighted. Dealers are also indicating that the third quarter numbers could be on the weaker side. They're expecting a big loss to come in when it comes to the petrochemical segment of GAIL. When it comes to Mahindra & Mahindra, the stock is down in trade, but there are buy flows at lower levels that what dealers are indicating. And dealers believe that the worst seems to be now priced in and the selling pressure is also largely over. And they're expecting the January sales number and the Q3 earnings to be on the stronger side for M&M. So keep an eye out for this counter as well. And when it comes to Colgate, there are sell flows seen on the large HNI desk, and this is largely in the back of weak Q3 numbers that has been indicated by dealers. And lastly, when it comes to Industars, now though Vodafone Idea might not be gaining large in trade, but Industars is up nearly 4%. There are strong buy flows on the large HNI desk is what dealers have highlighted, and they believe that it will be one of the key beneficiaries of the pickup in capital expenditure that is expected to happen from Vodafone Idea's side going forward.
Okay. All right. And now, one of the stocks, Somit, that you pointed out earlier today, it's absolutely buzzing. It continues to be very close to that upper circuit level, ABB. And this is after the global parent highlighted strong India order inflows. What are the key details to focus on? This, of course, is the stock of the day.
Well, yes, it is certainly a stock of the day. It was up nearly 10% at one point of time, and a strong move that came in despite the weakness that we had seen in the market. And this was largely after its parent company reported its Q4 numbers, Q4 CY25 numbers, that is the December ended quarter numbers. Now, for the parent company, the numbers are pretty much in line to better compared to what the street was expecting. But only one key number is what the parent company gives when it comes to the India business, and that is the order inflow number. And that number for ABB India stood at nearly 49% as per the parent company. The order inflow grew nearly 49% on a YY basis. Now, this is double compared to what the analysts were expecting for the December ended quarter. Analyst estimates were anywhere between 20 to 26%. Now, if you look at based on the guidance that ABB parent company has given, their analysts are now expecting the order number to be close to 3,800 to 4,200 crore rupees for ABB India, as compared to the analyst estimates of close to 3,300 crore rupees. In fact, Nuvama was estimating the growth to be around 24%, while Nomura was expecting the growth to be around 26%, and the lowest estimate had come in from JM Financial. They were expecting a growth of 20%, but what ABB parent company has reported a growth of around 49%, which is more than which is nearly double compared to the highest estimate that was there on the street. And even if you compare with what the ABB Global has reported, the growth number for India business and the ABB India business, of late the numbers have been pretty much in sync. 7% was the degrowth that was indicated in the third quarter, while ABB India reported a degrowth of around 5%. In the second quarter of CY25, a degrowth of 9% was reported, while India business reported a degrowth of around 12%. In the first quarter of CY25, 1% growth is what ABB Global had reported for India, while the India business had reported 4% growth. So similar growth can be expected in the fourth quarter of CY25. Also, this growth marks the 2 consecutive quarters of decline, order inflow decline that we have seen. So strongly positive cues coming in for ABB India.
Absolutely. And so the stock is particularly in focus today.
Particularly in focus, and what's interesting is versus expectations, when the global parent is coming in giving you this kind of commentary, it's showing you that strength that would come in terms of India numbers. And I think whether a trade is warranted at this hour, knowing that what the India numbers will look like is the question I want to ask Sameer as well. Sameer, I want to talk to you about ABB plus a couple of other names that Somit mentioned with what dealers are indicating. A 9% rally that's come in on a ABB on the back of the commentary from the global parent. Is it ripe to take a trade yet again right now?
So, let's be very frank, order inflow has never been a problem for ABB, right? They've had strong orders. Yes, you saw one quarter of slight degrowth, but that doesn't change anything. We believe the long-term trajectory, given the multiple products that they operate in, multiple sectors in the power space that they operate in, the opportunity is going to be very strong. So the question now comes down to valuation. So we are not worried about growth. We are saying, where does the valuation lie? So on a trailing basis, it's trading at about 60 time earnings. I think it might have gone up after today's rally. And if you look at it on a forward basis, it was at about 54 or 50 times. So the valuations are not too cheap. So the question remains, can these high valuations sustain? And if you believe they can, and which we think can sustain, ABB does make a long-term investment, but don't buy it today because it's up 10%. Wait for a correction. I'm sure the market will get a chance.
Sameer, whilst I was just taking this question with you, Somit was more interested in telling me to ask you whether a trade with any of the other, cap goods companies makes sense basis the commentary that we've heard from ABB, like a Siemens, Thermax, or any of the others, because that's where we will see a rub-off effect as well.
No, absolutely. So it doesn't necessarily have to mean just because ABB got a good order inflow this quarter doesn't mean that Siemens may get it. There might be a particular order which came through for ABB which Siemens didn't get, and that's why. So you can't just assume it's going to rub off. Are we long-term bullish on this entire space of capital goods, especially those catering to the energy side? Yes, we are. We've been saying for a very long time that the energy production demand, the distribution, all of these where ABB, Siemens, Thermax, all of these guys play is going to see great traction over the next 3 to 5 years. And I continue to remain positive. Again, valuations is where we find a little difficulty. ABB closer to maybe 4,500, 5,000 is a good buy from a 2-year perspective. Wait for a correction and buy. Siemens is also good at closer to about 3,000. I think it was 3,000 yesterday. So we did have a positive view. Today it might have moved up a bit. I'm not sure what the price is at the moment, but that is something that can be looked at also from a 2 to 3 year perspective.
Okay, so that's with regards to where, your cap goods companies go. But thank you, Sameer, so much for joining us on the show. Always a pleasure to speak to you. In fact, Rajesh still stays with us. We will discuss about L&T as well, but just after a quick break. Please stay tuned.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान मेहरबान कदरदान,
कुछ अच्छी खबर मिलेगी क्या? How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा, कब से बोल रहा हूं, कोई सुनता ही नहीं।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म, शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo-Yo Honey sing. This is my story.
First February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
A very special moment for us as we announce NDTV Master Stroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
I have always had this inclination towards art, and if we don't collaborate,
Welcome back. You're watching India Market Open and you're trading with gains of about 1/3% for the Nifty 50. I wonder if the last half an hour will pan out just as it did over the course of yesterday and day before yesterday. But the trend and the blueprint for the market seems to be similar as things stand right now, heading into Budget 2026. But you know, one story that refuses to go away in 2026 is that of metal, and specifically the precious metals doing incredibly well. And I'm not talking about the stocks, I'm talking about the underlying. Take a look at that. So gold and silver, that's the 6-month and 1-year performance, right? 67% odd for gold. But bear in mind, I was just taking a look at the 1-month performance. Gold is up about 23% in the international market. For silver, which has had a 200% parabolic up move in the last 6 months, guess what the increase is over the last 1 month? 54%, Sharad.
And that's a big move. But when you talk about parabolic move, it's like a one-directional move, right? To put that in a simplified manner. But when will that stop? Or will it?
That is a question that we need to ask Rakesh Arora. Do we have him with us? Okay, so Rakesh Arora, founder of GoIndiaStocks.com, joining us to talk about some of the moves in the commodities space. Rakesh, if I remember correctly, we were talking about metals at the end of last year. And since that point, I was looking at it, right? Copper is up, what, 11% in 2026. Aluminium up another 12%. The move today for copper is as much as 7%. Can you explain what is happening here?
So, see, all these commodities which are, obviously started with gold because of the dollar issue that, some of the countries are trying to diversify away from, dollar holdings in their portfolio. So gold was a natural, I would say natural, item to really look at. But, silver has caught up and now there are so many fanciful stories about, silver usage in industrial and all that. I think demand destruction is one of the lowest talked about points in base metals and precious metals. When prices move up such at such a rapid speed, they also become the medicine for what's going to come next. So I think demand destruction is going to be huge. But at the moment, we are seeing a short squeeze. You never know where it will end. But from an investor...
Rakesh, are you still with us? Okay, well, I think we might have lost him. Hopefully we can get him back. Why don't we try doing that? Because the point that Rakesh was making is a very interesting one, guys. If you think about it, in any market, if prices go up beyond a certain point, there is demand destruction that takes place. Of course, what we're talking about is base metals, and these are crucial for everything from chips to transmission lines to electric vehicles, and which is why there is the question mark about whether or not these prices are sustainable. They are crucial. Rakesh is back. Rakesh, you were talking about a short squeeze that is currently being witnessed, but how far that goes. You want to complete that point?
Yeah, so what I was saying is that no one is sure, where it will go. But from an investor point of view, I think, these are really high prices and where the returns in future are going to be muted. And so there are two approaches investors can take. One is, probably book profits at regular intervals on upticks. Or the other approach is to have a stop loss. But my view is that the stop losses may not really work because when things start to move on the other side, it will also go vertically down. So I think booking profits at regular interval and, trying to reduce exposure would be the best call for at least silver from here on.
Rakesh, Hiral, good afternoon. Asking an investor at this point in time to book profits in a metal rally is like asking the investor to jump off a running train. I mean, that's what it comes across. But, fair point on that front. One question I have for you is, I was just reading where there has been a policy change that's happened in China where they've abandoned the 3 red lines policy. How important is this? Because what I understood from this is that it does provide somewhat of an upside when it comes to a potential for metal demand, particularly in the short term, but fundamentally things don't change from a long-term perspective. And this probably is one of the reasons why we are seeing this kind of support coming in terms of metal prices in today's session as well. If you could help us and the viewers understand what would this 3 red lines policy abandonment in China would actually mean for Indian metals?
Okay, so I am not really sure about this 3 line, whether it is a new thing, because from what I remember, this is an old concept. And it's nothing which has really come out only recently. This was, I think, introduced in 2020 in August. That's what I can really figure out. And this was about the real estate market. And this was, that they came out with this philosophy that houses are for living and not for speculation. So I'm not sure what this red line got to do with base metal prices. That's number one. But having said that, I think, demand doesn't change that fast. Only the speculative demand is what really is driving these commodities up. And at the current...
on domestic steel pricing front also.
I think we might just lost the line again.
Okay. So
we'll try and get him again.
Yeah, but there are a couple of reasons for that as well. Soumit pointed out 3 reasons for it. I just like to mention this: safeguard duty imposition and, of course, a seasonal demand. Rakesh, this is Sharad here. The domestic steel pricing, just to be a bit more kind of, giving more perspective to this, that's also on the rise. Will this be aiding the ferrous players going ahead as well?
So for ferrous, the margins are moving up because, steel prices have moved up quite sharply in India. They are up more than 5,000 rupees per ton. The push has come from cost increases because coking coal has jumped up meaningfully, around almost $60. And that's a 3,000 rupee per ton cost increase. So steel companies, buoyed by all the safeguard duty, reinstatement, and the cost push has been pushing steel prices much higher. So for Q4, margins are looking much better than what they're reporting in Q3. So steel companies do have a little bit of, tailwind and they have been underperforming. So a lot of investors are jumping on those names now because, others have gone up and these are still, reasonably okay.
Okay. Rakesh, thanks so much for joining us, and as usual for helping us understand this, and our viewers, of course, always a pleasure speaking with you.
Thank you.
All right, we're joined on this side of the show by Pankaj Pandey, Head of Research at ICICI Direct. Pankaj, thanks as always for taking the time. We were speaking about the absolute rise of metals, not just the precious metals, but the base metals as well. And take a look at Hind Copper today. It's not something that you see every day, but it's a brave person who will call an end to this rally. Having said that, I do want to ask about a few of the names that stand out in trade today. Among them, large caps, right? So Larsen & Toubro, one of them, on the back of earnings. Would you be confident in saying that you can invest at this point based on the outlook for Q4, which seems to be robust?
Hi, good afternoon. Thanks for having me. I think on L&T, so this was one of our top pick during Muhurat. And I think, so there is nothing to sort of complain in the results. Company is guiding for 15% kind of a turnover growth, order book of about 10 odd percent. Working capital continues to sort of improve, say from 12% to nearly 10% of the sales. So while yes, there is some moderation, what you see in a segment like say energy because of the high oil prices impacting some pockets. But the biggest segment, which is infrastructure, where we have seen the margin sort of improving. So L&T, I think, looks absolutely good to us. And if I may add, we also like a small cap like Aeroflex in the capital goods space. I think this is one of the few companies which has delivered a 30% kind of a growth in the export side. And even with tariff, they've sort of done very well in a key market like US, maintaining margins. So this is another company which we feel that in the small cap side, which can do very well, given the fact that it is already sort of witnessing a lot more challenging scenario.
That's interesting on that. But there are two other counters also which are buzzing in trade. Of course, on the negative side, I just wanted to point out these are the earnings impact is definitely coming in these counters. But me and Alex were discussing these two BFSI counters. SBI Life. Stock is falling in trade. Numbers were good, but there are some reasons for it why it's falling. The street was expecting an upgrade in their guidance going ahead. And also the second part is that the industry VNB, that is the value of new business margins, that is still under the pressure of the GST announcements which we saw last year. Profit booking also coming in this counter. And secondly, Canara Bank, let's just get that stock also. The stock is down in the trade. It's almost down in the day's low 5%. Three important reasons for it. The net interest income below street estimates. The sequential dip came in the revenues for both wholesale and the retail banking segment. And the core income has also been on the weaker side. But of course, on a medium-term basis, there was some strength in these counters. Rajesh, want to get you on SBI Life and Canara Bank. Any buy the dip opportunities coming in either of the counters?
So Sharad, SBI Life was in uptrend, but yes, since last couple of days, we have seen some profit taking is happening at higher level. But looking at the long-term structure, stock is now available near to its important support area of 1980, which is very important for near-term setup. So if it continues to trade above 1980, if we're able to absorb all the supply pressure here, I think there is a possibility that we may see pullback action going forward. And once stock manages to cross about 2020 mark, I think stock can again move back to its all-time high trajectory. So buy and accumulate would be the strategy. Keep your stop loss around 1970 if you are buying in this decline. There is profit taking in Canara Bank also, but looking at the overall long-term structure, we are holding bullish view as the stock is still trading above to all its a major support area of on the monthly weekly chart. So looking at the structure, 145 is the important level. So those who are waiting for this some minor decline, they can use this decline as a buying opportunity. Keep a stop loss of 145 to buy these dips. On the higher side, once stock crosses above 154, the next target on the higher side would be around 165 to 170.
All right, so that's the view on Canara Bank in particular. I'm curious what Pankaj has to say about this bank, because Pankaj, in the results, of course, Sharid has pointed out some of the salient features, but to me what stood out was that erosion in the net interest margin. And in a situation where a cash reserve ratio cut playing through in the third quarter has benefited a lot of banks in terms of bolstering their margins, these guys have seen a 33 basis point erosion. It's coming at 2.5%. Is that too criminal to ignore?
Absolutely. I think for most of the PSU banks, typically the margin pressure has been relatively lot less muted, given the fact that 40 to 50% of the book is MCLR linked and which sort of progresses on a slower pace compared to the EBLR linked book. So if with this kind of a margin decline, I think one needs to see what has been the sort of root causes for it. But 33 bips is definitely far more on the higher side. In fact, some of the PSU banks which have come out with the results, we have seen margins improving for them. So that from that perspective, this is definitely a negative surprise.
Okay, so that's Canara Bank at the day's lowest levels. But moving on to our bull versus bear pick for the day. Gland Pharma, the reason why we've picked this one is because the commentary when it comes to the guidance is what they've cut. However, the stock is rallying with gains of 7%. Let's understand what is the reason for that and which case should you fall towards. Varsha standing by with all our analysis. Varsha, over to you.
Well, I think investors are taking the guidance cut lightly, or they were expecting guidance cut, and hence you're seeing the stock is up almost 7 to 8%. This is on the back of strong Q3 numbers. Q3 financials beat estimates, but overall, if you see the overall growth outlook is being moderated, and near-term outlook remains modest when it comes to Gland Pharma. But moving on, Cenexi, which they acquired, this turned EBITDA positive versus loss in Q2. But FY 26-27 growth guidance has been cut to 12 to 13% versus mid-teens guidance that the company has been giving. I think investors already knew this, and hence that has been baked in. But moving on, if I were to talk about the Cenexi, the ex-Cenexi EBITDA was up 36% year on year, which was driven by volume growth. But ex-Cenexi gross margin, if you see, was down 220 basis points year on year. This was on the back of product mix and the cost pressure. But when I talk about the US business, which was up 19%, a big positive one, because contributing a major to the revenue, which this was driven by new launches and higher offtake. But R&D spend at 5.4% of sale weighed on margins when it comes to Gland Pharma. Talking about the molecules, 9 molecules were launched in the US in the Q3, which is a big positive. But GLP opportunity, which is a hot sector when it comes to pharma, the expectations has been toned down, and they're seeing a kind of moderate growth when it comes to near to mid-term. But overall, considering the Q3 numbers, yes, a stronger one. Ex-Cenexi, also the base business grew stronger, the Cenexi business grew stronger, EBITDA turned positive. But yes, the guidance investors should watch out, and also should also see the margins going forward.
Okay, so that's with regards to Gland Pharma. Thank you, Varsha, for that. Pankaj, let me come to you. Your views when it comes to Gland Pharma overall, and anything else that you would want to add when it comes to the pharmaceutical space as a whole?
So on this particular company, our sense is that the current quarter numbers, what company has delivered a beat across all parameters, what we have been sort of looking at. What we're liking particularly is that most of their capacity utilization is somewhere about 80-90 odd %, and they're looking to sort of do a capex of some 2,000 odd crores. And with 3 times asset turnover, overall sense is that company could be delivering about 15% kind of a growth in the next 4-5 years. So from that perspective, overall next 4-5 years look structurally positive for us. And I think subsidies like Cenexi sort of turning EBITDA positive is definitely a good thing to sort of happen, because this was one of the struggling pieces of the company. So overall, we have liked the performance of this company, and we will continue to sort of maintain a buy. I think Piramal Pharma, though numbers were really subdued on expected lines, what we are liking as of now is that the company is guiding for a scenario wherein H2, on the H2 basis, the funding scenario has definitely sort of improved. The RFIs have sort of gone up. So yes, one can be hopeful that after the kind of beating the stock has taken because of one customer's inventory write down, overall sense is that things are looking on a lot better for this company from H2 onwards. So again, I'm keeping my fingers crossed there.
All right. So interesting points that you're raising, Pankaj. Let me go across now to Rajesh just to get a sense. It is volatility, which is the name of the game. But having said that, there will be opportunities that arise amidst this, right? So would you say that there are still some BTST ideas that you might suggest in this context?
Yeah, a lot many stocks are able to give breakout of this, consolidation or from their, this bearish trajectory. So one stock where we are focusing for BTST, that is Adani Port. The way stock managed to give breakout of falling trend line on daily, weekly time frame, I think a lot of open interest addition, which we have witnessed in last half an hour of trade. So looking at the structure, we believe that Adani Port may extend its gain. So possible target towards 1460, 1470 we could see for BTST point of view. On the downside, 1400 needs to keep as a stop loss. And another stock where we are focusing is Tata Motor passenger vehicle. Stock was in downtrend, but looking at the near-term structure, there is a breakout of falling trend line on daily chart. Looking at this breakout, we believe that this stock can extend its gain tomorrow. Possible target towards 358 to 362. On the downside, 346 needs to keep as a stop loss.
Okay, so that's with regards to Tata Motors, PV, Adani Ports as well, that Rajesh actually mentioned, and a disclaimer that NDTV Profit is a AMG Group company, which is owned by Adani Group as well. So that's what we're looking at in terms of the overall view from Rajesh Palvia. But what's interesting is we're talking about a rally which is coming in ahead of the budget. We're just a couple of days away from the budget, and it's going to be very interesting to see whether a good budget, bad budget, or an average budget, what does that budget actually mean for the markets? And we're talking about the budget seasonality that it causes in the month of February. Somit is here to explain to us what it has actually caused in the past as well. And that will give you an estimation of what you should be looking forward to for February 2026. Somit, over to you. What do you have for us?
Well, if you look at the month of February, the past data, at least what it suggests, it is not expected to be a good month. Now, what we have done here is that we have analyzed Nifty 50's performance for the last 10 years, and what the conclusion is coming is that out of the last 10 years, 7 times Nifty 50 has closed in red, and the average returns for the Nifty has been negative 2% in the last 10 years. And we have seen a fall of more than 5% coming in 4 calendar years, that is 2016, 2018, 2020 and 2025. Now when it comes to the mid and the small cap indices, both the indices have closed in red 8 times out of the last 10 years. Average returns have been negative 2.2% for the Nifty Mid Cap 100 Index and negative 4% for the Nifty Small Cap 100 Index. And they have closed in red more than 5% in 2016, 2018, 2020, 2022 and 2025. That's what the data is suggesting, at least when it comes. Okay, now if you look at the positive stocks, these stocks have closed in green 7 times, and the positive returns have been around 5% Blue Star and Chola Finance 7% and 6% returns is what we have seen.
Okay, so that's the budget math that we're picking up so far. Pankaj, any views when it comes to the Feb seasonality that Somit was talking about? How are you expecting the markets to perform post-budget?
So our sense is that in case if the budget carries something on some kind of a relief on taxation for FPI front, if that is not there, then budget is largely going to be a non-event. We might get some stock-specific move or sector-specific move, say for example defense. But in general, that is not really going to change much of a direction because see on the indirect taxation side, already you have already seen the announcement on the direct taxation side. Last year, we have already seen bulk of the announcement. So nothing much is expected in the budget except for numbers like what could be the fiscal deficit or the capex numbers as a percentage of GDP. Since I think fiscal consolidation is the template government has been following, so we are not expecting major revision in the overall expenditure numbers. So except for FPI, I think relief, if nothing happens, then I think budget is going to be a non-event. That is what we want to believe. I think so. My FNO team tells me that we were carrying decent amount of short positions, so which is why no one would want to carry such kind of a huge short position ahead of the budget. So which is why last 2-3 days we are seeing slightly better market sentiment. But yes, I think US-India trade deal will have a bigger impact than the budget. That is what we would expect.
All right. Rajesh, want to get you on that as well. The auto space, M&M has seen a lot of volatility as well. I just wanted to get your views, in the auto space for a positional bet. Right now, in a couple of days, you'll have your sales number also in, which is looking good here. Any good risk-reward ratio candidates here? Anything in the CV space?
So I think M&M, if we look at the long-term structure, it's in bullish trajectory only. Yes, there is some profit taking at higher level. If we analyze on the monthly, weekly chart, stock is witnessing some profit taking. But overall, if somebody is looking for investment perspective, I think M&M is giving you opportunity, and 33.50 is the important level to watch for this corrective move. If a stock able to defend this level, I think from there we could see some pullback action. And once his stock manages to cross about 34.50, I think this stock has potential to again move back to its all-time high trajectory going forward. So I think buy and accumulate would be strategy for M&M. One can look to buy this stock in this decline. And I think another stock where we are focusing is after this decline is Maruti. Maruti has corrected significantly in last couple of weeks, and looking at the long-term structure, now stock is approaching towards the next major support area, which is placed at around 14,000 level. So I think 14,000 one needs to keep as a stop loss to buy this decline. I think stock again, should get some support buying action around these level, as long-term charts are still showing a sign of strength. So one can use this decline as a buying opportunity. 14,000 needs to keep as a stop loss.
I want both of your opinion very quickly on a stock that is underperformed and how this weekend. This is Asian Paints. It's reacting post its numbers and it's gotten beaten down. It's getting hammered in trade today as well. It is the worst performer on the benchmark Nifty 50. We can pull up the weekly chart. The 1 week chart, it should indicate to you that there are double-digit losses for this entity, right? Or very close to 9.5% in the week so far. Most of that damage being done in the last few sessions. Rajesh Palvia, first to you. If you have the stock, would you consider getting out, even if it is a portfolio stock? Is there more pressure on the downside possible on the charts?
So I'll follow the stop loss of 2390. If it breaks below 2390, yes, one should exit, as it's a very important and crucial level on the monthly chart, as if we draw a channel on a monthly chart. So it's almost coincide with this upsloping trend lines of this monthly chart. So I think 2380 one needs to follow as a stop loss if you are stuck in the position which you have bought for a trading point of view. But for investment perspective, I think one can continue, as long-term structure is not still damaged. If your horizon is a little longer, you can hold it. But for trader, 2380 needs to follow as a stop loss.
Looking in the slightly longer term chart, and the 5th of December approximately was when it hit its recent high of close to 2,970 or thereabouts, right? And it's given up quite a bit of ground since that point. Pankaj, a lot of people have had patience with this stock on a portfolio basis as well. Is it time to maybe cut your losses in this kind of a situation?
I think on the Asian Paint side, last quarter, the management guided for about 10% kind of a growth. Now that has been sort of revised to in the range of, say, 8 to 10 odd %. And which is what is sort of triggering the kind of a correction what we are seeing in the markets as of now, on this particular stock as of now. Now, our sense is that near term probably would be a good level to sort of pick this stock because I think structurally the competitive or the price intensity has definitely sort of come down, which means that the ability of the company to sort of maneuver on the margins has definitely gone up. And last quarter, we had lesser number of festive days, so that also sort of impacted the volume growth. But I think overall sense is that industrial segment is expected to do well, and on the decorative side, overall sense is that things will keep getting better. So our sense is that worst is behind us for this stock, and any kind of a correction is a good long-term opportunity to buy this stock.
All right. Thank you very much, Pankaj and Rajesh, for giving your views on both technical and the fundamental perspectives. But looking at the markets, we're expecting a good closing. We can see, and this is for the fourth straight session. That's where the momentum is coming in the market ahead of the budget. Nifty up almost 70 points, and Nifty Bank, that's also up nearly 400 odd points. Mid cap, small cap, let's just have a look at how they are faring as well. The Nifty Mid Cap Index, that's also doing well. But of course, the benchmark indices, that's where the action is coming. And let's just see the stocks, the Nifty 50 constituents, how they are performing. And largely we see the metal pack has been doing really well. Good follow-up buying coming in for L&T as well on back of strong results. Axis Bank, Tata Motor PV, Eternal also doing well in the trade. What's not working? Of course, the sell-off has intensified in stocks such as Indigo, SBI Life and Asian Paints as well. But nevertheless, the index management is strong. Apart from that, let's look at the sectors which would be in focus today, where a good amount of moves have happened. Metal, PSU banks have been doing well, and today also it's up 3%. Energy also, you have a look, and that's where a good momentum is coming in as well. Banking support is there. But what's not working? FMCG, pharma, healthcare and defense as well. Some sort of profit booking is coming. Yesterday, the Nifty Defense Index was up 7%. But this is the entire picture of the market. Let's pull up the advanced decline ratio to see whether the broader indices have supported or not. Almost, we can say 3:2 in the favor of bears. Some kind of moderation was coming in the last half an hour or 1 hour of trade. But net, the small cap support which was there in the indices, that's not there today, which we saw yesterday. That means a bit of index management is at play. Today, Sensex expiry is also there, but the technical support levels is very strong. And for Nifty also looking at it, the 25,200 kind of, you could say a good support level is there. BSE 500, let's pull up the stocks to see what's happening in the broader markets. Hindustan Copper, that stock up 20%. Rain Industries, beneficiary of aluminium play, that's also seeing a good move. ABB India on the global companies India outlook, that's where the stock went up. Nalco also following this trend. Gland Pharma on earnings. What never worked is the earnings impact. 5-star, Deepak Fertilizers, all of them taking a big downtick coming in. Escorts also amongst the auto names seeing almost 6% slashes in their performance. But what to watch for tomorrow, that is something which we'll watch out for. But that's all for today. A strong setup for the last 4 closing sessions we have seen at the closing. That's all, folks, for India Market Close. Up next is Market Express by Himangshi.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा. कब से बोल रहा हूँ, कोई सुनता ही नहीं.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है. बचपन से पता था मेरे सपनों में दम है. आगे नहीं, सबसे आगे जाना है. स्टार नहीं, सुपरस्टार बन के दिखाना है. नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर. लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट. 7वें आसमान से सीधा गिरा मैं जमीन पर. फिर क्या, खुद पे काम दोबारा शुरू. फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया. है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म. शुक्रिया आपकी प्रेयर्स का और आपके प्यार का. कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम. क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी. सो कम एंड विटनेस Yo Honey Singh. This is my story.
First February 2026. What will change? Will costs be more handy? Will my essential
Hello, good afternoon viewers. You're watching Market Express on NDTV Profit and I am Himakshi Bahugna. Let's take you through the key market action, big movers and also top business stories after the closing bell. First up, let's see how the markets have fared today. So markets have ended on a strong note after a tepid start as benchmarks have posted a sharp recovery in the second half driven by technical bounce back. And Nifty has also ended above 25,400 levels, recovering over 300 points from the day's low, registering a third straight day of the gains. And in terms of the broader markets, it was a relatively weak day as both the mid and small cap index have underperformed the benchmarks. Talking about the sectoral trades now, strong run continued for metals, while the FMCG and auto counters ended the day with selling pressure. And the free fall continued for rupee as it touched the record low of 92.02 against the US dollar, breaching its previous record low of 91.96, which was hit just last week. So rupee was weighed down by the sustained foreign capital outflows and also increased demand for the dollar hedging. Now let's look at the counters that were buzzing away in trade and have posted their Q3 results. First up, we have Gland Pharma. So that has posted a strong third quarter with profits and revenues rising over 20% year on year. Growth is also driven by solid momentum in its key US market backed by new product launches and also higher contract manufacturing activity. Europe and India also delivered robust gains on better volumes and also demand. Importantly, its French subsidiary Cenexi has turned break even this quarter, adding to the company's overall performance. Next up, we have ABB India. So its shares have surged more than 9% after the company, flagged a sharp jump in India order inflows for the fourth quarter. And ABB says that orders from India rise strongly, far ahead of the street estimates, and this is signaling a clear rebound after the several weak quarters. Now, the strong inflows reinforce confidence in India as a key growth market for the company. Let's look at some brokerage notes now. Brokerages are turning cautious on Maruti Suzuki after a weaker than expected third quarter. Citi, Jefferies and Morgan Stanley they've cut target prices, citing an EBIT miss and also margin pressures from the commodities. While all the three remain positive on volume growth and near-term demand, concerns linger over margins and also market share gains and the long-term sustainability of the demand. In fact, Nomura remains bullish on car trade, upgrading its rating to buy and also raising the target to 3,026. Now, the brokerage is seeing some healthy growth and also strong operating leverage, driving the margins with revenue expected to grow at 21% annually over FY 26-28. Now, market shares, have gains and also increase the digital ad spending in the PV industry. They're also expected to further support growth, while the initiatives in OLX could, provide additional momentum to the company. Next up, we have KPIT Tech that has reported a mixed third quarter with revenue largely flat sequentially, but profitability is taking a hit here. Margins and also net profit have declined, and this is weighed down by the one-time impact linked to labor code changes. Now, excluding this exceptional item, the underlying business remains steady, though near-term margin pressure stays in focus. Next up, we have Canara Bank that has reported higher profits in its third quarter with a strong year-on-year increase. Asset quality has improved further as both the gross and net NPAs have declined sequentially. If we talk about the core income growth, so that remains muted while operating profit rises to a healthy pace. Provisions stay largely unchanged, aiding the overall earnings visibility. Next up, we have SBI Life that is under pressure in trade as investors had hoped for an upgrade in the guidance. Industry margins remain tight while profit booking adds to the selling pressure. Now, despite the decline, the company continues to operate in a strong life insurance market with steady demand. Another stock that was buzzing away in trade was Piramal Pharma that has posted a challenging third quarter with revenue slightly down and also net profit turning into a loss. Now, the slowdown is largely due to CDMO order delays and regulatory issues and also inventory destocking. Now, while operating margins were under pressure, early signs of recovery are visible since October. Now, consumer healthcare and also hospital generics remain steady, and this is supported by strong growth in power brands and also complex products. Next up, we have Vodafone Idea that has laid out its roadmap at the analyst meet, aiming for double-digit revenue growth and also tripling the cash EBITDA over 3 years. And the company is planning a 35,000 crore of debt raise and also will hold off, on equity infusion for now. Promoters remain fully committed while a tariff hike is, seen as critical for achieving financial targets. And analysts are also noting growing ARPU, but also continued, subscriber losses, suggesting the company is at a key inflection point. Next up, we have Ajmera Realty reports a dip in third quarter numbers with revenue and net profit down year-on-year. EBITDA also falls and margins narrow slightly. The results reflect ongoing pressures in the real estate sector, though the company continues to maintain a healthy operating margin above 30%. Let's look at some more brokerage notes now. Jefferies is maintaining a buy on L&T, keeping the target at 4,715 rupees. The brokerage also expects strong order flow and also improving execution to support the growth. Margins in the engineering and construction business remain healthy, even with a 20% year-on-year rise in the international E&C revenues. Management is also confident of crossing its 10% FY26 growth guidance, with a key trigger coming from the unveiling of a 5-year plan in May 2026. And viewers, shares of National Security Depository or the NSDL hit a near 6-month low after the company has posted a weaker third quarter. Now, profits have fallen sharply. While if we talk about the revenue and operating performance, so they have also dipped sequentially. Now, investors are cautious, even as broader markets are showing some sort of positive momentum. And shares of defense shipbuilder Garden Reach Shipbuilders are trading higher after the company has posted strong third quarter results. Profit has also jumped sharply, driven by higher revenue and also improved operating performance. Now, the firm also declares an interim dividend, keeping investors upbeat. And next stock is Balaji Ameen. So it has also posted a mixed third quarter with revenue up modestly and also EBITDA rising strongly. Margins have improved on better operating efficiency, though the net profit has dipped slightly year on year. The results also reflect steady demand while the cost management, supports the company's earnings performance. And viewers, metal prices are moving higher across the board, driven by a mix of supply constraints and steady demand. Aluminium gains, as China keeps a tight lid on capacity. Copper rises on supply disruptions and also strong demand from the electrification and artificial intelligence. Gold and silver, however, find support as investors seek safety amid global uncertainty. Zinc prices have also firmed up on the falling inventories, and back home steel prices jumped sharply, and this is helped by policy support, seasonal demand, and also rising input costs. Next up, we have Hindustan Copper that has hit a fresh record high as metal stocks rally across the board. The surge is driven by soaring global copper prices and also tight supply conditions. And this is also lifting the investor sentiment in the base metals. And other key metal stocks are also participating in the up move, though analysts are cautioning valuations may be stretched after this strong run. Now, viewers, Indian Energy Exchange faces continued headwinds after its Q3 results as regulatory uncertainty weighs on the stock. Trading volumes rise, but investors remain cautious due to ongoing debate over the market coupling framework, which could change how electricity prices are discovered and also affect the company's dominant position. Now, the overhang from this regulatory debate, keeps the sentiment weak, even as volumes grow year on year. And India's economic survey paints a picture of strength. India remains the world's fastest growing major economy, with FY26 GDP growth seen at 7.4%. Domestic demand is also powering the recovery, with private consumption at a decade-high share of GDP. Now, the investment cycle is strengthening too, with capital formation touching 30% of the GDP. Inflation has also cooled sharply to 1.7%, giving policymakers comfort. Now, fiscal consolidation continues without hurting growth. And while the macro picture looks solid, the survey also lays out how India is recalibrating its external strategy. The economic survey says that India's expanding network of the free trade agreements is emerging as a key pillar of its trade strategy. Now, deals have signed with the UK, UAE, Australia, EU, Oman and New Zealand are helping, provide reliable market access amid this global uncertainty. Now, these agreements are encouraging the export-oriented firms to scale up production and also integrate deeper into global value chains. Now, the survey also underlines that competitiveness will increasingly depend on state-level execution, from infrastructure to regulatory stability, making states critical partners in India's export growth story. And even as India strengthens trade ties with multiple partners, talks with the United States remain crucial. So the economic survey says that the ongoing trade negotiations between India and the United States are expected to conclude this year, offering potential relief on the external front. Now, currently, Indian exports to the US face an effective tariff of nearly 50%, among the highest imposed on any country, and 6 rounds of talks have already been held, though progress remains gradual. The survey acknowledges global headwinds as well, slower growth, tariff disruptions, and also the capital flow volatility, but believes a successful trade agreement with the US could significantly reduce the uncertainty for India's exporters and investors. And beyond trade and growth, the survey also focuses on future of India's workforce. The economic survey places strong emphasis on labor reforms, stating that effective implementation of the 4 labor codes will be crucial for expanding formal employment and also improving social security, especially for women and the gig workers. Now, with employment structures evolving rapidly, the survey calls for flexible regulations and also dynamic labor policies. It highlights the need for targeted skilling, vocational pathways from the school level, and also stronger industry-linked training. It also proposes integrating platforms like the eShram, National Career Service, and also skilling the databases into a unified digital employment infrastructure. But alongside optimism, the survey also delivers a clear warning. The global environment is getting riskier. The economic survey strikes a note of caution on the global outlook, warning that the world is becoming less coordinated and also more vulnerable to sudden shocks. It flags a 10 to 20% of probability of cascading global crisis triggered by geopolitical tensions, leveraged AI investments, and also financial tightening. Capital flow volatility is also identified as India's biggest macro risk, with the rupee described as the punching below its weight. Now, the survey also warns about the rising fiscal populism in the states, high input cost, hurting the manufacturing and competitiveness, and also long-term risk to export the momentum. US Prime Minister Narendra Modi on Thursday have underlined 3 pillars driving India's future: reform, perform and transform, as the economic survey was tabled in the parliament ahead of the union budget. Now, PM Modi has said that these objectives remain central as India embarks on the next phase of its development journey. He has stressed that the coming 25 years are crucial for realizing the vision of Viksit Bharat, with a self-confident India emerging as a beacon of hope for the world. Now, the Prime Minister has reaffirmed that the next generation reforms will propel growth and also highlighted that India's democracy and demographic strengths are powerful assets on the global stage. And his comments signal continued emphasis on reform momentum to sharpen the competitiveness, enhance ease of doing business, and also build long-term economic resilience. And several major dating and consumer platforms, including Bumble Match Group, Panera Bread, and also Crunchbase, have reported cybersecurity incidents. According to reports, the hacker group Shiny Hunters has used advanced phishing and voice-based social engineering techniques, to gain limited network access. And companies say that there is no evidence of login credentials or financial data being compromised, but law enforcement has been informed. Cybersecurity experts are now warning of a broader campaign targeting large organizations, urging users to enable two-factor authentication, update passwords, and also stay alert to suspicious activity. And viewers, Tesla is preparing to wind down production of its iconic Model S and Model X vehicles, marking the end of two programs that shaped its early success. Now, CEO Elon Musk has said that the forefront factory will now be repurposed to scale production of the Optimus humanoid robots. Now, the company is doubling down on the autonomy, with Musk stating that the future of Tesla lies in driverless technology and also robo-taxi fleets. And Tesla also expects its Cybercab autonomous vehicle to eventually dominate the production, reflecting a strategic shift from traditional car manufacturing to AI-driven mobility and also robotics. Viewers, on to some national news now. Baramati was steeped in grief as Maharashtra bid farewell to Deputy Chief Minister Ajit Pawar, who died in a tragic plane crash. His last rites were performed with full state honours at the Vidya Pratishtan ground, where thousands of mourners gathered, chanting Ajit Dada Amar Rahe. Union Home Minister Amit Shah, Union Minister Nitin Gadkari, Maharashtra Chief Minister Devendra Fadnavis, Deputy Chief Minister Eknath Shinde, and NCP Patriarch Sharad Pawar were among those present. Ajit Pawar's sons Parth and Jay led the funeral pyre as family members and supporters struggled to hold back tears, marking an emotional moment in Maharashtra's political history. And even as Maharashtra mourns, political developments continue to unfold in neighbouring Telangana. In a major development in the Telangana phone tapping case, a special investigation team has issued a notice to former Chief Minister and BRS Chief K. Chandrasekhar Rao, asking him to appear for questioning on January 30th. Now, the SIT has offered flexibility in location, citing his age under legal provisions. Now, the case relates to allegations of illegal phone surveillance during the previous BRS regime, involving politicians, journalists, business leaders, and also members of the judiciary. Earlier, KCR's son, KT Rama Rao, and senior leader D. Harsh Rao, Harish Rao, were also, questioned by the SIT as the probe widens. Meanwhile, central agencies have stepped up action in financial crime cases. The CBI has launched extensive search operations across multiple locations in Kolkata in connection with an alleged bank fraud worth nearly 1,000 crores. The raids are being conducted at the offices and residence of promoters of a city-based finance company. Now, the investigators allege that the company siphoned off funds after availing large loans from a public sector bank, submitting documents to secure credit but later defaulting on the repayments. And the alleged diversion of the funds have occurred between 2014 and 2020. Central forces have been deployed at raid locations as the probe intensifies. And in some tragic news from Kolkata now, the death count in the fire near Kolkata on January 26 has risen to 21, with 13 more bodies found from the gutted buildings, while 28 people are still missing, raising fears that the number of fatalities is likely to increase, the police said today. Now, the authorities have imposed prohibitory orders in the area, restricting the public movement ahead of the proposed visit by leader of the opposition, Suvendu Adhikari, and also other BJP leaders. Now, the devastating fire has reduced 2 godowns to ashes and also a manufacturing unit of a Momo company at Anandpur in South 24 Parganas district close to the city. Now, officials said that DNA mapping of the 21 recovered bodies or body parts is likely to begin on Thursday to establish their identities. Whereas senior officials from the United States, Denmark and Greenland have begun discussions on a new framework deal over Greenland aimed at addressing American security concerns in the Arctic without crossing Denmark's red line on sovereignty. Now, the talks come after President Donald Trump has announced a potential framework agreement pledging to hold back tariffs on the European nations opposing U.S. efforts to increase its presence on the strategic Arctic island. Now, Denmark and Greenland have made it clear that they are open to expanding cooperation but not to ceding control. Now, the negotiations may also involve revisiting the decades-old U.S.-Denmark defense agreement governing the American military activity in Greenland. And while Washington looks to expand influence in the Arctic, tensions are also rising sharply in the West Asia. The European Union appears poised to impose fresh sanctions on Iran's Revolutionary Guard following Tehran's deadly crackdown on nationwide protests. Now, activists are saying that more than 6,300 people have been killed in the unrest, and the move comes as the U.S. ramps up pressure, deploying warships, including the USS Abraham Lincoln, to the region, and also warnings from President Donald Trump of possible military action. Iran has responded with its own threats, raising fears of escalation across the Middle East. Now, meanwhile, economic pressure is mounting, with Iran's currency, falling to a record low of 1.6 million rial to the dollar, further deepening domestic unrest. And viewers, Vietnam and the European Union have upgraded their relationship to a comprehensive strategic partnership, Vietnam's highest level of diplomatic engagement. The announcement was made during a visit to Hanoi by the European Council President Antonio Costa. Now, as both the sides seek to stable the partnerships amid growing global trade uncertainty. Now, the move places the EU on the same diplomatic footing as major powers like the United States, China, and Russia. Now, leaders on both the sides have stressed the need for predictable cooperation, especially as US tariff pressures reshape global supply chains. Now, trade ties between Vietnam and the EU are already anchored by a free trade agreement signed in 2020. In fact, India and Saudi Arabia have reaffirmed their commitment to strengthen counter-terror cooperation during a high-level security dialogue in Riyadh. Now, both the sides have condemned terrorism in all forms, including cross-border attacks, and also reviewed emerging threats globally. Now, discussions are focused on combating terror financing, preventing misuse of technology, countering radicalization, and also strengthening legal and law enforcement cooperation. Now, the meeting was held under the framework of Strategic Partnership Council, signaling deepening security collaboration between the two nations. And on to some sports news now. Sri Lanka's iconic Sinhalese Sports Club ground in Colombo has received a major upgrade ahead of the T20 World Cup, with the installation of state-of-the-art floodlights for the first time in its 75-year history. Now, the development makes SSC the fifth venue in the country capable of hosting international day-night matches. Now, the venue will host 5 T20 World Cup games, beginning with the Pakistan versus Netherlands clash on February 7. And Sri Lanka Cricket says that the new LED lighting system meets the global broadcast standards, offering better visibility for players and also an enhanced viewing experience for the fans. Now, the upgrade further strengthens Sri Lanka's readiness for the global tournament. And with the big-ticket matches lined up, security preparations are also being stepped up. Sri Lanka is stepping up security measures ahead of the T20 World Cup, with elite armed units set to be deployed to protect the teams and also venues. Officials say that there will be special focus on high-profile matches, particularly the India-Pakistan clash scheduled for February 15 in Colombo. Now, the two teams are expected to face each other at least once in the group stage. Now, Sri Lanka is co-hosting the tournament with India and will stage 20 matches between February 7 and March 8. Authorities say that the enhanced security is aimed at ensuring the safety of players, officials, and also spectators throughout the tournament. Viewers, that's all on Market Express today. Thanks for spending your valuable time with us. Keep watching NDTV Profit for continuous market coverage.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा. कब से बोल रहा हूँ, कोई सुनता ही नहीं.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है. बचपन से पता था मेरे सपनों में दम है. आगे नहीं, सबसे आगे जाना है. स्टार नहीं, सुपरस्टार बन के दिखाना है. नाम मिला, फेम मिला, प्यार मिला. I was not just running, I was flying. सबकी जुबां पे बस एक ही नाम, यो यो हनी सिंगर. लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट. 7वें आसमान से सीधा गिरा मैं जमीन पर. फिर क्या, खुद पे काम दोबारा शुरू. फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया. है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म. शुक्रिया आपकी प्रेयर्स का और आपके प्यार का. कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम. क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी. सो कम एंड विटनेस Yo-Yo Honey Singh. This is my story.
First February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen?
Economic survey warns of a financial crisis worse than 2008 if highly leveraged AI infrastructure fails, says it could have a cascading effect on global markets. Prime Minister Modi sets the tone for reform-led growth in Budget 2026, praises the Indian-EU FTA, calling it a symbol of hope for the youth, calls India a ray of hope for the world. Market ends higher for the third consecutive session, with Nifty ending above 25,400 levels and Sensex gaining close to 200 points. Sectors finish mixed, with metals as the top gainer. L&T contributes the most to Nifty's gains. Metals extend rally beyond gold and silver. Aluminium gains 27% in a year on the back of supply glut amid steady demand. Copper also climbs, aided by structural demand from electrification and AI. Rupee briefly hits an all-time low of 92.01 against the US dollar on the back of continued weakness in foreign capital flows and corporate rush to hedge against further depreciation. Ends the day at 91.79. Brent hit $70 a barrel for first time since September after Iran responded to Trump's military action threat and warned it to make a nuclear deal. Country's mission in the UN says it stands for dialogue, but Tehran will defend itself and respond like never before if pushed to do so. Supreme Court stays UGC's recent rules on caste-based discrimination in educational institution, issues notice to the centre on UGC's need to re-examine the rules. Andhra Pradesh government cracks down on misuse of social media. IT Minister Nara Lokesh says the state will study legal frameworks for age-appropriate access to social media, cites concerns, invites Meta, ex-Google and ShareChat to the next GOM meeting to examine global best practices. Maharashtra Deputy Chief Minister Ajit Pawar cremated with full state honours as sons Jay and Parth performed his last rites amid a large gathering of supporters and senior political leaders, including Home Minister Amit Shah and Chief Minister Devendra Fadnavis, who paid their final respects. Hello and welcome viewers, this is Profit 360 on NDTV Profit and I am Himakshi Bahugna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. Viewers, ahead of Union Budget 2026, Finance Minister Nirmala Sitharaman tabled the Annual Economic Survey 2025-26 in the Parliament. The annual economic document from the Department of Economic Affairs under the Ministry of Finance is an important roadmap for economic reforms and also usually sets the tone for the Union Budget. Now, the Budget Economic Survey will give the GDP growth outlook and also shed light on the health of the Indian economy, along with its growth prospects in the upcoming financial year.
First, India is an indeed oasis of macro stability in otherwise a turbulent world. Numbers speak for themselves. Our GDP for this financial year is estimated, this is all IMF forecast, may differ slightly from what MOSPI has told us. IMF predicts 7.3% for the year ending March 2026. We have 7.4% from MOSPI. And the fund forecasts 6.4% for the next 2 years, 26-27 and 27-28. You will hear our numbers later. But the important thing is whether it is for the current financial year or the future, our India's growth numbers stand out in comparison to any other part of the world.
Viewers, we spoke to economists to get their viewpoint on economy survey. What did Dr. Rumki Majumdar and also Dharmakirti Joshi said? Let's listen in.
We are on a very resilient growth path, given that last year when we started, we were expecting a lot of headwinds to our domestic demand, and yet the government made consistent efforts to push the reforms as well as also brought in a lot of monetary policy changes and GST changes to ensure that demand remains resilient. We grew at 8%, and I think the entire year will look somewhere between 7.5 to 7.8% this year as well. So real growth remains strong.
Well, we are nowhere near deflationary conditions. I think what you got in 25-26 is a much better than expected growth inflation mix. Growth turned out to be higher. Usually when growth goes up, inflation also goes up. But because of a variety of factors, inflation came down, and one of them is food inflation, which was in the deflation zone. The other parts are at reasonable levels, I would say. And so going ahead, food inflation will correct, because I think food inflation is the most volatile component of inflation. And I think it will move up, and that will also push the overall inflation up. Part of the reason why inflation is also going to move up.
Viewers, ahead of the budget session, Prime Minister Modi set the tone for reform-led growth. He has highlighted that Finance Minister Nirmala Sitharaman's 9th consecutive budget and also hailed India-EU FTA, calling it as the mother of all deals. Now, PM Modi has said that the proposed India-EU free trade agreement reflects the aspirations of the youth and will also strengthen Atmanirbhar Bharat by boosting the growth, jobs and global partnerships. He has stressed quality manufacturing, next-gen reforms and human-centric technology, positioning India as a confident, competitive global powerhouse for decades ahead. Listen in.
इस क्वार्टर के प्रारंभ में ही भारत और यूरोपियन यूनियन का फ्री ट्रेड एग्रीमेंट आने वाली दिशाएं कितनी उज्जवल है, भारत के युवाओं का भविष्य कितना उज्जवल है, उसकी एक झलक है। ये फ्री ट्रेड फॉर एम्बिशियस भारत है। ये फ्री ट्रेड फॉर एस्पिरेशनल यूथ है, ये फ्री ट्रेड फॉर आत्मनिर्भर भारत है.
So according to PM Modi, India is certainly on a reform express. Now switching gears and see how the markets are fared today. So market have extended gains for third straight day as FIIs resumed buying after 15 sessions. Sectors have ended on a mixed note. Broader indices have underperformed the Nifty and also Sensex. Let's go across to my colleague Mahima for more on the day's market action.
Right, so overall, I think markets today, after the volatility that we saw during the trade, did end on a positive note. In fact, the Nifty ended in the green for the third consecutive session yesterday. After 15 days of sell-off, we saw FI buying. Today, we'll have to see as to how that has panned out. But overall, above the 25,400 levels is where we ended on the Nifty. Benchmarks did outperform the broader markets. Tata Steel Eternal gained the most in Nifty 50. Axis Bank, L&T, Tata Steel Eternal gained over 3% in trade. On the closing. The Nifty mid-cap 150 ended almost flat. In terms of the gainers, it was led by Mangalore Refinery as well as Gland Pharma. Gland Pharma, of course, on the back of its numbers. Nifty small cap 250 ended almost flat, slightly in the red, which was the rally was led by Hindustan Copper, locked in upper circuit, and GMDC. Five-star business as well as Balaji Mines fell the most in the small cap 250. In terms of sectors, it ended on a mixed note, but overall, Nifty metals gained the most, almost a 3% rally there. Hindustan Copper and Nalco gained the most there. Nifty FMCG fell the most. The pain was seen across, stocks. You had Tata Consumer, Asian Paints, Colgate, which fell the most in FMCG. A lot of earnings also coming out for FMCG, thick and fast. But this is the overall view as to how markets have panned out in trade today.
Thank you so much, Mahima. Just stay with us as the budget expectations, strong order book and steady Q3 earnings are keeping the defense stocks, upbeat. So experts are believing that while the overall fiscal stance is likely to remain steady, the composition of government spending on defense could, shift meaningfully. So Mahima, just take us through that as well.
Right, so basically, Jeffries did come out with a note with regards to what the expectations are where the budget stands. Overall, defense capex allocation is going to be a key monitorable with regards to where budget stands. India's defense capital spend falls around 13% year on year in November 25. The defense capital is up 57% YOY in April to November 25 versus FY26. Estimates growth of around 13%. India depends, India kind of deepens also its international defense ties to enhance export opportunities. In year to date, India's defense exports at 87% of that $3.3 billion FY26 target stand. HAL is going to be the top pick, followed by BEL according to them, and then data patterns. Moving on with regards to where, what are the triggers with regards to why you can expect an uptick in terms of where budget stands. Overall, stocks have skyrocketed ahead of budget 27. The sector also witnessed broad-based buying, but today it did, of course, see some sell-off. Nifty Defense has extended gains for last two trading sessions. Today, of course, however, it did, see some profit booking, but overall has gained over 5% in last two trades. Data patterns, BEML, Solar Industries were top gainers. In terms of factors behind this, of course, India-EU Defence Pact has concluded a defence security agreement which could, further, explore more, exports between India and the EU in terms of defence. The overall, impact of BEL earnings has also played its parts because the counter jumped 10% post its earnings. Overall, in terms of the third factor, pre-budget rally, the optimism ahead of budget is also there, and the defence budget allocation expenditure has also seen an upward trajectory in the last 5 years. I mean, from an allocation of 1.5% to almost 9.5% is what we saw last year. So this is the overall view of what you can expect and why the defence as a pack has been in focus just before the budget.
Thank you so much, Mahima, for that. And viewers, rupee has hit an all-time low against dollar as continued weakness in foreign capital flows and corporate rush to hedge against further depreciation. Now, Indian currency has dropped to 91.99, eclipsing its previous all-time low of 91.96 hit last week. Now, sustained outflows of foreign capital, rising geopolitical uncertainty and increased risk aversion has kept the emerging market currencies under pressure, leading to the rupee touching an all-time low. However, India's economic survey suggests that the rupee has become merely a victim of the geopolitical uncertainty that has gripped almost all the global markets lately. Now, the survey has added that the rupee's value does not reflect India's fundamental health, noting that the country is in good shape, with banks being healthy, credit growth is respectable, and corporate balance sheets are strong. And viewers, the record-breaking rally in precious metals is continuing thanks to a wave of safe haven buying as geopolitical and economic tensions rise and after the latest US Federal Reserve policy signals. Now, gold prices have jumped again. Spot gold rose 2.1% to $5,511 an ounce after briefly hitting a fresh record of $5,591 earlier in the day. Remember, gold had already smashed through the $5,000 mark for the first time on Monday and has now gained over 10% just this week. Silver is also not that far behind. Spot silver has climbed 1.3% to $118 an ounce after touching a record $119.34 earlier. Now, part of silver's momentum is coming from investors looking for a cheaper alternative to gold, plus ongoing supply shortages and also strong momentum buying. And if you look at the bigger picture here, the surge has been massive. Gold is up more than 27% this year. And on top of that, a huge 64% jump in 2025. And silver has also rallied more than 60% so far this year. Precious metals clearly remain the favorite safe haven as global uncertainty keeps rising. And viewers, Top Court has put the hold, on the university grants admissions. Now, new regulations amid widespread protest, especially by the general category students. Top Court has said that, the regulations must be re-examined, flagging complete vagueness in the rules that make those prone to misuse. And also, during the hearing, CJI Kant has lamented that society has not been able, to do away with the caste-based discrimination. And, even after 75 years of independence, the Chief Justice, has said that, and I quote, that in a country after 75 years, all that, we have achieved to become a classless society. Are we becoming a regressive society? And worst thing which is happening in a ragging is that children coming from south or north, and northeast, they carry their culture. And somebody who is, alien to this starts commenting on them. Now, you have spoken about the separate hostels, and for God's sake, there are intercaste marriages also, and we have been, in hostels. So my colleague Nupur is sharing more details on this crucial story.
Well, the Supreme Court, in a big development, has stayed the new UGC regulations brought in recently by the central government. The top court, while issuing notices to Centre, UGC and several other authorities, have sought the response to the petitions filed challenging the new regulations. The top court has expressed concern and has said that we do not want to return to a regressive society. The country has endeavored in the past 75 years to cultivate a casteless and a classless society. And these regulations are vaguely, the language of these regulations are vague and have the potential to be misused. The top court also flagged concerns about the haves and have-nots within the reserved category and said what happens when they face discrimination by persons from affluent backgrounds within the reserved category. Also, the top court expressed concern about the discrimination faced by students from Northeast who come to North India to study in colleges. It also expressed concern about students coming from South India. They also say, the top court said, may face such kind of discrimination. The top court said we need all comprehensive guidelines and regulation to ensure that they align with the realities of the country today. And it went on to say that these regulation as they stand have the potential to further divide the society on caste lines, and that's why it has for now kept the entire regulation in abeyance. And the next hearing on the case is on March 19th. The Supreme Court has asked the Centre to explore whether there is a need to appoint expert committee to look into the languages of these regulations, and also have a sort of response on several contentions raised by the petitioners in their petition in the top court.
Viewers, Andhra Pradesh IT Minister Nara Lokesh has raised serious concerns about the impact of social media, saying that trust in online platforms is rapidly breaking down. Nara Lokesh has announced that the Andhra Pradesh government is taking action. Now, a group of ministers on social media has ordered a study into legal frameworks that could ensure age-appropriate access for young users. He has also said that major technology platforms Meta, X, Google and also ShareChat have been invited to the next GOM meeting to discuss global best practices and also explore stronger safeguards. Now, in a post on X, Nara Lokesh has said that children are slipping into excessive and relentless social media use, affecting their attention spans and also education, while women continue to face constant online abuse. Now, issues that he said that can no longer be ignored. And viewers, as part of a budget for Bharat series, NDTV Profit hits the streets of Indore for a quick budget mood check. My colleague Sharad Dubey has gotten, chatting with Indori business owners, market experts and also entrepreneurs to get the real take on the budget. And what's fueling Madhya Pradesh's booming business vibe? Let's take a look.
NDTV Profit is in Chhappan in Indore, and we'll be getting to a lot of new shops to eat. And guess what? We are here today at Vijay Chaat House. तो बताएं कि खाने में क्या क्या है आज?
विजय चाट हाउस में सबसे बेस्ट है कोबरा पैटीज जो आप देख रहे हैं, हम तल रहे हैं. इसके अलावा ग्रीन पीस कचौरी है, स्पाइसी समोसा रहेगा. उसके अलावा जैसे सूरती का मांडे, फ्राई का मांडे.
लेकिन सबसे बढ़िया वाला डिश लाई है.
सबसे बेस्ट डिश है हमारा कोबरा पैटीज.
एक और लाइए. धन्यवाद. तो देख रहे हैं मेरे पास दो इम्पॉर्टेंट प्लेट्स आ गए यार. आप सोच रहे होंगे कि ये आदमी दो क्यों खाने वाला है, क्योंकि अब मेरे साथ संतोष मीना जुड़ने वाले हैं. शेयर मार्केट में इनका बहुत बेहतरीन पकड़ है और ऑफ कोर्स ये हमारे अच्छे दोस्त भी हैं और इंदौर में मिले हैं. सवाल बस यही उठता है, और लेट्स जस्ट पुट इट इन इंग्लिश बिकॉज वी हैव बोथ द ऑडियंसेस हियर. How is the weather looking like? It's so beautiful, and this is the entire food, the zone it's called. What's the name of this place?
Yes, first of all, welcome Sarad to Indore, and it is one of the famous place of Indore. It is Chhappan Dukan, and we are eating one of the most famous dish of Vijay Chaat House is Kopra Patties. You won't get this dish anywhere in the India or anywhere in the world.
Just taste this. What's so different? मैं अपने हाथ से खाने वाला हूँ. वाह, बहुत टेस्टी है. बट स्पीकिंग ऑफ द फ्रंट फूड, बजट इज कमिंग. बजट 2026. What expectations are there? And give me two views. What Indore's business or the corporate people are expecting in the budget? And of course, the second, the markets.
First, you are looking at lots of consumption story here.
Yes, India's consumption story is on. We can see that. You can pan it around here. खच्चम खच भरा हुआ है. और संतोष, फंडामेंटल्स तो आप करते हैं, टेक्निकल्स भी करते हैं, और हमारी ऑडियंस को निफ्टी बैंक के भी जो इम्पोर्टेंट लेवल्स होते हैं 2026 के एंड के, वो क्या हो सकते हैं, वो बताएं.
On a conservative note, I believe 30,000 should be closed in Nifty. It will be tough to say when it will be crossed. I believe अगर फर्स्ट हाफ में या फर्स्ट 2-3 मंथ में करेक्शन आता है तो I believe that will be a great buying opportunity, क्योंकि market is ready to rally. Once FIs will come, market will get momentum, especially large cap.
Right. And which sectors you are bullish on for 2026?
So first is, as I said, consumption, especially discretionary consumption, because of the lots of benefits government has given. In current regime of geopolitical tension, the defense stocks will continue to do well. and power could be one of the theme that can outperform well in this year.
Thanks a lot, Santosh, for joining us and giving your entire views. Let's get in Rohit Goel. He's a fourth generation entrepreneur from RK Foods, and this is the dal industry which you are doing the business from. But before that, we just showed the audience Johnny hot dog. Very interesting, but it doesn't look like the shape of a hot dog. What is the story behind it?
You can say it is a desi hot dog. One of my most cherished memory from my childhood.
All right, that's pretty interesting on that. We'll have a taste on that. But speaking about business also, how is it the opportunities have changed in Madhya Pradesh for the last 5 years and now?
Madhya Pradesh is among top 2 producing states in pulses. And Shivraj Singh Chauhan ji, who is our current agriculture minister, was our chief minister. So he has promoted so much to our dal industry, like in all sense, providing subsidies for plants or providing NSP to our farmers so that they can produce more pulses. Our government is already working on Atmanirbhar for pulses, like they are promoting more and more agriculture production so that we don't need to depend on imports.
Siddharth Kulwal is here with us. Hi Siddharth. Hi. So he's also a businessman in the agri space, and time and again I'm keeping on saying Madhya Pradesh is so important in this space.
Yes.
But we spoke a lot about food, anaj, soya, whole day. Apart from this, what else is there for the viewers who are looking at NDTV Profit? Where are the non-food places where people look at for?
So religion is one important place here. On one side is you have Omkareshwar, and other side you have Mahakal. A must visit Jyotirlings.
But in your industry as well, the business circles, not only the agriculture part, there's a textile element also in Indore. What are the industry expecting for the budget?
Keeping the domestic consumption strong, government is making ensure that industries are doing their businesses, but let's hope that something comes out on the tariff part.
All right, so tariff also is a major issue. Budget, we already speak about it, but tariff is an issue, especially in the textile space. You know, one more issue which is there is this beautiful jalebi. I'm not able to get my hands off it. It's really very tasty. And that's all, folks, for Indore.
Viewers, the last rites of Maharashtra Deputy Chief Minister Ajit Pawar, killed in a plane crash, were held with full state honours at Baramati in Pune district. Ajit Pawar's wife and Rajya Sabha MP Sunetra Pawar, along with his 2 sons Rohit and Jay, performed the last rites as a sea of supporters gathered at the cremation ground to catch a last glimpse of their leader. Thousands of people gathered for Ajit Pawar's last rites, chanted Ajit Dada Amar Rahe, when his mortal remains, draped in the national flag, were brought from his village Katewadi to the Vidya Pratishthan ground. Pawar, the longest-serving Deputy Chief Minister of Maharashtra and senior NCP leader, died in a tragic plane crash in Baramati on Wednesday. Union Ministers Amit Shah, Nitin Gadkari, former Union Minister Sharad Pawar, and BJP President Nitin Nabin attended the 66-year-old Nationalist Congress Party NCP chief's funeral. Viewers, Brent has hit $70 a barrel for first time since September. This climb comes after Iran has warned the US of retaliation for Trump's military action threat. Now, Trump has warned Iran that the time to negotiate a deal on its nuclear program is running out. Now, the US president, referring to a large US naval fleet, said that a massive armada moving quickly with great power, enthusiasm, and also purpose towards Iran. Iran powerfully has responded to Trump's threat, saying that it stands ready for a dialogue, but it will defend itself and also respond like never before. It's pushed to do so. That's what they said. And viewers, that's all the time we had on this edition of Profit 360. But please don't go anywhere and stay tuned to NDTV Profit for more news and updates.
1st February every year. Hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा. कब से बोल रहा हूं, कोई सुनता ही नहीं.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबान पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
First February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more?
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
Welcome to KYC, that is Know Your Company. I am Mahima Vachrajani, and the company that we're going to track today is a very interesting one, that is Vaibhav Global. Now, why have we chosen this company? Before I move on to tell you what the company exactly does, to understand as to how the India-EU trade deal will actually benefit the company going forward. In terms of the other aspect, growth is largely led by value for this particular counter. When will actual volume growth pick up for the company is something that we're going to ask the management and understand whether that is even on the cards. Demand and growth levers going forward, what will augur the growth, because management has given a guidance of medium-term growth in terms of going forward. We'll have to wait and watch out for as to what will be the levers that will be auguring that growth. Now, return ratios for them have slid in the past 3-4 years. So just want to understand in terms of improvement, whether it is on the cards for ROC or ROE not. And medium-term growth targets, what are they looking like going forward in terms of both top line as well as bottom line? So these are the reasons as to why we're talking to the management. Most importantly, of course, India-EU trade deal and how it impacts the company. On the show, of course, we'll also be speaking to Nitin Panwal, who is the Group CFO of Vaibhav Global, who will be joining us shortly. But before that, let's take a look at what the company actually does. just to understand what about the company looks like. The company is basically an omni-channel retailer which is into fashion, jewelry, as well as this also include accessories, by the way, and lifestyle products in developed markets. Now if you take a look at the company has been vertically integrated into a digital retailer of fashion, jewelry, as well as lifestyle products. In terms of the overall model, end-to-end B2C business model is what they do, and this is via TV as well as digital channels generally. In terms of the presence through proprietary TV channels and digital channels is what I talked about. In terms of the overall customer base, they have over 7 lakh unique customers transacting. That is the number as per the latest investor presentation as well. And vertically, of course, integrated supply chain is what they have. In terms of sourcing also, they have a strong global sourcing with a base of 30 plus countries where they source from. In terms of where the manufacturing stands, in-house manufacturing in India, so it's a global jewelry hub. Also has manufacturing units across India and China for them. Also has a factory at Jaipur which is around that 1,69,000 plus feet. Jaipur capacity is at that 5 million pieces annually is what something that the company capacity sits at. But the question really here is that whether that capacity that they're sitting on is fully utilized or not, or what are the utilization levels currently. In terms of brand, these are just some of the names, the brands that the company operates in terms of Home Smart, Evertrue, Caris, as well as something like a Ralph Spray. So all of these brands, apart from multiple brands that they do, these are some of the ones that you would have come across. In terms of customer visibility also, TV Homes access nearly 127 million households. This is the latest number as per their investor presentation. In terms of where the growing customer base is coming from, the growing digital presence is contributing over 42% of the revenue. In terms of rating parameters, of course, what we'll be looking at today for assessing the company, we generally do 8 parameters. Your income statement will be the first one, following balance sheet, cash flows, return ratios, as well as shareholding, street cred. We'll also look at the valuation and analyst, although not a lot of analysts track this, and we don't have a closest peer of this one, but we'll also see the outlook guidance that the company has given. Now, with regards to the first metric, that is your income statement, let's try to pull that up and see as to how the company has performed, in the last 3-4 odd years. If you take a look at the overall numbers, revenue growth CAGR for 3 years has been at that around 7% mark. EBITDA growth at that 2% mark. But in terms of where the profits stand, profits have slid, right? This, of course, as compared to FY24, FY25 has seen a growth. But as compared to where FY22 stood, from there profits have slightly come down. So the question really here is that since there has been a growth from FY24 to FY25, will that growth be sustained, and will the company be able to come back to where it was earlier in FY22 in terms of where profitability stands? In terms of where 9 months FY26 revenue stands, overall in terms of split, right now 58% comes from TV and 42% comes from digital for them. In terms of the geographical split for revenue, 59% comes from US, 30% comes from UK, and 11% comes from Europe. Next, in terms of the overall numbers as to how Q3 has panned out, overall a good growth this quarter. 9% revenue growth is what we saw at that 1,066 crore. In terms of where EBITDA stands, EBITDA growth stood at that 23.7% mark. Of course, marking revenue largely was led by a value growth and not volume growth. So we'll have to ask that question to the management. Margins also improved for the company. We'll also want to understand as to what has led to that margin improvement at that 12.7%. And net profit saw significant growth of 40.7%. But overall, if you take a look at how the segments have done, TV business revenue was up 7.7%, and of this, when we take a look at the volumes and value, volumes was down 1.5%, but value overall saw a growth in terms of where TV business stands at that 3.7% mark. That's the average selling price that saw a growth of around 3.7%. Similarly, in the digital business as well, revenue was up 11.2%, from which if you take a look at the volume numbers, volume did see a degrowth. Volume saw a downtick of around 10.3%, but at the same time, the average selling price for this particular segment went up by 17.5%. So I think, overall, if we take a look at both of these segments, value growth has been quite significant in terms of average selling price, but volume growth has not been there. With regards to where balance sheet stands, overall, of course, to conclude for income statement, it's a thumbs down from our end because revenue CAGR and profitability is still, under pressure. But with regards to where balance sheet stands, it's a strong balance sheet in terms of, your equity, your borrowings, your cash as well. So a thumbs up to the balance sheet in terms of where, your reserves are concerned. They've been constantly growing, and the management has, fairly accumulated good reserves. In terms of where debt stands, as of March FY25, they were at zero debt, so nothing of a concern there. In terms of cash in bank, the cash in bank position has slightly come down, but is still at a very good position because they don't have any debt on their balance sheet. So overall, a thumbs up when it comes to balance sheet. Moving on to the cash flow statement. If you take a look at the cash flow statement here, the operating revenues have inched up slightly from FY23 levels to the FY25 levels, but FY24 was a very good year for them when it came to operational cash flow. So we'll have to wait and watch out for as to how FY26 ends. Whether that will end at that around 277 crore mark or not is a question. EBITDA, now, if you take a look at how cash conversion has been as compared to EBITDA, the ratio has been very strong. 56%, 94%, of course, this because the overall operation numbers was, cash from operation number was very high. But even at that 52% mark, the ratio of, operating cash flow to EBITDA is very strong. And overall net cash position has also been reasonably well. But taking a conservative approach, we've given it a neutral rating right now where cash flows are concerned. Moving on to the return ratios, when I was talking about what I want to know about the company and why we've chosen this company, return ratio is one aspect which has been declining for them. And to understand as to what will be the growth levers as to how return ratios will improve going forward is something that we'll know from the management as well. From a 61%, it has come down to that 19% mark as to where ROC is concerned. And ROE has also come down from 32% in FY21 to that 12% mark in FY25. However, slightly improved from that 9% in FY23 to 12% in FY25. So a thumbs down when it comes to return ratios for this particular counter. With regards to where shareholding pattern is concerned, there's skin in the game for the promoters, still holding 57% of the stake. FIs, however, has slightly, declined their stake as compared to where it stood in March 23 from a 22% to that 18% mark. DIs, have kind of reduced their stake from 6% to 2%, but do not have a large holding. But, you have public shareholding, which has gone up from 15% to almost 23%. And you have names like Vijay Kedia as well as Ashish Kacholia, who have remained invested in this counter, that is Vaibhav Global. Overall, shareholders have remained in that range of 1.3 to 1.35 lakh. In terms of where the street cred is concerned, not been a very good return giving stock if you take a look at the performance, because 1 month down 1%, year to date down 4%, 1 year down 19%. In the past 5 years, it's down almost 55%. So, as somebody who's been a patient investor with this particular counter, has to still wait and watch out for a turnaround to see, good returns coming in for the counter. In terms of where valuations stand and in terms of where the overall ratings, analyst ratings are concerned, well, there's no direct peer to this one for Vaibhav Global. But if you take a look at how, the analyst, the Arihant Capital who tracks this counter has given a buy recommendation with a return potential of 36%. Mind you, it's not done anything in the past 5 years in terms of negative returns of 55%, but Arihant Capital expects a return coming in for 36%. In terms of where valuations stand, well, right now the current valuation stands at 24 times. The 5-year average PE of this one is 26 times, and going forward, the PE ratio is expected to go down at that 14.8 times in FY28. And if that happens, the stock is going to be available at a cheaper price. So I think valuations is the one place where I've taken a conservative approach and given neutral rating. Lastly, in terms of where outlook stands, outlook overall, it remains positive. The company has said that FY26 revenue will be in that 7 to 9% range. In terms of midterm growth, mid-teens revenue growth with steady improvement in margins is what they are expecting. And lastly, in terms of your EBITDA break even for Germany, they're still aimed for FY26. Although first half the Germany business did see a loss, so we'll have to wait and watch out for whether that happens by the end of FY26 or not. So lastly, this is the overall view as to how things have panned out for Vaibhav Global. But let's take a look at the total rating as well in terms of how all 8 parameters have stacked up. Income statement is a thumbs down for us. Balance sheet, strong and very well held balance sheet, thumbs up. Cash flow, a neutral rating and just taken a conservative approach here. Return ratios, definitely a thumbs down because they've been declining since the past 3 or 4 odd years. But for shareholding, it's definitely a thumbs up. You have skin in the game from promoters. You have investors like Vijay Kedia as well as Ashish Kacholia who have remained invested in the counter. Valuations, a neutral approach here and analyst rating combined to this because not a lot of analysts track this counter, and valuations right now as compared to 5-year average still not very cheap, but going forward will get cheaper. Outlook lastly is a thumbs up because overall management is positive with regards to where guidance stands. So the final rating for this company turns out to be 4 out of 8. So that's with regards to where Vaibhav Global. Now let's talk in detail about Vaibhav Global, with the company's group CFO, Nitin Panwar, joining us now. Nitin, thank you so much for taking out the time. My first question with you is with regards to how Q3 has panned out. It's been a good quarter for you. Just want to understand that this growth, from my understanding, is largely a value-led growth and not a volume-led growth. Just want to understand as to when do you expect volumes to come back on the table?
Hi, thanks for having me. So past quarter, pretty pleased. We first time crossed 1,000 crore revenue in a quarter, 1,066 crore, 9.1% growth year over year. With a decent margin improvement, around 170 basis points year over year. So pretty pleased with the performance. Volume is because the company plays with the wider product bouquet that the around 30,000 different SKUs, and we follow the strategy, the consumer demand for which product is in correct trend in the market. So product price point moves from $5 to $1,000. So right now, as you have seen, the lab grown demand is pretty high. So lab grown tend to be higher price point. So consumer acceptance is over there. So we are offering continuously lab grown products to them. That is resulting the higher realization from the customer. But they say at the same time lower revenue growth, lower volume growth, but the realization is pretty high. So overall spend per customer is higher than our previous trend. And we expect that the offering to the customer will continuously play where customer is looking for product, like a year back that customer looking more gold items where they see a safe haven or investment items. Right now more on lab grown, and maybe the other categories will thrive in coming time, but it will be a pure drive of a consumer need or what consumer is looking for right now. And we anticipate that the overall revenue growth will continue to perform well. Around we have guided this year 7 to 9, and next year around 9 to 11% we are guiding. We have a strong belief that it will continue to outperform our expectations.
Nitin, just want to understand, since you mentioned lab-grown diamonds, just in terms of where lab-grown diamond prices are concerned, they've been falling. Does this mean that here also you will be focusing on volumes to make that mark in terms of where the top line stands? And how is this shift in terms of gold to lab-grown diamonds, and how does this affect your margins?
Yeah. So lab grown normally is a higher margin category comparatively plain metal and other jewelry. And that's the same we have seen this quarter gross margin improved say to 63%. And we see that the price is going down, but the product offering, we are continuously injecting new products from studs to bracelet to different sets, but continuously injecting new products to mitigate the customer requirements. Though the pricing falling, but the offering related to carat size and above item is continuously increasing. So demand is there. We have seen past quarter around 30% growth from lab-grown product, and share is increased to around 12.7% of overall business. So that's where we see right now the customer's demand is there, and it will continuously to improve our margins.
Nitin, day before yesterday, India and EU signed a trade deal, which is called the mother of all deals. How does this trade deal have a positive impact to you, if any, of course, I would want to understand. And does this mean, if it does have a positive impact, does this mean that it will bring, more customers to you, or does it mean that cost for manufacturing and then sending these goods to the EU becomes cheaper for you?
So trade deal is always a welcome for all across the world in any country who does a trade deal. It gives more entry, removes all the entry barriers in the market. Right now, if I specifically talk about the jewelry, we operate our Germany business is directly impacted with this trade deal. 4% duties right now, which will be removed. I think the transition will happen in next, I think, across a year, but this will definitely help us to more easiness of trade and the duty reduction. Cannot guide on the margin improvement, how it will be, how much will pass on, how much will stay in our profit and loss account, but it will be definitely improve our company's overall per se in terms of customer demand or competitiveness of our product in Europe.
Okay, understood. Nitin, you said that you crossed that 1,000 crore in the last quarter. Just want to understand going forward, because you're aiming around that 11% mark in the next year in terms of where the top line growth stands. What do you think will be the growth levers? Where do you think the demand will come from for you?
Sure. Yeah, so we have multiple growth levers. One of the important growth levers, we continuously investing on digital fronts, from mobile apps to OTT to smart TVs or our own websites, and the paid media marketing that we are doing. Digital in past 5 years has grown roughly around 17% CAGR year over year. And we anticipate that the initiatives towards the acquisition of customers through digital and having the omni-channel experience from our live streaming to the digital platform or to the paid media to OTT will be there to improve overall customer lifetime value. So that is the one important lever that we are investing, and it will continue to thrive. Apart from that, the different categories that we are launching, the lab and expanding our lifestyle categories. Lifestyle share is now 35% of our business. Earlier, which was like 6 years back, it was less than 20%. So that different product categories from beauty to handbag to accessories, that is continuously expanding. That is also another lever to improve. Another thing is that also our Germany business is growing faster than the other territory. It will continue to thrive. And this financial year, past quarter, we made a full profitability in the Germany business, and expecting that this year will be the slight profitable operation from Germany business. And from next year onwards, it will add in our bottom line. So the digital, Germany, and the OTT expansion will be the key drivers for our growth in future.
Interesting. Nitin, the other aspect, you mentioned that lifestyle products is now almost 35% of your overall revenue, right? How does this mix change from a long-term perspective, let's say 2 years down the line? And then do you think your margins will be able to improve from here on? Do you think the margins in the lifestyle business are better than your jewelry business?
Margins is very close to lifestyle business, to business in lifestyle categories. And we are our midterm aim to increase the lifestyle business to 50% of total, as the customer acquisition and the repeat purchase and is high on the lifestyle categories. So that is the midterm target is half of the business size through lifestyle products.
Okay, Nitin, you talked about the growth levers in terms of where the top line is concerned, but just want to understand in terms of your return ratios, right? Your ROA and ROC has been falling, but has improved as compared to where it was in FY23 and FY24. So that's a good sign in terms of where the positive momentum has kind of kicked in. Just want to understand in terms of the levers that will probably improve these return ratios going forward. And what is the range in which you will be looking at for your ROE and ROC to end by the end of FY26, by the end of FY27 as well?
Sure. Yeah. Though we cannot guide the exact number, but our companies aim to increase the ROCE to 25 to 30 range. And this just quarter ended on TTM basis. ROCE is improved to over 20%, 21% just we closed. And we aim to improve to a 25 to 30% ROCE in the business. ROE is also improved to 15% in the current quarter. As our profitability margin is improved, 40% year-over-year growth in PAT we have seen in past quarter. So that is driving to improve our ROE and ROCE both. Though the capital efficiencies we are continuously building in our business, our net cash in the business is around $24 million after all the loans and advances. So good amount of net cash we have built up in business, and it will, because of the beautiful business model we have, pretty much all of the profit generates in the cash and also we distribute to the shareholders through dividend, will result into positive cash in the business and better returns ratio.
Okay. With regards to your manufacturing facilities, what are the capacity utilization that you're sitting at right now?
Yeah, pretty much I think 60 to around 70% utilization that we have, but we get the B2B orders from other European or different vendors we have. So not worry about the capacity utilization, and there's not a capital intensive also this jewelry manufacturing that is not required huge amount of capital. So easy to expand also once you have more orders from different territories. But the good thing is that this quarter onwards, we have started our casting manufacturing facility in America to fight against those high tariff situation. So the casting process is happening in America and the later process is happening in India, which is helping us to benefit around these high tariff scenario. Though the overall cost is increased around 480 basis points, but still we managed to improve our gross margin by 30 basis points in America.
Interesting. 30 basis points of improvement from the America business. But this was going to be my next question to you, Nitin, that overall, because of this entire US tariff overhang, how has that impacted your business in terms of where demand stands and top line growth as well? And what do you expect going forward now that you have a casting manufacturing facility there? Do you think things to improve from here on? What's the view?
Yeah, definitely. It was the last 1 year is most uncertain time where the multiple amount of tariffs and from 10% to 25 and then 50% increased. So pretty hard to always to fight against the pricing and the what margin that we should charge the customer. But the agility we have and operation around all the Asia locations is navigating and helping us to better management of this tariff scenario. And when the high tariff was implemented in India, then we started sourcing from China, Thailand, or the other country that we have a manufacturing and sourcing facility over there. But over the period of time, we have also started our manufacturing facility around in September time in US. And after that is helping us to almost zero tariff on the goods movement from India to US. It's just the value addition part that we are paying tariff, and around 480 basis point, as I mentioned, it was increasing our costing, but pretty helping us in terms of competitiveness, in terms of our pricing of the product, and also the offering is pretty fast through this process right now. So that is, I think, helping us to set up a factory over there. And the consumer demand is pretty, the consumer sentiments right now in US is pretty tough, not easy, but due to our agility and the better pricing and manufacturing is giving us the more demand from the customer side of our jewelry products, as well as on our digital platforms. So that optimistic side on the mid-teens number, mid-single digit number from US perspective.
Got it. Nitin, thank you so much for being so candid with your answers and of course taking out the time and speaking with us at NDTV Profit, and all the best for the future. But viewers, we are completely out of time on this edition of KYC. Stay tuned to NDTV Profit for more news and updates up on the other side.
1st February every year. Hope becomes a question. Will I save more? Will I grow more?
साहिबान मेहरबान कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा, कब से बोल रहा हूं, कोई सुनता ही नहीं.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, आई वॉज नॉट जस्ट रनिंग, आई वॉज फ्लाइंग। सबकी जुबान पे बस एक ही नाम, यो यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Yo Honey Singh. This is my story.
1st February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will
Agarwal Packers and Movers Limited. Man with the cap. Not 300, 300, 300.
Hi, we're talking about Your Money Matters on NDTV Profit, and my name is Alex Matthew. Market cycles. Well, this is something that a lot of people talk about, but it's usually evident in retrospect. What am I talking about? Well, usually they say that equity markets work in cycles of 3 to 5 years. There's a boom, and there is either a time correction or there is a bust. The question is, with regard to small cap funds, are we through the worst of it? And this is, of course, the start of 2026. It's been painful, but are we nearing the bottom? That's a question that we're asking Santosh Joseph, founder of Germinate Investor Services. And Santosh, it's an important question to ask, particularly because a lot of people started those SIPs in the post-COVID period, and a large part of their portfolios started getting dominated by small caps, as a result of which the portfolio performance of a lot of people last year has been very, very bad. But can you explain this cycle and why this last year and the start of 2026 has been particularly painful?
Hi, Alex. Markets themselves have been very weak over the last maybe 12 to 14 months, and within that, the small caps have really cooled off quite a bit compared to the market. In fact, many of them in the negative territory. Now, most of the investors who came in the last 4-5 years, and what we would like to call the post-COVID years, they were lured to the way small caps were performing. In fact, if you look at the last 6 to 7 year history, but for a brief pause in 2025, bulk of the 4-5 years has been stupendous returns, to the point that even a year like 2020 when COVID hit us was a positive 25% plus in the small cap, which means the small cap index rewarded the investor far greater than just the market. Now, then, when you look at what has happened right now with a lot of SIPs, with a lot of flows, with a lot of investor interest, there's a general feeling that people want to be in the place where market rewards them the most, which is the small cap segment, without realizing that these are cycles. And I think you rightly pointed out that we have to understand that markets play out in cycles. Right now, what we are seeing is, after a very robust and strong cycle of performance by small cap, over the last 12 to 15 months, there is a bit of a cool off. The positive side is the people who are continuing, though they're seeing a drop in performance, they're accumulating more units. And even 2026, after we've started from Jan 1st to now, we've seen equal amount of drawdown like the way we saw last year, which means that people are now getting to worry, saying that, did I do something wrong by investing in small caps? Okay, this is a bit of reassurance. There's nothing wrong by investing in small caps as long as you've got your asset allocation right. But this is the time to stick in and be patient and wait for the cycle to turn around, because what is known with history is that small caps reward you significantly well. This is a time for you to continue, keep your SIPs going on, maybe even take a completely fresh look, because it is quite attractive right now.
Fresh look. That's exactly the question that I'm asking, Santosh. Of course, for those people that have kept their SIPs going, kudos to them. And I hope that they're also looking at their asset allocation strategies to ensure that they're not over allocated towards one particular segment of the market. But having said that, the trigger for this conversation, at least for me, is the announcement last week that ICICI Pru mutual fund was restarting the lump sum inflows into its small cap fund. They took, at the time, what a lot of people counted as or looked at as a contra view when they said that we're stopping inflows. And they have assets under management at this point of just over 8,000 crore rupees, not very large. So therefore, if they're saying that the valuations have come off meaningfully, they're feeling comfort, is that a significant statement?
I think it is a big statement for a couple of reasons. Number one, they called out saying that small cap and mid caps are overvalued, and therefore they put a hold to the flows. Number two, I think we also have to understand two bits of this issue over here. Number one, that even though the index of the small cap and even some of the funds, they have underperformed, please don't forget that the small cap individual stocks have underperformed far greatly, which means the correction has been very sharp, very deep and significant. Now you layer that with the amount of time that this has transpired with, and even the valuation correction that's happened. On one hand, the stocks themselves are available at a far deeper correction right now. Time has passed by, valuations have cooled off. Therefore, I think ICICI Pru reopening right now is also a testament to the fact that you're better off today considering fresh investments for a long time than it was maybe a year and a half ago. Now, some of these things, to be very honest, is only in hindsight. We'd love to pick the bottom, we'd like to come off at the top, but it doesn't happen. Today is one such moment where we feel that it's actually not a contra view. It's maybe the fundamentally right view to say, hey, listen, small caps are not that bad. Even though there's immediate past performance is negative, there is a reason to believe that valuations, correction, consolidation has largely taken place, and great time to start.
So a lot of people, and this is evidenced in the behavior that we witnessed, Santosh, over the years also, is if there is significant underperformance of a particular scheme, there is a tendency to pause SIPs or stop SIPs and move to something else. And invariably what you have then is a large basket of schemes. So specifically with regard to the strategy in the small cap space, you're saying now is a good time to consider fresh allocations to small cap funds. how should you look at choosing the right scheme? What are the parameters that you're paying attention to right now? Because there are schemes that are very, very large, and there are schemes that are much, much smaller and have a relatively conservative view, shall we say, even if it is the small cap space.
So even before we go to answer that part, let me also tell you, for most investors, performance actually brings in attention.
Yeah.
The lack of performance, they lose attention, and that's when they tend to stop or pause. I think here we're trying to reach out to investors and saying that while performance is an important indicator, it's important that you have to ride through this cycle of performance to ensure that you come out better than just how the way the markets are performing. That's where disciplined, consistent investment comes into play. What is an important part that you have to note is that please, whether there is performance or not, during these cyclical moments, do not go overboard. I agree, there's a virtuous cycle where there's attention, there's liquidity, there's flows, there's performance that creates an unending loop saying that because of performance, you allocate more money, and because of more money, that performance of more money adds up to your portfolio overall return. So, the virtuous cycle goes on. Now you also go through the vicious cycle where there is no performance, you pull out money, liquidity dries up, and then again you pull out more money because they dropped in. So for investors watching me, please remember these virtuous and vicious cycles will keep happening now and then. Now, for those of you considering to invest today, the time is better today than it was about a year or a year and a half ago. How do you choose a particular fund? Now, typically, a good size fund selection will also help you because in a really, really large small cap fund, and mind you, in most AMCs, their largest fund today is a small cap fund, simply because investors have taken a liking and interest to chase after a fund that has got performance and has a potential to perform. But be careful, because in large funds, there will be some minor constraints to meaningfully adding stocks. So therefore, what do? Is they add a long tail of stocks, sometimes 150, 200 stocks. But if you want a kind of a concentrated portfolio, then an average 5 to 10,000 crore, or maybe even 15,000 crore fund would be ideal for you. Now, there's also enough data to suggest that sometimes just not the fund size alone is detrimental to the returns. It's also the fund manager's ability to pick stock. So, very clearly put, if one were to go back and look at the consistency of the past 5 years, you'll be able to easily pick few winners.
Okay, but let's talk about style as well, Santosh, from your perspective, right? And somebody that has a pretty long tail, very large size of AUM as well, and they've stopped lump sums, and this is Nippon, right? They allow for your SIPs to go through, but no one blames them. You're talking about 50,000 plus crore or thereabouts of assets under management at last count. At least that's what I last saw. I wonder if it's changed with the drawdown in markets or thereabouts. But having said that, what are the styles that you would pay attention to? And I ask this because I've often heard people say, don't invest in just one small cap. Look at maybe two with slightly different approaches to the way that they construct their portfolio, just so that you're not facing a significant downside and you're diversifying styles of investment as well.
Alex, I would agree with your thesis that don't put just money in one small cap. There's a reason, because whenever you add 1 or 2 or 3 small caps, unlike large caps and maybe large and mid cap category or flexi cap category, you do not have too many common stocks. Now, if you take most of the small cap funds that are there, and even just do a dipstick comparison of the top 10 stocks, the good thing is you get a lot of unique stocks, which means between one and the other small cap, even though there may be competition and even though you may be differing between which is good or which is bad, maybe because of performance, but you look at stocks, you have unique stocks. So therefore, having 2 or 3 small cap in your portfolio is a great bet to begin with. So I'm agreeing with that. The second part, which is interesting, is that the style of managing a small cap is also a little constrained to the portfolio manager. And let me use an example. Today, a large small cap is about 50-60,000 crores. Now, even if he has to buy a 1% exposure to a small cap stock, he'll have to buy a large quantity, and there may not be that much free float, or in some cases, even the small cap may not have that much market cap to buy that particular stock. Therefore, you'll have a long tail, 150, 200, sometimes even 230, 250 stocks. So the nature of the universe constrains the fund manager to take concentrated bets, and therefore you'll need to have a long tail. The third part is that when you look at the index, the small cap index, from a weight perspective, the last stock would be maybe 0.2, 0.3. But the portfolio manager takes that stock and gives it an active weight of 2 or 3. Remember, he's giving you significantly more exposure to that one particular stock in the portfolio that actually becomes active management. So even though the tail is long, the weightages that you give to the stock make a significant difference to the performance. And I think your example that we spoke about, Nippon, has been able to continue SIPs and flows because they managed a long list of stocks by active weight management.
Yeah, absolutely. And their largest weightage is not more than 2%, if I remember correctly. But having said that, we were talking about styles, and if you could quickly list out 2 or 3 different styles and fund managers and funds that you like and why in the space, so that people get an understanding of how they can diversify within this category as well.
So let's begin with Nippon. Nippon has largely believed that you have to play the small cap by participating in as many as good ideas as possible and maybe eliminating the obvious red flags, which is you have a index which is really quite vast because the top 100 large cap, then the next 100, 150 mid cap, then the small cap universe is really large. So therefore, the more broader you spread out, you have an opportunity to pick up the winners. And you also have a chance here for active deselection from the index or the universe. Now, there is another player, let's say you take example HDFC. They've also done well in the small cap space, but they've got a slightly lesser portfolio size. Similarly, even if you take, let's say, a Kotak small cap, what they've done is they have not gone for long list of stocks compared to how Nippon is, but they have had slightly higher weights in terms of active weights to each stock. Now, like we mentioned in the past, for an investor, playing a long tail, short tail, concentrated bet versus active bets all works very well if you're mixing up these 2-3 things in your portfolio. So here the portfolio styles are unique. There are people who play active weights and concentrated. There are people who play active weights yet have a broad and wide list of stocks into the portfolio. Now, I think whether you played active weights or whether you played concentrated stocks into the portfolio, when I mean concentrated here, it's still 80-90 stocks and not the 30-40 that we're used to in large cap or flexi cap. The benefit for the investor is that you are having a better play at the whole universe of small cap stocks. So consistency, active weights is the way to go in terms of selecting small caps.
All right, you said it. Santosh, thanks so much for taking the time. It's been an insightful, engaging conversation as always. Thanks so much.
Thanks, Alex.
All right, now, we've been getting a lot of questions about credit cards, and this is understandable because everyone wants to know which card to use to get the most possible points and whether or not their usage is appropriate. Now, we decided to have a more regular conversation on this program, and hopefully we'll be able to do it every week. Joining me is Ivor Soanes, who's editor, special features at NDTV Profit. Ivor, thanks so much for taking the time, and you study this very closely, and we were talking about this. My first question to you, before we get into any of these card categories or points or anything else, if I'm new to the space, and if I'm looking for the best possible card, what should I bear in mind? How should I go about finding that first card?
Well, thank you for having me, Alex. It's great to be here. Now, I guess the very first thing when it comes to credit cards, is that people hear about credit cards. They hear that, you get great rewards and they want to jump in immediately. They want to get the best card. Now, the best cards are the ultra premium cards. This is the HDFC Infinia, the ICICI Emerald Private Metal, HSBC's Premier, etc. But not everybody can get them immediately. One, they have pretty high salary criteria. For instance, both HDFC and ICICI have a criteria of about 5 lakhs a month. HSBC has about 3 lakhs a month. And they also need a relationship. So it's not possible immediately. I think the best thing to do when it comes to getting a credit card or starting a strategy when it comes to credit cards is really to understand what your spending is. For instance, you might have a lot of spending on travel. You might have spending on dining. Another very important spend is education, or rather school fees. For me, that is a huge spend for me. That means that I need to get maximum value out of that spend. Now, a lot of cards don't give you points on education spends. Then there is obviously groceries. There's fuel for your car. For some people, it could mean even spending on things like NPS, National Pension Scheme, or even paying advanced taxes. Is there a way of getting rewards from them?
Okay, very interesting. So therefore, and what I'm getting from that, and something that a lot of our commentators on this program have said in the past, is don't change your spending just because you're getting rewards on a point, or on a card rather. Don't go out and buy something simply for the points. So from that perspective, let me narrow it down and let me ask you today, what are the best cards in the fuel category? If I have a lot of running on my car or vehicle, and if I have to spend a lot filling fuel, which cards serve this purpose?
Yes, Alex, I think that is a very important point. Be very careful. Don't overspend to get rewards. But coming down to fuel credit cards, it's a very interesting category. All of us spend quite a lot on petrol, and actually we make nothing. Even on Boast cards, there's actually a surcharge that you pay. One, when it comes to fuel cards, there are no lifetime free fuel credit cards, unfortunately. Another thing I want to make sure is that all the fuel credit cards, return around 4 to 5% on average. The published rate is higher, but when it comes to annual fees and then redemption fees, etc., that's what you return. But most importantly, this is very important. When you look for a fuel credit card, look at what your monthly spend is, because there are some fuel credit cards that max out at about 3,000 to 4,000 a month of spend. You won't get points on fuel spends beyond that, while some can go up to 15,000 a month. So if you're a very heavy spender, you can't really cross beyond 15,000. And also check how easily it's possible to redeem points. Now, having said that, let's look at maybe 4 quick credit cards. Perhaps the best fuel credit card is the Indian Oil RBL Extra. That's from RBL Bank. And it comes with an annual fee of about $15.99 plus taxes. And there's a waiver on annual fee if you spend about 2.75 lakhs annually. Now, with this card, you can spend up to around 13,000 a month on fuel. It returns around 7.5%, but actually it comes down to about 6.5 or closer to 5, depending on how you redeem.
Quick question on that. So 2 points stand out here. So you've given me information on the amount of spend that will waive the charge, right? Which in this case is 2.75 lakh. Is it always that you need to hit at least 2.75 and then your fee is waived, or is it if you spend 2.5, then on a pro rata basis to that extent my fee is waived? Is that how it works?
No, Alex, unfortunately it's not that way. But here's the thing, right? If you write it to many of these card companies, they sometimes waive it, even when it's close by.
And are there some card companies that stipulate that you can spend, if you spend 80% of the fee is waived? Or
No,
does that not happen?
No, I don't think any company stipulates it as such. It all depends on your relationship, frankly. If you have a great relationship, sometimes you can get waivers. Otherwise, sometimes it's just luck.
Okay. And the second point is the reward rate that you pointed out, 7.5%. Is that good, bad, not necessarily great? In this case, it's the best, but what's normal?
Well, normal in the sense of, like I said, an ultra premium card like a HDFC Infinia gives you about 3.3% on most things. It does not give you back such rewards on spends. So I think 7.5%, and even if it comes down to 5% after reward redemption charges, it's absolutely fantastic. Look at it this way. This was a category you just spend on where you get nothing back. Now you're getting 5% back in some way. I think it's a fantastic deal.
Okay. The second card on the list is SBI BPCL Octane credit card. What stands out on this one?
Well, this one is also a great card. And again, in this category, it all comes down to reward rates. This gives you about 6.5%. And this also gives you some additional points when you spend on groceries, movies, and dining out. And again, this card, you can spend up to 10,000 rupees a month on fuel to get you get rewards.
Okay, so but there are added benefits as well. The third one on the list is IDFC First Power Plus credit card. And this ranks third on your list. Why is that?
Well, I think this is a very popular card. Secondly, it has a low annual fee. If you see the first two have an annual fee of around $15.99 and $14.99, this is just $4.99. So what you're spending on the card is pretty low. You can spend up to 12,000 rupees per month on fuel, and it gives you about 6.5%. But over here, the catch is that about 1.5% comes through HP Pay. So you got to use this card with the HP Pay app to fuel up.
Okay, interesting.
And, yeah.
You were saying and?
And the one additional benefit on this card is it gives you a little bit back on rewards, 5% back on groceries, up to rupees 2,000 a month. But it also gives you some cash back on when you recharge your IDFC First FASTag. It gives you 5% cash back over there too, which is a bit unique.
So this is interesting, right? Because there are certain cards which will offer you at the very least a waiver of the surcharge. But I've also heard that they can actually tie up with one petrol provider or one fuel provider and not the other. So for example, if they tied up with BPCL and you go to an IC pump, you're paying that surcharge. Is that how it works?
Yes, absolutely. So if you have an SBI BPCL Octane card, you got to go to Bharat Petroleum. If you have an Indian Oil card, you go to Indian Oil.
There's one more card that you've highlighted, which is Standard Chartered Super Value Titanium. And this is for all petrol pumps. So which is why this is something to look forward to, right?
Yeah, this is something interesting. If you could keep this card if you are going to any petrol pump, but there's an issue with this card, which is that you only get a maximum cashback. You get there's a 5% reward rate, but you get it of a maximum of up to 100 rupees per transaction, which means that you can fuel up only up to 2,000 rupees if you do it. And this card, you can only spend up to rupees 4,000 a month on fuel. Beyond that, you don't get any cashback. So this is a useful card if you don't have massive spends, and you can really use it at any petrol pump.
Okay, and there's an honorable mention, if you can call it that. It's the Amex Platinum Travel, which, am I mistaken if I say, Ivor, that's not easy to get?
It's not easy to get today. Amex Platinum Travel is no longer being offered, but there's a way to get it. In fact, some people get the Amex Platinum Reserve and then downgrade to Amex Platinum Travel. And Amex has, some people have said that Amex will start reissuing this card soon.
Okay, but what stands out about this? Why does it make the honorable mention?
Well, it makes an honorable mention because, sometimes you may not want to use one of these fuel credit cards because you don't want too many cards in your wallet, because each card means that you've got to keep up with payment due dates, etc. Well, what's great about the Amex Platinum Travel is that all fuel spends, you don't get reward points in it, but it counts towards milestone spends. And milestones is where you really get points on Amex Platinum Travel. That's where the value is. There is a 1.9 lakh and a 4 lakh milestone. You can get to total of about 40,000 points plus a 10,000 rupees Taj voucher. So in any fuel spends at HPCL petrol pumps only, you can get, it counts towards the milestone part. So it's a very useful feature. If you don't have any other credit card, if you have the Amex Platinum Travel, you might want to consider it. Also, there are some other cards over there. In fact, some people use the SBI cashback card to buy vouchers. It's a convoluted way to do it, but it's possible. At the same time, some others use the Access Atlas card also to get vouchers. For instance, HP Pay, Indian Oil and all have vouchers. They get these vouchers and they fuel up.
I have interesting highlights there. Thanks so much for joining me. Viewers, bear in mind that what we said at the start, you should not change your spending habits purely for a reward. And we've had conversations in the past where credit experts have said that you need to ensure that you're not paying interest on your credit card. Obviously, because these are interests that go up to 40-45% on an annual basis. It's extremely expensive. And so therefore you can use it as a line of credit, but make sure that you're paying on time and make sure that you're not maxing out your card, because that also has a negative bearing on your credit score. A good number is to follow around 40 to 50% of your total limits. And be pragmatic is the most important message. Of course, there are significant benefits to be yielded as well, and we've discussed a few of them. That brings us to the end of this edition of Your Money Matters. Thanks so much for watching. Do stay tuned. This is NDTV Profit.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा. कब से बोल रहा हूं, कोई सुनता ही नहीं.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस Yo Honey Singh. This is my story.
1st February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop so I get more? What will happen? Union Budget 2026 on NDTV Network.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
M3M presents NDTV Masterstroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate
I would love to understand from you, Bob, as you look at the world from your vantage point. If people in 2024 thought that it was a year of peak volatility, 2025 really came in as a bolt of surprise. And if people thought that 2025, starting from deep sea to Russia, Ukraine, to multiple other geopolitical and political events, might be peak of volatility, boy, 2026 has started off on a strong footing too on that note. How do you see the world from your vantage point?
Yeah, we very much agree that volatility has increased over the last several years. I'd go back to a memo that our founder, Howard Marks, wrote back in December of 22, which he entitled Sea Change. And I reference this quite a bit because I think it's very accurate in how it describes the macroeconomic environment. And what that memo says, in essence, is that a lot of the forces that drove sort of unprecedented level of prosperity and financial market sort of health over the last 40 years was starting to come to an end. And really the three forces that drove that were increasing population, globalization, and geopolitical calm. And as we sit today, all three of those forces have been disrupted. Certainly geopolitical calm, we don't have that. You're starting to see deglobalization instead of globalization. And then finally, you're starting to see population be a headwind instead of a tailwind. And the implications for the economy are really quite profound. Those three forces drove unprecedented declines in interest rates and very calm interest rates over that 40-year period of time. And I think what we can expect from here on out is much more volatility. And in fact, since that memo was written, that's exactly what you've seen. You've seen higher and more volatile interest rates, even with central bank rates declining in the last 18 months. Long-term rates have stayed high, and we anticipate that to be the case. So yes, we think the backdrop has become much more volatile, and we expect that to persist.
How does a large institution decide between asset classes and make investment decisions in such volatile times, especially since tariffs are actually adding further fuel to fire, because it's no longer tariffs from the United States to a select band of countries. It now seems to be the world seems to be tariffed by the United States, right? So there are tariff tensions, trade tensions, and of course, as we said, heightened volatility. How do you guys think about investing or make investing decisions in such a scenario?
It's something that we think about on a daily basis. And you're right, tariffs are going up all over the world. That's the surest sign of the deglobalization I referred to just a moment ago. And that will make for higher and more volatile interest rates, which should transfer value from equity holders to creditors in the coming years. We at Oaktree specialize in fixed income, primarily sub-investment grade fixed income. And I think that plays very much to our strengths. So part of the question, or the answer to the question that you asked, is in what we do on a daily basis, which is that we very much focus on the credit side of the equation. Within that, where we do our best work, or where I believe we do our best work, is in dislocations, environments where syndicated markets start to break down, and it requires alternative capital of the form that we have to step in and provide that capital to borrowers. We're starting to see that with increased frequency. There has been, at a surface level, a level of calm and relatively benign market conditions. But if you look below that, it's starting to show some deterioration in terms of credit conditions, and we think that persists and perhaps increases over the course of 2026.
Wow, Bob, just trying to understand this. Would you believe, or are you trying to say that what will triumph in 2026 and 2027 maybe is fixed capital which is available on tap, fixed income which is available on tap, or could it be opportunistic fixed return capital like private credit, for example, which will be able to make the most of such times?
So I think it depends a little on the path of the economy and of the financial markets. If we see a recession, which I think is entirely possible, there's really only one thing propping up most of the global economy at this point, and it's spending on generative AI. If that were to deteriorate or somehow start to decline, I think you would see a recession. And if there's a recession, we'll have a very significant opportunity in opportunistic credit. If it stays largely where it is, the economy that is, and the financial markets as a resulting matter don't see a major dislocation. I still think the place to really focus is credit. It will be in different forms of credit, more performing credit. To your point, it could be direct lending, where we're going out to approach borrowers on a bilateral basis instead of through the syndicated markets. But again, it depends a bit on the path of the economy from here.
But you do believe that equities, which had a great run, and led by US equities in 2023 and 24, and even if 2025 US equities were not top of the pile, but they certainly did perform. So 3 years of a return, high return generating equity return in the US and some other areas, you reckon equities might not be the asset class of choice in 2026?
It is the collision of two profound, almost tectonic shifts in the global economy. On one side, again, generative AI. And if you look at the outperformance of the equity markets, it's those names that are associated most with generative AI that have seen their currency, their stock go up pretty meaningfully.
That's true.
And on the other side, this volatility that I mentioned a minute ago in interest rates, there's a battle between those two. Again, in the last 2 years, the economy has largely been dictated by the strength of generative AI and the spending associated with that. I think 2026 we could see a reversal there, where you start to see the volatility in the market start to overcome that as people get worried about the return on that massive amount of spending that's gone into generative AI. And if that happens, I think equities could suffer as a result.
Wow. And Bob, do you reckon that this would, equities at major economies suffering in your terms as a result would mean that equities across the world have a bit of a lame or a lean 2026, or could some markets like India, for example, which have underperformed almost all of 2025, both relatively and absolutely, and have growth up ahead? India could well be one of the fastest growing economies with 6.5%, 7%, 7.5%, depending on which way you believe it will. But let's say, or when the numbers show up. But would economies like that have markets which are outperforming?
It's entirely possible, and I don't know the factors that drive a lot of different major economies. You mentioned India, and the growth and the strength in the economy here is astounding. And it is not as tied to generative AI as some of the other major economies. So it's entirely possible that you do see a decoupling of some form between what goes on in India or other markets and what you've seen in some of the developed markets. But I do feel like there's been one major force that's driven most of the major economies, and if that rolls over, I think you're going to see a lot of pain in the developed economy financial markets.
Bob, thank you so much for taking the time out and being with us here on NDTV Profit today. Lovely talking to you, and look forward to seeing you in person.
Thank you so much. I really do appreciate you taking the time.
Likewise. And viewers, thanks for tuning in.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा, कब से बोल रहा हूँ कोई सुनता ही नहीं।
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है।
Budget 2026, we are calling it India's growth agenda. But what's in store? What should that expectation look like? What will the finance minister deliver is the key question that everyone has right now. Joining us on the show to discuss more in terms of expectations and what should that realistic ask be, Anant Narayanan, former whole-time member at SEBI, joins in. Anant, welcome to the show. Always a pleasure to speak to you. You know, the last couple of conversations that we've been having with regards to expectations from the budget, we've always ended with the last question of what should that dream budget look like? Let me start with that one with you. According to you, what should that dream budget look like according to you for an economist, for an investor, for a market participant or for a layman?
Thank you so much, Hiral, for having me. Always a pleasure to be here. I'll concentrate on two specific aspects which I think are issues around taxation which need to be addressed by India over the medium term. I'm not talking from the perspective of what's happening in the market right now. This is more medium term. I think there are two aberrations that we are living with which are coming in the way of capital formation and investments. I think there should be no doubt that as a country we need a lot of investment, both foreign investment and domestic investment. So far the government has been doing the heavy lifting, but that should now shift to the private sector. So how do we get that? The foreign side. Do you know that India is a bit of an aberration in that we apply source-based taxation on investors, foreign investors, whereas the OECD recommendation and the global, most of the major markets follow a destination or a residence-based taxation.
Okay.
What this means is that the investor residing overseas is largely in other jurisdictions taxed in his or her home jurisdiction, not at the place where he or she is doing the investment. In India, however, we say capital gains will be taxed here and by us and drawn from the earnings made by the investor. Now, we do have tax treaties. In theory, that's supposed to make life easier, but in practice, we remain an aberration because of the following reasons. Many foreign investors are exempt from paying taxes in their residence. If they pay a withholding tax here, therefore, that is money down the drain for them. Second, the way in which we determine capital gains is in rupee terms. So when you have rupee depreciation, there is a phantom gain in rupees which is not there for the foreigner in his or her local currency terms. And yet they have to pay a withholding tax here. Finally, even those that pay capital gains in their domestic jurisdictions, they struggle sometimes to get a set-off from the withholding tax that they have paid here versus what they're liable to pay in their home jurisdictions. Our withholding tax is not necessarily conducive for their tax credits. All in all, we consistently hear the feedback that we are an aberration, we are an outlier in insisting on this source-based taxation, and that is coming in the way of investors coming in. Over the last few years, Hiral, you know this well.
Correct.
Both FDI, net FDI, as well as FPI have struggled.
Yeah.
And while there are many reasons for investments to go up and down, some of them are cyclical, I think this is one fundamental reason which has been there for many years now. And it is something that needs to be addressed.
So tell me one thing. You know, we're talking about where India is an outlier in this aspect. This is one of the reasons why your FPIs, FDIs are moving away from India, at least for some time right now. Say, for example, hypothetically, this is a question which gets resolved. Do you think that will make them flock into India to that scale versus other emerging markets, in spite of where India stands in terms of valuations, in terms of opportunities?
So Hiral, what you said is absolutely right. There is no one single factor which you can solve for and get a lot of flows to come in. But I think there's a lot of positivity about India amongst foreign investors. After all, we are seen as a high growth destination. Our fundamentals seem reasonably robust. We do have companies taking on risk and willing to take on risk. So there are lots of factors which are ticks in the right direction. But we have to remember the following things. One, we are competing with, again, some very, very strong countries for capital globally. A lot of people were worried that global investments will come down in the aftermath of the trade wars, etc. Actually, investments in 2025 globally did very well.
Yeah.
This is because of artificial intelligence and all those things. Now, there are plenty of countries competing for this. South Korea, Taiwan, even places like Indonesia, they're all competing for this. Now, if you have a significant negative in relation to other countries in one particular aspect, that of course impinges upon our ability to draw in durable investments. I'm therefore not suggesting that this is one panacea which will create all sorts of investment flows to come in. But I can tell you from the feedback that I have received personally, and this is a personal view, that this is definitely a factor which is being considered by investors while coming into India. Now, very quickly, there are objections against this as well. First, some of us might feel, oh my God, we are kind of letting the foreigners go away without paying any taxes, whereas domestics are paying taxes. That's not the correct representation. We are not exempting anybody from anything. They will pay taxes as per their country laws. Now, if their country like Singapore exempts capital gains from taxation, that is something for us to compare our LTCG versus Singapore's LTCG. Now, the second issue which I guess becomes a problem is at a time when our degrees of freedom are less in terms of tax collections, can we really afford to give up some tax collections which are otherwise would have happened? Couple of things here. One, we can always increase STT to make up for what could be a loss in capital gains. Remember, STT, when it was introduced in 2004, was supposed to be in lieu of LTCG. So that's one way of maybe addressing it. Second thing is we've got to see this more medium term. When investments come in, they eventually lead to GDP, value add, growth, which can then be taxed. So taxing the golden goose or the goose laying the golden eggs is not a great strategy when it's laying those golden eggs of growth, right? So I think there is a medium-term argument to be made to us becoming part of the global ecosystem and having a standard practice of destination or residence-based taxation.
So, okay, so one is, this is an ask that you think we should be having as well. Do you think something like this will be considered in the budget, number one? And if not, even if it goes to the medium term, how long would it take to actually put a system like this into practice?
So Hiral, I have no idea what's going to come out in the budget. I have very little insights into what the actual deliberations are. But I do think this is one area, and I also agree this is a very complicated subject. It's easy for me to give gyan here. Obviously, the tax authorities have to look at multiple factors before deciding. But I do think this is an aberration which has to be debated. Now, how long will it take to implement this? I don't think the implementation will take much time. I think getting our heads around and agreeing that this is the right thing to do, having that debate is what is required. I haven't seen enough debate about this. There's a lot of noise around this in the social media. But I think it's important to take a step back, a holistic look, rather than worrying about, aaj market niche hai, kuch karna padega. This is not that.
Not that.
This is a medium-term thing. I think we have to make it attractive for capital to come to the country. This source-based taxation, which is an aberration for us, is coming in the way of attracting good capital.
Yeah, this is an interesting point that you make from a FPI perspective, where the regime, the way it is done, needs to change. Yes, debates need to happen there. What happens when it comes to your domestic participants as well? Because I'm sure, always the question is, if someone is going to give up, someone else is going to pay the price for it. Sure. If a system like this happens when it comes to FPIs and FDIs, what happens to your domestic participants?
So first of all, I think any loss of revenues, at least headline short term, from the FPI front because of capital gains can be made up with STT and with long-term growth. But let's keep that aside. You're right. I do think there are certain aberrations in the domestic front that you and I face as well, which should be debated and addressed. One specific area which I look at pretty closely is the fact that we have this differential long-term capital gains tax across asset classes. Optically, it looks the lowest for equity, and then it goes on to a much higher level for fixed income, fixed deposits, and so on and so forth. Personally, I think that is a mistake, and it's a personal view. I think what's happening is because you're offering what looks like a much lower tax rate on equity, you're forcing people who don't have the risk appetite to go into equity as a class.
Yeah.
So somebody who's a pensioner, a retired person, you're effectively telling them, please invest into equity beyond your equity risk appetite. unless you want to see your wealth being eroded because of inflation. Think of it this way. If I'm earning 6% interest at a time when, let's say, inflation is 5%, my real rate of return is only 1%.
1%.
But if you're taxing the entire 6% at my marginal tax rate, let's say 30%, then frankly, you're taking away my wealth. It's not an income tax, it's a wealth tax.
Wealth tax.
So to say that, because you're getting fixed income and interest income, I will charge you at the marginal tax rate. I think that's wrong, because even fixed income investments, corporate bond, InvITs, REITs, etc., they have market risk, they have credit risk involved. You are helping capital formation. These are good instruments. And B, you're significantly disincentivizing investments into this and pushing people into equity markets. Now, one of these things that we've noticed over the last few years, Hiral, is that a lot of money is going in search of equity markets. And you could argue that there are pockets where there is overvaluation because there is so much of money which has flowed in. And I would argue a lot of that flowing in has happened because of our tax incentives. Now, 30 years ago, when investments into equities was not enough, then it made sense to incentivize money into equities. Today, when you have 14 crore unique investors all having an exposure into equity markets, do you really require these kind of incentives to push even more further money through? What I would much rather have is across asset classes, corporate bonds, InvITs, REITs, equity, we should have a uniform tax LTCG tax regime, and it should be uniformly low. Please don't bring equity higher and bring it in line with fixed income, because you want investments to happen. If it is uniform, then you and I can invest across different asset classes based on our risk appetite, rather than being forced to invest into something purely because of tax considerations. Today, tax consideration is a big factor into where we put our money. That should not be the case. We should be deciding based on a risk appetite rather than on tax considerations.
So you're talking about a risk agnostic taxation structure for the domestic markets, right? For participants. In that case, when you're talking about a base which is probably not as high, as low, could be average, according to you, what should that range actually look like versus what it is currently?
What I would suggest is the following. By the way, the US has something similar. So what it does in the US is that up to a certain level of capital gains across asset classes actually is exempt from LTCG taxation. Okay. What I would argue is currently in the new tax regime that we have, up to 12 lakhs of income annually is exempt from income tax effectively. I would argue up to 12 lakhs of total capital gains tax across asset classes, LTCG, should be exempt from tax. Beyond that, the equity number that we have, 12.5%, I think is fine. Now, what are the arguments against this? First argument against this would be, why should you tax, capital gains at a lower rate than income tax? Why would I pay 30% on income tax versus 12.5%? There, I think the fact that there is no indexation happening on your interest income, on your overall capital income, which means that you actually have a wealth tax effect rather than a capital gains tax effect if you have a headline number. I think that's important. Second thing is, we want to incentivize people to take risk for capital formation, whether it's fixed income, InvITs, REITs, equity, all these are important. And we do want money to flow into all these asset classes. So I think there's a strong argument why investments should get a lower capital gains tax, and it should be asset agnostic so that people choose based on their risk appetite. What other arguments could be there? Again, the problem of, does it mean tax collections come down at a time when we have to put money into education, skilling, and defense, and all of that? Again, I think incentivizing investments in the short run will eventually lead to more capital formation, more GDP growth, more value added, and therefore more tax collections to come over time. There's a Laffer curve in economics where, depending on the taxation rate, you actually maximize your tax income. I think incentivizing investments in India would make a lot of sense over the medium term to ensure that our tax to GDP actually goes up over time.
I think this is very interesting, a very pointed discussion that we've had when it comes to the budget, where we're talking about taxation in terms of FPIs, FDIs, and taxation when it comes to your domestic participants. And it does not really mean that it's going to be a revenue loss for the government if, we come into a system which is followed by global standards. In fact, probably, in layman's language, if I have to put it, your volumes go up.
Absolutely right.
Just for a layman to understand this better, your volumes in terms of go up, which in turn will automatically give you that tax structure, that quantum that you need in terms of your meeting the expenditure side as well.
I think you hit the nail on the head, Hiral. I'll just add one more thing. Look, what is the ideal situation for capital flow? People come with savings, they put it into patient risk capital. You have entrepreneurs who raise this money, create new businesses, therefore create new jobs and savings, which again comes back into the capital market. You want this virtuous cycle to come. If you incentivize this leg where people bring in money and then entrepreneurs take out the money and create investments, this part of more earnings coming through grows even more.
Yeah.
So in this virtuous cycle, this is the part of actual income being earned, which will eventually get you the taxes that you want to get.
Yeah.
So long story short, we have no choice right now but to have investments come into the country, particularly as the world dynamics are changing with AI and robotics and new energy forms and all of that. We have to get the next, semiconductor fab, all of that coming through in India. We have to incentivize investments, both domestic as well as foreign. If we do that, I think our aspirations of becoming a developed country over the medium term, don't worry about what happens tomorrow, day after tomorrow. I think that will be met if you create a climate which is conducive to investments.
I think the moral of the story is incentivize your investors, may it be domestic or your foreign investors, and that will get you the growth that you require as well. But thank you, Anand, so much for joining us. Always a pleasure to speak to you as well. So that was Anand Narayan, clearly talking about a very pointed discussion when it comes to incentivizing your FPIs and your domestic investors to achieve the growth that you need. And that's the growth agenda from his perspective. That's all that we have on this conversation. Thanks for watching.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा, कब से बोल रहा हूं, कोई सुनता ही नहीं।
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
M3M presents NDTV Masterstroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject for
Good evening. This is The Big Question on NDTV Profit. I'm Vikram Oza. And tonight, India finds itself at this critical inflection point in the global AI race. The Economic Survey has made it quite clear that even contrarian argument that India should not chase the big tech playbook of trillion parameter frontier models. Instead, what the economic survey is suggesting is that India is backing a bottom-up AI strategy, which is smaller, which is domain-specific, which has frugal models that are designed to solve real problems in agriculture, in healthcare, in education, and indeed governance. It's built on India's public digital infrastructure, and it has scaled through distributed innovation models. Now comes the policy moment over here. Ahead of Budget 2026, the government, we understand, is actively considering expanding the very definition of what a startup is. And that's where they're likely, from the sources we've been speaking to, they're likely to include AI, deep tech, even cooperatives, and crucially, to allow these companies the flexibility to pivot, take the risks, and innovate without being boxed in by legacy rules. But then, here comes the tension as well. Globally, if you see, AI power is concentrating very fast. Whether you talk about capital or compute or patents, even platforms, India accounts for just a fraction of global AI patents and private investment. And this even as India leads in AI hiring and research output. Which is why the big question this evening that we're asking on the show. While the world is moving towards supercomputers, these super intelligent machines, is India not doing enough as much as it possibly can, not realizing its potential? And if not, then why not? Is this the moment where we need to reassess our strategy towards AI to ensure that we are at the cutting edge where the world is moving? That's the debate question. And we have a panel to address this question right away. Let me introduce you to them. Tonight on the show, we have joining us Raghuvamshi Thakur. He's co-founder and COO of Prodoc AI. With him, Sunil Goel, Managing Director at Global Hunt. Jonathan Mendonca is with us as well, co-founder and director at Human Studios India. And Arpit Agarwal joins us. He's partner at Bloom Ventures. Gentlemen, thanks for making the time. Let's have this debate. Raghuvamshi Thakur, if I can begin by asking you, because we are going through the Indian Economic Survey, which argues that small and domain-specific AI models, they are strategically smarter than frontier models. From where you sit as a founder, is this approach actually going to reduce time to market, or do you think it's going to cap ambition too early?
So, to put this in perspective, actually, we are doing exactly what is being suggested. And we actually build small language models, and we are primarily focused on healthcare, and we're actually doing it with specific to specific disease specialization.
Right.
So we do see that small models behave much more efficiently when we are focused on a specific workflow.
Okay.
But what India is really trying to do, or we are trying to really do here, is not trying to build something and then start looking for a use case, but rather starting with a use case, starting with a workflow, and then trying to see what fits best to optimize and to deliver in that regard. That's where we are focused on. And I think that's the right approach.
You think that's the right approach? Arpit Agarwal, do you agree? India is attracting just over $11 billion in private AI investment between 2013 and 2024. Now you compare that to nearly $471 billion in the US. So the question is, does capital really follow this kind of frugal AI, or you think it's still chasing scale and dominance? Where is that kind of capital moving?
See, from a country perspective, one has to understand that certain choices are not available to you if you did not start thinking about them many, many years ahead of time.
Yes.
Like in case of China and US. Also, the size of economy and the amount of money available to be thrown at fundamental problems was very different over the last 5 or 10 years. And putting more money at this point of time will never help you win the race. It can only help you compete a little better. So I think the economic survey is very pragmatic in saying, let us not compete on the big scale. Let us not play with the same old game and with the rules that they have already set. But let us see what is the best use of AI and this new technology in our building of the nation. And as a consequence, it is very important for us to make sure that we are working for small language models. We are working on ensuring that We are using it for education and healthcare, as Raghuvanshi is already doing. And we are making sure that we are using the technology and possibly create a leverage that we can leapfrog. And that is the key word, I think, which has not been said so far. Can we leapfrog the world of AI? And can we get into an era where building the fundamental model was not necessary? And then you probably have a DPI effect or a Aadhaar effect or a UPI effect, which is possible. Competing on the same numbers and scale probably is not an option for our country and the level of resources that we can capture. Now, from an investor and startup perspective, there is growth available, and therefore investors will back companies looking at growing various use cases of AI. That is not going out of fashion. Yes, you will not have billions, maybe even trillions invested in infrastructure or building LLMs, but there will still be a handful of billions invested in application layer, in replacing human or augmenting their productivity and so on, which is the way the world is anyway going towards. So I think from an investor perspective, there's no challenge. And I think it's a very pragmatic call Economic Survey is already making.
So both of you are in agreement. Raghuvanshi Thakur, Arpit Agarwal, they seem to agree that the strategy that India is adopting right now, as we are seeing in the Economic Survey, is the one that India should go with. Sunil Goel, what do you say? The government is considering expanding this startup definition as well, and they want to allow pivots and deep tech risks. This is according to the information that we have, speaking to our sources, and perhaps it's going to get reflected in the budget as well. And this would happen on Sunday. But in practice, would you say that India's policy and our compliance frameworks are still punishing experimentation, still punishing innovation?
I look at it more positively. I say that, India is looking at the way it's launched its, Chandrayaan at less than a Hollywood movie cost. So we are trying to innovate our way of doing the work. See, today in AI, you have multiple layers. Each layer has its own ways to contribute to the whole AI system. And AI is a raw material, a very intelligent raw material, which has to be used by the industry or a function in specific areas. So today, if you look at, so every large company, those who have large countries, those who have very deep pockets, they are focusing on the compute powers. It means they're just trying to build the compute infrastructure, but very less focused on application and the data layers or the governance layer. So that's where we, I think, as a country coming up into the picture, we say that, okay, fine, you build the whole compute power systems with the huge infrastructures and so on. We can have an environment where a lot of shared services compute power can work, like today you have a cloud services which works on the shared environment. So we'll have an AI infrastructure which can help a lot of large, and mid and small kind of, companies to innovate their applications areas, top up the data layers and the industry specific requirements. So we look at it's innovations within the innovations in our country, right? So we say that, okay, how can I solve a healthcare problem? How can I solve a retail problem? How can I solve a banking problem? How I can solve the manufacturing problems? So that's where this application layer, which can be worked with the very minimum infrastructure, which can work with the very low investments and very super specialized job it is. So that's where I see that AI can create a magic for our country, and we can be a value for the whole world, where we'll go and solve the real-time problem on the ground, rather than simply saying that, okay, I have the largest, infrastructure. So tomorrow technology innovates and says that we do not need so much of GPU power or electricity to consumed by the AI infrastructure. Then what will happen to this infrastructure? And we all had witnessed the day DeepSeek was launched, and suddenly we had a huge slash in the US market for NVIDIA and other companies when they were not able to sustain their stock price because there was some other way of doing the AI had come up with a very low cost. So I think that India is well positioned with its resources and the people, what we have it in our country, a lot of STEM graduates, companies within that market. So for us, this is a step ahead. So I look at it more very, very positively. It's not a cost cutting or something, but it's like the
yes, but we're talking about potential over here. And at a certain point in time, I was looking at manufacturing data that's coming through, and our potential over there has always been higher than what we've been able to do. So to not be able to miss out when this race is concerned in AI, do we need to aim higher? This frugal AI model, because of lack of infrastructure, because where we are right now in the entire ecosystem, will our services sector be actually feeding into big tech? Jonathan Mendonça, this survey is warning against concentration of AI power as well in proprietary global platforms. From a creator economy and from a design perspective, do you think that dependence on foreign AI models already limits Indian innovation?
So as human studios, we work on meaningful integration of AI into education systems with governments and with schools. And what we can see in this, okay, the power of the model is not as important as how something is used. And I think R&D is incredibly expensive, but while engineers come up with the technology, it's the practitioners who think of the unique use cases. So when you hear people saying the future is going to change, but they don't give you an exact way in which it's going to change, it's because the engineers don't know. The answers are going to come from the grassroots, going to come from the global south, and is especially going to come from India. So while it's really expensive to build an AI model, like R&D is about $10 billion, right? And that's just in the making cost, not the operating cost. Our entire budget last year was around 600 billion. This would mean a 1.6% allocation of our entire budget towards developing an India-specific AI. And to put that into comparison, we spend approximately 4.5% of our budget on education. So to ask a country like India to spend more than 1.5% of our entire budget on something, there needs to be certainty. We cannot be taking bets. Right? So there isn't going to be this one big AI. There are going to be many, many, many AIs that compete with each other, made by different countries. And if we look at the past, while India was not the first to launch into space, not the first to get a satellite into orbit, and definitely not the first to walk on a moon, right? When the time was right, as my colleague mentioned, ISRO's Chandrayaan-3 was able to launch much cheaper than NASA and at a fraction of the cost of even movies. Right? So when they say a smart person learns from their mistakes, but a wise person learns from others' mistakes, I think what India is choosing to do really wisely is wait, see how things pan out a little bit. In the meantime, create opportunity for the masses.
Right.
Right? And when the time is right, India will build its own AI at a fraction of the conceivable cost of what we can imagine today.
But the way technology is moving, would that be too late is the obvious question. Raghuvamshi Thakur, India is leading when you talk about AI-related hiring globally. Yet, when we talk about India, it holds just 0.37% of AI patents. Does this signal execution strength, or do you think this is a worrying factor, the lack of intellectual property ownership?
So, okay, so I just wanted to address a couple of things, what Sunil mentioned also before, right?
Yes.
So, when we actually talk about what we're building, right, we are in a market which is the most diverse, most complex, and extremely price sensitive, which means anything that you build here is definitely to sell anywhere across the world, right? And we are building with the global standards, so there is no, we're not cutting corners anywhere, right? So when we talk about building small language models, Vikram, we are not building only for India, we're building for the world. Yeah. So eventually we will get there. We will actually be able to access much bigger market. About the talent pool that you talked about, right? Again, from our point of view, yes, there is a considerable investment that is going in from a, let's say, there is a lot of Indian talent pool that is currently working for global companies. But I think what we have seen before and what we also continue to see is that more and more of this information gets trickled down to, let's say, the larger data sets. And we will surely have way more, let's say, expertise that is getting built in. And with the amount of technology that is changing, I think this is a fantastic place to be. Again, irrespective of how we are participating in it, I think the participation is what matters. And I think that's where we are right now.
So that's the question. Then are we settling for too less? Because we have the talent pool. Raghuvamshi, this is the problem, or maybe you don't see it as a problem, but we seem to have that talent. We can take it notches up. What's holding us back is it capital? Is it our infrastructure that we currently have? Since we cannot afford it, is this what we are settling for? Yes, there is robust potential here, but the strategy, the bottoms-up approach, is that the one that we need to go with? Arpit Agarwal, this frontier AI is demanding massive compute and energy, something that India lacks at scale. So are investors going to be comfortable funding applied AI businesses without this clear path to defensible moats?
See, as I said earlier, it is not possible for you to participate in a race where you are already entering maybe 10 years later. A lot of work has already happened. IP and patents is just a signal that a lot of work and the ecosystem has been built in China and US and elsewhere.
Right.
So if you start today, you are not going to be able to win it very easily unless you throw everything at it, including your kitchen sink. So that's one thing. Now, if you don't have that option available and you're being pragmatic about what is the nation's priority, at that point of time, you decide that sure, I will settle, or maybe as we are settling in some sense, and there's so much innovation still possible at this application layer, which can actually solve the real problems of our manufacturing, of our people, of labor here, and healthcare, education, and so many industries, which is useful to our country. I think the point to understand is, let us not attempt to solve or play with someone else's game rules, and see if we can build a new ecosystem. You had mentioned about this new classification of moving companies from deep tech to startup to MSME. I think those are the enabling regulations which will allow you to play a very different game that you are playing so far.
Right.
And the whole focus on deep tech allows you to make sure that it remains in nation's consciousness that innovation is important. And please understand, we are not a nation known for its innovation or its technology. In a very limited part maybe, but mostly as a services organization, our largest IT companies are services giants. It is very important for us to start changing the culture slowly, and that is the right direction the economic survey is intending to take.
Right. So the route to be able to do that, if we are going to switch, is it going to be a gradual change? And how gradual, and what is the glide path, as it were, to that kind of change? Sunil Goyal, this economic survey is recommending pacing of AI adoption to avoid labor displacement of any kind, because that's an important piece for us. Employment is an issue. So is this pragmatic policy making, in your opinion, or do you think this is a dangerous slowdown in what is clearly a fast-moving global race?
See, I believe that you cannot ignore technology by saying that, oh, I want to save this job because this is going to replace it. Rather, we can skill our people, we can upgrade it, we can look at the new avenues where, what are the interventions like technology can do it, and what are the interventions human can do it. From a policy perspective, I believe that controlling it like from a governance and, like a regulatory perspective, like you have a lot of deep fake, which is a part of the AI, which gets used and, which can have any repercussions, further to it. Those areas are important to have a policies of misutilization of the AI. But the right utilization, I think we should go ahead further and penetrate it further. I see in India, reform in the judiciary systems, AI can do wonders, right? I mean, it can set the example for the world where we become a true examples in terms of how do we reform our judiciary system by using the AI and then putting it across to them. The similar way, if you go and look at today healthcare, even if you look at manufacturing, if you look at e-commerce, a lot of those areas which we have been the hub for the whole, global markets, companies are coming to our country to have the resources. So we can upgrade our resource to how to, use the AI to increase their productivity, how we can become more effective for the world in terms of services or product or innovations. This is also sometimes get a little generalized by saying that we do not innovate, we do innovate, but we remain cautious and we kind of, wait and watch, like if you have a limited fund to invest in a certain areas, how much you can take an open risk, you can take a calculated risk, or you'll kind of wait everyone else to do it and then you'll try, start doing
yeah.
it. So that can have a different propositions, but
yes.
Yeah, I believe that we are well positioned to work a lot on application layers, data layers, and model development.
Yes.
Other than compute power, rest all is in our control.
But the point is that we can't just be well positioned. We have to make the move right now. That's the real ask. Effective for the world, yes, we proved that. But here's where an Elon Musk, Jonathan Mendonca, we're hearing Elon Musk in Davos when he was speaking over there, and he's warned that AI could surpass collective human intelligence by the year 2030. So now when we look at in the Indian approach, which is the bottom-up approach, does it prepare creators, does it prepare workers for that kind of future? Or, there is going to be just this kind of delaying of the shock, as it were, like Sunil Goyal is pointing out, that we are well positioned. But if we don't move now, and really have an entire approach which is going to tell us where we need to get in how much time, we're not going to be able to do that. And the time is now because technology is moving so fast.
Yeah, absolutely. If we see one of the largest valued companies like Perplexity right now, they've not built their own AI, right? They've built a wrapper or a layer to it. So I think we need to draw a distinction between what is a race and what is just peer pressure. And India has been pretty smart and strategic about not falling prey to absolute peer pressure, right? Adoption of cutting edge technology is going to take a lot of time. As Elon Musk also mentioned, it will take at least 20 years before all vehicles become electric if we start from today and stop the manufacturing of any non-electric vehicle. So there is a time lag for adoption to take place. And I think what India can do and is focusing on is increasing the rate of adoption of technologies that are available rather than going disproportionately investing in a technology that has not yet been figured out to completion. I think what we need to be asking ourselves, and which is what we encourage teachers to do in school as well, is ask yourself, what is my favorite part about being a teacher? Can I make that my full-time job? And can we redirect the superintelligence to automating or assisting with other aspects of our life that are taking us away from being the best versions of humans and the best versions of ourselves?
It's an important question to ask. And if we start this at the school level, perhaps we are going to get there. But the timing is going to be of the essence, like I keep saying. Right now, Raghuvamshi Thakur, this open source AI is lowering the entry barriers. But the other side of it is that it weakens any kind of monetization. So for Indian startups, I'm wondering whether this kind of openness is going to create opportunity, or do you think we're creating a vulnerability of sorts if you're going to have this bottom-up approach?
Yeah. So again, I wanted to also just address something that you asked before, right?
Yes.
The very interesting part is that at this point of time, the one reason, so are we short of capital? Yes. Are we short of compute resources? Yes. Is government already trying to take actions in that direction? Yes. Are they enough? Maybe no, right? Let's be honest about that. One of the biggest reasons why we should be investing more in the large language models is primarily from a bias setting point of view, right? If everything is trained on data sets that are primarily, let's say, from Northern Hemisphere, then most of the information that you get will also be biased, right? So that's one of the very big concern for us. And that is why we have been trying to work towards building models which are more trained on the local data set, right? And that becomes more relevant. And especially in healthcare, this is more and more relevant. Now, coming back to what you were asking, right? So should we actually be, sorry, I kind of missed the train of thought. So Vikram, can you just repeat the last part?
Essentially, I was asking whether at this point in time, we need to kind of move that much faster so that, you know, the kind of labor that we have, the kind of resources that we have at our disposal, we're able to do the catch-up job that much faster and have a total path for it.
Correct. So I think open source ecosystem is definitely a plus for us. Yes. It is not working against us, it's working in our favor.
So it's not a vulnerability, you're saying?
Definitely not, especially from where we are at this point of time.
Okay.
I think this is definitely a plus, right? For example, simple examples like voice models, the way they have been evolving over time, anything that you did a year and a half back is not relevant anymore, right? And open source ecosystem lets anybody jump into that and then build from there, right? So that makes the system more flat, more open. So this is definitely a plus for us. So that I think we should continue to contribute and become part of that ecosystem. Yeah?
But meanwhile, Jonathan, if I was to ask you, because of your entire take on how this AI can reshape our creativity, the work that we do, and identity as well, then do you think should India optimize first for the kind of economic growth trajectory that we seem to be aiming for, the Viksit Bharat dream, or do you think this is going to be about human resilience?
So if you look at the past 25 years, India focused heavily on economic development.
Correct.
The next whole era needs to be on social development because it's not about change. Change is never a bad thing. When the rate of change happens faster than the way society evolves, that is something to be concerned about. So what India is not focusing on is the reimagining part. What would a reimagined work life look like? What would a reimagined school look like? What would reimagined economies look like in the future? Right? And our biggest strength is our people. So we need to stop thinking about how people are an impediment. Think about what investment in people is going to help India leapfrog and operate by completely different metrics. Play by our own rules and leverage something that almost no other country has, a workforce of so many people who are able to live in this new paradigm or this reimagined world much better than the rest of the world, right? It's a way for India to get back on the map, okay, the way that we used to pre-British era, right, where the world would look to India for a lot of answers. Yeah. And I think, I think only when we are able to take that role of playing the reimagined society or play the leaders of the reimagined paradigm, will people start looking to us again?
Correct.
So coming back to,
Yes, indeed. So that's where I was getting at, because 5 years from now, if investors are looking back at India's AI strategy, and 5 years is not too far away, of course, projections by Musk are about 2030, but even earlier than that, if we are to look at India's AI strategy as it stands now, which all of you seem to be endorsing, are investors going to look at it as a disciplined, a differentiated kind of approach, or is it going to be seen as a missed window? Sometimes when we look at our manufacturing, that's what it tends to be, and that's really the heart of the debate tonight. India is not trying to outspend the world on AI. It is trying to outdesign it, for sure. And the economic survey is making the case for usefulness over dominance. Inclusion is being put over speed, and resilience over any kind of hype, like we discussed, the peer pressure. Now, whether that proves to be strategic foresight or is it going to be cautious restraint is going to depend on what Budget 2026 is going to deliver. We're going to be watching out for that, whether they speak on capital towards AI, compute, talent, the policy follow through, all of that is going to be very closely watched. So thank you, my great panel, for joining us with your perspective. Raghuvanshi Thakur, Sunil Goel, Jonathan Mendonca, Arpit Agarwal. Thank you for those sharp and deep perspectives. And that's about all we could pack into this edition of The Big Question. They keep rising as we race towards Budget 2026. The economic survey is out. We are going to decode it even further as the evening wears on. But for the moment, from me, Vikram and the entire team, good evening.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंह। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफटाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी। सो कम एंड विटनेस यो हनी सिंह, दिस इज माय स्टोरी।
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person, has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा, कब से बोल रहा हूँ कोई सुनता ही नहीं.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
M3M presents NDTV Masterstroke Art Awards.
Hello, good afternoon viewers. You're watching Market Express on NDTV Profit and I am Himakshi Bahugna. Let's take you through the key market action, big movers and also top business stories after the closing bell. First up, let's see how the markets have fared today. So, markets have ended on a strong note after a tepid start as benchmarks have posted a sharp recovery in the second half driven by technical bounce back. And Nifty has also ended above 25,400 levels, recovering over 300 points from the day's low, registering a third straight day of the gains. And in terms of the broader markets, it was a relatively weak day as both the mid and small cap index have underperformed the benchmarks. Talking about the sectoral trades now, strong run continued for metals, while the FMCG and auto counters ended the day with selling pressure. And the free fall continued for rupee as it touched the record low of 92.02 against the US dollar, breaching its previous record low of 91.96, which was hit just last week. So rupee was weighed down by the sustained foreign capital outflows and also increased demand for the dollar hedging. Now let's look at the counters that were buzzing away in trade and have posted their Q3 results. First up, we have Gland Pharma. So that has posted a strong third quarter with profits and revenues rising over 20% year on year. Growth is also driven by solid momentum in its key US market backed by new product launches and also higher contract manufacturing activity. Europe and India also delivered robust gains on better volumes and also demand. Importantly, its French subsidiary, Cenexi, has turned break-even this quarter, adding to the company's overall performance. Next up, we have ABB India. So its shares have surged more than 9% after the company, flagged a sharp jump in India order inflows for the fourth quarter. And ABB says that orders from India rise strongly, far ahead of the street estimates, and this is signaling a clear rebound after the several weak quarters. Now, the strong inflows reinforce confidence in India as a key growth market for the company. Let's look at some brokerage notes now. Brokerages are turning cautious on Maruti Suzuki after a weaker than expected third quarter. Citi, Jefferies and Morgan Stanley they've cut target prices, citing an EBIT miss and also margin pressures from the commodities. While all the three remain positive on volume growth and near-term demand, concerns linger over margins and also market share gains and the long-term sustainability of the demand. In fact, Nomura remains bullish on car trade, upgrading its rating to buy and also raising the target to 3026. Now, the brokerage is seeing some healthy growth and also strong operating leverage, driving margins with revenue expected to grow at 21% annually over FY 26-28. Now, market shares, have gains and also increase the digital ad spending in the PV industry. They're also expected to further support growth, while the initiatives in OLX could, provide additional momentum to the company. Next up, we have KPIT Tech that has reported a mixed third quarter with revenue largely flat sequentially, but profitability is taking a hit here. Margins and also net profit have declined, and this is weighed down by the one-time impact linked to labor code changes. Now, excluding this exceptional item, the underlying business remains steady, though near-term margin pressure stays in focus. Next up, we have Canara Bank that has reported higher profits in its third quarter with a strong year-on-year increase. Asset quality has improved further as both the gross and net NPAs have declined sequentially. If we talk about the core income growth, so that remains muted while operating profit rises to a healthy pace. Provisions stay largely unchanged, aiding the overall earnings visibility. Next up, we have SBI Life that is under pressure in trade as investors had hoped for an upgrade in the guidance. Industry margins remain tight while profit booking adds to the selling pressure. Now, despite the decline, the company continues to operate in a strong life insurance market with steady demand. Another stock that was buzzing away in trade was Piramal Pharma that has posted a challenging third quarter with revenue slightly down and also net profit turning into a loss. Now, the slowdown is largely due to CDMO order delays and regulatory issues and also inventory destocking. Now, while operating margins were under pressure, early signs of recovery are visible since October. Now, consumer healthcare and also hospital generics remain steady, and this is supported by strong growth in power brands and also complex products. Next up, we have Vodafone Idea that has laid out its roadmap at the analyst meet, aiming for double-digit revenue growth and also tripling the cash EBITDA over 3 years. And the company is planning a 35,000 crore of debt raise and also will hold off, on equity infusion for now. Promoters remain fully committed while a tariff hike is, seen as critical for achieving financial targets. And analysts are also noting growing ARPU, but also continued, subscriber losses, suggesting the company is at a key inflection point. Next up, we have Ajmera Realty reports a dip in third quarter numbers with revenue and net profit down year on year. EBITDA also falls and margins narrow slightly. The results reflect ongoing pressures in the real estate sector, though the company continues to maintain a healthy operating margin above 30%. Let's look at some more brokerage notes now. Jefferies is maintaining a buy on L&T, keeping the target at 4,715 rupees. The brokerage also expects strong order flow and also improving execution to support the growth. Margins in the engineering and construction business remain healthy, even with a 20% year-on-year rise in the international E&C revenues. Management is also confident of crossing its 10% FY26 growth guidance, with a key trigger coming from the unveiling of a 5-year plan in May 2026. And US shares of National Security Depository, or the NSDL, hit a near 6-month low after the company has posted a weaker third quarter. Now, profits have fallen sharply. While if we talk about the revenue and operating performance, so they have also dipped sequentially. Now, investors are cautious, even as broader markets are showing some sort of positive momentum. And shares of defense shipbuilder Garden Reach Shipbuilders are trading higher after the company has posted strong third quarter results. Profit has also jumped sharply, driven by higher revenue and also improved operating performance. Now, the firm also declares an interim dividend, keeping investors upbeat. And next stock is Balaji Ameen. So it has also posted a mixed third quarter with revenue up modestly and also EBITDA rising strongly. Margins have improved on better operating efficiency, though the net profit has dipped slightly year on year. The results also reflect steady demand, while the cost management, supports the company's earnings performance. And viewers, metal prices are moving higher across the board, driven by a mix of supply constraints and steady demand. Aluminium gains, as China keeps a tight lid on capacity. Copper rises on supply disruptions and also strong demand from the electrification and artificial intelligence. Gold and silver, however, find support as investors seek safety amid global uncertainty. Zinc prices have also firmed up on the falling inventories, and back home steel prices jumped sharply, and this is helped by policy support, seasonal demand, and also rising input costs. Next up, we have Hindustan Copper that has hit a fresh record high as metal stocks rally across the board. The surge is driven by soaring global copper prices and also tight supply conditions. And this is also lifting the investor sentiment in the base metals. And other key metal stocks are also participating in the up move, though analysts are cautioning valuations may be stretched after this strong run. Now, viewers, Indian Energy Exchange faces continued headwinds after its Q3 results as regulatory uncertainty weighs on the stock. Trading volumes rise, but investors remain cautious due to ongoing debate over the market coupling framework, which could change how electricity prices are discovered and also affect the company's dominant position. Now, the overhang from this regulatory debate, keeps the sentiment weak, even as volumes grow year on year. And India's economic survey paints a picture of strength. India remains the world's fastest growing major economy, with FY26 GDP growth seen at 7.4%. Domestic demand is also powering the recovery, with private consumption at a decade-high share of GDP. Now, the investment cycle is strengthening too, with capital formation touching 30% of the GDP. Inflation has also cooled sharply to 1.7%, giving policymakers comfort. Now, fiscal consolidation continues without hurting growth. And while the macro picture looks solid, the survey also lays out how India is recalibrating its external strategy. The economic survey says that India's expanding network of the free trade agreements is emerging as a key pillar of its trade strategy. Now, deals have signed with the UK, UAE, Australia, EU, Oman, and New Zealand are helping, provide reliable market access amid this global uncertainty. Now, these agreements are encouraging the export-oriented firms to scale up production and also integrate deeper into global value chains. Now, the survey also underlines that competitiveness will increasingly depend on state-level execution, from infrastructure to regulatory stability, making states critical partners in India's export growth story. And even as India strengthens trade ties with multiple partners, talks with the United States remain crucial. So the economic survey says that the ongoing trade negotiations between India and the United States are expected to conclude this year, offering potential relief on the external front. Now, currently, Indian exports to the US face an effective tariff of nearly 50%, among the highest imposed on any country, and 6 rounds of talks have already been held, though progress remains gradual. The survey acknowledges global headwinds as well, slower growth, tariff disruptions, and also the capital flow volatility, but believes a successful trade agreement with the US could significantly reduce the uncertainty for India's exporters and investors. And beyond trade and growth, the survey also focuses on future of India's workforce. The economic survey places strong emphasis on labor reforms, stating that effective implementation of the 4 labor codes will be crucial for expanding formal employment and also improving social security, especially for women and the gig workers. Now, with employment structures evolving rapidly, the survey calls for flexible regulations and also dynamic labor policies. It highlights the need for targeted skilling, vocational pathways from the school level, and also stronger industry-linked training. It also proposes integrating platforms like the eShram, National Career Service, and also skilling the databases into a unified digital employment infrastructure. But alongside optimism, the survey also delivers a clear warning. The global environment is getting riskier. The economic survey strikes a note of caution on the global outlook, warning that the world is becoming less coordinated and also more vulnerable to sudden shocks. It flags a 10 to 20% of probability of cascading global crisis triggered by geopolitical tensions, leveraged AI investments, and also financial tightening. Capital flow volatility is also identified as India's biggest macro risk, with the rupee described as the punching below its weight. Now, the survey also warns about the rising fiscal populism in the states, high input costs hurting the manufacturing and competitiveness, and also long-term risk to export the momentum. US Prime Minister Narendra Modi on Thursday have underlined 3 pillars driving India's future: reform, perform, and transform, as the economic survey was tabled in the parliament ahead of the union budget. Now, PM Modi has said that these objectives remain central as India embarks on the next phase of its development journey. He has stressed that the coming 25 years are crucial for realizing the vision of Viksit Bharat, with a self-confident India emerging as a beacon of hope for the world. Now, the Prime Minister has reaffirmed that the next generation reforms will propel growth, and also highlighted that India's democracy and demographic strengths are powerful assets on the global stage, and his comments signal continued emphasis on reform momentum to sharpen the competitiveness, enhance ease of doing business, and also build long-term economic resilience. And several major dating and consumer platforms, including Bumble Match Group, Panera Bread, and also Crunchbase, have reported cybersecurity incidents. According to reports, the hacker group Shiny Hunters has used advanced phishing and voice-based social engineering techniques, to gain limited network access. And companies say that there is no evidence of login credentials or financial data being compromised, but law enforcement has been informed. Cybersecurity experts are now warning of a broader campaign targeting large organizations, urging users to enable two-factor authentication, update passwords, and also stay alert to suspicious activity. And viewers, Tesla is preparing to wind down production of its iconic Model S and Model X vehicles, marking the end of two programs that shaped its early success. Now, CEO Elon Musk has said that the forefront factory will now be repurposed to scale production of the Optimus humanoid robots. Now, the company is doubling down on the autonomy, with Musk stating that the future of Tesla lies in driverless technology and also robotaxi fleets. And Tesla also expects its Cybercab autonomous vehicle to eventually dominate the production, reflecting a strategic shift from traditional car manufacturing to AI-driven mobility and also robotics. Here's onto some national news now. Baramati was steeped in grief as Maharashtra bid farewell to Deputy Chief Minister Ajit Pawar, who died in a tragic plane crash. His last rites were performed with full state honours at the Vidya Pratishtan ground, where thousands of mourners gathered, chanting Ajit Dada Amar Rahe. Union Home Minister Amit Shah, Union Minister Nitin Gadkari, Maharashtra Chief Minister Devendra Fadnavis, Deputy Chief Minister Eknath Shinde, and NCP Patriarch Sharad Pawar were among those present. Ajit Pawar's sons Parth and Jay led the funeral pyre as family members and supporters struggled to hold back tears, marking an emotional moment in Maharashtra's political history. And even as Maharashtra mourns, political developments continue to unfold in neighbouring Telangana. In a major development in the Telangana phone tapping case, a special investigation team has issued a notice to former Chief Minister and BRS Chief K. Chandrasekhar Rao, asking him to appear for questioning on January 30th. Now, the SIT has offered flexibility in location, citing his age under legal provisions. Now, the case relates to allegations of illegal phone surveillance during the previous BRS regime, involving politicians, journalists, business leaders, and also members of the judiciary. Earlier, KCR's son, KT Rama Rao, and senior leader D. Harsh Rao, Harish Rao, were also, questioned by the SIT as the probe widens. Meanwhile, central agencies have stepped up action in financial crime cases. The CBI has launched extensive search operations across multiple locations in Kolkata in connection with an alleged bank fraud worth nearly 1,000 crores. The raids are being conducted at the offices and residence of promoters of a city-based finance company. Now, the investigators allege that the company siphoned off funds after availing large loans from a public sector bank, submitting documents to secure credit but later defaulting on the repayments. And the alleged diversion of the funds have occurred between 2014 and 2020. Central forces have been deployed at raid locations as the probe intensifies. And in some tragic news from Kolkata now, the death count in the fire near Kolkata on January 26 has risen to 21, with 13 more bodies found from the gutted buildings, while 28 people are still missing, raising fears that the number of fatalities is likely to increase, the police said today. Now, the authorities have imposed prohibitory orders in the area, restricting the public movement ahead of the proposed visit by leader of the opposition, Suvendu Adhikari, and also other BJP leaders. Now, the devastating fire has reduced two godowns to ashes and also a manufacturing unit of a Momo company at Anandpur in South 24 Parganas district close to the city. Now, officials said that DNA mapping of the 21 recovered bodies or body parts is likely to begin on Thursday to establish their identities. Whereas senior officials from the United States, Denmark and Greenland have begun discussions on a new framework deal over Greenland aimed at addressing American security concerns in the Arctic without crossing Denmark's red line on sovereignty. Now, the talks come after President Donald Trump has announced a potential framework agreement pledging to hold back tariffs on the European nations opposing U.S. efforts to increase its presence on the strategic Arctic island. Now, Denmark and Greenland have made it clear that they are open to expanding cooperation but not to ceding control. Now, the negotiations may also involve revisiting the decades-old U.S.-Denmark defense agreement governing the American military activity in Greenland. And while Washington looks to expand influence in the Arctic, tensions are also rising sharply in the West Asia. The European Union appears poised to impose fresh sanctions on Iran's Revolutionary Guard following Tehran's deadly crackdown on nationwide protests. Now, activists are saying that more than 6,300 people have been killed in the unrest, and the move comes as the U.S. ramps up pressure, deploying warships, including the USS Abraham Lincoln, to the region, and also warnings from President Donald Trump of possible military action. Iran has responded with its own threats, raising fears of escalation across the Middle East. Now, meanwhile, economic pressure is mounting, with Iran's currency, falling to a record low of 1.6 million rial to the dollar, further deepening domestic unrest. And viewers, Vietnam and the European Union have upgraded their relationship to a comprehensive strategic partnership, Vietnam's highest level of diplomatic engagement. The announcement was made during a visit to Hanoi by the European Council President Antonio Costa. Now, as both the sides seek to stable the partnerships amid growing global trade uncertainty. Now, the move places the EU on the same diplomatic footing as major powers like the United States, China, and Russia. Now, leaders on both the sides have stressed the need for predictable cooperation, especially as US tariff pressures reshape global supply chains. Now, trade ties between Vietnam and the EU are already anchored by a free trade agreement signed in 2020. In fact, India and Saudi Arabia have reaffirmed their commitment to strengthen counter-terror cooperation during a high-level security dialogue in Riyadh. Now, both the sides have condemned terrorism in all forms, including cross-border attacks, and also reviewed emerging threats globally. Now, discussions are focused on combating terror financing, preventing misuse of technology, countering radicalization, and also strengthening legal and law enforcement cooperation. Now, the meeting was held under the framework of Strategic Partnership Council, signaling deepening security collaboration between the two nations. And on to some sports news now. Sri Lanka's iconic Sinhalese Sports Club ground in Colombo has received a major upgrade ahead of the T20 World Cup, with the installation of state-of-the-art floodlights for the first time in its 75-year history. Now, the development makes SSC the fifth venue in the country capable of hosting international day-night matches. Now, the venue will host 5 T20 World Cup games, beginning with the Pakistan versus Netherlands clash on February 7. And Sri Lanka Cricket says that the new LED lighting system meets the global broadcast standards, offering better visibility for players and also an enhanced viewing experience for the fans. Now, the upgrade further strengthens Sri Lanka's readiness for the global tournament. And with the big ticket matches lined up, security preparations are also being stepped up. Sri Lanka is stepping up security measures ahead of the T20 World Cup, with elite armed units set to be deployed to protect the teams and also venues. Officials say that there will be special focus on high-profile matches, particularly the India-Pakistan clash scheduled for February 15 in Colombo. Now, the two teams are expected to face each other at least once in the group stage. Now, Sri Lanka is co-hosting the tournament with India and will stage 20 matches between February 7 and March 8. Authorities say that the enhanced security is aimed at ensuring the safety of players, officials, and also spectators throughout the tournament. Viewers, that's all on Market Express today. Thanks for spending your valuable time with us. Keep watching NDTV Profit for continuous market coverage.
लोग कहते हैं कि जिंदगी एक फिल्म की तरह होती है, लेकिन मेरी जिंदगी सिर्फ एक फिल्म नहीं, एक ब्लॉकबस्टर फिल्म है। बचपन से पता था मेरे सपनों में दम है, आगे नहीं सबसे आगे जाना है, स्टार नहीं सुपरस्टार बन के दिखाना है। नाम मिला, फेम मिला, प्यार मिला, I was not just running, I was flying। सबकी जुबां पे बस एक ही नाम, यो हनी सिंगर। लेकिन फिर ब्लॉकबस्टर कहानी में आया एक ट्विस्ट, 7वें आसमान से सीधा गिरा मैं जमीन पर। फिर क्या, खुद पे काम दोबारा शुरू, फैंस ने फिर प्यार दिखाया, फिर स्टार नहीं सुपरस्टार बनाया। है ना मेरी जिंदगी एक ब्लॉकबस्टर फिल्म। शुक्रिया आपकी प्रेयर्स का और आपके प्यार का। कॉन्सर्ट्स तो आपने बहुत देखे होंगे, बट दिस इज गोना बी कॉन्सर्ट ऑफ अ लाइफ टाइम, क्योंकि मेरे फैंस ही हैं मेरी विक्ट्री, मेरी हिस्ट्री, मेरी ग्लोरी. So come and witness Yo-Yo Honey sing. This is my story.
On 1st February every year, hope becomes a question. Will I save more? Will I grow more?
साहिबान, मेहरबान, कदरदान, कुछ अच्छी खबर मिलेगी क्या?
How will this budget change my life? One person has all the answers for Bharat. Union Budget 2026 on NDTV Profit.
NDTV Profit ऑन करो जरा. कब से बोल रहा हूँ, कोई सुनता ही नहीं.
A very special moment for us as we announce NDTV Masterstroke, the NDTV Art Awards.
M3M presents NDTV Master Stroke Art Awards. An odyssey of creative brilliance where the masterpiece meets its ultimate recognition.
NDTV bringing this subject forward would have a great integrity of putting it forward where people could understand the importance of art.
This award that is being started, I'm sure is going to be amazing.
Art for India and for Indians is an expression of our Atmanirbharta.
It's actually quite a formidable jury, so I think we'll reveal a lot more as we go along.
This is an amazing platform, I think, today what you're doing.
I have always had this inclination towards art, and if we don't collaborate and bring those artists forward, give them a platform, who else will?
Honoring the masters who define our cultural landscape, M3M presents NDTV Master Stroke Art Awards. Coming soon on the NDTV network. 1st February 2026. What will change? Will costs be more handy? Will my essentials get cheaper? Will my business grow bigger? Will I get richer? Will loans get easier? Will shopping be more fun? Will the prices drop? So I get more. What will happen? Union Budget 2026 on NDTV network.
Alright team, our new water show is ready. Now we need a promo. Something cool, something sharp.
Well, I'm sure we'll be having outstanding reviews, solid suggestions.
Expert advice. The latest trends. It's a lot simpler. We'll help people make the right auto decisions. It's got the cool stuff, geeky stuff, serious stuff, all of it, so that you can discover, decide and drive. I'm Siddharth Sharma and I am your Automate.
This budget, India speaks from every direction, from metros to mandis, from factories to farms. NDTV Profit reports from 36 states and union territories. With our ear to the ground and our pulse to what people want. Watch Budget for Bharat, only on NDTV Profit. What Bharat wants, what Bharat expects. We are listening. Before the Finance Minister speaks. Budget 2026, the growth agenda. Only on NDTV Profit, for your profit.
Budget 2026 isn't just about numbers, it's about direction, it's about growth. And at NDTV Profit, we are tracking it from the ground up.
We bring you market-moving insights with the most credible voices.
It's about your wealth. We bring clarity that will define your financial future.
From the heart of the capital to the pulse of the streets, we decode the budget for you, for your profit.
Budget 2026, the growth.
Economic survey forecasts robust growth momentum in FY27 for India despite global headwinds. Expect inflation to edge up due to base effects. Market ends higher for third consecutive session with Nifty ending about 25,400 levels and Sensex gaining close to 200 points. Sectors finish mixed with metal as the top gainer. L&T contributes the most to Nifty's gains. Vedanta's Q3 profit and revenue beat the estimates amid solid volumes growth. Profit rises to 7,800 crores while the revenue jumps 17%. Tata Motors Commercial Vehicles third quarter profit plunges 48% on the back of exceptional charges, but EBITDA jumps around 41%. Margins also expand. Swiggy's net loss widens in Q3 to over 1,000 crore rupees. Revenue surges by 54%. Meanwhile, Dabur reports steady third quarter numbers. Net profit grows over 7%. Margin expands marginally. Brent hit $70 a barrel for first time since September after Iran responded to Trump's military action threat and warned it to make a nuclear deal. Country's mission in the UN says it stands for dialogue, but Tehran will defend itself and respond like never before if pushed to do so. Supreme Court stays UGC's recent rules on caste-based discrimination in educational institutions, issues notice to the centre on UGC's need to re-examine the rules. Andhra Pradesh government cracks down on misuse of social media. IT Minister Nara Lokesh says the state will study legal frameworks for age-appropriate access to social media sites. Concerns invites Meta, X, Google and ShareChat to the next GOM meeting to examine global best practices. Hello and welcome. This is Profit 360 on NDTV Profit and I'm Himakshi Bhogna. Along the next half an hour, we'll bring you the latest from the markets as well as national and international news. And first up, let's see how the markets have fared today. So markets have extended gains for third straight day as FIIs resumed buying after 15 sessions. And sectors also end on a mixed note. Broader indices underperformed the Nifty and also Sensex. Let's go across to my colleague Mahima for more on the day's market action.
Right, so overall, I think markets today, after the volatility that we saw during the trade, did end on a positive note. In fact, the Nifty ended in the green for the third consecutive session yesterday. After 15 days of sell-off, we saw FI buying. Today, we'll have to see as to how that has panned out. But overall, above the 25,400 levels is where we ended on the Nifty. Benchmarks did outperform the broader markets. Tata Steel Eternal gained the most in Nifty 50. Axis Bank, L&T, Tata Steel Eternal gained over 3% in trade. On the closing. The Nifty mid-cap 150 ended almost flat. In terms of the gainers, it was led by Mangalore Refinery as well as Gland Pharma. Gland Pharma, of course, on the back of its numbers. Nifty small cap 250 ended almost flat, slightly in the red, which was the rally was led by Hindustan Copper, locked in upper circuit, and GMDC. Five-star business as well as Balaji Amines fell the most in the small cap 250. In terms of sectors, it ended on a mixed note, but overall, Nifty metals gained the most, almost a 3% rally there. Hindustan Copper and Nalco gained the most there. Nifty FMCG fell the most. The pain was seen across, stocks. You had Tata Consumer, Asian Paints, Colgate, which fell the most in FMCG. A lot of earnings also coming out for FMCG, thick and fast. But this is the overall view as to how markets have panned out in trade today.
Thank you so much, Mahima, for that. And now let's look at the key earnings for today. First up, we have Tata Motors Commercial Vehicles business that has reported a mixed set of numbers for the December quarter. Consolidated net profit has fallen sharply by nearly 48% year-on-year to 705 crores as compared with 1,355 crores last year. However, revenue has showed some resilience, rising over 16% to 21,847 crores. If we look at the operational performance, so that was stronger, with EBITDA jumping nearly 41% to 2,881 crores indicating improved underlying efficiency. Now, the divergence between the profitability and operating strength suggests pressure from the higher costs and also other expenses, even as demand remain healthy. In fact, company CEO Girish Wagh also expects momentum to continue in Q4, and he further adds that if consumption and infra growth remain at similar rate, they expect the growth to continue. So investors will now track whether margin gains can sustain in the coming quarters as well. Next up, we have Vedanta. So that has delivered a strong performance in the December quarter, comfortably beating the street estimates. Now, consolidated net profit has surged 124% quarter on quarter to 7,807 crores, significantly higher than estimate of 5,582 crores. Revenue also rose to a record 45,899 crores, and this is supported by higher commodity prices, improved volume, stronger premiums, and also favorable forex gains. Now, the performance underlines Vedanta's operating leverage in a supportive metal price environment. Now, the focus now shifts to sustainability of margins and also the company's debt and demerger roadmap. Here's next up we have Swiggy. So Swiggy's consolidated loss has widened in the third quarter to over 100 crore rupees. However, revenue has surged 54% year on year to 6,148 crores and beating the expectations. Now, food delivery gross order value grew over 20%, marking the strongest growth in 3 years. Quick commerce business Instamart more than doubled its GOV, reflecting rapid scale-up. The company is also saying that it is still in investment mode, prioritizing market expansion and customer engagement, while investors continue to watch the path to profitability. Next up, we have Dabur. So that has posted a steady set of numbers for the December quarter, reflecting stable demand across its portfolio. Net profit rose over 7% year on year to 560 crores, while revenue has grown 6% to 3,559 crores. EBITDA, if you look at, has increased nearly 8% to 734 crores, with operating margins improving to 20.6% from 20.3% last year. Now, the performance indicates controlled costs and resilient rural and urban consumption trends. The street will watch the commentary on input cost pressures and also the volume growth outlook going forward. And ITC has reported a mixed set of numbers for the December quarter. Net profit came in at 5,089 crores, slightly below the estimates and down nearly 10% year on year. Revenue, if we look at, however, has grown close to 6% to 18,017 crores, indicating steady demand across the businesses. Operational performance, if we look at, so they have remained resilient, with EBITDA rising over 7% year on year to 6,271 crores. Margins have also improved to 34.8% compared to 34.2% last year, and also came in above the street expectations. Now, alongside the earnings, ITC has also announced an interim dividend of 6.5 rupees per share. Investors will now track volume growth, momentum, and also the commentary on the consumption trends. And Dixon Tech has reported a strong earning performance. This is driven by operating leverage. Now, net profit has jumped 68% year on year to 171 crores in the December quarter. Revenue has grown modestly by 2% to 10,672 crores, while the EBITDA rose over 6% to 414 crores. Now, the improvement in the profitability despite muted top-line growth highlights better cost efficiency and also the execution. Now, Dixon Tech continues to benefit from the India's electronics manufacturing push, and also investors will track new client additions and also the PLI-led expansion momentum. Viewers, staying with the earnings momentum here, Voltas has reported a weak set of numbers for the December quarter, with pressure visible across key parameters. Now, net profit has declined sharply by 36% year on year to 85 crores as compared with 132 crores last year. Revenue has slipped marginally by about 1% to 3,071 crores. Operating performance, if we look at, it has weakened, with EBITDA falling over 10% to 177 crores, while margins have contracted to 5.8% from 6.4% a year ago. Now, the company indicated that a one-time cost of 26.5 crores linked to new labor codes has further impacted the profitability. Now, the street will now closely watch demand recovery and also margin improvement over the next few quarters. And viewers, budget expectations, strong order book and steady Q3 earnings keep the defense stocks upbeat. Experts believe that while the overall fiscal stance is likely to remain steady, the composition of government spending on defense could shift meaningfully. Mahima, my colleague, is here with more meaningful takes.
Right, so basically, Jeffries did come out with a note with regards to what the expectations are where the budget stands. Overall, defense capex allocation is going to be a key monitorable with regards to where budget stands. India's defense capital spend falls around 13% year on year in November 25. The defense capital is up 57% YOY in April to November 25 versus FY26. Estimates growth of around 13%. India depends, India kind of deepens also its international defense ties to enhance export opportunities. In year to date, India's defense exports at 87% of that $3.3 billion FY26 target stand. HAL is going to be the top pick, followed by BEL according to them, and then data patterns. Moving on with regards to where, what are the triggers with regards to why you can expect an uptick in terms of where budget stands. Overall, stocks have skyrocketed ahead of budget 27. The sector also witnessed broad-based buying, but today it did, of course, see some sell-off. Nifty Defense has extended gains for last two trading sessions. Today, of course, however, it did see some profit booking, but overall has gained over 5% in last two trades. Data patterns, BEML, Solar Industries were top gainers. In terms of factors behind this, of course, India-EU Defence Pact has concluded a defence security agreement which could, further, explore more, exports between India and the EU in terms of defence. The overall, impact of BEL earnings has also played its parts because the counter jumped 10% post its earnings. Overall, in terms of the third factor, pre-budget rally, the optimism ahead of budget is also there, and the defense budget allocation expenditure has also seen an upward trajectory in the last 5 years. I mean, from an allocation of 1.5% to almost 9.5% is what we saw last year. So this is the overall view of what you can expect and why the defense as a pack has been in focus just before the budget.
Viewers, rupee has hit an all-time low against dollar as continued weakness in the foreign capital flows and corporate rush to hedge against further depreciation. Now, the Indian currency drops to 91.99, eclipsing its previous all-time low of 91.96 hit last week. Now, sustained outflows of foreign capital, rising geopolitical uncertainty, and also the increased risk aversion kept this emerging market currencies under pressure, leading to the rupee touching an all-time low. However, India's economic survey suggests that the rupee has become merely a victim of the geopolitical uncertainty that has gripped almost all of the global markets lately. Now, the survey has added that the rupee's value does not reflect India's fundamental health, noting that the country is in good shape with banks being healthy, credit growth is respectable, and corporate balance sheets are strong. And viewers, the record-breaking rally in precious metals is continuing thanks to the wave of safe haven buying as geopolitical and economic tensions rise, and also after the latest US Federal Reserve policy signals. Now, the gold prices have jumped again. Spot gold has rose 2.1% to $5,511 an ounce after briefly hitting a fresh record of $5,591 earlier in the day. Remember, gold had already smashed through the $5,000 mark for the first time on Monday and has now gained over 10% just this week. Now, silver is not that far behind. Spot silver has climbed 1.3% to $118 an ounce after touching a record $119.34 earlier. Now, part of silver's momentum is coming from investors looking for a cheaper alternative to gold, plus the ongoing supply shortages and also strong momentum buying. And if you look at the bigger picture here, the surge has been massive. Gold is up more than 27% this year. On top of that huge 64% jump in 2025. And silver has rallied more than 60% so far this year. Precious metals clearly remain the favorite safe haven as global uncertainty keeps rising. And ahead of Union Budget 2026, Finance Minister Nirmala Sitharaman tabled the Annual Economic Survey 2025-26 in the Parliament. The annual economic document from the Department of Economic Affairs under the Ministry of Finance is an important roadmap for economic reforms and usually sets the tone for the Union Budget. Now, the Budget Economic Survey will give the GDP growth outlook and also shed light on the health of the Indian economy along with its growth prospects in the upcoming financial year.
Welcome to this very special conversation, and we have with us at NDTV Profit the man of the day, Anant Nageshwaran, Chief Economic Advisor. Welcome to this very special conversation, sir. In fact, I would like to start, by asking you about the growth outlook, because that's one of the key takeaways of economic survey. That for FY27, the range is elevated to between 6.8 and 7.2%. And in fact, for the medium term as well, you have elevated and raised the, projection. How confident are you to sustain this growth momentum going forward, given the, uncertainties, especially the tariff uncertainties in mind?
We have factored in the tariff uncertainty, and yet we have gone ahead and projected the medium-term growth rate of 7%. So we are quite confident of achieving this number on the back of the domestic reforms and the various free trade agreements we have been signing, which will all become operational in the next 10 to 12 months with the different countries and regions, and also the enthusiasm with which states and the union government are pursuing economic reforms at this stage. So these factors put together, and of course the very healthy state of the Indian financial system at the moment, all these factors have given us the confidence to be able to elevate and upgrade India's potential growth from 6.5% to 7%.
Sir, as you rightly pointed out, and during your briefing also, a series of FTA has been signed by India, and the recent one is with European Union, and that is going to open access to the larger market. We are talking about 27 countries. The survey did mention about the India-US deal as well, hoping to be closed soon this year itself. What led to that confidence in the survey? Is this